We did see a little bit of underperformance there, only higher by 0.2%. It wasn't in line with the rest of the market. I wonder how much of that simply is a reaction, perhaps, to what we saw on Friday, perhaps something else. Well, here it is, the opening trade. We'll put all of our theories to the test here this morning. When you come back to the open, the FTSE 100 already tilting into some positive territory. We'll see what the outperformer is, because again, it is Monday. We have to wait for some of these trades to shake out. We've got a couple of individual stories, not enough geopolitical volatility in the news flow when it comes to this morning, but the stock 600 higher by 0.2%. We're going to wait for the rest to kind of shake out. But again, I have my eye firmly on the IBEX, Val.
Let's take a look at the sectors on the move in the first few minutes of trade. Fairly positive. We have 17 sectors in the green, nearly 18 in the green, 2 in the red to start trade this morning. At the top of the basket, I see basic resources. We also have technology up there. I'm wondering if that's on the back of Morgan Stanley upgrading Alibaba overnight. At the bottom of the basket, we have energy, also telecom down there, but I'm also keeping an eye on how those Spanish banks are faring. The bank sector as a whole is opening up pretty positively, though, at the bottom of the green list of the sectors.
Okay, so the FTSE 100 up 0.3%, adding 29 points at 9,311. Over in France, a similar picture with gains of 0.3%. Still wait for the DAX to reflect, of course. Currently, in terms of some of the individual movers, I'm looking at Lufthansa. Let's wait till we get a proper pricing on that after the job cuts of around 4,000 that have come through. GSK is currently up around 3%. We have change at the top, of course, of that UK-based drug maker. CEO Emma Walmsley to step down, and the Chief Commercial Officer Luke Niels to take over from January the 1st. In terms of some other movers in focus for us today, Ørsted, of course, the wind turbine maker, up 2%. In the pharma space, Zealand Pharma gaining a little over 2%. And on the downside, as I quickly refresh what's happening in terms of some of these individual names to get the most accurate pricing, we're looking at some pressure coming through for the likes of Stellantis, of course, the car maker, down 1.3%. Some of the individual names on the move. Novo Nordisk also a little softer by 1.5%.
Lots to digest there in terms of those index movers. It's kind of interesting. You are seeing a tale of two healthcare stocks that I think seem to be driving the story. GSK on the upside, Novo on the downside. Is today just a micro story? That's kind of what that feels like today.
Well, we're not seeing, at least on the macro picture, we're not seeing any positivity feed through from Spanish banks, from the double upgrade from Moody's and Fitch on Friday. Some of those names actually in the red, and some of the worst performers in the banking sector. Banco Sabadell in the red this morning. So perhaps it was already priced in, the double upgrade that we did get from Spain, but still a lot of positivity around the economic outlook for the Spanish economy. Joining us around the table now is Karim Shadid, the head of EMEA investment strategy at BlackRock. Karim, is the global economy about to reaccelerate?
Thanks for having me. I mean, when we look at some of the data that we've seen the past couple of weeks, of course, the big narrative was about soft landing the last time I was here, and it was about the weaker labor market in the US. And that started to change with some of the numbers we've seen the past couple of weeks, whether it's some of the PMIs and ISM indicators or the broader macro data. And so when we look at the market pricing, talking about the US economy here, of the Fed path, that has started to move a bit. And we're no longer at that sort of full 5 cuts priced by end of next year. We've started to see a bit of a pricing out of cuts from now to year end. And so perhaps we lean into this idea that the Fed pricing was a little bit too dovish, and the adjustment is something that we're leaning into.
Well, in terms of how you're looking at your portfolio, with this backdrop of at least a very strong second quarter GDP growth in the U.S., how do you see that positivity faring for Europe, who, for some reasons, it isn't necessarily exposed as AI trade, which has grasped a lot of the U.S. equity market's attention.
Sure, so quite a different picture for Europe. I mean, when you look at the European growth inflation mix and what the considerations for the ECB are, the ECB already at 2%. We're not expecting any big moves from them between now and year end. There could be one more cut going into next year, but if it does happen, it would happen because of the weaker growth, not because of declining inflation. So inflation has already fallen in Europe. There's a bit of stickiness left, and there's some risk of small reacceleration. So really, we're looking at the weaker growth picture being the big driver here for Europe.
But is there to build on Val's point, is there an AI premium in some of these stocks? And I ask that because, and Thomas covered this quite well in his Bloomberg Technology show, or Bloomberg Tech show, that the adoption process of AI is stronger in Europe because the US and China and other players are focused still on the technology, but the adoption is faster in Europe. You're seeing that in financial institutions, for example. Is that something that gets priced in?
It's a great point because so far the big opportunity in AI stocks, and we talk about the AI tech stack. We look at the AI stack right from the infrastructure, where a lot of the moves have so far been really focused on this infrastructure build out because of the breakthrough that we saw last year, through to the adopters, which to your point, you look at some of those big European sectors, whether it's the financials or others, consumers, and they can make a big difference with AI adoption. But this is where dispersion is key. So we talk about the opportunity in AI adopters as well as in European equities as a selective opportunity, where you need an active manager who is able to decipher who are the winners and who are the losers here based on those who are actually putting in things in the process of the company to benefit from AI, and those who are just talking about it but are not following with action. This is the dispersion that is important, which is why there is an active opportunity in European equities with that AI adoption lens.
It's fascinating because on the one hand, if we're talking about we had a guest on in the last hour talk about the fact that if you want tech exposure, or if you don't want kind of the AI exposure, you just can't take out U.S. tech and the AI story. And in the same vein, you would take out free cash flow as well. He kind of melded all those subjects together. Does that apply to the mega cap stocks, I should say, not tech necessarily, mega cap stocks of Europe? That if you want to outperform in this market, you have to look for the ones with the most free cash flow and the most liquidity. Is that the same roadmap?
So actually, I would make a distinction between how we're investing in U.S. stocks and European stocks. In U.S. stocks, it's very much what you just laid out. Free cash flow yield is king. Quality tilt is king. That pays in the U.S., which is why we're overweight U.S. stocks. We are focused on the AI names, we're focused on the tech story and that quality tilt. In Europe, we see that actually value pays. So tilting towards companies that offer cheap valuations based on historical metrics and that have good profitability stories. That is the approach in European stocks that pays the most, which is why we're most positive on areas like the banks, financials more broadly, obviously industrials, which have already seen good performance numbers, but we're leaning into those momentum areas in European stocks.
As you look at the geopolitical changes that we've seen in the last few weeks and Russia's attempts to intervene, airspace, Estonia, Poland, how are you thinking about the industrial story then? And when you've combined a picture around the fiscal stimulus story that comes out of Germany,
sure,
and then that re-emphasis on the need to build out defense capabilities. When does that? Where are we in that journey in terms of wanting to get exposure to that?
So when we think about that journey, first of all, we have to highlight that there's already been really good performance from industrials, and specifically the defense subsector of industrials in European stocks, which is why I'm calling it a momentum area. Because actually, when you look at momentum factors, that's the one that really leads the pack, and because it's been a very good performer. But we're leaning into that. The main thing we're watching out for is future earnings. So you look at the Q2 reporting season, and the big theme in European stocks for Q2 earnings, which just wrapped up, was the strong euro hurting the exporters. That was the big story, which is why you end up with earnings for Europe at 0.5% flat, basically. There hasn't been really good earnings in Europe, unlike the US, where we're still in double digits. So as we move forward from here, we focus on those domestic leaning stocks like industrials, like defense, And we look at those dividends of the German fiscal stimulus starting to hit their earnings, starting to show up positively in their earnings. That is the next signpost for us.
So, and on the euro, then, that is making an assumption that euro strength continues. That's where you want to focus on domestically focused stocks.
Sure.
Does that continue to be a headwind for European earnings?
Sure, it continues to be a headwind for the exporters, which is why that preference for the domestics. Remember, the domestic and the exporter parts of the stock market already had a 25% dispersion between them year to date, but that is why that trend could continue if that euro strength stays.
Kareem, how are you viewing UK assets at the moment? Now we have this Labour Party conference ongoing. We're set to hear from Rachel Reeves in just over an hour's time. They're positive or negative catalysts for you on the horizon?
So if we step back and basically zoom out and look at the UK equity picture over the past couple of years, what we need to say is that investors, foreign investors, so non-UK investors, did start to buy the UK equity market last year. And that was the first big amount of flows coming back into UK equities, end of last year, early this year, in about 6-7 years. We hadn't seen any foreign demand into the stock market. So this was coming up from a very low base. That trend has now sidelined the past 6 months. So we're not continuing to see that positive momentum because I think foreign investors are struggling to see a very positive catalyst. However, there are positive stories in UK stock market. When you look at the large caps, which are mostly internationally focused, the sector makeup does look favorable in today's market environment. So there are opportunities.
Kareem, what do you see as the biggest risk event in the fourth quarter?
So I think the main thing we focus on is really that inflation picture. So disinflation was a big theme in the US, right? And if we start to see some inflection in inflation numbers, I think that can disrupt some of that narrative around inflation down and soft landing driving Fed easing. That inflation inflection could disrupt that.
Yeah. Well, Kareem Shadid, the head of EMEA investment strategy at BlackRock, thanks for joining us this morning.
Lots to digest there. Let's take a quick look at some of those mega cap stocks that Kareem was talking about in his segment. The core six, as Guy likes to call it. You are seeing a little bit of the tech trade get a little bit of love. Schneider Electric is your outperformer this morning, higher by about 2%. Not too shabby for a grid, basically. Novo Nordisk, though, is your underperformer. And I think, Val, you pointed out, down about 7 straight sessions in a row. Also taking a hit this morning, down about 3%. Let's get a check on some of the other individual stocks on the move. Chloe Melly has that for us. Chloe.
Good morning, Kriti. So let's start with Novo Nordisk. That is down this morning 2.8% on the back of a downgrade by Morgan Stanley that noted that weaker prescription growth for its GLP-1 drugs, as well as higher competition from big rivals like Eli Lilly, of course, but also generic competition. Novo Nordisk has been having a bit of a tough time lately. It is worth noting it only has 2 sell ratings, including this new one from Morgan Stanley. So there is still that confidence in the stock, but this is obviously a little bit of a setback for the pharmaceutical company. Moving on to another pharmaceutical company with GSK that is up this morning 3.4%. There's a change at the top for GSK. So the CEO, Emma Walmsley, is stepping down and will be replaced by Chief Commercial Officer Luke Mills, who's been trying to really build that oncology portfolio for GSK. And it seems that this change at the top is being received well by the market, and there's a vote of confidence for the new CEO who will be starting in January. Moving on to Stellantis, where we have another change at the top here as well, but that is this time not being received that well by the market. We are down 1.3% for Stellantis after the CFO is also leaving. So that's a change at the top for a company that's been dealing with quite a lot of weakness, a lot of tariff-related challenges, as well as just a general slowdown in the car market. So a little bit of weakness for Stellantis today. And finally, let's end with Rentokil, which is a pest controller. It was initiated a sell rating at Berenberg that noted continued issues with its integration of Terminix, which is a company that makes termite control. That's a deal that has been dealing with a few issues, and we are down on the back of this downgrade this morning.
Chloe Melly from our equities team, thank you for the update on the movers this morning in the European market. Well, coming up, we'll discuss one of those. Lufthansa says they'll cut thousands of jobs across its brands to improve margins. More on that story next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Welcome back to the opening trade. About 16 minutes in today's session. Green on the screen across the board. I will say, though, not with as much fervor as perhaps we were seeing in the futures picture. We'll see if that shakes out. The FTSE 100 is now your outperformer, higher by 0.5%. It feels like a day where individual stocks are making the biggest moves. Let's go to one of them that have caught our eye this morning. Europe's largest aviation group, Lufthansa, says they'll cut 4,000 administrative jobs by 2030. For more, we're joined by our global aviation managing editor, Benedict Camel. Benny, just walk through the details of this announcement.
Good morning. So Lufthansa announced this morning as part of a capital markets day that the company is holding in Munich. It's the first time in a couple of years that they're really providing a comprehensive update on their longer-term goals. And as part of that, the company said that they want to cut, as you said, these 4,000 administrative jobs. This isn't going to happen overnight. It's over a period of several years. The target is by 2030. And really, it's the backdrop is that the company says we are essentially too complicated, we are too bloated. They want to improve this via measures like automation, generally sort of improving the processes. And this is because the company really has too high a cost base, has really struggled to meet its targets. So the hope is that these cuts will help them get to their new goals.
Benny, what else are you and the team watching for when it comes to the capital markets event that takes place for Lufthansa today?
So there's a couple of things, and sort of hanging over all of this like a sword is the strike that is pending. So the pilots are threatening to strike, and we might get an update as soon as tomorrow. So that's something that's on people's minds. You know, you can cut costs as much as you want, but if your aircraft are on the ground because people are striking pilots, that's not going to improve your cost base at all. But in terms of the targets, the company said they want to keep their dividend policy in place. They've got a slightly more optimistic margin target of 8 to 10% in terms of the adjusted operating margin. And all of this is, again, for 2030. They have a cash goal. They want to renew their fleet. And again, that's one of the things that's really held the company back. They have a lot of new aircraft coming in, particularly the Boeing 787 Dreamliner. But that's a plane that's been parked in the US because they don't have certification yet for the seats. So that's really slowed things down for them. So sort of the general renewal of the airline, that's going to be one of the big themes today as this Capital Markets Day unfolds.
Benedict, I noted that Lufthansa did cite the increased use of AI leading to greater efficiency. Do you think that this is a symptom that many others in the airline industry share, that perhaps with a broader use of AI, they can downsize their workforce?
That's certainly going on to some degree, and we know that airlines are acutely, probably across the entire global corporate industry, are looking at how can we use AI to improve some of our processes. For instance, how can we get a better sense of what the passenger really wants and what they don't want? How can we be more efficient? A lot of what the airlines do is still very labor intensive, in the cabin, on the ground, on the airfield. So really cutting back dramatically in terms of AI or using AI to cut back, that's a question for the next couple of years. But certainly here and there, it's going to help them. And that is sort of one of the buzzwords that surely will float around at this event today.
All right, Bloomberg's global aviation editor, Benedict Campbell, thank you for joining us on the latest on Lufthansa. Now let's change a focus to the pharma industry. Shares of GSK are higher on the news that the company's CEO, Emma Walmsley, is stepping down after almost 9 years at the helm. She'll be succeeded by the British drug maker's chief commercial officer, Luke Mills. Joining us for more on this is Bloomberg's health reporter, Ashley Furlong. Talk to us through this succession plan. Is this something that had been in place?
So Mills has long been thought of as a potential successor to Walmsley, and he'll be taking over in January. So it's a pretty orderly transition process with Emma still at the helm for the next couple of months. She's been under quite a lot of pressure over the pipeline, concerns from investors about whether there are enough blockbuster drugs coming to market over the next couple of years, and obviously pharma industry is feeling a lot of pressure with Trump in the US in terms of concerns about potential tariffs and drug prices. So this is obviously seen as a chance for a change with GSK.
Walk us through the headwinds here. What does Luke Mills, am I saying that right? Miles, thank you. What does Luke Miles now have to tackle first and foremost?
Centrally will be the pipeline and making sure that investors are confident that the company has a wide range of drugs that could be potential blockbusters coming to market in the next couple of years. GSK wants to get to 40 billion in sales by 2031. Analysts are not quite sure if the current pipeline could get it there. So I think there's really concerns about whether it's going to reach that target.
From GSK to AstraZeneca then, because we have some news in terms of listing plans, and now this is a UK drug maker looking to list, to keep its listing here, but list in the US as well. What is the rationale behind that?
It wants to get more global investors, and I think that's also very much about potential acquisitions in the future, and the idea that having a full US listing will make that more attractive in terms of attracting those investors and making that process easier.
Actually, we've also seen shares of Novo Nordisk decline nearly 2% in the session yesterday of a downgrade from Morgan Stanley. The stock is down 7 days in a row, lost some 13% of its market value. Is there a real turnaround plan in place for Novo now that these drug tariffs exist that are coming into place possibly on Tuesday night at midnight for the U.S.?
I think for Novo, it's very much around internal problems, not necessarily, there's obviously a wider context in the US, but Novo's is really around, ensuring that they are doing their internal turnaround, that they are, cutting costs and improving efficiencies under the new CEO there as well. So a lot of changes in the pharma industry.
Okay, Ashley Furlong, Bloomberg health reporter on GSK, AstraZeneca, and the challenges of Novo as well. Thank you very much indeed. An important update, of course, from the pharma space in terms of some of the moves as well coming through for GSK, and stocks are up on the change at the top, at least coming from January the 1st for the new CEO.
Well, speaking of cutting costs, as Ashley was just talking about, we know that one place of the market that's having a hard time cutting costs is clearly governments. UK, here in London, struggling to do that. And same with the US as they approach this government shutdown, which is, I lost my countdown clock, but 45 hours away now, Kriti?
Yeah, less than 48 hours away, I think, is a safe bet to say. And there's a big question here whether we're actually ultimately going to even have some sort of Hail Mary agreement. And maybe that's why we're seeing the markets a little sanguine around this threat, because there's always an 11th hour agreement. Is this time different? Perhaps. I had a really interesting conversation last week with a credit investor that was making the case ultimately that, and I think we've had this conversation on the show a couple of times, that corporate credit is actually better to invest in, and it gives you more yield for less risk, because that's how little faith people have in government debt right now. And I thought that was really interesting. It kind of took me back to this idea of during COVID, when you had the Microsofts, the Apples, the Amazons of the world issue at ultra low rates, near treasury level rates, because people thought the cash flow of these mega cap tech companies was actually more sustainable and juicier than the U.S. government. And I thought that was interesting, because we're kind of seeing a repeat of that with all these fiscal worries around the world.
Maybe the treasury market will start tapping the private credit market for liquidity?
Well, companies like Oracle as well, with that massive issuance, which is a trend that I know you looked at in detail, Val. Treasuries are bid right now. Yields are down currently between 1 to 3 basis points at the long end of the curve. The 30-year yields down almost 3 basis points. Gilts also built as well. So there's some money moving into the sovereign debt of the UK. And we're going to be talking more about the UK, of course, as the Labour Party conference gets underway. Prime Minister Keir Starmer to speak. Rachel Reeves later today, of course. We're going to speak to the CEO of the Resolution Foundation think tank on the UK economy, live from the Labour Party conference in Liverpool. So Lizzie Burden's on the ground for us. We're going to hearing from Rachel Reeves, of course, the UK Chancellor, 9:15 a.m. UK time. So all of our viewers should make sure they stay tuned for that. And we've been talking, and Lizzie's been framing it for us in terms of the challenge for this UK government, caught between their backbenchers and the bond markets.
Go for it.
Yeah, no, I mean, I think that at least what we've seen recently in the press that has really stood out to me is the parallels between what's going on in UK politics to what happened in US politics, where you had the Democrats calling Trump racist, and in doing that, they alienated some of their voters who were potentially thinking about switching parties. So you see that kind of analogous situation going on here. But we do have to talk about the gilt market, because it's the most sensitive thing to these kind of political developments. And really, if they keep with these fiscal rules that Rachel Reeves keeps banging on about, it is really hard for them to get out of this trap, because they need to generate growth. They need to grow more than their interest rate, but they're having a hard time doing that while inflation is still above target and the Bank of England has to hold rates this high.
Yeah, it's fascinating. We're talking about this in the US and the UK. We should also just highlight to everybody that in the next couple of weeks, we have a French budget that's meant to go through Parliament as well. So this entire conversation about fiscal sustainability and raising funds is going to show up in the French market as well, which is seeing a little bit bigger of a reaction function. The worries in the bond market, though, aren't reflecting in the same way in the FX market. I thought that was interesting. 134 on the pound this morning, or on cable, I should say. 117 on euro dollar. So the sell the dollar theme kind of permeates throughout this entire conversation.
Strong session, as you say, for the pound, up 0.3%. We're going to get more on the UK coming up with conversations, of course, from Liverpool and the Labour Party conference. Stay with us. This is Bloomberg.
When we look at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Happy Monday. This is the opening trade. We are 30 minutes into today's session. You're seeing strength across European equities, really pronounced here in the UK. FTSE 100 up 53 points right now, up 0.6%. Healthcare as a sector is near the top of the list on the sector-by-sector breakdown. Across the benchmark, European stock 600, gains of 0.4%. A decent session over in Germany and in France, gains of between 0.3% and 0.4%. Kriti, what are you looking at?
Well, we're looking at a broadly positive session, really reinforcing the themes that you just outlined as well. But take a look at this. It's coming with higher volume, only higher by 2%, but still we'll take it because it's slightly broad gains here. And it would suggest on the surface, perhaps a little bit of conviction in terms of the bid you are seeing today. 109 of members of the Stoxx 600 are lower, though, so with a grain of salt. I want to highlight one 52-week high. BAE Systems is hitting that metric this morning. That continued bid to defense, you do see it. And this is, I think, a fantastic example and stock chart of that theme, Val.
Well, equity markets on the front foot, and here's what else you need to know this morning. President Donald Trump and top congressional leaders are set to meet to discuss a short-term spending bill to avoid a government shutdown. While Democrats are insisting on health care provisions, Republicans want those issues addressed later. A potential federal government shutdown on Wednesday threatens to delay the release of a key jobs data this week. President Xi Jinping of China is renewing a push for the U.S. to change a decades-old phrase describing its stance on Taiwan independence. According to sources, China has asked the Trump administration to officially declare that it opposes Taiwan independence. The U.S. has not made a decision regarding the demand. And lastly, India's Economic Times reports that Jaguar Land Rover is seeking a £2 billion loan in emergency funding from global banks. This comes as the UK's largest car maker tries to ease the financial impact of a cyber attack that halted production. The latest funding is sought is separate to a £1.5 billion loan provided by the UK government. Tom?
The Jaguar Land Rover story is remarkable in terms of the impact of this cybersecurity event, not just on one automaker, but global supply chains, to the point where the UK government has to step in with a government-backed loan, and now reports out of India that this company is having to look for additional liquidity. It just really reminds everyone, I think, of the cybersecurity challenges at a corporate level. We've had so many incidents of this, but none that I can think of this year that have had such a dramatic impact on a balance sheet of a corporate maker. This is the most important and most significant automaker here in the UK economy. So that is something to think about as well, the cyber security risks. So some of these corporates, and that challenge is not going away. Let's think about politics, though, and this ties in terms of the political support that's come through for this key, of course, provider of manufacturing jobs in the UK. And bring in UK correspondent Lizzie Burden, who, of course, is at the Labour Party conference in Liverpool. Lizzie, though, I expect that your focus is more on the political travails of the Prime Minister Keir Starmer, and maybe what we're going to be hearing from the Chancellor Rachel Reeves, who's been doing the rounds, but is importantly and most importantly going to be speaking to you shortly, Lizzie.
They're just a warm-up, Tom. Of course, we're going to be speaking to the Chancellor at 9:15 a.m. London time, right here on Bloomberg TV. But before that, I'm pleased to welcome the CEO of the Resolution Foundation, one of the most influential think tanks here in the UK, Ruth Curtis. Thank you so much for joining me this morning.
Thanks for having me.
Of course, in a former life, you were Director of Fiscal Policy at the Treasury, so you're in the perfect position to tell us just how tight a squeeze is the Chancellor in.
So it looks like the Chancellor's in a really tough spot. We know that changes in policy have cost since March. We know that the cost of borrowing has gone up. And it looks like, in addition, the OBR will downgrade their assumptions for medium-term growth. So all in all, that leaves her needing at least 20 billion of tax rises and maybe much more.
In terms of what she's going to do, some have said that the Chancellor's too influenced by Treasury officials, your former colleagues. Is that how she's seen, as a very obedient Chancellor within the Treasury?
No, I don't particularly know where that comes from. The Treasury is a department that serves whoever the Chancellor is, and I think I've seen her be quite decisive when she needs to be.
So the speculation is that in her speech today she's going to hint that she'll lift the two-child benefit cap. Is that fiscally responsible?
So we think lifting the two-child benefit limit, which is the limit on welfare payments when a family has more than 2 children, is really important. Child poverty is forecast to reach a record high this Parliament without it, and it's actually the most cost-efficient way to address child poverty, which is something the government has said it wants to do. Now, I do agree with you, that would need to be funded. We've made a specific tax proposal for how it could be funded, but it's not out of bounds a possibility to find the money.
Yeah, you've proposed that she should raise income tax by 2p, which would be against the manifesto, but also cut national insurance by 2p. Do you think that's politically viable?
She's in a really tight spot, and I think we need to think about what's right for the economy as well as what's politically viable. Employment in this country is taxed much higher than other forms of income, and we think that's simply not fair, and it disincentivises work. So that's why we've proposed the specific changes to income tax and national insurance. That means it wouldn't hit workers' pay packets, but it would ask people like pensioners and landlords and the self-employed to pay a bit more.
You've also suggested that the Chancellor should increase headroom against the fiscal rules. It's been just shy of £10 billion at the last 2 fiscal events. It's left her open to this constant speculation about which taxes she's going to raise. Doesn't that seem like an economist's dream, but a politician's nightmare?
So look, I think it's a completely fair question. If the hole she's facing is as big as some of the speculation, then it may be not possible to increase her headroom. I think in that situation, I would say she could still give us a sense of her tax strategy, of what she might do in the future, which would mean we're left less with a kind of blank piece of paper and the uncertainty that hangs over the economy. The only thing I would say is if she doesn't increase her headroom, then we could be back here next year, and that would also be pretty politically uncomfortable.
But we could be there anyway, given the fragility in global bond markets. What's to say that she wouldn't have to come back a third time for higher taxes and more borrowing?
So look, you're right that there's no number that can guarantee that however the world changes, we won't have to come back. But one way of thinking about it is, what's the typical variation between forecasts? It's about 0.5% of GDP, about 15 billion. So to have less than that is to have, no more than one bad roll of the dice.
Well, to try and avoid this market instability, one thing that the Chancellor said this morning already is that she would be open to the IMF's advice of just having one Office for Budget Responsibility forecast per year. Is that a good idea? Isn't that a bit like when Liz Truss sidelined, in Rachel Reeves' words, the OBR?
So what Liz Truss did was announce a bunch of tax cuts without an OBR forecast. I think this is a very different sort of discussion, and so we should be clear about the distinction. Equally, the IMF didn't say we shouldn't have 2 forecasts. They said they supported her ambition to have one fiscal event, and maybe there are ways to adapt the forecast to achieve that. I think those sorts of options are things she might want to look at, but we've had 2 forecasts in this country since 1975. I'm not sure the right response to the kind of fragility we're seeing in the gilt market is to have less transparency about our public finances.
OK, because indeed the OBR boss does say that this would make Britain less transparent when it comes to the fiscal picture. Another Another of your proposals is that the Chancellor could raise £3.5 billion from a tax on salt and sugar. And I'm worried about whether that would add to food inflation, aren't you? Because the Bank of England's saying that food inflation spike is what's keeping inflation sticky. So how would that work?
So I agree with you. I don't think this is something you would introduce quickly, and I don't think she should take measures that increase inflation in the very short term. And so equally, a sugar and salt tax would take time to come in. So we're proposing it comes in from something like 2028, when inflation is back to target. It does have an impact on the unhealthy foods that are affected, and that's why that proposal is specifically in order to lift the two-child limit that you mentioned earlier, which would benefit families who particularly struggle with the cost of living.
I mean, as an economist, are you concerned that what we're going to hear in the budget in autumn is going to add to the inflation problem for Britain and the Bank of England?
I think we'll have to see what happens, but I do think not adding to that inflation problem should be a key part of the Chancellor's thinking as she looks at the different tax options on the table.
Would you admit that her tax rises already have added to the inflation problem?
So I think the employer NICs rise will have had some effect on prices, and that was expected. I think we've particularly seen effects at the lower end of the labour market. We've seen falls in employee numbers, particularly in those sectors that were heavily affected by those rises.
Just big picture, we're 15 months into Keir Starmer's premiership. Why hasn't growth been better when it's his top priority?
So look, growth since the Labour Party came in hasn't been bad compared to the sort of averages we've seen since the financial crisis. But obviously those averages have just been really, really low for a long time. And the bind for the Chancellor really comes from the OBR deciding that they've been too optimistic for quite some years. So what we have is a problem of the supply side, of growing the supply side of the economy. And I think that will take time, even with a government that's taking the right measures. But I hope that they do more to address those issues.
So as Britain's most influential think tank, one of, is there not a big idea that you could serve up to the Chancellor, like when you had Blair and Brown making the Bank of England independent, that would grow the economy, that's uncontroversial and free, a silver bullet? In 14 years in opposition, was there not one big idea that they could have come up with, that you could offer them?
So I think the thing that comes closest to your question is the idea that we need to have much higher levels of investment in the country. The Chancellor did change the fiscal rules in order to allow her to have higher levels of investment, and that's something we at the Resolution Foundation are very supportive of. I don't think there is an institution like was done with the Bank of England that can create growth just through kind of institutional change, but there is lots she could do. It's good that the government are addressing planning, but she could go further. We do think some of these changes to the tax system that would be controversial could also be good for growth. So there's more that could be done.
OK, well, listen out for those ideas in the speech and at the budget, of course. But just finally, Ruth, before I let you go, does it damage Labour's economic credibility that you've got the Labour Mayor of Manchester, Andy Burnham, saying that the government shouldn't be in hock to the bond market, that there should be another £40 billion of extra borrowing?
Well, look, I think we saw earlier in the year that the Chancellor's fiscal credibility is quite important to this government, and I think sticking to those fiscal rules is important for the bond market. Equally, I hope that the government will take a step back and make the right economic choices and not focus too much on day-to-day swings of the bond market, which seems to have become a kind of more recent feature of UK fiscal policy.
But of course, Andy Burnham's presenting himself as an alternative candidate for Prime Minister. Do the economic policies that you've heard from him sound responsible so far?
I don't think I've heard enough of what Andy Burnham thinks to really comment, I'm afraid.
All right, well, I'm sure we'll be hearing a lot more from him this party conference. I've seen him on that schedule many, many times over the next couple of days. But for now, Ruth, thank you so much for joining me. Ruth Curtis, CEO of the Resolution Foundation. Back to you.
OK, Lizzie, comprehensive. Thank you very much indeed. Bloomberg's UK correspondent and anchor, of course, Lizzie Burden, on the ground for us at the Labour Party conference in Liverpool. We will be heading back to Liverpool later for an interview with the UK Chancellor, Rachel Reeves, 9:15 a.m. UK time. Do not stay away from that conversation. Coming up, Moldova's ruling pro-European party is on track to win re-election. We discuss what it means for relations with Russia and the war in Ukraine. That's coming up. This is Bloomberg.
much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
NATO, Germany, our countries do not have any interest in escalation, but Russia perhaps wants to lead us into a trap, as you mentioned. But Russia has to know we are prepared for each and every situation.
German foreign minister saying that NATO is ready to defend against any Russian incursion, which will continue to remain a focal point when it comes to Warsaw Security Forum kicking off later today. For now, we're joined for more by Bloomberg's Piotr Skolimowski. Piotr, walk us through what we can expect at the Security Forum that, of course, is attracting some of the defense elites of the world.
Yes, indeed. So it's an annual event that gathers a lot of people from security space and a lot of ministers and foreign ministers and defense ministers. So we're going to have German, French representatives, as well as a lot of officials from Eastern flank, from Baltic states. So obviously for officials meeting here, what's important is basically they're going to first of all compare notes to what they've heard in UNGA. Many of them were already there, and many of them actually heard very reassuring tones from President Trump on two things, basically. One is definitely a much more positive tone when it comes to Ukraine. Although U.S. is not willing to pay for military equipment for Ukraine, it's definitely President Trump said that encouraged Ukraine and said that it will be capable of actually gaining more land. We already heard about Ukraine also talking, President Zelensky said that, about obtaining more long-range capabilities from U.S., which obviously will be paid by Europe. So that's one thing. And another is obviously the fact that President Trump said Europe, if there is need to shoot down Russian drones or Russian objects that are in NATO airspace, should go ahead and do it. That was something that they did want to hear, and it was a very strong statement. And it's something that they're going to continue talking to on the sidelines and during the forum. One thing that's being discussed, especially among the Eastern Europe flank, is the creation of the so-called drone wall, which will prevent the incursions, but also help NATO states adjust the type of capabilities they're using. So they're not using very expensive missiles to shoot down very basic drones. So a lot to discuss over these 2 days in Warsaw, definitely.
Piotr, we also heard that Moldova's ruling pro-European party is on track to win re-election, keeping the country on path for EU membership. Is this something that the Russians are likely to see as an escalation in any way of their situation on the border?
Well, definitely what we're hearing right now is that, there's like collective sigh of relief from European capitals that this election went through. We've seen enormous amount of Russian interference. We did our own reporting to show documents proving that Russia has been all over it and trying to influence this election in various ways, through cyber threats, through protests, and so on. Russia has been trying to influence Moldova's elections for a very long time. We've seen 2 other contests in the past year. One was presidential election of Maya Sandu, whose party actually won today. So she narrowly won her election last year. The country also passed a referendum to enshrine the goal of EU membership in its constitution. It also passed very narrowly, and among a lot of allegations about Russia's influence and attempts to influence the vote. So we've been there before. Clearly, Russia has denied it's ever been involved in this kind of actions. But for Moldova, what matters is that at this point, what we're going to see today at least, the opposition party led by the former president and pro-Russian party led by Igor Dodon is going to stage protest at noon in Chisinau, basically protesting the outcome of the election. So that's potentially a certain flashpoint we're going to have to watch out for. But down the line, joining the EU is not an easy process. It takes years, and Moldova wants to join by the end of the decade. And to prepare for that, they'll have to make a lot of sacrifices, and they'll have to make a lot of changes still, a lot of reforms. So that's something ahead of them. So once the euphoria subsides, we're going to get down to work, and that's something that's still ahead of this, one of the poorest countries in Europe.
Okay, still a long road to travel then for that nation. Bloomberg's Piotr Skolimowski with the update, of course, on the elections in Moldova. Thank you. Meanwhile, President Donald Trump and top congressional leaders are set to meet to discuss a short-term spending bill to avoid a government shutdown. While Democrats are insisting on health-care provisions, Republicans want to address those issues later. For now, let's bring in Bloomberg's Balázs Pence. Balázs, where do the two sides then currently stand heading into, I guess, what could be a make-or-break meeting?
Well, Tom, the two sides seem pretty far apart, as is customary, so close, less than 2 days before the deadline to continue funding the U.S. government. As you said, the Democrats want assurances on healthcare spending, and that's not something that the Republicans are willing to give right now. So the two sides are both sounding very determined, as they would before high-stake negotiations like this, and they're both busy trying to frame the debate in a way that would put the blame on the other side should the government end up shutting down. So certainly there's a lot riding on this meeting. Democrat leader Chuck Schumer said that they want to see a meaningful negotiations. They're not interested in the president trying to browbeat them into submission. And with less than 2 days to go, there's very little time to bring the two sides closer together.
Balázs, what happens if there is a shutdown ultimately when it comes to Tuesday at midnight U.S. time? What happens on Friday when it comes to the jobs report?
Well, we cannot rule out that there will be a shutdown. We have to remember during President Trump's first term, the government shut down twice, and that brings in a host of different implications, from government workers being furloughed to, yes, some of the statistics being halted, some of the government's very important vital work for the economy being halted, not being able to fund. And we have to remember, even if there is a solution now, even if they are able to agree on a resolution for now, that's only for 7 weeks. So we might be back here talking about this again in less than 2 months' time.
All right, Bloomberg's Balazs Pence, thanks for joining us on the latest on the government shutdown with less than 48 hours to go. But let's look at the other catalysts that we have on our mind this week. Today, Trump is busy at the White House. Not only is he hosting the bipartisan leaders to discuss that shutdown, he is also meeting with Netanyahu in the White House later today. On Tuesday, the Trump tariffs come into effect at midnight, those that he announced on Friday, with a keen interest on the pharma tariffs hurting domestic manufacturing here in Europe. We also have the U.S. government shutdown going into force at midnight on Tuesday if the leaders don't come to some sort of agreement. On Wednesday, Euro area CPI and Golden Week begins. We've not really talked about this very much, but it is seen as a good indicator on how consumer sentiment is holding up in China. That lasts for a whole week, and markets are shut out in Asia. And then on Friday, the non-farm payroll report. The big question just remains to be whether we get it or not, whether the shutdown happens and that data is delayed, which essentially would have the Fed going in blind to this October meeting, not having their monthly update on payrolls.
Should we mark gold at this point? Because that has been one of the reaction functions for gold, or at least some of the catalysts. $3,800 above that for the yellow metal, if we can show that pricing, because gold has rallied. One of the aspects, I mean, through the year, of course, it's been on an absolute tear, but another catalyst for gold has been the uncertainty, it seems, out of the US, fresh record highs for gold.
Yeah, absolutely. It's fascinating that's coming at the same time as Golden Week as well, which there's always that correlation there as well in terms of the physical buying. I think it's fascinating that if we just do some scenario analysis, just because I think we have a little bit of time to do this, can we just game out what happens on Friday if we don't get a jobs report? What does that look like? So on the one hand, you look at ADPs as one potential scenario. Another is the market panics because we don't have a data set. Is there a reaction function from some Fed speak? How do we piece this together?
Well, I think the big question would then be on the timeline of the shutdown, and perhaps would it be done with enough time for the Bureau of Labor Statistics to reinstate the data point before the Fed convenes at the end of the month? There is a lot of time to do that, and as a reporter mentioned before, these shutdowns normally only last for 14 days. I think that's the average over the last decade. So there still maybe would be room to get this data set out. But yeah, would the market just rely on ADP, which doesn't always chime with what we get with NFP on Friday, where they perhaps look at the jobless claims of last week, the fact that they have been declining to a low not seen since July, and say that that's a strong enough labor market for me. Maybe the Fed doesn't need to add an incremental dovish language in October.
So our previous guest, Michael Hunstead, of course, saying that, look, history shows us that markets rebound pretty quickly, equity markets at least, from these events. We've had them in the past where they've shut down, and I think he gave a framework of around 3 months afterwards when equity markets kind of remake gains. So on the equity market front, he was pretty looking at it as a pretty benign scenario, but clearly that uncertainty is there.
It's fascinating because you could at least come at the end of the year looking at a stock market rally and a gold rally that comes kind of at the same time, which is something I don't think we see very much. We should just, as we wrap up the program, give you and leave you a programming note. On Wednesday, we're very excited to say we have live coverage of the Women, Money and Power event right here in London, covering the most influential female voices in finance from around the world. We'll discuss key themes facing the future of business. GSK's Emma Walmsley will be among the panelists, who, of course, is nearing the end of her term. And, of course, Chancellor Rachel Reeves in about 15 minutes' time. Stick with us. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
With less than 48 hours to a potential U.S. shutdown, President Trump will meet top congressional leaders in a bid to secure a short-term funding bill. The UK Prime Minister Keir Starmer says his government is in battle for the nation's soul, as Nigel Farage's reform looms large at the Labour Party conference. We'll speak to the UK Chancellor, Rachel Reeves, live from Liverpool in just a short while. Plus, Moldova's ruling pro-European party is on track to win re-election, keeping the country on the path to EU membership and raising the risk of escalation with Russia. So there is quite a lot going on. We're also getting some U.S. data a little bit later on, which are expected to actually show encouraging signs, or certainly reinforce the outlook that the Fed will cut interest rates and lift equities higher. Gold also set to start a fresh record, 3,807 points. Look, the U.S. 10-year 4.1406. And then when you look at Europe, it's very clear that there's, again, a little bit of anxiousness. We look at what the impact of a government shutdown in the U.S. means, for example, for S&P futures. Here, look, it's not earnings season. I wouldn't say it's sleepy, but certainly they're getting the cue from the Fed rather than anything domestically, with the CAC 40 and the DAX practically unchanged. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump and top congressional leaders are set to meet to discuss a short-term spending bill to avoid a government shutdown. While Democrats are insisting on health care provisions, Republicans want to address those issues later.
And what the Democrats have done here is take the federal government as a hostage, and for that matter, by extension, the American people, to try and get a whole laundry list of things that they want, the special interest groups on the far left are pushing them to accomplish.
It's up to them. If they come into the meeting to seriously negotiate, and the reason we've been pushing for months, we've been resolute that we need a meeting, that we need a real negotiation, that you don't do this by one party putting together a completely partisan bill and saying take it or leave it. So they felt the heat. The president at first said no. Remember, he first said yes for a meeting, then he said no for a meeting. He went on a rant against Democrats. But I think they felt the heat, and they now want to sit down. But
now, for more on all of this, let's talk to Susan Lynch. Suzanne, the bill must pass before October 1st to avoid a shutdown. Donald Trump has threatened mass firings of federal workers. So what happens next?
Well, I think this meeting this afternoon taking place in the White House is critical. It's obviously taking place 48 hours before the expiration, the deadline at midnight on Tuesday. And in one sense, it's a positive sign that Donald Trump is meeting with these 4 congressional leaders from the 2 parties. But it's very unclear whether Donald Trump and the Republican side are willing to make concessions. The Democratic leaders want provisions on health care. That's what they're concerned about here. They're concerned about cuts to Medicaid and also the expiration of Obamacare tax cuts, tax arrangements that are due to expire soon, and that will impact purchasers of health care. They know that this is a big issue for their constituents. They know that health care is something that could mobilise their own supporters ahead of those midterm elections. So signs are that they're digging in on this issue.
Suzanne, what can we then expect from the talks?
Well, I think the key issue is whether Democrats are willing to back down from their demands that these healthcare provisions are included in this bill. And of course, this bill is itself a temporary measure. The Republicans are saying the healthcare concerns have to wait for later. But the Democrats do have some cards to play here, because in the Senate, the Republican Party, who are obviously in the majority there, do need 7 Democrat votes to get this past the 60. So I think the Democrats sense here that they've got leverage politically, particularly in the Senate. And we heard from the Senate Minority Leader there, Chuck Schumer, on this. And he believes that, Donald Trump and the Republicans, as he put it, are feeling the heat on this issue. Now, of course, the question is, will there be much heat in the room today? We have seen, people might remember those scenes where we saw Donald Trump when he hosted congressional leaders in the first administration, those heated discussions, for example, with the then House Speaker Nancy Pelosi. So there's going to be a lot of focus today on how that meeting goes, both in terms of tone, in terms of that relationship between the 2 parties, but also, of course, in terms of substance.
Suzanne, thank you so much. Suzanne Lynch there, of course, from Brussels. Now, Moldova's ruling pro-European party is on track to win re-election, keeping the country on the path to EU membership and raising the risk of an escalation in tensions with Russia. We're now joined by Alex Korchakov, geoeconomics analyst for Russia, Eastern Europe, and Central Asia at Bloomberg Economics. Thank you, Alex, for joining us. Now, the result, of course, is going to be a blow to Moscow. Can we expect some kind of response?
Yes, we definitely will expect a response, because Moscow has probably spent quite a considerate amount of money on trying to influence the outcome of this election. So we would expect the regular Russian hybrid playbook, which will include attempts to create protests, and there are some protests planned for later today, which can again turn violent. And this will allow Moscow to accuse the pro-EU government in Moldova of democratic backsliding. But also Russia will be using economic coercion, disinformation, misinformation campaigns against the ruling party, which is probably winning the re-election.
Is there something, is there something wider in this, actually, that maybe some of the, former satellite countries of Russia now want to be more Western, or is this, too soon to know?
Well, Moldova and Ukraine are former Soviet republics, which are officially EU candidate countries. And this is definitely something that Russia doesn't like. Russia really wants to stop the drift of countries which it believes belong to its geopolitical orbit towards Europe, and it wants to stop that. So we've seen this in Moldova, we've seen this in Ukraine with Russia invading Ukraine, and we've seen this in Georgia as well, where Russia used a hybrid playbook in order to influence the direction of the country. And Georgia right now is a bit more in a limbo and not really moving towards Europe anymore.
Alex, thank you so much for the terrific briefing. Alex Koksharov there. Now we're joined by Subita Subramaniam, Head of Investment Strategy at Sarasin and Partners. Subita, thank you for joining us. It's all about data, it's the Fed, and then you have some of these geopolitics that actually worry markets. But first, on the government shutdown, how does the market look at this?
I think the market is actually looking through it. They're assuming that the Democrats eventually back down. To be honest, I do not believe that they have a huge amount of leverage or staying power, because, if Trump does follow through with his threats to fire more federal workers, I think that actually works against the Democrats. I mean, to date, we've lost 94,000 federal employees, and an additional 154,000 federal employees have taken the early retirement plan from DOGE. So you're down almost 250,000 federal workers. So I think a further sort of threat to shrink the workforce actually does not necessarily play into the Democrats' hands.
So do you think they'll find a compromise?
I mean, it's very difficult.
How long is a piece of string? I know. It's impossible to know.
I suspect, these shutdowns, they come, they go. I think the reality is you have to look at the negotiating leverage on either party. So I suspect the real battle comes in when the continuing resolution basically runs out and we have a renegotiation at the end of November.
Smita, do you think it's fair to say that actually markets only care about the Fed right now and FOMC and some of the data and largely ignore some of the noise coming from either geopolitics or politics?
I would think so. I think they're really focused on what's happening to the economy. I mean, what's happening within the economy is really hard to decipher. I mean, on one hand, we have sort of a huge amount of sort of reduction in labor demand. At the same time, we have consumer spending really resilient. I mean, last week we got some pretty strong, consumption numbers. We have the GDP numbers, which is basically saying, yes, consumers are telling us they're feeling not very confident, but they're also spending quite happily. So it is a very confused picture, and I think markets are really focused. What is it, that's happening in the economy?
And so, I mean, this week they have a couple of data points, right? So they're looking, of course, at employment, payrolls. Could it actually move the needle on how many cuts you think the Fed will do?
So I think the payrolls are the most important data point looking forward. That and inflation, obviously, the two key parts of the Fed mandate. I think payrolls are really important because Chair Powell said last at the FOMC press conference that break-even rate, so the rate that keeps the unemployment fairly stable, is somewhere between 0 and 50,000. So it actually has come down a lot from the last few years. Now, if you see a negative print on the payrolls, I think there will be concerns that actually we're entering a spiral where consumption can start to weaken. So I think that's what markets will be on watch for. Barring that, I think markets will just try to look through it.
When you look at the labor market, there's a lot of question marks on actually what the immigration crackdown because of ICE mean for employment in the future. I mean, does that kind of skew the dynamics?
Yes, so the immigration crackdowns actually are having a material impact on labor supply. So I think the Peterson Institute and a couple of other government agencies have estimated that actually it could reduce, immigration could reduce, say, from negative 500,000 this year, it could fall by 500,000 or possibly rise by 100,000. So the bars are quite wide, but it basically suggests that, it is not going to be contributing to labor supply. So you're going to have a labor market that's pretty much at standstill. It's a no firing, no hiring economy, and you have AI coming in, and businesses are trying to grapple with how to restructure.
Savita, what can you tell us about tariffs? So if you look at, the tariffs and you see businesses looking to restructure because of AI, not having the right workforce or different workforce, I mean, it's a lot for a CEO actually to try and contend with and juggle.
Yes, I think the tariffs, I think from a strategic perspective, I think the administration is now looking at tariffs as a really key way to address fiscal sustainability. Yeah. It's, at an annualized pace, the government's now taking in about $375 billion. At an annualized pace every month. So that actually is significant, and it allows the administration to restructure, public finances. So I do not believe that they ever go down again. Right. The risk for businesses is that the government is very comfortable with using tariffs over and over again as a repeated tool, as we saw last week with the pharma tariffs, with the tariffs on furniture. So I think the risk is that businesses actually don't know that if this is a stable equilibrium, that's great. They can then reoptimize. But if they keep coming back to tariffs continuing to be very volatile, it's very difficult to make investment decisions.
So does it mean, Savita, that actually investment decisions are postponed or just completely stopped until they understand the situation a bit better?
So it looks like, if you look at the GDP data, I think businesses are sort of stopping, they are definitely pulling back on some investment decisions. But the one investment decision they're not pulling back is their investment in AI. So, you saw in the GDP numbers, the, investment spending on intellectual property products rose by almost 14% over the quarter at an annualized pace. That's really large. And that's even before all the announcements we got last week from NVIDIA, OpenAI, and the Oracle deal. So I think there is definitely sort of a race to build out the new data infrastructure, and I think there's no hesitation on that account.
Now, how does that change the economy, and actually is the Fed able to measure that correctly?
So, I mean, if you look at the Fed forecast, they're basically assuming nothing from the AI shift, because I think it's really hard because there's no sort of proof yet that it's lifting productivity, it's, you know, impacting the labor market. So I think if you look at their forecast, they're projecting the trend rate for the economy to be 1.8%, which is exactly what they projected last year, the year before, and the year before that. So I think they're just being very prudent. But the reality, if you just look at the big shifts that are taking place and the scale of decisions and capital that's currently being deployed, something will shift as we look forward.
Defense, I guess there's a massive shift in defense, and I don't know whether that also recomposes how we look at the economies.
Yes, so I think most economies are really changing sort of the defense, their commitment to defense. I think there's a discussion whether defense spending as a share of GDP will go from 3 to 5%, but that is just, a magnitude larger than what it has been in the last, decades. So I think we will have a huge amount of restructuring of defense within countries. The world is very insecure. Alliances are very flexible. Your allies might be allies for one area, but not another. So I think in this sort of more insecure world, defense spending is going to rise. The biggest issue with defense is just how are we going to pay for it? Because, you have to make a decision between guns and butter with, debt to GDP ratios at about 100% of GDP. So I think that's where the defense sort of pressures will be felt on the fiscal budgets.
Subita, our Lizzie Burton's about to speak to Rachel Reeves. The complexity for the UK government are not lost on anyone, especially investors. What are you expecting to hear from them today and then in that budget?
I believe they're really focused on keeping the fiscal rules and adhering to the fiscal rules. And, that really accounts for 0.3% of GDP. So those are marginal. We know that in order to achieve those fiscal rules, either you cut spending or raise taxes. Yeah. We know that this government has really been unsuccessful in cutting their spending. Yeah. So it's really, I think we're going to look at taxes. The bigger picture, which I think the Labour government has really failed to address, is what is the role of the government in the economy? Government spending as a share of GDP today is 45%. Before the pandemic, it was 40%. So we've increased the government's footprint in the economy. The society is aging, and there's no concerted effort to really address the more strategic sort of questions within the economy.
Okay, Subita, thank you so much for joining us. Subita Subramaniam, there, head of investment strategy at Saracen & Partners, and of course she stays with us. Coming up, Rachel Reeves, set to deliver a crucial speech at the Labour Party conference in Liverpool later today. We'll speak to the UK Chancellor live. That's next, and this is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The UK Chancellor, Rachel Reeves, is set to deliver a key speech to the party faithful later today at Labour's annual conference. Now, she needs to convince concerned colleagues that her economic programme can undermine the populist right opposition without risking her reputation for fiscal prudence. Well, our UK correspondent Lizzie Burden is at the conference in Liverpool with the Chancellor. Hi, Lizzie.
Hi, Francine. Thank you so much. We are joined, as you say, by the Chancellor, Rachel Reeves, ahead of her speech later on today. Thanks for making time for Bloomberg TV and Radio, Chancellor. We've heard you say already that the public finances are in a pretty precarious position. So I want to ask you, many Labour MPs really want you to lift the two-child benefit cap, and we hear that includes the Prime Minister. Can we afford to do that?
Well, no one needs to tell me how important child poverty is. I came into the Labour Party because I wanted children from all backgrounds to have a good start in life. And we've already made strides in reducing child poverty in this Parliament. We're rolling out free breakfast clubs at all primary schools, extending free school meals to an additional 500,000 children. We've capped the cost of school uniform. We've increased the national living wage and national minimum wage. Would I like to do more? Yes, but of course we haven't always got to explain how policies will be paid for. Yeah. We've got the report from the Child Poverty Task Force later this year, and we'll respond to that. But it is important for all families that the numbers add up, and that's always what I've done as Chancellor of the Exchequer.
And that's been a really strong message from you throughout. Does your party, though, understand how important it is to make the numbers add up, stand on the right side of the bond market?
We campaigned at the election on economic stability, fiscal responsibility, and we did that for a reason, because it was ordinary working people and businesses who paid the price for the economic mismanagement in the last Parliament, when interest rates went through the roof, when inflation got out of control, when pensions were put in peril, and because of that, my party, the Labour Party, accepted the crucial importance of economic discipline to support working families. It's not intention, economic responsibility, to our commitments to make people better off. It is part of that commitment, because those 5 cuts in interest rates, as you know, by the Bank of England, but they've only been possible because of that stability we've returned to the economy.
But look, on winter fuel payments, on pay rises for doctors, on welfare reforms, you've seemed to give, but when are you going to take away? When are you going to choose the bond market over the left of your party?
Well, if you look today at my conference speech, I'll be setting out a youth guarantee, because at the moment we've got 1 million young people who are not in education, employment or training. That's 1 in 8 young people. I'm not going to let that stand. It is a waste of their talent and potential, but it's also a huge waste for business and a huge waste for taxpayers that we are subsidising young people to be out of work when we want them to be in training or in paid employment. And that's one example of how we're reforming the welfare state to get the costs down, and at the same time bringing more people into work.
What would you do about it if someone said they don't want to work in the care home?
Well, that's not acceptable. You know, like, welfare is not an alternative to work. The welfare state is there if you need it. You can't say, oh no, actually I'd rather remain on benefits than take that job opportunity. And that's a really important part of what I'm setting out today. It builds on what the previous Labour government did under Tony Blair with the New Deal for young people, that said there was not an option just to stay on benefits. And that's the same with me as Chancellor.
OK, look, I don't expect you to preempt your budget with me, Chancellor, but you did promise business that there'd be no more borrowing and no more tax rises. Is that still true?
Well, what I did last year at the budget was draw a line under the economic and fiscal mismanagement of the previous government, and that did require difficult decisions on taxes.
So there won't be more of them?
Well, I think all of your viewers can see that the last year has brought its fair share of global challenges. The global cost of borrowing, the tariffs from the United States, the ongoing conflicts in the Middle East, the disruptions to supply chains, Russia's intensified aggression. I'm Chancellor in the world as it is, not as the world as I might wish it to be. And I had to respond to those. But those fiscal rules that we set out in the election to pay for day-to-day spending through tax receipts, to get debt down as a share of GDP, to get the deficit down this year, those commitments stand. And I'm also determined to bring down inflation further because I recognise that inflation at 3.8% is still too high.
So
that is a global
stand.
challenge as well, but we get that down.
Those commitments stand. You say the manifesto stands. In the manifesto, you said will not increase national insurance, the basic higher or additional rates of income tax or VAT. Yes or no, does that still hold?
Yes, it does, and we also made that commitment around corporation tax as well, and those commitments stand. And they stand for a reason, because working people paid a heavy price in the last Parliament. It was the worst Parliament on record for living standards. It's still the biggest challenge for working people, so those commitments stand. But what I want your viewers to know, that my commitments to economic stability, to fiscal responsibility, and to those fiscal rules, they absolutely stand, because they are the bedrock of stability, and only with stability can we grow the economy.
So we need to know where you're going to find the money from. The French are in a similar fiscal bind. They're seemingly on the brink of a wealth tax. Is it time for a mansion tax here in the UK?
I would like to differentiate ourselves from what's happening in other countries around the world.
Well, wheels are higher here.
Yes, but they have struggled to get a budget through. And we successfully got the budget through last year and the spending review. And many people said that wouldn't be possible because we had to make difficult decisions. But I'm up for difficult decisions when they are in the national interest, and I will continue to take them. We already tax wealth in Britain with capital gains tax, with inheritance tax. The budget last year, as you know, we got rid of the non-domicile status in the tax system. We put VAT on the school fees. We increased taxes on private jets. We already have taxes on wealthy people in Britain. I don't think we need a standalone wealth tax. And in fact, countries that do have that don't have those other taxes. So I'm not even sure it would work.
Okay, and there's been growing concern in the city as well that you could target the banking sector for higher taxes.
No, I think we probably shouldn't go through every single possible...
What's your message to the city?
Well, I think that from both of my Mansion House speeches, the city know how much I value the contribution that they make, both through direct employment and investment, but also supporting the wider economy with an efficient allocation of capital. And the regulatory reforms that I've brought in at Chancellor are all about promoting growth and job creation and businesses coming to Britain in financial services.
Chancellor, you've also already said that you would be open to just having one OBR forecast per year. You accused Liz Truss, right here on Bloomberg TV, of sidelining the OBR. How is this different?
Well, the International Monetary Fund have said that there should be one fiscal event a year, and I committed to that in the manifesto and have done since. I think that their recommendation is a sensible one. That will have to mean changes in the second forecast, but that's not about reducing transparency. That is about better economic policy making, so we're not having to change policy and giving that uncertainty every 6 months for businesses.
Okay. Just finally, how much worse do the polls need to get for you to accept that we need to replace Keir Starmer?
Keir Starmer got elected with a massive mandate last year. If someone had said 15 months ago that we would be the fastest growing economy in the G7, we'd have 5 cuts in interest rates, we would have done trade deals with the US, India and the EU, that wages would have risen faster in the first 10 months of this Labour government than the first 10 years of the previous Conservative government, I think most people would have said, I don't think so, Rachel. We've achieved those things with Keir as Prime Minister, and we'll get on and continue the job.
Chancellor, thank you so much for taking time for Bloomberg TV and radio. We always appreciate. Good luck for your speech later. Francine, back to you.
Lizzie, great interview with the Chancellor, Rachel Reeves. Coming up, China's industrial profits surged after months of declines. That's according to data released over the weekend. We speak with George Magnus from Oxford University's China Centre next.
25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. With less than 48 hours to a potential U.S. shutdown, President Trump will meet top congressional leaders in a bid to secure a short-term funding bill. The UK Prime Minister Keir Starmer says his government is in a battle for the nation's soul as Nigel Farage's reform looms large at the Labour Party conference. Plus, Moldova's ruling pro-European party is on track to win re-election, keeping the country on the path to EU membership and raising the risk of escalation with Russia. Now, official data shows Chinese industrial profits have surged after months of declines. Well, it's a signal that the government's campaign to tackle overcapacity and excessive competition in the economy is bearing fruit. Subdued domestic demand and uncertainty around U.S. tariffs, though, leaves the outlook for profits at Chinese companies clouded. Well, joining us now is George Magnus, Research Associate at Oxford University's China Center. George, I'm so happy to see you. It's been way too long. It's great to catch up, and a lot has happened actually in China over the last couple of quarters and years. Like, what do we most misunderstand about what Chinese corporates are doing right now?
Well, I think, in some respects, I think when you say what we misunderstand, I think the market, I think, has kind of had a kind of a reappraisal about this year. Obviously, the Chinese stock market has done pretty good. I mean, from a very poor start, as it were, from the last couple of years. And this kind of reassessment of China's technology role and its kind of pecking order in terms of sort of the AI league. So, things that you would normally look for, like consumer discretionary and communication services, IT. I think there has been a bit of a reassessment. So that's the good news. The bad news is I think that people don't really understand yet. And I think certainly it's a little bit kind of complicated for day-to-day market kind of observations. But people don't really understand that Chinese industrial policy is probably the biggest macro phenomenon that the world economy faces right now. Is much more important than Donald Trump's tariffs, and I think the full implication of that, I think, is not really sunk in yet. Actually.
Yeah. So, George, I mean, fundamentally, this is what going up the value chain, right? Do they need to do 30% in terms of offerings to make this a success?
What I'm trying to suggest here is that the full consequences. I mean, your lead story was about the recovery in industrial profits, which was true. There were some pretty savage year-on-year comparisons, which helped to flatter the latest August numbers. But I think that the underlying position for profitability in the Chinese corporate sector plus all of the things that we've become very familiar with, like overcapacity and deflation, and this whole kind of involution campaign or competition campaign, which the government has announced, I think are serious problems. Really, they're going to continue to dog China for quite a long time to come.
I mean, what's the China consumer looking like right now?
Not great, right? I mean, they've had this 3 billion renminbi program that they announced for this year for trade-in, subsidies basically for consumer goods trade-ins. And there have been, sort of incremental changes in pension payments and childcare allowances and so on and so forth. So these are all sort of incrementally kind of helpful, but they don't really change the underlying sort of passivity, really, about the consumption story in China as far as big-ticket items are concerned. So, airports, railway stations, restaurants are pretty full, but the big sort of discretionary items in terms of consumption are still not great. Income growth is not what it should be, and the whole kind of structure of macroeconomic policy making in China is complicated by the fact that the government is wedded to something that is not very consumer friendly.
George, I mean, is there really in the race to dominate global AI between the U.S. and China? How advanced is China?
Pretty good. I mean, obviously, everybody knows DeepSeek now. It was a company that was founded by a hedge fund proprietor and only like 2 years ago. And DeepSeek isn't alone. So in terms of the sort of large language model, scaling up, producing at low cost and so on. I mean, China's pretty good at this and catching up. I mean, I think in terms of the AI infrastructure, that people look at and say, well, where is the potential in the future? Obviously, there is still a case to answer for China, and then there's the whole issue about semiconductors and whether China's do-it-yourself kind of program really is going to be up to scratch. But it's a pretty tough competition.
George, I mean, overall, given what you've beautifully explained on kind of some of the pressures on the Chinese economy and China corporates, what do you think we'll see from China in the next quarters?
In the next quarters, well, I think the July-August numbers that we've had for fixed asset investment were really disappointing. The good news is that, in a way, is that everything got hit. So not just real estate, but also manufacturing and infrastructure. And I suspect that means that there wasn't really a fundamental reason for it, and that it was much more related to the combination of heat wave and flooding and sort of inclement weather and so on. So I suspect that in the next couple of quarters we'll see a bit of a kind of a bounce back in asset investment, fixed investment. But fundamentally, the problem, particularly as the Chinese government is preparing to launch its 15th five-year plan, which is going to be rubber stamped really at the 4th plenum, which is going to happen next month. I think that the fundamentals of the Chinese economy are kind of they're quite equivocal. On the one hand, you've got a dynamic modern sector that's the envy of the world, advanced manufacturing, etc., etc. On the other hand, you've got kind of 78, 75, 80% of the economy, which actually is really quite languishing. And not really responsive, really, because the government policy isn't geared towards helping it.
But I mean, I'm quite taken by the idea that actually we don't really know, or that there's this huge imbalance, and we're not really realizing how big of a shift China could bring to the rest of the world. I mean, is this only on the negative side, or could it actually give a boost to everyone else?
Well, I mean, it mirrors the sort of dichotomy that I was just kind of referring to, because obviously, to the extent, if we want kind of cheap or relatively cheap, goods, electric vehicles and climate change mitigation, manufacturing equipment for solar and wind and so on and so forth. Clearly, China's the sort of go-to place, and they provide that stuff. And obviously, the export push is working really well, even outside of the United States and Europe, where Chinese exports to so-called global South countries are doing extremely well. But the bad news is that, China's industrial policy, again, the starting position is China accounts for 1/3 of global manufacturing. If they want to raise that over the next, 3, 4, 5 years to, 36%, 40%, 42%, they can only do that if countries like Brazil, even countries like Brazil and India and other countries that are trying to industrialize are going to be on the losing side. And that includes, of course, US and Europe as well. So, in a way, what Chinese industrial policy is doing is providing the rest of the world with lots of cheap goods that we want, but on the other hand, it's kind of a threat to our own industries, our own economies, our own communities that we think we need to have for resilience and so on and so forth.
Always so smart. George, thank you so much for joining us. George Magnus there, Research Associate at Oxford University China Center. Now, oil is retreating this morning. That's as Bloomberg understands that OPEC Plus is likely to raise output by at least as much as 137,000 barrels a day in November. The group set to continue its strategy to reclaim market share over maintaining prices. And Israel's Benjamin Netanyahu is set to meet with Donald Trump amid assertions from Washington that a plan to end the war in Gaza is nearly complete.
It's looking like we have a deal on Gaza, and we'll let you know. Mr. President, I think it's a deal that will get the hostages back. It's going to be a deal that will end the war. It's going to be a deal it's going to be peace.
For more, let's bring in our Dan Williams. Dan, what do you expect to come out of the meeting?
I expect we might see a breakthrough, and one should be cautious about this, especially when parsing statements by the U.S. president. He is ebullient. He has made promises over the last few months that have not panned out about imminent breakthroughs in this conflict. However, it's worth remembering that we are now just over a week away from the 2-year mark of a war that's put enormous strains on Israel's resources, that's really laid ruin to much of the Gaza Strip, that has troubled the Middle East and Western powers as it spread to other fronts, affecting shipping, affecting energy, plunging Israel into an international isolation, the likes of which it hasn't seen in many years. So the vectors would seem to indicate that all parties are interested in ending this, and Trump may be able to wield enough authority and clout, specifically over Muslim or Arab countries that have themselves clout over Hamas, specifically Qatar, Turkey, Egypt, to bring Hamas to agree to this deal. We don't know the details of the deal yet, but from what's been leaked, it would suggest that it has enough points, 21 points, according to the Trump administration, to satisfy everyone or disappoint everyone in equal measure.
So, Dan, the talks come as Israel intensifies its offensive on Gaza City. What do we know? There's been huge outcries from many countries.
Well, I think Israel would say that it's thanks to that intensification that Hamas may agree. This is an intensification of military pressure. Israeli tanks were spotted at the heart of Gaza City yesterday. This is some 6.5 weeks after the Gaza City operation was approved by Israel. It's pretty clear that operation was slow-tracked. It's not a big city by international standards. We're talking about central Gaza City is about 1/3 the size of Manhattan. It really should not have taken Israeli forces this long to reach the heart of it. So yes, they are working methodically to churn up potential or suspected Hamas infrastructure, to drive Hamas fighters into the open where they can be engaged and killed or captured. But also, I think this was intended to signal to Hamas in its de facto capital of the Gaza Strip that it's game over, and that if an offer is brought to the table, specifically this offer, it's time to accept it and surrender and hand over the remaining hostages.
Dan, thank you so much. Dan Williams there with the very latest, of course, on the Middle East. Now, Denmark has banned the use of civilian drones for 5 days next week as it steps up security ahead of an EU summit in Copenhagen. The move is intended to eliminate the risk of confusing civilian-operated aircraft with hostile drones during the meeting. Now, the ban follows a surge of drone incursions across the country in the past week. And Denmark's Genmab has agreed to acquire Mirus, a Dutch drug maker that's developing a treatment for cancer of the head and neck. Genmab will buy Mirus shares at $97 each in a deal valued at about $8 billion. That represents a premium of about 41%, while Mirus stores are surging in pre-market trading. Europe's largest aviation group, Lufthansa, says it'll cut 4,000 administrative jobs by 2030. For more, we're joined by our global aviation managing editor, Benedict Kamel. Benny, run us through the details of this announcement.
So Lufthansa announced this morning. They're holding a capital markets day in Munich. It's the first time, really, they're giving a comprehensive overview of their longer-term goals to investors. And as part of that, they laid out some new financial goals, but they also came out with this number, 4,000 administrative jobs, most of them in Germany, to be cut over a number of years until 2030. So this isn't overnight. It's going to be a gradual process. But really, the message here is that Lufthansa knows its costs are too high, particularly at the mainline namesake airline. That's something they have to fix. They've tried it over the years with sort of nip and tuck measures, a bit of tweaking here and a couple of cost cuts there. This is a far more sort of robust approach that they are taking now. Obviously, the blowback from the unions is quite strong. This is a company that still makes money, even though it's not what they'd like it to be in terms of the amount, but still there's going to be a consistent fight over this. And we do have a battle over jobs that's looming. It's the pilots that might go on strike as early as this week, or they will vote to go on strike maybe tomorrow. So that gives you a sense of the battles and the conflicts that are inherent at this company.
Benny, what else can we expect from the capital markets event today?
So, as I said, this is a sort of a more comprehensive layout of where they want to go financially. They've given themselves slightly more ambitious targets in terms of profitability. They've kept their target in terms of the dividend straight. They want to go more into a digital AI kind of industry. AI is obviously a buzzword across the entire corporate world. How far it can really find its way into aviation, that's a big debate. Some airlines are trying out AI to improve the ticketing pricing. Other airlines are saying, we don't want to go there, it's not fair, we want to be transparent. So it'll be interesting to hear from Lufthansa in how far AI and dynamic pricing when it comes to tickets, whether that's something they will want to look at. And really, looking at where does this company go from here? It's a company that's grown with acquisitions. They most recently bought a big chunk of ITA, the Italian airline. They have operations in Switzerland, in Austria, in Belgium, and really how do you stitch it all together and keep it together as you have growing international conflicts, the routes to China, that's weakening, the transatlantic market, that is showing signs of weakness, particularly going to the US. More and more people are hesitant to go there. So those are a lot of the debates that are looming, and as I said, the pilot strike is probably first and foremost the one they need to fix first.
Benny, thank you so much. As always, Bloomberg's global aviation editor, Benedict Kamel. Coming up, we'll return to Liverpool for an interview with the chief economist at the Institute of Directors as we look ahead to the UK Chancellor's speech from the Labour Party conference. That's next, and this is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
UK Chancellor Rachel Reeves is set to deliver a key speech to the party faithful later today at Labour's annual conference. Ahead of the speech, Reeves told Bloomberg she will stick to the UK's fiscal rules. Well, Lizzie Burden joins us again from Liverpool after having interviewed the Chancellor. Hi, Lizzie.
Hi, Francine. Yeah, I'm pleased to say we're joined by Anna Leach, Chief Economist at the Institute of Directors. We can get the business view now on what the Chancellor's already had to say to us this morning. Thanks so much for making time, Anna. We heard Rachel Reeves saying earlier that, yes, she does stand by her manifesto commitments not to raise VAT, income tax or national insurance. So my question to you is, where should she find the money? Does she need to raise other taxes or should there be spending cuts?
Well, ideally, you would be looking at spending restraint because that would be a more growth-friendly policy area.
But the left of the party doesn't like that.
Indeed, that is correct. So if you're going to look at taxes, it becomes really challenging because, of course, the manifesto commitments rule out some 3/4 of the tax base, as we know. You've already hit the remaining section of the tax base, national insurance for businesses, pretty hard last year. So you end up with a very, very small pot of remaining taxes, or indeed new opportunities for taxes to go after. And the danger with that is the scale of the sums that she potentially needs to raise means that it's quite big raises on quite small numbers of people, which could be quite damaging for growth and behavioural responses.
So are you saying that she does need to pull one of the 3 main levers of tax and break the manifesto commitment?
I mean, reluctantly, it does seem that it would be better for growth. It would be one of the sort of less bad ways of raising significant sums without damaging incentives for growth too much.
Well, that's really interesting because typically the IOD calls for lower taxes. So is the situation that bad that you've changed your mind?
It's more about the practicalities at the moment. We would prefer more spending restraint. You know, as you say, the politics don't make that look likely. It's hard to deliver meaningful reductions within the timescales necessary when you're doing sort of large-scale reform. It's definitely something they should be doing, though. We've already maxed out borrowing. The markets have made that clear. You're only left with taxes. So what we're saying is, like, if you're going to do taxes, do the less bad ones for growth because the markets are judging us for growth.
Well, really interesting. She also said she's not sure a standalone wealth tax would work, as we know they're considering in France. What's your analysis on that?
So everything I've read about it would concur with that conclusion. A new wealth tax, particularly an annual one, would be very expensive administratively. So big cost for HMRC to set up and run because asset valuations are really difficult to do. If you try and just go after the top 1%, they're really difficult to track down. If you go after a larger segment, then you're starting to hit, you know, people on more modest incomes and first houses and things like that. So it becomes quite challenging. If you're looking at a one-off wealth tax, that's more that has to be credibly one-off, and we're not in a crisis, so it's difficult to justify it as a one-off right now.
Okay, so similar to what she said. And I want to ask, as the Institute of Directors, is Labour the party of business right now? Was it once the party of business, and then they came along with this payroll tax rise for employers, scrap the non-dom regime, stop being the party of business, and then reform comes along and they're back to being the party of business? Do you agree with that narrative?
So we don't comment on the party politics elements, we comment on policies. And Labour have done business-friendly policies. You've got the various long-term strategies. Businesses love policy stability. They said instability was the biggest impediment to growth when we surveyed them July last year. They might answer differently about the biggest impediments right now. So they are doing some elements, but what's lacking is coherence at the moment. So I like the sort of the tax one, for example. They launched a corporate tax roadmap on the day that they launched a significant unexpected increase in employer NI. You cannot have it both ways. You cannot have tax stability for business and launch an unexpected tax rate. So what we want is something that's a bit more consistent and coherent for business policy and growth.
The way you talk about the importance of stability for business, of course, it would seem that the leadership challenges don't help, therefore. We've got the Mayor of Manchester, Andy Burnham, out there saying this government shouldn't be in hock to the bond market. Does that create the instability that you say business hates?
It is a worrying area to get into because it is a bit Liz Truss-esque when you've got quite significant members of the governing leadership talking about how we should be borrowing way more and increasing public spending more, because that is similar but different to Liz Truss, because of course she was big tax reductions rather than big public spending increase. And we already have the highest borrowing costs in the G7 for various reasons, including we've got higher inflation, of course, but people do think there's a risk premium on the UK at the moment because of our weak growth outlook and actually a lack of credibility around our fiscal policy.
And I mean, the reason that there's so much speculation over who should take over from Keir Starmer is because, of course, Labour's languishing in the polls to reform. And I just wonder finally whether there's anything from Nigel Farage's playbook that Rachel Reeves should be borrowing, particularly when it comes to his suggestion that the BOE should stop paying interest on reserves that commercial banks hold with it. Should she do that?
It's a bit extreme what he's proposing. I mean, I think an area which is interesting is the fact that the US Federal Reserve have the treatment of their sort of assets, sort of similar assets and the runoff thereof treated differently in their public finances to the way we do it in ours. So I think that pragmatic reflection on how we're scoring it in our public finances deserves looking at. I don't think his proposals would be particularly helpful right now in the grand scheme of things.
Anna, before I let you go, top thing you want to hear from Rachel Reeves' speech later today?
I think I'm going to be disappointed, by the way, because you've already kind of ruled it out. I guess I would have liked to have had a bit more softening of language around manifesto commitments, but I don't think that's coming. I do like her constant reaffirmation of the fiscal rules. That's really important. I know she's going to talk about youth employment and so on. That's good.
I think the bond market likes her being wedded to the fiscal rules as well. Yeah. But Anna, thank you so much for making time for us. You've set the bar low. Hopefully we won't be disappointed when it comes to this speech later. Francine, back to you. We've just heard from Anna Leach, the Chief Economist at the Institute of Directors.
Lizzie, thank you. Lizzie Burden in Liverpool. Staying in the UK, the GSK Chief Executive, Emma Walmsley, stepping down after almost 9 years. Now, she'll be succeeded by the British drug maker's Chief Commercial Officer, Luke Mills. He's currently responsible for the company's global medicines and vaccines business. Walmsley's succession will mean the departure of one of the most prominent female chief executives in British business and in the global pharma industry. Now, the change is set to take effect in January. On a programming note, on Wednesday, Bloomberg TV will have live coverage of the Women Money Power event here in London, convening the most influential female voices in finance from around the world. We'll discuss key themes facing the future of business, and GSK's Emma Walmsley, of course, will be amongst the panelists. Up next, Bloomberg Brief. Of course, we'll also have a full roundup of what we can expect from the Fed, look at gold, another record for gold, and then we look at indices across the world. This is Bloomberg.
Key
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
A cidade estava sitiada.
Nisso ao começo eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Shutdown, showdown. President Trump and Democratic leaders set to meet on a budget impasse a day before federal funding expires. Marching higher, a potential government shutdown pushes gold to a fresh record, oil dropping on supply concerns. And Israeli Prime Minister Benjamin Netanyahu and POTUS will meet at the White House as the U.S. pushes for a truce over Gaza. Let's have a look at how we're setting up for the first of the last 2 days in September, which has been a very positive month so far, particularly for the NASDAQ 100. We did indeed have a down day on Friday, but at the end of the session, we were only down 0.3% on the S&P 500, 0.5% on the NASDAQ 100. Nothing too dramatic. And today it looks like we are pointed to power higher across the indices. Let's have a look at yields. We are down a few basis points. Of course, a few concerns, maybe minor concerns this week, maybe a shutdown. There's also that jobs report that may or may not come out on Friday, depending on the former and what that jobs report might show. So you can see the 30-year yield down to 471, the 2-year yield 362, and the 10-year yield back down to 414. One other point to notice, Goldman Sachs today overweighting equities from neutral. We'll be digging into all of that with a Goldman Sachs guest this hour. But first, let's get to some individual movers and over to London. Valerie Teitel. Valerie.
Hey, let's start with some positivity on the tech trade. This time it's out in China. Alibaba seeing some upgrades from the street on Morgan Stanley and by Morningstar. Both are more positive about its cloud revenue to come. Morningstar calling the share undervalued, which is a very interesting comment given the shares of Alibaba have soared 49% in the month of August alone, really setting up for its best month since its listing back in 2019. Let's move over to the farm pharma space, talk about GSK. There is a CEO change that they have announced. The current CEO will be stepping down after 9 years at the helm, effective January 1st. She will be replaced by the COO, and this comes amid growing concerns about the drug makers' pipeline, with these investors losing confidence in the current CEO's direction. Lastly, let's move over to the energy space. This is Occidental Petroleum. This is a report by the FT that they will be divesting their petrochemical business in what could be valued as a $10 billion company and the most expensive standalone petrochemical company in the space. Bonnie?
Valerie, thank you so much. Valerie Titel there in London. And in just moments, Goldman Sachs' Simon Dangoor joining us on the rates markets. And later this hour, we'll speak to Kayla Sater of State Street as stocks climb towards their best since September of 2007. Goldman Sachs' Simon Dangoor then writing the following: the U.S. economy is bending, not breaking. Longer dated yields are unlikely to come down as fast as shorter dated bonds until we see a clearer path to fiscal consolidation, which could keep yield curves steep. Simon joins us now. He's head of fixed income macro strategies at Goldman Sachs. Simon, why the conviction that the U.S. economy is just bending and that we're not going to see a break anytime soon, be it in the labor market or in the inflation data?
Morning, Vonnie. Good to be on the show again, and thanks very much for having me. Look, I think when you look at the broad swathe of data in the US, the picture looks reasonably good. We just printed upgrades to Q2 GDP. Q3 GDP looks like it's going to be printing comfortably above 2%. And so the broad picture is starting to look somewhat disconnected from the weakness of the labor market. Now, it doesn't mean that the weakness in the labor market is not real. We continue to be in this low hire, low fire economy. There is building spare capacity, particularly amongst younger workers, and that's going to keep the Fed focused on buffering that and taking rates down over the course of the next couple of meetings. But it doesn't look to us like a typical setup where we would be going down that much worse path.
Now, how much are you considering the potential for a government shutdown this week in your outlook?
Well, I think it's hard to handicap the probabilities that we'll actually get a shutdown. I think the betting odds have it something like 70%, but these things have pivoted on a dime pretty quickly. I think for the market, the big question is, will we get the payrolls report on Friday, or will we be left hanging? When we look back over historical shutdowns, you tend not to see a very big, long-lasting impact of the shutdowns. And I think that's likely to be the case this time, if we do indeed get a shutdown this week.
But as you could say, it could muddy the water in terms of the data and in terms of the labor market fragility at the very least. Now, your base case is for another 2 25 basis point cuts for the rest of this year and 2 more next year. What risks are there to that base case, Simon?
Well, I think this year, October seems something of a lock. The Fed's clearly in risk management mode. There's going to be some softness in the payrolls as we go through Q4 as some of the DOGE-related cuts start to feed through the numbers. That should be a well-understood phenomenon by the market, but it'll certainly something which optically will sort of present a weaker labor market. With the Fed in risk management, it seems hard to believe that risk management is just the one cut in September, so October very likely. December, there's more to play for, but again, against that environment where the Fed is trying to buffer any of those worst scenarios in the labor market, if they were to show up, we think that that's likely. 2026 becomes a little bit of a tougher call. Our base case is for a couple of cuts in 2026. We'll have to see how the macroeconomy plays out then. Of course, we've also got the question of Fed transition. And if you look at how the curve is priced into 2026, perhaps you've got one cut priced associated with transition to a Fed leadership that wants to see things through a slightly more dovish lens than the Powell leadership. And that may be something which is sticky in the market for some periods to come.
Well, as you say, with inflation, in your words, behaving or behaved, holding duration in the 5-year sector is still attractive, and you do expect the curve to steepen even more, a little bit perhaps, and at least to stay steep. Until when, Simon? When does the environment change for the yield curve?
Well, I think that the US curve, as we just discussed, is reasonably fairly priced, but the portfolio value of bonds is still there. To reiterate that point about the Fed in risk management mode, the inflation picture that we're getting really allows them to take that position. And so I think if you do get worse outcomes on the economy, again, as we discussed, not our base case, then there is value for bonds in portfolios. I think when we think about the rates market globally, the real opportunities are very much outside of the US. There's scenarios where the ECB could be brought back to the cutting table in the beginning of 2026. The Bank of England's got a very interesting setup. And then, of course, you've got Japanese rates going the other way, and we think potentially going the other way quite a lot more than what's priced into the forwards at the moment.
How much does all of this depend on the dollar continuing to stay weak?
I think the dollar has moved into more of a stabilization range here. And I think our view on the dollar is somewhat balanced. On the one hand, you've got rates in the US coming lower. You've got this question of Fed's transition as well, as we discussed next year. That might weigh on the dollar. But on the other hand, one of the things that seems to be supporting the US economy against this backdrop of softer labor markets is what's happening with the broadening out of the AI trade and the demand to pursue ever more capex. That's an environment where the US looks to be a relative winner and will probably support capital flowing to the US and prevent the dollar going too weak. So broadly speaking, we're expecting something of a stable dollar environment as we go through the rest of this year.
Well, actually, now that you mentioned it, you're head of asset allocation research, Christian Muller-Glassman, and I mentioned it just a few moments ago, preferring equities over credit today, saying that spreads are extremely tight. So on the credit side of things, would you be offloading some credit?
So spreads are very tight, and I think it's right to be cautious about playing for any further tightening. And what's on offer in the credit markets really is a carry play. As a result, we like securitized credit. We like various expressions in the way that you can structure a portfolio in the corporate credit curve to try and highlight carry, to try and capture carry. But it's hard to play for further tightening from here. In terms of a widening, I think it depends whether we go down a worse macro scenario. Of course, rates can give you some buffer in that scenario, or we shift out of this very benign technical environment that we've been in, where supply in a net basis looking across public credit markets has been very tight and demand has been strong. We expect that that sort of healthy technical environment is going to persist for the rest of 2025. What plays out in 2026 will really depend whether we get a pulse of animal spirits that results in more aggressive leveraging up. Maybe we're starting to see in places the very beginning of that, but it's early days and the broad picture still remains healthy.
Simon, thank you so much. Always a pleasure to speak with you. That is Simon Dangour there of Goldman Sachs. Now, as well, the top story is trending on the terminal this morning. China has asked the US to change its language describing its stance on Taiwan. According to sources, China has asked the Trump administration to officially declare that it, quote, opposes Taiwan's independence. The wording is stronger than the Biden administration's statement that the US, quote, does not support Taiwan seeking independence. New York City Mayor Eric Adams has withdrawn from his re-election bid amid faltering poll numbers and a struggle to raise and access money. Adams' decision to withdraw may be too late to alter the outcome of the New York City mayoral race in November. Multiple polls show Assemblyman Zoran Mamdani is likely to win. Lufthansa is planning to cut 4,000 administrative jobs by 2030 as the carrier seeks to improve profitability. The job reductions will occur through digitalization, automation, and process consolidation, with the majority of the reductions in Germany. Coming up, shutdown looms. Top congressional leaders set to convene at the White House with President Trump. That's next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Over in Washington, President Trump set to meet with congressional leaders, including Senators Chuck Schumer and John Thune, also Congressman Jeffries, at the White House today, to see if the Democrats and Republicans can hash out a short-term spending bill and avoid a government shutdown, with federal funding due to expire tomorrow. Bloomberg's Kasia Klimaszinska joins us now from Washington. Kasia, what do we know about what both sides want after the weekend?
We know for sure that the deadline is fast approaching. Government funding is expiring on Tuesday at midnight. So on Wednesday, we could see some federal activities closing down unless there is an agreement reached. So on the table, there is a bill that was passed by the Republicans-controlled House. That bill would fund the government the way it is being funded now for another 6 weeks. And Democrats say it's a non-starter. They want the government to take up healthcare subsidies and make sure that those healthcare subsidies are extended so that people don't see basically higher bills for their healthcare insurance later in the year. Republicans need Democratic votes in the Senate. They need at least 7 of those votes. So that's why there's a meeting today at the White House at 3 p.m. President Trump will meet with congressional leaders from both sides, and we'll see whether they make any progress.
Yeah, the clock literally ticking. Now, also today, Trump is set to meet his Israeli counterpart, Benjamin Netanyahu. What are we expecting to come from that meeting?
That's the main event of the day, really. The two meet at 11 a.m., they talk, they will have lunch, and then there will be a press conference around 1 p.m. here in Washington. This is the 4th time that Benjamin Netanyahu is coming to the White House since President Trump returned to office. And on the table, there is a deal, a proposal that President Trump also reportedly presented last week to some leaders in the region. That proposal would have Hamas return the hostages and Israel gradually also taking their military forces back, and so that would lead to the end of the war in Gaza. But we will see what the two decide on today. Neither Israel nor Hamas have commented on this proposal, and Israel has said that they have to wait and see what's decided today at the White House.
You know, Kasia, Defense Secretary Pete Hegseth is convening a meeting with top military officers tomorrow. What do we know?
Really not much. It's a surprising meeting. The Secretary of the Defense, Pete Hegseth, didn't give any details. President Trump commented on this yesterday a little bit in a phone interview to NBC. He said that it will be a good meeting tomorrow here near Washington. Top generals, top military officials will come down, and President Trump will stop by and visit as well. We don't know whether it will be a big speech, big message, or something may perhaps behind closed doors. We do know that it is causing some headaches here in Washington. Of course, it's it's an interesting situation from the point of view of security and also having all those important people in this one place at the same time.
Yeah, absolutely. Kasia, thank you so much. That is Bloomberg's Kasia Klimaszinska in Washington, D.C. Just to get you set up for your trading day, futures look to be pointing higher to the tune of 0.5% for the S&P. It's the same across all major indices today after a down day on Friday and really a few down days last week. Didn't really do much for the month, though. We still have the NASDAQ 100 up very close to 5% on the month, and there's still 2 trading sessions left. Bloomberg US dollar index down about 0.25%. We're seeing a little bit of strength for sterling today at 134.41. Also the euro trading at 117.25. It's stronger to the tune of 0.2%. The yen as well stronger, above 148.50 today. Now, commodities-wise, we're seeing weakness in the oil market. It looks like OPEC Plus is going to bring back more production in November, so we're seeing oil down about 1% or so. Coming up, UK Chancellor Rachel Reeves seeks to persuade the Labour Party that fiscal rigour wins votes. We're live at the Labour Party conference in Liverpool next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the Washington Post, at least 4 people were killed and several others injured at a Michigan church on Sunday. A gunman rammed a truck into the building packed with worshippers, opened fire and deliberately set the church ablaze. The suspect was killed after officers engaged in gunfire with him in the church car park. Next on the Financial Times, the Securities and Exchange Commission says the market should decide how often companies report their earnings. In an FT op-ed, Chairman Paul Atkins said, quote, "It is time for the SEC to remove its thumb from the scales and allow the market to dictate the optimal reporting frequency." And in the Economic Times, Jaguar Land Rover's owner Tata Motors is seeking around $2.7 billion in emergency funding from global banks. The carmaker is trying to ease strain on its suppliers after it had to halt production due to a cyber attack. And in the UK, the Labour Party's annual conference is underway in Liverpool. Chancellor of the Exchequer Rachel Reeves faces the challenge of convincing her colleagues that her economic programme can undermine the populist right without actually risking her reputation for fiscal prudence. Reeves spoke with Bloomberg's Lizzie Burden. Have a listen.
Those fiscal rules that we set out in the election to pay for day-to-day spending through tax receipts, to get debt down as a share of GDP, to get the deficit down this year, those commitments stand. And I'm also determined to bring down inflation further because I recognise that inflation at 3.8% is still too high.
So
that is a global challenge as well, but we get that down.
Those commitments stand. You say the manifesto stands. In the manifesto you said will not increase national insurance, the basic higher or additional rates of income tax or VAT. Yes or no, does that still hold?
Yes, it does, and we also made that commitment around corporation tax as well, and those commitments stand. And they stand for a reason, because working people paid a heavy price in the last Parliament. It was the worst Parliament on record for living standards. It's still the biggest challenge for working people, so those commitments stand. But what I want your viewers to know, that my commitments to economic stability, to fiscal responsibility, and to those fiscal rules, they absolutely stand, because they are the bedrock of stability, and only with stability can we grow the economy.
So we need to know where you're going to find the money from. The French are in a similar fiscal bind. They're seemingly on the brink of a wealth tax. Is it time for a mansion tax here in the UK?
I would like to differentiate ourselves from what's happening in other countries around the world.
The wheels are higher here.
Yes, but they have struggled to get a budget through. And we successfully got the budget through last year and the spending review. And many people said that wouldn't be possible because we had to make difficult decisions. But I'm up for difficult decisions when they are in the national interest, and I will continue to take them. We already tax wealth in Britain with capital gains tax, with inheritance tax. The budget last year, as you know, we got rid of the non-domicile status in the tax system. We put VAT on school fees. We increased taxes on private jets. We already have taxes on wealthy people in Britain. I don't think we need a standalone wealth tax. And in fact, countries that do have that don't have those other taxes. So I'm not even sure it would work.
Bloomberg UK correspondent Lizzie Burden joins us now from the conference in Liverpool. So what concrete proposals is the Chancellor going to tell the party faithful?
Well, we'll have to wait to hear at 12 p.m. London time, Vonnie, because this is when her speech is coming. And you heard her there saying that she's committed to her fiscal rules, but she's also committed to the manifesto pledge not to raise income tax, national insurance or VAT. So it's going to be very, very difficult for any other tax lever to find the money that she needs to find. Our economists estimate that that's £35 billion. And we know that the left wing of her party isn't very keen on spending cuts. So she's really caught between the bond vigilantes and that left wing. It's a very difficult task ahead. But I have to say, Vonnie, this conference, crucial for Prime Minister Keir Starmer. It really is make or break. The polls show that if there were an election now, he would lose to Nigel Farage's Reform UK party. And this conference hall, the corridors of it, are full of chatter about who could be the next potential Labour leader, because his MPs are so worried about those polls. So real pressure on Rachel Reeves later today.
Yeah, and Rachel Reeves' own personal popularity ratings have cratered, Lizzie. Is there anything she can do to win back the support of the party faithful?
Well, what she shouldn't be doing is cutting spending, it would seem. There are many other taxes, but look, I ran it past her. Should they be doing a wealth tax like France? I asked her, should she be doing a mansion tax? And she specifically said she's not sure that it would work to have a wealth tax like France is having anyway. So again, the question is, what other means of raising revenue are left for her? Yes. I'm not sure she'll be setting out the budget in this speech today. It's at the end of November. We'll have to wait.
Lizzie will be watching all of it for us. That is Lizzie Burden there in Liverpool. Coming up, can stocks continue to blow past all-time highs? Kayla Sater of State Street joins next. This is Bloomberg.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Shutdown showdown. President Trump and Democratic leaders are set to meet on a budget impasse a day before federal funding expires. Marching higher, a potential government shutdown pushing gold to a fresh record. Oil, though, dropping on supply concerns. And Israeli Prime Minister Benjamin Netanyahu and President Trump will meet at the White House as the U.S. pushes for a truce over Gaza. Let's take a look at these markets because they're certainly brushing off this week's concerns. Top of mind would be a potential shutdown. The non-farm payrolls report not even getting released in that scenario, but a non-farm payrolls report getting released is also a concern for this market this week. And of course, the sell-off last week, of course, that's what might be bringing in potential dip buyers with futures firmly pointed higher. Just 2 trading sessions left in September, which has been a not too shabby month so far. The Nasdaq 100 up 4.7% month to date, even with last week's down days. Now, Goldman upgrading equities this morning to overweight as well from neutral, citing limited correction risks in the near term, and also downgrading credit to underweight. So let's take a look at those yields because we are seeing those yields down just a few basis points. Perhaps this is where we're seeing the concern expressed. 362.25 on the 2-year, 471.44 on the long end. Let's get to some individual stocks to watch now. Here's Valerie Teitel in London. Valerie.
Good morning, Ivani. Let's start with a check on Alibaba. There seems to still be a lot of great sentiment out there for this AI trade, especially the China AI trade, upgraded by both Morgan Stanley and Morningstar. So those ADRs are trading higher by 3.5% in pre-market trade. Interesting to see that Morningstar said that their shares are undervalued, which is a big statement given that their Chinese listed or their Hong Kong listed shares have rallied 49% month to date. Let's move over to a bit of a CEO change for GSK in the pharma industry. Their CEO will be stepping down at January 1st, will be replaced with their COO, and this comes amid some worries about their pipeline for their new drugs. It'll also be interesting to see how they can turn around this pipeline under a new leadership. Lastly, let's have a check on the energy space. We had Occidental Petroleum a report in the FT that they will be divesting one of their petrochemical businesses, their main petrochemical business. So we're seeing shares of Occidental Petroleum up 1.25% on the back of this. They will be using that debt raised from the divestiture to pay down some near-term debt. Vani?
Valerie, thank you so much. Valerie Teitel there in London. Now, Kayla Sater of State Street says this isn't an economy in need of saving and a deluge of cuts isn't necessary. Even so, she sees upside to this market, writing, quote, "We expect stocks to keep making new highs as earnings growth remains robust and multiples are supported by easing monetary policy." Kayla Sater, macro multi-asset strategist at State Street, joins us now. Kayla, I have to ask, if this, in your view, is a very healthy economy and what you say is a deluge of cuts that are coming aren't necessary, what's to say that those cuts don't actually do some damage to this economy?
Yeah, hi, Bonnie. Thank you so much for having me. I think what's important here is, we say that the economy isn't in need of saving when we look at aggregate level data. Simultaneously, we still see monetary policy generally supportive of the stock market. And so really what we're getting at there is, and I think the question is, what is going to lead the stock market higher? And what we see now is that, yes, the Fed had their first cut of 2025, but we still see relatively strong economic data. And so what that means for equities is that for equities to move higher, we still expect, recent trends to continue. So still expect the AI trade, tech, those parts of the equity market to move higher, because those are the parts of the equity market that are able to outperform during a period where we're not seeing tons of monetary policy easing in large magnitudes very quickly.
If that's the case, I'm just curious as to whether comes a point at which, everything just falls apart. I mean, at the moment, it seems like when we have a few down days, dip buyers come in. And once again, this week looks to be proving that fact. Is that ever going to end?
That's a great question. I think there's a couple ways to look at this. One thing that we can do is we can look at institutional investor behavior in our data at State Street. And what we see is across multiple asset classes, we see solid signs of risk seeking. And then within the equity space, what we're seeing right now is we're starting to see investors get a little bit more comfortable adding exposure to underweight parts of the market and starting to add a little bit more cyclical exposure. With that said, they're not selling out of tech or parts of the market that have really led rallies year to date. And so, I think the breadth of what we see really speaks to the strength of the underlying market here.
So the market might be strong, Kayla, but is it a market looking past any shutdown risk and also any geopolitical risk? And is that wise?
Yeah, for sure. I mean, that's certainly something that we're keeping an eye on, especially this week. And, geopolitical risk has certainly been a factor, especially this year. But what we've seen year to date and what we've seen in the past is these events are usually buy the dip opportunities. And especially this year, this has really proven to be a buy the dip opportunity. And so we would expect that to continue for now.
Why then is gold at a record if the outlook is so rosy?
I think it's hard to find what that safe haven asset is right now. And gold is one place that has stood out to be this sort of safe haven. And so I think when you're looking to diversify, gold has really stood out this year. And so that has kind of acted as this counterbalance to some of that risk. So I would say, that's more of a diversification opportunity.
Matt Hornback at Morgan Stanley, talked about the third estimate of the GDP data that we got last week. And he said that it revealed a non-financial corporate sector that offset tariff costs through lower unit labor costs and lower profit per unit. Now, that's great for one quarter, but that's not something that can continue for several quarters. Do you have any concerns about earnings season and what it might tell us next time around?
When we look at expectations for earnings season, which we're right around that corner of earnings season, what we see is that a lot of the trends a lot of the expectations support trends, supporting places like tech, supporting places like communications, parts of consumer discretionary. And these align really well with our holdings data, where we see investors continue to allocate towards higher profitability, higher quality parts of the market. And that's where their positions align, and that's their overweights. And so because expectations align with those positions, that's why we're expecting these trends, or part of these trends, to continue.
Yeah. Kayla, the SEC chair, Paul Atkins, writing in the FT today that it should be up to companies, the cadence that they report on. I'm curious if you imagine some companies will stop reporting quarterly.
Yeah, I think that's a company by company decision. I would say, when we look at Trump's original or first administration, this is something that had been discussed as well and ultimately didn't end up panning out. But I think ultimately, like from the news we've seen so far, that would be kind of a company basis. But so far, we haven't seen much of that gaining traction, and we didn't see that gain traction in the first administration.
All right, Kayla, thank you so much for joining us this morning. That is Kayla Sater of State Street. Now to other top stories trending on the terminal this morning. China has asked the US to change its language describing its stance on Taiwan. According to sources, China has asked the Trump administration to officially declare that it, quote, opposes Taiwan's independence. The wording is stronger than the Biden administration's statement that US officials, quote, do not support Taiwan seeking independence. New York City Mayor Eric Adams has withdrawn from his re-election bid amid faltering poll numbers and a struggle to raise and access money. Adams' decision to withdraw may be too late to alter the outcome of the New York City mayoral race in November. Multiple polls show Assemblyman Zoran Mandani is likely to win. Auto parts supplier First Brands has filed for Chapter 11 bankruptcy. The bankruptcy follows scrutiny of its reliance on borrowing against future cash flows, drawing short sellers that included Apollo Global and Diameter Capital Partners. First Brands makes wipers and car filters sold at retailers such as Walmart. Coming up, countdown to a shutdown. We'll look at the prospects for getting a congressional deal to keep the government funded. That's next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The U.S. government is set to run out of money at midnight on Tuesday unless Democrats and Republicans can agree on a short-term spending bill. President Trump is set to meet with congressional leaders today to discuss proposals. For more, I'm joined by Bloomberg's Kasia Kimashinska, who leads our breaking news coverage out of Washington, D.C. Kasia, what do we know about what both sides want now after the weekend?
So lawmakers have to pass something. They have to pass a bill by the end of the day tomorrow, or otherwise, as you mentioned, the government will shut down at least partially. Obviously, some essential operations would continue. So the Trump administration has already said that it would, for example, continue to charge tariffs. But other government agencies might reduce their operations. So President Trump is hosting congressional leaders from both parties today at 3 p.m. at the White House. On the table is the bill that the House, controlled by Republicans, has passed. That bill would continue to fund the government the way it has been funded so far this year. And that's really a non-starter for Democrats. Democrats want to take action on healthcare costs. They are concerned that if nothing is done, then the medical costs will go up for some Americans later this year. And so today, for the first time, really, the two parties and President Trump will meet at the White House, but President Trump hasn't really offered any plan. What he did, he was issue a threat. He said that if there is a shutdown, then he will ask agencies to not only furlough some of the employees, which would mean they wouldn't do any work, they would not receive pay, but once a funding bill is passed, they will be called back. But President Trump might instead ask agencies to let some of those employees go, so basically fire them.
Oh, wow. Well, President Trump also said to meet his Israeli counterpart, Benjamin Netanyahu, today. What are we expecting to come from that meeting?
This meeting will happen earlier in the day. The two leaders are meeting at 11. They will talk, they will have lunch, and then there will be a press conference. And this is the fourth time that Benjamin Netanyahu is coming to the White House since President Trump returned to power. The two will discuss a 21-point plan that President Trump has. He has presented that plan to some leaders in the region earlier last week during the UN in New York. And today he will discuss it with Benjamin Netanyahu. We know that the markets are optimistic with shekel strengthening, for example, so there is some hope for a ceasefire, and President Trump himself has said several times that he wants the war in Gaza to end, that he wants the return of hostages. So I guess we'll hear from both men a little bit later today here in Washington.
A bit of an update. Now, President Trump is set to join Secretary Pete Hegseth's meeting with military top leaders. What do we know about that meeting?
Very little. Really an interesting, surprising meeting. Everything is surprising about it, including its timing. So it will happen on the last day that the government is still funded. And President Trump said yesterday that he will attend. He gave a short phone interview to NBC in which he said he will join the meeting. It will be a good meeting with a good message, talking about how well the U.S. is doing, how strong the American military is. We don't know if it will be open or closed press. What we know is that the top military officials from around the world will travel here to Washington, near Washington in Virginia, to meet with the Secretary of Defense, Pete Hegseth, and also President Trump.
All right, Kasia, thank you so much. That is Bloomberg's Kasia Kimashinska in Washington. Let's turn to commodities. We're seeing gold marching higher again as that potential government shutdown and also the weaker U.S. dollar pushes the metal to a fresh record. Joining us now is Bloomberg Metals and Mining reporter Jack Ryan. So we're firmly above 3,800 now, Jack. Why? Is it just purely the government shutdown and the weaker dollar? Are there other factors pushing this metal higher?
Well, really, over the last few weeks, it's been exchange-traded funds, so basically a big pile of gold, and you own a share of it. That's really what's been driving the gains. They've had, I think, the highest gains in about 3 years this month so far. We'll see how the rest of the month plays out. And that really shows you that it's Western investors in particular, as of late, who have been buying into gold. And that has been driving it higher. Now, around that, you have the Fed has resumed rate cuts. We know that's good for gold because gold doesn't pay you an interest rate. And then also, I think the firing of, or the attempt on the firing of Lisa Cook was a key moment because it really highlighted this Goldilocks scenario for gold, which could be high inflation and low rates. So you get gold to hedge your inflation, and you don't have high rates, making cash more appealing. And so that, I think, is what's happened over the last couple of weeks.
Now,
it's
we
driven it much higher.
have been talking about gold really all year. Even though it's gone up sort of at a measured pace, it's still gone up quite substantially. I mean, we're coming up on 45, 50% here. Does the market think this rally has gone too far and maybe even too fast?
Absolutely. I mean, you can broaden it out. You can look back to late 2022. It's more than doubled since then. Obviously, at this point, then you would have to start asking questions. Is it overbought? I think when you look at some of the data, for example, exchange-traded funds holdings, they've been increasing very fast, but they're not at their high point. Central bank buying has been elevated for a while, but it has remained quite consistent. If you look at the positioning data from hedge funds on the futures market, they're not overextended. And so you have, for example, Goldman Sachs, they predict 4,000 by the middle of next year. And they're pointing to this really key trend, which has actually really driven the broader rally, which has been central banks buying.
Yes.
And they say they can see that continuing for another 3 years. So, yeah, we're still uncertain, but a lot of banks say it still has room to run.
The factors are still there. Jack, thank you so much. That is Bloomberg's Jack Ryan. And just on commodities, I want to point out that Brent, crude and WTI both down about 1.5% on supply concerns. Signals from OPEC Plus that they will bring back some more production at the meeting that's on next weekend, that production will come back online in November. So oversupply concerns are hitting this market once again, sort of offsetting any geopolitical concerns. WTI trading down 93 cents at 64.79 a barrel. Turning to pharma now, shares of GSK getting a boost on some C-suite shake-up news. CEO Emma Walmsley is stepping down after almost 9 years at the helm. She'll be succeeded by the current Chief Commercial Officer, Luke Mills. Joining us for more now is Bloomberg Health reporter Ashley Furlong. Ashley, shares in GSK have declined under Walmsley, but, you see that. I mean, that's not necessarily, a sort of a report card maybe on her reputation throughout her tenure, but how will her tenure be seen? What challenges face her successor?
She's had a lot of wins, as well as some challenges, as many pharma CEOs have over the past couple of years. I think core among what Emma has tried to do is really to invest in the pipeline. She's really put a lot of money into the pipeline of drugs that are coming to market. She also fended off an activist investor, Elliott. She resolved litigation in the US around Zantac. But still, investors are questioning whether the pipeline is sufficient, whether the pipeline can actually meet her ambition to get to 40 billion in sales by 2031. So that's really going to be what Luke Miles really needs to do, is to get to that goal. And that's going to be about the pipeline and about delivering the current drugs that are on the market and actually selling them to more people.
Yeah, certainly the market will give him some time. We'll see how long it does give him. Elsewhere in the UK and again in pharma, AstraZeneca planning to tweak its US shares listing. It's been trying to list in the US for some time now. What are the changes that it's trying to make?
So this is very much about completely a dual listing. So it'll both be in the UK and in the US. It already had ADR shares listed in the US, but this is now a sort of a full listing there. And AstraZeneca is saying it will help it to attract more global investors. And there's a lot of focus for AstraZeneca on the US. It's really its core market. So we are sort of very closely watching and looking to see about potential more M&A there. And I know that AstraZeneca is obviously very keen to expand their investment base in the US.
Now, how does a U.S. listing help Astra in terms of, anything regulatory, particularly when it comes to this breast cancer drug that it has in its pipeline?
So, for example, with Enhertu, which we saw positive results with today, that's the breast cancer drug. The changing the listing shouldn't actually impact that at all. AstraZeneca obviously has lots of drugs for sale on the US market. This is very much about just increasing the investor base and making it easier to invest in the company in the US. As I think there's already been quite a lot of trading in shares there, and AstraZeneca is just really keen to ensure that it has both those listings. There was speculation about whether it might delist in London earlier this year, but that has not been the case, at least for now.
Well, certainly ADR is pointed higher in the pre-market, up 1% there. Bloomberg Health reporter Ashley Furlong, thank you. Coming up, a slew of jobs data and a possible government shutdown. We'll get you set up for your week ahead next. This is Bloomberg.
East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Bersetchi in Vienna, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead today. Fed speak coming from Waller, Hammock, Musallam, and Bostic all throughout the day. A lot to parse. Then a host of jobs data on deck this week, or at least we hope. It starts with JOLTS on Tuesday. Also, though, on Tuesday at midnight is the deadline for the U.S. government to agree on a new budget, or else we're in a shutdown. And in the case of a shutdown, of course, Friday's non-farm payrolls report may be delayed. Let's take a look at some individual stocks on the move in the pre-market. Keep an eye on chip makers today. Huawei plans to double its high-end AI chip output next year. Not so far having an impact on NVIDIA, up about 0.7% of the pre-market. Occidental Petroleum up more than 1%. It's in talks to sell its OxyChem unit in a $10 billion deal, according to the Financial Times. And then Moonlake, a biopharma company, down 85% of the pre-market. Weak drug data spurring downgrades across Wall Street for that company. Let's take a look at the macro picture, because once again we're seeing dip buyers potentially emerge, with S&P futures and all of the indices futures pointing to higher opens, much higher opens, in a week where we have a lot of concerning items on the agenda. The Bloomberg Dollar Index down 0.2%. That's helping gold to a record above $3,800 today, and the 10-year yield at 4.1426, down 3 basis points. Well, that is it for Monday's Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that? There
was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We lost some of that underlying momentum in the equity markets.
We're heading towards a seasonally weaker October.
It is getting more challenging as the valuations are getting tapped out.
We are relying on such a small cohort of names to drive this kind of upside.
There's as much melt-up risk as there is meltdown.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, we've seen this movie before. The nation's capital barreling towards a government shutdown as the divided Federal Reserve might have to wait for the next jobs report. Equities are looking to close out September with a 5th straight month of gains, and we're adding to those gains so far this morning.
Honestly, it's so funny to hear you talk about the government shutting down, all the geopolitical risk, the potential for the Fed chair yet again to get fired, and here we are potentially on the cusp of a September with the best return going back for a September in 2007. Look, we are looking at a market where seasonality has broken down, normal correlations have broken down. What's going to be the next driver up, given some of the skepticism that we heard, particularly last week, around the AI trade and how long that can power things forward?
I don't care about the politics, neither do you. I care about the data. My question for Anne-Marie, who's down in Washington, D.C., we'll catch up with her in about 15 minutes' time. Will we actually get the data on Friday of this government shutdown?
I was going to tell you this morning, welcome to ADP week. This is going to be not necessarily non-farm payrolls week. This is ADP week. When we get ADP numbers coming out on Wednesday, how much does that have the potential to disproportionately affect the market, especially if it does seem like there is a shutdown because of the uncertainty around Friday? This just highlights how much more every other data point is really going to make a difference.
ADP coming up later this week. Then it's the big one. I hope we get the big one on Friday. The estimate's 50K. The range anywhere between 105 at the high end. At the low end, something in a negative sign. A negative sign, maybe negative 20 on payrolls. 3-month average has dropped down from 200K at the start of the year down to 29. We want to see this story stabilize. We've certainly seen the rate story stabilize. Is the data story starting to stabilize too?
And what does it mean to stabilize? And I don't mean to be philosophical, but this is a clear debate on the Federal Reserve. Are we moving to a point where this is just naturally a low hire, low fire moment, where it is going to be naturally a lower number of jobs created in any given month? There are lots of questions around this. The absence of this data, how much does that increase the volatility in markets, especially given that this seems to be an inflation-insensitive Federal Reserve? They have made it clear, despite some hawks, I'm thinking of Cleveland Fed's Beth Hammack, you aren't seeing a lot of pushback around the idea that they are going to cut at least one more time this year.
They've picked a side. Protect employment. Despite the fact that inflation is closer to 3 than it is to 2, they've picked employment. The spread, though, and you've pointed out Beth Hammack, is still incredibly wide. And I think risk management, that phrase they used a few weeks ago, a risk management rate cut, I think that's just code for we can't agree on things right now. So let's just do a risk management rate cut and we'll work it out in a month's time.
Especially if everyone can agree on one thing, which is they are relatively far away from neutral. Maybe not that far away. Maybe some people are closer to 4, maybe some people are closer to 3, maybe, you know, the Stephen Myrons of the world are closer to 2. Nonetheless, where we are now, 4.25% or 4%, that's already something that seems a little bit elevated, according to most people on the Fed.
We're back on track this morning, higher by 0.5%, adding to Friday's gains. The equity market is positive this morning. Coming up this hour, we'll catch up with Tony DeSpirito of BlackRock, with investors looking to extend Friday's gains. We'll talk to the former U.S. Congressman Patrick McHenry as a government shutdown looms over Washington, and we'll speak to Jim Bianco of Bianco Research, with the Fed's path looking even more uncertain. We begin this hour with stocks climbing to kick off a busy week full of economic data. Tony DeSpirito of BlackRock writing pockets of irrational exuberance and a trading environment dominated by non-fundamental investors create abundant opportunities for skilled stock pickers. Tony joins us now for more. Tony, good morning.
Good morning.
Good to see you. You mentioned that phrase, irrational exuberance, pockets of. Where do you see those pockets right now?
Yeah, so I was very careful to use the word pockets because I don't think that applies to the whole market. But I do see a market where, you know, as I've discussed, the nature of the participants has changed. Fewer fundamental investors, more high-frequency traders, more retail investors. I think that helps fuel maybe some of those pockets. And then where I see the pockets are things like price-following strategies are doing very well. Unprofitable companies are doing very well. Some meme stocks. On the flip side, what's doing poorly? Min vol's doing poorly, dividend payers are doing poorly, et cetera. And so that's where I see the pockets of irrational exuberance.
You've heard the phrase irrational exuberance before. We all have. It goes back to the mid-90s.
Yeah, sure.
And when it came out of Greenspan's mouth, there were still a few more years to go. The debate that we've had around this table a few times over the last month or so is whether it's the mid-90s or the late 90s. I think we've got to ask also whether that's even an appropriate benchmark to think about stock markets in 2025. How are you thinking about those themes?
Yes, so I think about it differently, which is I think about it in terms of, is it a good market to be a stock picker? And I hear some people complain about some of these pockets of rationality, but to be a good stock picker, you actually need mispricings, right? And so I really like a market where I see the pockets of mispricings. And so in terms of the market overall, I think we're on much sounder footing than we were in the late 90s.
How easy is it to pick stocks when they could potentially be whipped around by a truth?
Yeah, so well, I think the goal is you need pockets of rationality, but you ultimately need rationality to prevail, right, for good stock picking. And I do think we have that market. And I think that, you know, there's a lot of activism in the market. There's a lot of buyout opportunities in the market. And so all those help bring stocks back to where they belong.
When you talk about stock picking, that makes me think that there isn't a lot of upside, or there isn't as clear of an upside in the overall market. Is that correct? That you don't necessarily see the sort of double-digit gains that we have been seeing for the past few years, and so right now it really depends on picking the winners and avoiding the losers?
Well, we've had, you know, certainly the 2 prior years were big gains, over 20%. This year, above 10%, right? So we've had 3 really robust years in a row for market returns. Starting points matter. I do think we have to be realistic in our assumptions about where markets will take us from here. You know, when you have a market that's at 23 times, I think you should have more muted expectations. It doesn't mean you should panic, but it just means you should have more muted expectations for returns going forward. 20% a year is not normal.
I remember that at the start of the year. It was the same conversation, and here we are, double-digit returns again.
Yes.
That's quite a return so far.
Well, double-digit, not 20%.
I'm with you, I'm with you. And it's not all multiple expansion, it's earnings too.
Yeah, sure.
Big
2/3 of it,
tech stocks.
2/3 of it roughly is earnings expansion. So earnings have done very well this year. The weaker dollar has helped, particularly in the large cap space. But yeah, earnings have been robust, AI-driven, AI-related. Plus a weaker dollar.
Some of those companies like NVIDIA, with a very powerful earnings story, have started to anchor other companies and make investments in them. There is this question as to whether that's just financial engineering or a sustainable anchor for a better future for this sector. Which side of that debate would you come down on?
Really neither. I mean, I kind of think about it as like this is a growing area. It's an area that's going to require a lot of capital. And NVIDIA has a lot of cash, for example, right? And so that's what I see happening. People with cash deploying their capital, investing in this wave.
I guess another way of spinning this is, where is the area you're seeing the greatest dislocation? Is it in tech or is it elsewhere?
Well, one of the things I find really interesting is that while there's a lot of enthusiasm in AI, and that's well-deserved, I think there are a number of companies where I see trough on trough. So I think about good compounding companies, but for they're cyclically depressed, and the multiples have come down with that. As a value investor, those have historically been great investments. I think housing turnover is one of those areas. So the housing market's been incredibly weak. Actually, turnover is way worse than starts, right? Starts is modestly weak, but housing turnover is at like depressionary levels. If you measure housing turnover as a percent of the stock, which I think is the right way to do it, we're at levels that are basically at the early 1980s when interest rates were 20% and unemployment was 10%. So that's deeply depressed. You can buy some building material stocks at 12, 13 times current earnings, and current earnings are depressed. They should grow, if nothing else, they should grow 5% a year long term, but they should have a cyclical recovery on top of that. And so you're getting a really good business, cyclically depressed on the cheap.
You know, this raises an interesting question. Neil Dutta over the weekend said, if you want the biggest argument against the U.S. reacceleration, take a look at the housing market. You can't have a housing market that's this flat on its back and have a reacceleration in the U.S. Is that a leading indicator or is that a lagging indicator, right? I mean, I guess that's my question to you. Can you bet on the upswing of turnover before rates come down, with rates higher this year than they were at the same time last year before all the interest rate cuts, and without a real material plan for how to revive this market?
Well, I think policymakers are really focused on this, right? Because this is what could create a lot of jobs growth. And so you see a lot. This is why policymakers are really trying to push on interest rates. Mortgage rates have come down. And if you think about like the embedded mortgage market, it's a bell curve, right? So you're eating away now at that bell curve. Now you're starting to see some refinancing pick up. You're going to start to see some more turnover as a result. There's talk about the administration declaring a housing emergency, for example, to try to stimulate housing. So there's a lot going on underneath the surface. It's hard to imagine it gets much worse than this, given that we're already at those early 1980s levels.
We keep going back to this issue. When the government talks about lower interest rates, they're very clear about what the objective is. It's lower borrowing costs, and they want to do something about this housing market. Now, if you want to bet against them, of course, go ahead. But ultimately, that's the goal of this administration.
Part of the problem is they keep talking about short end of the yield curve. They keep talking about the Fed cutting rates. But if you take a look at September through 2024, mortgage rates are about 33 basis points higher today than they were before the Fed cut by 125 basis points. So if that is the way that they're going to get down rates, it isn't affecting mortgages in the right way, which is part of the conundrum for so many people.
Since the Fed's meeting 2 weeks ago, bond yields have shifted just that little bit higher over the last 2 weeks. Tony, can we finish there? What is the relationship between the short rate story that Lisa's talking about and the housing market overall?
Yeah, so obviously mortgages price off the 10-year. The 10-year has started to come down, right, versus where it was earlier in the year. And then also the spread between mortgage rates and the 10-year is abnormally high right now. So there is some room there to bring things down.
Tony, good to see you. Thanks for dropping by. Thank you, sir. Tony DeSpirito there of BlackRock, kicking off our conversations for a brand new trading week. Let's get you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahara Anand. Hey, Yahara.
Hi, John. President Donald Trump said the government is likely to shut down unless Democrats back down from their demands. Senate Minority Leader Chuck Schumer says a stopgap has to include an extension of health care subsidies. The top 4 congressional leaders will meet with the president at the White House today, a day before funding is set to run out. Meanwhile, the president will be holding another key meeting at the White House today. He'll be talking with Israeli Prime Minister Benjamin Netanyahu. The meeting comes days after Netanyahu used the UN address to reject international demands for an end to the war in Gaza. Vice President J.D. Vance is expressing optimism a deal can be reached. And Team Europe has done it again, winning the 45th Ryder Cup, defeating the USA 15-13 at Bethpage Black here in New York. Europe built a substantial 7-point lead after the first 2 days, but the U.S. mounted a Sunday singles comeback that just came up short. Shane Lowry and Tyrrell Hatton sank crucial late putts to secure the emotional win for Team Europe. That's your Bloomberg Brief. John?
Nerve-wracking on Sunday afternoon when it really shouldn't have been that close. Dominant Friday and Saturday for Team Europe, and USA coming back really strong Sunday afternoon.
Yeah, Rory definitely coming back. All I can say is you took Friday off to really experience it more emotionally.
Is that where you think I was?
100%. You were there at the Ryder Cup, just experiencing this and preparing yourself for whatever was going to happen.
7 a.m. on Friday when Bryson tees off. The roar of that crowd, the atmosphere of Bethpage.
You were there.
I wish I was there.
You were there.
I was not there.
Yeah,
I wish I was there.
Why else did he take off?
All right. Up next on the program, avoiding a government shutdown.
Totally up to the Democrats. The ball is in their court. There is a bill sitting at the desk in the Senate right now. We could pick it up today and pass it.
We need a real negotiation, that you don't do this by one party putting together a completely partisan bill.
Up next on the program, we'll catch up with the former chair of the House Financial Services Committee, Patrick McHenry, live from New York City this morning. Good morning.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Snapped a three-day losing streak on Friday. The positive follow-through looks like this morning, up by 0.5% on the S&P, up by 0.6% on the NASDAQ. This from Brian Bowski of BMO. Take a listen to this. 7,000 might end up being too low for year-end on the S&P.
Yeah, we have, who are the biggest bull on Wall Street? 7,700, right? 7,700. And at what point are we going to look at other people kind of upgrading their outlooks? We're already at some of the outlooks that some people have for the end of 2026, and the AI trade just keeps on going.
With the Fed cutting interest rates, earnings solidifying, AI not anywhere near bubble territory, and the stock market performance broadening out, the believability, his word, and comfortability of US stocks is back in full swing. That's the feeling. I mean, we're going to catch up with Max Kettner later on this morning from HSBC, and he put out a titled note in the last week or so that was just up, and up. Seen a lot of that.
Yeah, well, I wonder if John Stoltzfus and Brian Belsky got in the same room and Max Kettner joined them. I think it'd be a little overwhelming for me because they would all be so exuberant about the potential valuations. Nobody can come up with a reason for this to really stop, except what happens if the Fed doesn't cut? What if we don't get data? What if the economy moves faster than we can really see?
We're hoping to get some data. We're hoping to get some data.
ADP.
This Friday, we're hoping to get payrolls under surveillance this morning, avoiding a government shutdown.
Totally up to the Democrats. The ball is in their court. There is a bill sitting at the desk in the Senate right now. We could pick it up today and pass it. That has been passed by the House, that will be signed into law by the President to keep the government open.
We've been resolute that we need a meeting, that we need a real negotiation, that you don't do this by one party putting together a completely partisan bill and saying take it or leave it.
It's the latest this morning. Top congressional leaders on both sides will be meeting with President Donald Trump at the White House to discuss a short-term spending bill in an effort to avoid a government shutdown. With the latest and with a special guest, Anne-Marie joins us now for more. Hey, Anne-Marie.
Hey, John, good morning. We are looking like we are headed towards a government shutdown, even though the President of the United States will be sitting down in a bipartisan fashion with the top leaders from the House and the Senate. An individual who has been part of these conversations in the past, because we have been here before, is Patrick McHenry, former chair of the House Financial Services Committee. Former chairman, thank you so much for joining us this morning. Just going into this meeting this afternoon at the White House, do you think there is a chance of a breakthrough and this Congress can avoid a shutdown?
No, I don't have high hopes for this. I think it's unrealistic to think that the incentives will change by simply sitting down with President Trump. The incentive here right now is for congressional Democrats to find a way to fight. That is purely it. This is a mechanism for them to say that we are relevant. They're only relevant because they have the filibuster in the Senate, and Republicans do not have a filibuster-proof majority in the Senate. The continuing resolution, which is merely to keep the lights on in government for the next 6 weeks, passed the House. It now sits in the Senate. And the minority party in the Senate, the Democrats, have the say on whether or not the bill can be brought up, and they have blocked it last week. They are likely to block it this week. They need to show their base that they're fighting, and this is their way of doing it.
Could this have any pushback when it comes to the midterms on Republicans, given recent polling shows that when it comes to health care policy, which is the crux of the Democratic issue right now, when it comes to this extension of the government funding, that they actually get favorable numbers?
They do, but the rest of the issue set favors Republicans, from the economy to law enforcement to immigration. The field is tilted for Republicans on the policy front. The one silver lining for Democrats is health care, and this is what they want to highlight in the shutdown. The odd thing about a shutdown, and this shutdown that we're looking at right now has a lot of similarities to May of the 2013 shutdown, where congressional Republicans, I was part of the group. This is why it hurts me to see what Democrats are doing right now. We said we wanted President Obama to repeal his signature health care initiative, Obamacare. Very popular. Our stance was very popular with the American people, and in shutting down the government, we got nowhere on the policy. We got nowhere on furthering the belief the American people thought the Republicans were right. I think this is what we're going to face with Democratic leaders in the Senate and in the House. They're going to recognize this fight is not worth fighting. And in fact, a shutdown is in fact and continues to be a very dumb political lever here in Washington.
Well, in 2013, when they finally came to an agreement, there was a little bit of concessions when it came to the Affordable Care Act. Could we see concessions from Republicans and Democrats this time around to keep the government open?
Well, I think it's highly unlikely on the short-term government funding. On the longer-term one, which will take time to put together, I think you can see some modifications. And there's a lot of wiggle room when you're funding a nearly $2 trillion government. And so I think there is an opportunity there. But for them to actually, for congressional Democrats to go into a shutdown strategy, this is their first time of trying this. What they're going to find is that this is not, it does not give them what they think it will get them. I think they're going to have to wait for further policy on a longer term spending bill. And they pulled this trigger at the wrong time.
How serious do you think the OMB is about when it comes to furloughs that usually happen during government shutdowns to actually making those job cuts permanent?
No, I think this is a plan the OMB director, Russ Vought, has been stewing for a long, long time. He's thought about this and thought about this and thought about it. And the White House strategy rests on OMB. OMB has enormous powers to carry out, especially in a shutdown, enormous powers over the executive branch and the functioning of the executive branch. And Russ Vought, the OMB director, has a plan. And I think it's going to be a very devastating one for Democrats. And they're going to rue the day that they actually gave Russ Vought this enhanced power. It's going to be fascinating to see what happens in the next week into the shutdown and for the weeks ahead, frankly.
A key question for financial markets as the shutdown looms is whether or not we're actually going to get economic data. We're supposed to get the non-farm payrolls report on Friday.
If we were in a shutdown, will we get that report?
It's unlikely. It's unlikely we'll get that report. But this is also up to OMB. This is one of the things on whether or not it's deemed essential, the funding streams, or it's a complicated set of laws that OMB has the wide authority to implement. That's one that's an open question, frankly. But also our governmental statistics are an open question by the markets anyway. There's a lot of questioning of these statistics and the validity of them. And so, I think OMB may take the broader authorities than in previous shutdowns.
Former chair of the House Financial Services Committee, Patrick McHenry, thank you so much for your time and insight this morning, having lived through a number of shutdowns in the past. Jonathan, two big takeaways. You think shutdowns are dumb. I think a lot of Americans would agree with that. But also, we might not get that jobs report on Friday. President Trump would have to deem those individuals at the Bureau of Labor Statistics essential in order for that report to come down the pipe.
Anne-Marie, let's just acknowledge that fact. Okay, we might not get payrolls. Apart from that, is there anything to this market investors need to pay attention to? They've been conditioned to ignore this repeatedly over years and years. Is it any different this time?
No, not at all. The market is just going to continuously ignore what's going on in Washington, D.C. This is going to be mostly purely political. The one thing the market is going to care about is whether or not we get the economic data. And that all depends on whether or not who they deem essential to the government continuously working and who basically gets to go home for a few weeks.
Let's hope we do. AMH, thank you. Anne-Marie with the latest down in Washington, D.C. More from Anne-Marie later on in the next hour. We'll catch up with the former senior U.S. intelligence official Norman Rule with the Gaza peace deal coming into focus. We'll get to that story in about 5-10 minutes' time. Brad, for this market, just give me the data. You deal with the politics. This market does not want to confront the mess down in Washington, D.C. because it's seen this mess a million times.
So just to get some history in here, the longest shutdown of the U.S. government was back at the end of 2018, the start of 2019. It was 35 days. In 1996, we had one for 21 days. There was one in 2013 lasting 16 days. What is the threshold for people to care? Longer than just a few hours, and that could potentially be what it is. I do think that the prospect of mass job cuts in the government could potentially change the scenario. And that, I think, is what people are looking at for the possible economic ramification, but that's a stretch. And right now, the markets are moving on.
I mentioned Max Kantner of HSBC joins us later, just published. We still see clear signs of US and global growth re-accelerating in contrast to downbeat consensus expectations. I think it's fair to say that Max Kantner of HSBC is not paying much attention to the potential for a government shutdown.
I would just take issue with this idea of consensus being that gloomy.
Got the same question.
People might feel gloomy, but they're certainly not trading as though that's the case. He also talks about how potentially the biggest aspect that could derail this would be a surprisingly hawkish Fed, and it doesn't seem like that's in the docket either.
Yeah, we're pricing in a lot of earnings growth for 26.
Yeah.
It's hard to call that downbeat.
Exactly. I mean, it seems like the consensus.
Get Max's view a little bit later.
Thank you.
Plus, Danny Berger's got your morning movers. We'll catch up with Danny next. Alibaba rising on some bullish calls. That name is up 3.4%.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Where did September go? October starts on Wednesday. This year's flying by. It's been 6 months since Liberation Day. Can you believe that?
No, I can't. And actually, it seems like it's been about 5 different years and distinct narratives. And I'm just so excited for the next couple of months.
Just absolutely wild. Looking forward to closing out the year, right?
Well, yeah, the end of the year, but also
3 more
just
months to go.
the wild ride that we're going to get in the next 3 months as well.
Q4 just around the corner. Futures look like this. On the S&P 500, positive by 0.6. On the Nasdaq 100, up by 0.7. Advancing going into the payrolls report that we hope we get this coming Friday. Into the bond market, we look like this. 2-year, 10-year, 30-year bond yields down across the board. We're down 2 on 2s, down 3 on 10s, 414 on 10s, 362 on 2s, and that whole curve just kind of grinding higher ever since the Fed met a few Wednesdays ago.
It has been led by the front end, which I think is interesting. And you still have this yield curve flattening going on, which is counter to what a lot of people were expecting. It does seem as though, especially given some of the hawkish rhetoric out of the Fed, but also the upside surprises and a number of different data points, people are saying maybe this Fed's going to be a little bit more concerned about inflation. And I have to say, the idea that the hawks are coming out swinging and that there are a number of them signals that maybe there's going to be more pushback to just cutting down to 2% like some people
Yeah, long ends, it's super interesting, but the front end has got interesting too. Rate story stabilized. Fed speak is super divided. Data stabilized too, and I think that's really important about the future of that Fed debate, which is why, again, I want to see that data this coming Friday.
I think ISM manufacturing, JOLTS data, ADP data, jobless claims, all the data we're likely to get regardless of government shutdown are going to take on a disproportionate amount of meaning in a potential dark zone, at least for official data.
It is a week packed with economic data. If you switch at the board, I just want to finish on this story here in the commodity market. Crude down by 1.5% on Brent, on WTI down by 1.7. If you wanted some comfort in the disinflationary story that the president and the White House is searching for, you might get it from OPEC at the moment. We're reporting here at Bloomberg they could be boosting production again in the next month or so. That's weighing on the commodity market this morning.
Yeah, and it comes after what we saw on Friday, which was a pop, Brent reaching the highest level since July, on concern that there would be a more hawkish policy when it comes to Ukraine and Russia, potentially strikes, allowing strikes after Russian assets, et cetera. So a real question here about how much OPEC is doing the heavy lifting to offset the geopolitics of the moment.
That's the cross-asset picture so far this Monday morning. Let's get you some single names, some stock movers, your morning movers with Danny Berger. Hey, Danny.
Hey, John. Occidental moving to the upside this morning, more than 1%. The FT reporting that they're looking at selling their OxyChem business. It's their petrochemical business for as much as $10 billion. Now, the FT reporters there didn't name the potential buyer, but it would be one of the biggest sell-off of one of their assets, and they've been doing so. They've been winding down a lot of their assets, looking to pay down debt. So that's the story with Occidental this morning. Meanwhile, the defense companies also moving higher. A story about an hour ago that the Pentagon has asked defense companies to double or even quadruple their missile output in some circumstances. They said they looked at the current stockpiles of U.S. weapons and deemed it far too low if there were to be a conflict with China. Off the back of that, you have Lockheed Martin up 2.5%, RTX up 2.3%. Of course, there's a question as to if they can actually put that output out as quickly and where the money would come from to do so. Finally, wrapping things up with Alibaba, the ADRs also to the upside this morning, 3.4%. A lot of analyst excitement. Specifically, Morningstar says fair value for the ADRs is 49% higher than it currently is, just given all the investment they're putting into AI data centers. That is a punchy number considering they've already doubled so far this year. John?
Danny, thank you. Appreciate it. More from Danny in the next hour. On our radar this morning, President Donald Trump once again turning to social media to escalate his long-running feud with Fed Chair Jay Powell, posting a cartoon on Truth Social that shows him delivering the famous line, "You're fired." I wonder what you thought about this over the weekend, because so many people just wanted to move on from this story, and the president trolling the Fed chair once again.
Well, trolling is the key word. Do you take this as mandate? Do you take this as policy? Do you take this as the path of travel? Do you take this as just amping up the pressure? How do you understand this? What is the political analysis of a cartoon that says, "You're fired"? I mean, it's this idea of at what point is this reality? At what point is this theatrics.
So we're kind of blessed in the sense that we can just follow the markets and their response and reaction to these kind of things and don't have to provide our opinion to any of this stuff. If you are worried about central bank independence, the first place you should look is inflation expectations. And there is very little sign, if any, that market-based inflation expectations have become unmoored, unanchored. You don't see that, so I would say this market at the moment doesn't really care.
This is the reason why Fed Chair Jay Powell has not been fired and why they have yet to announce who his successor is going to be. Because you can keep raising the specter of a boogeyman, of someone who is not doing their job right, at the same time that you might be getting data that isn't perfect or that might be a little bit lumpy. So it comes with this interesting moment where it's raising the pressure to one constituent. The market's not listening, perfect. You don't want the market to listen. And it serves a lot of different purposes. And that is how I read this exactly. Because ultimately, people have noticed, hey, guess what? We haven't gotten another Fed chair successor, a nominee. That would have undermined Chair Powell's credibility and the narrative. They haven't done that yet, even though they could have. And that, I think, tells you everything you need to know.
Maybe the market's got a sense of humor. I don't know. If you told me 12 months ago that this would be something that happened over the weekend and we'd wake up Monday morning with bond yields lower, stocks higher by 0.5%, just shrug it off and ignore it.
Yeah.
I'd be surprised by that 12 months ago. I'm not surprised now.
Yeah, well, I don't think that bond traders looking at that being like, ha ha, that's a knee slapper. But I do think that people are saying, we can't really take signal from this. This is just reiterating the rhetoric we've heard before.
That's the latest on the Federal Reserve. I wanted to turn to this as well, the latest for New York politics. New York City Mayor Eric Adams has dropped his re-election bid. Adams citing low polls and a finance dispute, fueling speculation he's clearing the path for Andrew Cuomo to challenge frontrunner Zoran Mamdani. Elsewhere, China's Xi Jinping is reportedly pushing for a major shift in U.S. policy on Taiwan. According to the Wall Street Journal, Beijing is pressuring the White House to formally declare it opposes Taiwan independence, a move that would be a significant diplomatic win for China.
This is one of the biggest stories that are under the radar that I think that really is going on right now. The idea that if this is a more transactional United States, could there be a geopolitical compromise, which is what Xi Jinping ultimately wants, which is to bring Taiwan back under its fold, and the U.S. maybe pulling back from the South China Sea, some of the military reserves, et cetera. That's something that a lot of people are watching and wondering, is that up for grabs in this sort of grand détente between these two leaders?
Compare this with the Huawei headline that we got a little bit early this morning, aiming to double the highest-end AI chip output by 26. I think to some extent these stories are connected.
The idea of getting leverage and saying we can detach from you, or we can use your tech and be interdependent and help support you, as long as you allow us to really connect with Taiwan more deeply. And this, I think, is what a lot of people are watching. I wonder how much this is going to split the Republican Party, though, because this isn't necessarily a Republican-Democratic issue. This is something that has been unified, bipartisan kind of feeling about Taiwan's independence for a long time.
That's the latest from the Wall Street Journal. Let's stick with geopolitics. President Trump seeming confident that there will be a breakthrough in Gaza ceasefire negotiations as he prepares for a meeting with Israeli President Benjamin Netanyahu at the White House.
It's looking like we have a deal on Gaza, and we'll let you know. I think it's a deal that will get the hostages back. It's going to be a deal that will end the war. It's going to be a deal it's going to be peace.
Joining us now, our very own Bloomberg's Anne-Marie is back in Washington, D.C. with a special guest. Hey, Anne-Marie.
Hey, John, good morning. Ahead of that meeting today, lunch and then a press conference between Prime Minister Benjamin Netanyahu and President Donald Trump, we're joined by Norman Rule, former senior U.S. intelligence official. Norman, thank you so much for joining us this morning. Ahead of this meeting, the president is sounding very confident. He thinks there could be some sort of breakthrough when it comes to Gaza. Of course, we have been here so many times before. What makes this time different?
Good morning. Well, the president, his team, and even some Israelis have voiced serious optimism in public on these statements. This deal also has general support of the Arab states and even some senior Israeli opposition leaders. However, Hamas has not yet seen the proposal and will resist disarmament and loss of power. The proposal also includes several points that cross very real red lines that could collapse the Netanyahu government. So the deal should not yet be considered certain, as Israel and Palestinians will attempt to modify provisions that touch issues they oppose, and there will be some hard bargaining today at the White House.
The president's team proposed this plan last week on the sidelines of the UN General Assembly to a number of Arab leaders. Do you get a sense that the Arab world is on board with this 20-point plan?
In general, yes. This deal has been coordinated with the Arabs, and it addresses many of the points the Arabs have been seeking for many months. It provides for withdrawal of the Israeli forces. It provides for an end to the violence. It provides for humanitarian support for the Palestinian people. And although it doesn't give a direct path to Palestinian statehood, it provides a center of gravity for the Palestinians to begin some form of an authority that would allow them to rule themselves. And it also provides for the eradication of Hamas, which Arab states all support.
How has Israel's strike on Doha changed the dynamics going into this bilateral meeting for Benjamin Netanyahu and the President of the United States?
Well, the Israeli strike was obviously staunchly opposed by the Arab states. It infuriated the Arab states. It made Israel appear as a source of problems more than a source of solutions in the region, and it put those members of the Abraham Accords in a very difficult position. I think that just put another log in the fire of the ongoing political pressure that the Arab states had already exerted on Europe to produce a greater sense of political support for recognition of the Palestinian state itself at the UN, where there were more than a dozen states that signed on to that. So that initiative, combined with the ongoing violence in Gaza, combined with the many months of quiet diplomacy by Steve Witkoff, Jared Kushner, and Tony Blair, all came together in sort of three trains coming into the station to produce this week's diplomacy at the White House.
Norm, elsewhere in the region, I'd love to get your take on a country you know a tremendous amount about, and this is Iran. And just yesterday, we saw sanctions on Iran given the snapback at the UN General Assembly. What kind of penalties is Tehran going to be seeing with this snapback action?
The most significant aspect of these penalties is that they are UN sanctions, which means in the past, many countries, Russia and China, for example, could ignore U.S. sanctions, saying that they were extraterritorial and therefore sanctions they could ignore. But these are now UN designations, so that in essence, Russia and China will be ignoring UN sanctions. Now, they will ignore those sanctions on oil sales, but this makes it difficult for other countries to participate in Russian, Chinese, Venezuelan sanctions busting. And it makes it much easier for the United States and our partners to clamp down on Iranian sanctions evasions. Already we've seen the Iranian rial increase in its, or rather collapse in its value, and we're going to see some serious economic pressures build in Iran itself in coming months. This will be a very serious economic challenge for an already pressured Iranian regime.
Will these sanctions push Iran to the negotiating table with the United States?
Not in the near term. Iran will need to demonstrate defiance. It will need to demonstrate some sense of its ability to move through these sanctions. But this is a serious challenge for a government that has already proven to be politically bankrupt, facing multiple economic issues for which it has no policy solutions. It's trying to survive the transition to post-revolutionary leadership, and it's got no serious options sitting in front of it. And now it faces the loss of some of its few economic tools. So for Iran itself, it's going to be in a very difficult position. So coming weeks, months, we'll see how these sanctions play out. You're going to see rising costs. You're going to see shipping costs increase. You're going to see Iran having difficulty with some of its exports, its imports. Its very limited foreign investment will diminish even further. And again, its rial will continue to decline in value.
Norm, thank you so much for your time this morning. Norman Roll of CSIS and, of course, a former U.S. intelligence official. John, there's a ton of moving parts right now in the Middle East. We just ended there on Iran and potentially what the secondhand nature is going to be from the snapback of those sanctions on European countries on Iran. But heading into this meeting this afternoon, this is going to be a crucial one for the region between Benjamin Netanyahu and the President of the United States on the heels of the U.S. talking to the entire Arab world at the UN last week about this 21-point plan to try to bring an end to the fighting and get some sort of ceasefire agreement and path forward for Gaza.
Anne-Marie, appreciate the update. Anne-Marie down in Washington, D.C. More from AMH in about 30 minutes' time. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. UK Prime Minister Keir Starmer has framed his political survival as his country's best hope of defeating populism. Starmer is trying to regain the faith of Britain's electorate amid complaints his government is not taking radical enough action on concerns such as cost of living and migration. In an interview with the BBC, Starmer drew political battle lines with Nigel Farage's Reform UK. Meanwhile, Moldova's ruling pro-European party is on track to win re-election, keeping the country on the path to EU membership. President Maia Sandu's Action and Solidarity Party received a majority of the votes. Once certified, the results will be a major blow to Russia, which has allegedly spent millions to install pro-Moscow forces in the country. And Huawei is preparing to ramp up production of its most advanced AI chips over the next year. The Chinese company plans to make about 600,000 of its marquee 910C Ascend chips next year. That's about double this year's level. Huawei is also working on a chip powerful enough to train AI algorithms, not just operate them, in order to compete with NVIDIA. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, rate cuts on track.
Households do not like the inflation, so I think it's incumbent on the Federal Reserve to make sure inflation stays low. This leaves everything on track to have further rate cuts during the next two meetings.
Jim Bianco of Bianco Research joins us next.
You missed it on the close. Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So experience. We want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Live from New York City this morning, welcome to the program. Under surveillance this morning, rate cuts on track.
Households do not like the inflation, so I think it's incumbent on the Federal Reserve to make sure inflation stays low and stable. This leaves everything on track to have further rate cuts during the next 2 meetings of the FOMC. I do think the economy will be in pretty good shape for the rest of this year and into 2026.
So here's the latest this morning. Traders looking ahead to payrolls data due out on Friday after stronger than expected economic data. Jim Bianco of Bianco Research writing the Fed should not continue to cut rates. The economy is doing much better than the consensus. Jim joins us now for more. Jim, welcome to the program, sir. I want your perspective first on the recent Fed debate, the division that we're seeing from the Fed speak of the last week or so. Where'd you land on things, Jim?
I think some of that is political. I think some of the Federal Reserve officials are running to try and replace Jay Powell. And I might respectfully say that the quote you had from Jim Bullard is in that camp, too, because it was very inconsistent what he said. And I think some of it is genuine, that there is some that are looking at the economy kind of like I do. And that is that it's doing okay, if not better. The Atlanta Fed GDP number is now nearly 4%. It's higher than every single estimate on Wall Street right now, and the inflation data is staying sticky, and the goods part of data, which would be tariffs, is really starting to show signs that it's moving higher. So for those that say, where's the tariff inflation? It's right there. It's coming. It's underway in the CPI goods category.
Jim, how credible do you think this pursuit of 2% is? It's something that dominated our conversation on decision day. Is this credible?
It's got a problem. And the reason it's got a problem is if you look at the inflation expectations data, I'm talking about like the inflation swaps or the CPI break-even rates, or the TIPS, break-even rates. They're all above 2.5% out till 2030. Well, I know, one of the best questions I heard during the press conference was from Mike McKee, where he pointed out that the Fed said, we'll be at our target in 2 years. And he pointed out the last 11 years, you've said you'll be at your target in 2 years, and you've yet to be at your target in 2 years for 11 straight years, and now you're going to try for a 12th year. And the market is saying you're not going to be at your target for 5 more years, because out to 2030, it's still got, elevated inflation. Not runaway, but definitely not getting anywhere near 2%. And the Fed needs to address that. And they're really not at this point.
At the same time, Jim, can't you say that tacitly, if they're accepting 2.4%, which is currently what break-even rates are pointing out for the next 10 years, is the likely inflation rate? If that is the inflation rate, isn't this market and isn't this Fed saying that's fine, as long as we don't torpedo the labor market, as long as we keep the economy chugging? Where's the problem?
The problem comes in where's the neutral rate. If you're going to accept 2.5% or so as the inflation rate with R-star, that's 3.5%. If you're going to, that would be a 1% premium above that. If you're going to accept 2.5% as inflation, maybe R-star should be a little bit bigger. In other words, you're no longer moderately, you're easy in the market. You're probably at neutral. And if you cut 1 or 2 more times this year, you're going to be too easy in the market, and you're going to risk fostering more inflation. So it really comes down to, do you want to cut rates 2 more times? If you do, then you shouldn't be tacitly accepting 2.5% as the inflation rate, long-term inflation rate, because you should be done cutting rates then at this point.
Do you get comfort, Jim, from the fact that after the Fed cut rates, you aren't seeing a steepening of the yield curve? You aren't seeing a runaway at the long end of the yield curve like what we saw last year, that people are seeing there as justification economically for the Fed to be more aggressive?
Yeah, at least at this point, but I fear that we're in a holding pattern waiting for more data, and I also fear we're not going to get that data because we're going to have a government shutdown on Wednesday at midnight, and I'm talking about like the payroll report on Friday, and next week the CPI report. Remember that the last government shutdown under Trump in 2018, 2019 lasted 35 days, and the Fed is effectively going to go into the October 29th meeting with no more government data, which is what they rely on, Jay Powell called it the gold standard, than they have today, and they'll just assume that everything is as they understand it today, and they'll cut rates. And what I'm afraid of is when we get that data, whenever we get that data, it's going to show a meaningful uptick in the economy.
Jim, I want to build on that. We've been talking about this reacceleration now for a while. Market's priced for it into 26. Lisa mentioned Neil Dutta early this morning. This is what he said on the jobs market. If firms expect growth to perk up, it's curious they haven't ramped up hiring an hours already, Jim. What do you say back to that?
You know, I think the issue with the labor market is really the break-even rate right now. We need to start ask the other side of the question, which nobody wants to touch. Okay, we've created 29,000 jobs over the last 3 months. How many should we be creating? And Jay Powell answered that towards the end of his press conference. He said maybe 0 to 50,000. Midpoint of that's 25,000. We've created 29,000. I understand this is a number that we're not used to. To say 29,000 jobs over 3 months is just fine. That's all we need in this economy. But we've got the lowest population growth in almost 100 years because of the closing of the border and increased deportations. And if that's the case, if you have no population growth, you don't need to create that many jobs. So really, this is the crux of the labor market issue. It's not how many manufacturing jobs versus service jobs versus healthcare jobs did we create last month. The fundamental question is, how many do we need? And the answer might be not that many, given low population growth.
Jim, thoughtful stuff. As always, Jim Bianco of Bianco Research. We've heard this a few times. You've had a step down in payrolls growth. You haven't had a step up in labor market slack. And the second one, the latter, is really important when it comes to interest rates. What's curious about Chairman Powell is he was focused on that, and then he wasn't.
Yeah, I knew you were going with this, the idea that suddenly first it was the unemployment rate that was the most important because of this concern, and now it's the headline number as there is this concern about more weakness. The kink in the ointment, or the fly in the ointment here, to me, is early market entrants, college graduates, their inability to get a job, the sense that people have where they're not necessarily quitting as frequently and they're not necessarily getting as big raises when they get to another job. Those are the signs that there is something going on that maybe is more than just something that's healthy.
Which obviously has spooked this Federal Reserve.
Correct.
But it's not just a supply story, it's both.
Right.
And they're concerned by one more than they are the other. Up next on the program, Max Kentner of HSBC, Henrietta Trays of Veda Partners, and we'll catch up with the PIMCO CEO, Manny Roman. That conversation in the next hour.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to
continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is a completely unique environment.
We're entering Act 2 of tariffs.
There's a lot of elements here that can serve as tailwinds to the consumer, but once all that evaporates, we have to wonder where we'll be.
The consumer feels like they are running out of steam.
We think actually you're going to be more able to see where the economy stands in 6 months or so.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Snapping a three-day losing streak on Friday with some positive follow-through. Up again this morning by 0.6% on the S&P, likewise on the NASDAQ. A rally in the bond market, 2-year, 10-year, 30-year bond yields down across the board. We're lower by 3 basis points on 10s. We're down 2 on 2s. Looking ahead to a week full of economic data, and hopefully we climax on Friday with the payrolls report.
In the meantime, people are going to be putting increasing pressure, increasing emphasis on the ADP report, on the ISM manufacturing, on the JOLTS, the job openings data, all of the other peripheral information that we can get, because ultimately it is such a wild card about whether we will get that data on Friday. Just to give you this perspective, there is now into prediction markets a 3 in 4 chance predicted that the market will shut down and that we probably will not get that labor market report on Friday. So, maybe I'll take it off.
I hope we get the ISMs. Of course we will. And that will show, and this is what I hope for, it's going to show the reacceleration the market's priced for. The jobs market's its own beast right now. We've talked about that. Supply side story versus demand side story, don't know. Okay, continue having that debate. If you believe in this reacceleration story, you've got to hope to see that in the ISMs this week. I think that's really important for both manufacturing and for services too.
And if you take that logic, and I think it is the right way to look at it, then what happens if it's a disappointment? If you do believe that there's going to be more volatility in the markets around some of these peripheral data points, is bad news bad news if you get some sort of a sign of weakening or a lack of reacceleration in manufacturing? Do you get some of the rose off the bloom of all of the people who are betting on a reacceleration, and the likes of Goldman Sachs or Brian Belsky at BMO or other analysts have come out and upgraded their forecast for stocks? Is that part of the story that they need to see come through?
In the long run, good news is just good news. Eric Robertson of Stanchart has said this over the weekend. We may have already seen the trough in the US economic data. That's what the market's priced for. That's what we need to see now. And I hope we see that in the ISM when we get it later this week.
Although, here's the rub, and this is a bit of an issue. This is all predicated on the Fed continuing to ease policy rates. If the Fed gets justification not to ease policy rates because of the reacceleration that's in the data now, does that stymie some of the bullish calls that really see a lift from some of the Fed accommodation?
I mean, possibly, of course, yes. If you look at small caps and they've rallied almost exclusively on the rate story, there'll be pockets of this market that won't like that. What would concern me is what's stopping the Federal Reserve. Is the Federal Reserve constrained by the inflation story or just happy with the growth story? If they're happy with the growth story, that's a good story for risk. It always is, over the long term. If they're constrained by the inflation story, we've entered a new regime. That's problematic. And a risk of seeing a repeat of what happened last time when they had to really take a step in and do something about inflation and sacrifice things in the labour market. I hope we don't get there. There's a lot of hope coming out of my mouth this morning. I hope that's not what we see.
Well, I think everyone pretty much agrees with you who's long this market because, as our next guest talks about, the one potential scenario that could stymie the rally and the incredible enthusiasm that we hear around every corner in Wall Street is a suddenly hawkish Federal Reserve exactly because of some sort of inflationary threat.
He's coming up next. Max Kettner of HSBC is going to join us as Wall Street looks to recover from last week's losses. Plus, Henrietta Trays of Veda Partners as the government shutdown standoff deepens, and the PIMCO CEO, Manny Roman, on financing the AI infrastructure boom. We begin this hour with stocks inching higher as investors continue to navigate the AI boom. Max Kettner of HSBC saying things are looking up, writing the broad-based asset price inflation is continuing full throttle, and we think there's more to come. Max joins us now for more. Max, good morning.
Good morning.
See you. We were talking about your note you published earlier this morning, so I think we should probably start there. So here's the line. We still see clear signs of US and global growth reaccelerating in contrast to downbeat consensus expectations. Lisa, straight away, bang. What's downbeat about consensus expectations into next year?
Look, I think when we look at both earnings expectations and top-down GDP expectations, they are still pretty downbeat. Certainly not where GDP now is, where all the high-frequency data are, both top-down and bottom-up. If you look at bottom-up, actually, when we strip out tech, earnings expectations Q3 versus Q2 are pretty much flat. So we're going into Q3 earnings season in a couple of weeks where, for most sectors, actually consensus is saying earnings are either going to be flat or down quarter over quarter sequentially. In a quarter where probably growth has been really, really robust from a top-down perspective. That doesn't make sense. If you look at Q4, even GDP, what we're seeing is it's barely 1% quarter-over-quarter annualized growth expected. Again, what we are not only seeing at the headline number, that 1%, which is a 0.25% annualized, but when we look at the contributions to that, consensus is still saying there won't be any comeback of investment. And that doesn't make sense to me. You can't say we've got a little bit less political uncertainty. We kind of know how to deal with this environment now. We've got the big, beautiful bill coming through. We've got wealth gains coming through. We've obviously got, these AI capex story coming through. But at the same time, consensus is saying, nope, all this tariff story, it's going to continue weighing on investment in particular. And that's really big upside surprise potential.
I think the reason why both John and I were a little bit confused by this idea of consensus is because in the past couple of days, Brian Belsky saying 7,000 for next year, not necessarily high enough. Christian Muller-Glissman over at Goldman Sachs upgrading their forecasts, and Goldman Sachs keeps upgrading to the markets repeatedly. John Stoltzfus, the biggest bull on Wall Street, you see others just coming out of the woodwork talking about 7,700 on the S&P for next year. How can you say that's a bearish outlook or not bullish enough?
Yeah, look, actually, what we are seeing now, that sort of streak of upgrades, that's the most bullish thing that you can imagine. Because we run a series called Consensus GDP Forecast Diffusion Index, where we actually look at the data that you guys produce, so all those consensus expectations around GDP. Once that shoots higher, so once you really see upgrades across the board for the major global economies, so for the likes of the US, Canada, China, Eurozone, and so on, that is really, really bullish. Right, particularly for cyclicality, particularly not only for adding for equities, and not just, okay, it's a monetary-driven story, it's probably tech outperforming, but really for cyclicals to outperform. Now, on the other hand, let's not just focus on the expectations and on people upgrading their, the year-ahead forecasts, but also about the market action. When we look at the market action year-to-date, and you look within the S&P, cyclicals are up pretty much the same as defensives. So it's not like cyclicals are up 20% and defensives are like 5%. And you're like, wow, this is all baked into price action already. No, both are up, give or take 9%. So it's not like actually price action is telling us, wow, there's so much hope into cyclicals baked in.
Not to be a negative Nelly, but you could argue, hold on a second, not always. I'm just contrarian Courtney. Look, honestly, we're looking forward and we're talking tonight. Please, bear with me. Honestly, you could say if things were looking so good, why is the Fed cutting rates?
That makes it even more bullish, if we're honest.
Right, sure, but why should they cut rates?
They shouldn't. I mean, don't ask a German why they should cut rates, right? The German will always say they shouldn't be cutting rates. No, I mean, look, I guess the point is to bring it back to slightly more, serious topics. If we look at what the Fed can do, can they cut another 1 or 2 times? Sure, fine. Should they necessarily, with uber loose and easy financial conditions? Probably not. With 3-ish inflation, should they really be cutting a lot? Probably not. But at the same time, what we undeniably have is we have weakness in the economy. It's very different. The economy is on 2 very different paths, let's be honest. If we weren't market people, if we were people working in the labor department, we'd be talking about the economy very, very differently. There is absolute strains on the weaker part of the economy. We're talking about the Russell 2000, John. You were talking about the Russell 2000. Let's go one step down. Let's go to the smallest caps that aren't actually listed. There is very clear strain. They can't get funding. You look at credit card delinquencies, auto loan delinquencies. Look at real wage growth, the highest wage growth percentiles versus the lowest ones. The lowest ones are already going to around 0% real wage growth. Tariffs, of course, are eating into the lower-end consumer goods, into things like food and beverages that already have outstripped cumulatively inflation since COVID. Now you add on tariffs. It's a clear strain on the weaker part of the economy, and they need the rate cuts. What that, of course, for us means, it's even better for asset price inflation. Because you've got a re-accelerating economy, and now you throw on rate cuts, which normally never happens.
That story you described doesn't make you bearish. In fact, it makes you incrementally more bullish because they're going to have to respond to it. What would make you bearish is what Lisa is trying to ask here.
Yeah, I think, look, it is very clear. Anything around, let's say, Supreme Court or government shutdown, that's like, yeah, can we get like 1 or 2 or 3% down? Sure, right? A handful of percent down. But at the end of the day, this is just buy the dip opportunities. The reality is, if we get a return to 2022 where the Fed says, oh, shoot, we are very wrong. This is like 2022, this is transitory. If we say, oh, you know what, this is not just 3%, this is entrenched 3%, and 3% seems to be the low now, and now we're re-accelerating even inflation. We're not even done cutting, we're not even stopping. We're actually, the next move is a hike. Once we get that puts a stop to it. How far are we away from that? Minimum 2 quarters. Last week I still had conversations about, oh, they're going to do 50 in October. We're minimum 2 quarters away from that, because let's remember, we have had this re-acceleration in the data that, not a lot of people were talking about a month and a half, 2 months ago. Now it's sort of creeping into people really and saying, hey, look, yeah, the US seems to be doing better from an aggregate growth perspective, but what we really need for a proper hawkish shift is actually a re-acceleration in the labor market. And given that supply story, given that really low break-even number, it's almost impossible to get that in the next couple of months. Right? So that makes it sounds intuitively completely wrong, but it's the best of both worlds. You get a sort of weak-ish labor market, but you've got re-accelerating activity data, which means good earnings, but sort of sluggish consensus expectations, low bar to beat, but at the same time rate cuts into a re-acceleration. Which, Lisa, to your point, is that a policy mistake? I think so. But of course, that's probably a story we're going to play in 2026, not the next 6 months.
Max, smart, and good to see you. Thank you, sir. That's the bull case this morning from Max Kettner of HSBC and contrarian Courtney coming along for the conversation.
I shouldn't have said that.
Where did that come from?
I don't know. It was just, one of those things. Happy Monday. Look, what Max is talking about is really important. It's this idea of not what the Fed should do, it's what they will do. I just wonder, are rate cuts the most efficient way of targeting the K-shaped economy? Is that the best way to help the lower income sphere of earners in the United States of America and frankly around the world? Or is that just inflating the asset bubble and creating an even bigger divide? And ultimately, is that going to be the policy mistake that we come back to?
I think Max is saying it's the latter and he's going along for the ride.
I think a lot of people are.
Basically. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. President Donald Trump said the government is likely to shut down unless Democrats back down from their demands. Senate Minority Leader Chuck Schumer says a stopgap has to include an extension of health care subsidies. The top 4 congressional leaders will meet with the president today at the White House, a day before funding is set to run out. Meanwhile, at least 4 people were killed and several others injured at a Michigan Latter-day Saints church on Sunday. A gunman rammed a truck into the building packed with worshipers, opened fire, and deliberately set the church ablaze. The suspect was killed after officers engaged in gunfire with him at the church parking lot. And New York City Mayor Eric Adams has ended his re-election bid. The announcement follows reports that Adams was entertaining potential job offers from the Trump administration and the private sector. That's in exchange for bowing out of the race to allow former New York Governor Andrew Cuomo to challenge Democratic nominee Zohran Mamdani. Carlos Sliwa is also still in the race. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, Finding Common Ground.
We want to find bipartisan common ground to find a spending agreement that avoids a government shutdown.
You don't hold the people hostage for their services to allow yourself political cover, and that's what Chuck Schumer and Hakeem Jeffries are doing right now.
Up next on the program, Henrietta Trace of Veda Partners with Anne-Marie down in Washington, D.C., and a sprinkle of guess who? Contrarian Courtney for the next 2 hours.
Come on.
You think I'm forgetting that anytime soon? Contrarian Courtney, what on earth was that? What was that?
Well, it was just, I'm not negative Nelly, then contrarian.
Yeah,
what name would you put?
All right, yeah.
Courtney.
I wasn't coming up with names for you this morning.
Let's move on.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
A big week coming up, packed with economic data. We're hoping to get the payrolls report on Friday. If you don't get that, we'll get the private market indicators, the likes of ADP on Wednesday. Look out for the ISMs, the PMIs. That's where the focus is going to be for market participants.
Yeah, ultimately, you use what you get. If you ultimately have a Fed that is data dependent, well, what do you do if you don't get data? You look at other data, the tertiary data that's going to take on increased import make ADP great again. That's going to be this week.
Then it's already been happening, hasn't it, over the past few months?
It has. It's been a disproportionate response. I just wonder how volatile markets will be in response to some of these data points that often are viewed as not consistent necessarily with the labor market report.
Particularly given the divide we've had over the Federal Reserve more recently. The scores so far this morning, pretty good. Up again following Friday's gains, up this Monday by 0.5% on the S&P, on the NASDAQ by 0.6. Under surveillance this morning, finding common ground.
We want to find bipartisan common ground to find a spending agreement that avoids a government shutdown and actually meets the needs of the American people in terms of their health, their safety, and their economic well-being.
It's fine to have partisan debates and squabbles, but you don't hold the people hostage for their services to allow yourself political cover, and that's what Chuck Schumer and Hakeem Jeffries are doing right now.
So here's the latest this morning. Congressional leadership from both sides of the aisle meeting with President Donald Trump today in an effort to avoid a government shutdown. Anne-Marie joins us now from Washington with a special guest. Hey, Anne-Marie.
Hey, John, good morning. Well, ahead of that meeting with the president, it doesn't seem like either side, Republicans or Democrats in Congress, are prepared to blink. And we're now joined by Henrietta Treyz of Veda Partners, who has a 70% chance that the government will shut down tomorrow at midnight. Henrietta, my first question's got to be, why not is it not 100%, given the fact that House Republicans aren't even coming back to Washington?
Yeah, I speak with staff on the Hill all day long, and they have been at 90% for quite some time now. I guess my reticence is just that we are still many hours away from an actual shutdown. And when it gets to this high media attention, high intensity dynamic, you don't get a resolution until the 11th hour. There are a couple of ways to get off ramps here. My odds of 70% are very high for me, about on par with the poly market odds that we've gotten now since this meeting of the Big Five, I guess, was announced for later on today. So we'll see how it goes. There's just a long way off is basically my point and why I'm at 70% odds.
What off ramps are you looking at that could be a potential in the final hours?
I want a short-term stopgap. I want like 3, 5, 7 days, nothing major. The bottom line is that there is a lot of very serious red meat that you can throw at both sides. The farmers need a bailout, for example, as China stops buying soy from the United States. The Democrats want ACA subsidies. That's a huge boon to 22 million individuals across the country. We want aid to Ukraine. There's a number of pieces that are problematic from the market perspective, suspending BLS data. A lot of chips to play here, and there are cards for both sides to deal.
On the BLS data, even if we get a shutdown, do you think we will get Friday's jobs report?
I'm optimistic that we'll get Friday's report because basically the president is going to have to decide that he just doesn't want to turn the internet on that day in order to avoid it. And I think the market's going to respond really negatively to that. In meetings across New York with investors last week, this came up in every single conversation. We've already had to deal with the firing of the BLS commissioner earlier this summer. And, you know, we're dealing with fiscal dominance on the Fed side and even at the Supreme Court. The market's going to react here. And given the timing where we can collect data all the way through the 30th of September until midnight, and then the jobs report is just 48 hours away, that should be pretty much finalized. All the commissioner really has to do is press send. We should get skeptical about reports coming 3, 4, 5 weeks later, maybe even 5 days later if you want to get to it. But at this point, refusing to release the BLS data is going to be a problem for the markets, and I think that cooler heads will hopefully prevail on that one.
Okay, so you think we get Friday's report, but looking forward, it's a little bit more murky depending on how long the shutdown could be. In Trump's first term, we saw a 35-day shutdown. Do you think we could see something as elongated as that?
That's not current conventional wisdom amongst staff. I point to a dynamic on the Hill, which is that of the 750,000 employees that are going to be furloughed in this shutdown event, a lot of them get paid on every other Friday. And so that, in this case, is October 10th. And that points to a relatively short 10, 11, 12, 13-day shutdown where staff can then get back paid as late as Monday, something like that. So that every other Friday dynamic is just a little inside baseball tidbit to keep in mind if you're an investor watching how long this could shut down. Their staff starts to hurt and feel it by the 10th.
Who do you think is going to get the political blowback when it comes to a government shutdown, Republicans or Democrats?
Well, polling suggests that Republicans are going to fault Democrats and Democrats are going to fault Republicans. The reality of the situation is that it's hard for Republicans to message that it's somehow not their fault, given that they control the White House, the House, and the Senate. Americans are used to Republicans being the driving force behind a shutdown. So in 2018 and 19, it was President Trump advocating for a border wall. Before that, it was Ted Cruz, if I'm not mistaken, on the Senate side. So this is a situation where Democrats usually are not in this position. They're always the ones that fold like a lawn chair, which I know we've talked about in years past. This is a dynamic that's a little bit fresh, and they're fighting over ACA subsidies, which is an old saw for them. They feel like they've got the American public understanding that they're the more trusted party on healthcare. When I talk to staff, there's some reticence about moving it to a tariff discussion, which polls very well for them and very poorly for the president, but they're really sticking to healthcare. I think it's bad look for everybody personally.
Speaking of tariffs, you mentioned China. China has not booked a single soybean cargo. How quickly could we see this Congress actually give a bailout to farmers?
I mean, they could put it in the CR right now. This is exactly the narrative. If you're from Nebraska, Illinois, any of the farming states, if you're Chuck Grassley, you've seen that he's furious over the weekend because Secretary Bessent is planning a $20 billion bailout for Argentina, who simultaneously is getting all the soy purchases from China and stealing our market share. That's permanent spending loss. You know, if you look at soy data, it's really fascinating. In the president's first term, they were selling over 14 billion bushels of $1 billion worth of bushels of soy to China every year. Now we're already down to 12. And given the extent of this trade war, we're now selling 0 to China. So the trajectory under Trump for farmers has been straight down, and now it's in bankruptcy territory. So there's a lot of impetus for Republican lawmakers on the House and Senate side to insert a bailout for farmers in this CR, as they are going to go bankrupt with their soy, just rotting on the vine right now.
So you're saying they could do it as soon as this CR. Will they? Will the Democrats also sign up for that?
I think there's enough opportunity for give and take on both sides. In one case, you avoid a government shutdown, which is, I think, going to disproportionately hurt Democrats this time around. Russ Vaught at OMB is making it really clear that he wants to have this be as much blue state targeted as possible. Plus, you want the health care subsidies. Plus, you want additional potential assistance to Ukraine. Plus, you want a farmer's bailout. There's a lot to go around here, and I like that. That's usually how you can get a resolution. This could become, maybe not by Wednesday, but shortly thereafter, if they get a little bit of a stopgap, a much bigger deal.
Henrietta, thank you so much for your time this morning. That's, of course, Henrietta Trace of Veda Partners. Jonathan, she thinks there's potential for an off-ramp before midnight tomorrow, and most importantly for financial markets, she thinks we get the jobs report on Friday.
Anne-Marie, fingers crossed. Hopefully we will this coming Friday. MH, thank you. Anne-Marie bringing up the right story there, soybeans. This relationship between China and America over that one issue is problematic. They've been leaning on Brazil for a long time to build up a more reliable source of soybeans. And now we've got a domestic problem in the U.S. that the government arguably needs to address.
And part of the way that they're going to address this potentially is to take money that they're getting from the tariffs and giving subsidies to soy farmers. Look, this is a real question of which constituents are going to get hit hardest from which parts of this dispersion between the U.S. and China, as well as some of the tariff revenues. How does this administration deal with it? How much pushback do you get from certain Republican Congress members in response to select policies? This is where I'm watching to understand what carve-outs are really asked for or what subsidies are requested.
Unfortunately, this has been a strategy of the Chinese for quite a while now, to put some heat on the Republican states, to try and put some heat on the administration led by President Trump. We'll see if we get changes on that issue. Coming up on the program, we'll catch up with the PIMCO CEO, Manny Roman, on financing the AI infrastructure boom and a whole lot more. Plus, Danny, has your morning movers Carnival shares higher ahead of their latest earnings report? That stock is up by 1.6%. From New York City this morning, good morning to you all. Equity futures positive by 0.5%. In the bond market, a rally. Yields down on a 10-year maturity by 3 basis points. Your yield this morning, 4.15. the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Live from New York City this morning, good morning. Equity futures on the S&P 500 positive by 0.4%. A lift in this market following Friday's gains, snapping a three-day losing streak. On the Nasdaq 100 this morning, higher by 0.5. If you switch at the board and get to the bond market, 2-year, 10-year and 30-year bond yields down across the board this morning, down by 1 on 2s, down by 2 on 10s. Your 10-year 4.15, going into a week full of economic data where we hope, and I keep saying that word, we hope we get the payrolls report this coming Friday.
If the government shuts down, we probably will not get that labor market report, and then all of a sudden we will have a jolt report that's going to jolt a market disproportionately. The volatility on the heels of all of the peripheral measures, I think, is what to watch this week.
If you are intrigued by the payrolls report, if we get it, the median estimate is 50K, the low is negative 20, and the high is positive 105, and a lot of I don't know somewhere in between. 2 hours from the opening bell, let's get you some single names, some morning movers. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. Occidental rising this morning, up 1.4%. An FT story that they're looking at selling their OxyChem unit. It's their petrochemical unit. It would go for about $10 billion. They didn't name a buyer, but they have been offloading a lot of their assets in a bid to reduce some of their debt. So again, those shares rising this morning. Also rising ahead of their earnings is Carnival Cruises. Those shares up 1.2%. They'll be reporting their earnings at 9:15 or thereabouts a.m. this morning. A lot of enthusiasm about it. Barclays points out that they're probably going to come out with a strong showing, especially given that some of their peers, Royal Caribbean, alongside some of the other ones like Norwegian Cruises, have been doing really well. By the way, Matt Miller and I will be speaking to the Norwegian Cruises CEO in the 10 a.m. hour, so one to pay attention to later this morning. Finally, wrapping things up with wheat stocks this morning. Having an excellent morning. Tilray up 18%, for example. Canopy up 14%. Aurora Cannabis up 10.7%. After President Trump put a video on Truth Social, kind of looks like an infomercial sort of thing that touted the benefits for CBD for seniors. So off the back of that, you get this rally. John?
Danny, thank you. More from Danny in the next hour. Appreciate it. Danny, thank you. On a radar this morning, President Donald Trump saying negotiations for a Gaza peace deal are in their final stages. The president meeting today with Israeli Prime Minister Benjamin Netanyahu at the White House. President Trump meeting with a bipartisan group of congressional leaders as well today as a government shutdown looms. Trump says the shutdown is likely unless Democrats drop their demands to extend health insurance subsidies. And finally, Vice President J.D. Vance saying he's confident that U.S. version of TikTok has been successfully separated from its Chinese parent company. President Trump signing an executive order last week approving the proposed deal.
There's still a lot of questions about exactly what the parameters of this are. Oracle to own something like 45% of it, and then this idea that the ByteDance operation over in China will get 50% of the profits from the U.S. entity, but the algorithm will be run by the United States. A lot of questions about Xi signing off on this, what exactly this is contingent on, and this really has raised a lot of questions about the larger deal. People saying this was incremental, more discussion about what else has been agreed upon between Xi Jinping and President Donald Trump.
It's the price I want to talk about. Brent Thill was joining us a little bit later.
You mean that it's nothing?
It's like nothing.
Yes.
Compared to what this would get if they just span it off.
Yeah, so what do you think of that? Do you think that this was just sort of a devaluation to give an easy, cheap entry point to the U.S. investors coming in? Do you think that this is trying to downplay the value of this asset in the United States? I mean, what's the ramification given the fact that it should be twice as expensive at least?
I'll let others speculate. I'll just say that those that have got their fingers in this pie have done pretty well and will do pretty well in the years to come based on the appetite for that app.
We all feel for Larry Ellison about how he's done so far and are really happy to hear that he's added to his wealth. Congratulations.
I don't even think the smallest violin, I can't even play that. But Larry's life is just so good.
It's ridiculous. I mean, honestly, between the sailing and his private islands and his endless wealth, yeah.
He's having a good time, let's put it that way. Let's stick with tech. McKinsey estimating that data centers will require $6.7 trillion to meet demand for computing power globally by 2030. Private credit firms are laying the groundwork to help provide the capital. Meta is said to have selected PIMCO to help lead a $29 billion financing for its data center expansion. I'm happy to say the PIMCO CEO, Manny Roman, joins us now for more. Manny, good morning.
Good morning, Jonathan. Nice to see you.
It's good to see you, sir. How does a man like you deal with a 3 a.m. alarm clock on the West Coast? How does that work? You've got
I make the best espresso known to mankind. You know, and you'll be happy.
Triple espresso?
Triple espresso. And it feels good every day and happy to be at work.
Well, I'm happy to have you with us this morning. Let's get into some of these deals. I know there's certain deals you can talk about, can't talk about. I want to talk in broad terms about the appetite here. For the capital that we need to provide to this particular force, this growing force, AI data centers, where it's going to come from, and where you and the team are going to fit in.
So I think it's a huge, super secular opportunity. There is an enormous need for funding and equity in data center. I don't know whether the $6.7 trillion from McKinsey is remotely right, but it's very, very big, and there'll be plenty of financing deals to be done, and there'll be plenty of construction to be done. And it's true in the US, but it's true in other parts of the world. And the need also to have the infrastructure and the energy will come after that. So, you know, we all talk about data center, but there's going to be a real rush for energy in terms of providing the right setup for all this data center. And, you know, that's one of the reasons to be very bullish on natural gas.
We've reflected on one particular statement from one particular tech CEO over the last 12 months that I think was really quite important. It was last summer. It was the Alphabet CEO, when essentially he said that the greatest risk here was underinvesting and not overinvesting. And I wonder how you think about that from the perspective as an asset manager, when you've got a group of companies that are willing to run the risk of overinvesting. How do you think about the risk around it?
In terms of, I think what we will do is we will look at every single deal and we will say this makes sense for us and this may make less sense. And I think one of the strengths we have is to be pretty focused on relative value and sort of think that, you know, there may be a fantastic deal to be done which would be very, very good for our investors, and then we look at the next one in the full light of day and decide whether it fits our portfolio and whether this is something we want to do.
I think it's important to build on this, that Mark Rowan said recently, we are what we originate. When it comes to private markets, you are what you originate. It's quite labor intensive. It takes a lot of work. When you think about scaling this and building this as an opportunity, how difficult is it in practice?
I think we have built it differently from Mark. We have built it based on our experience in fixed income, our experience in relative value, in a history of 54 years, in looking at all sorts of credit. We have 55 credit analysts who looks at every single segment of the market. And I think we look at it from a value standpoint. Does it make sense? Is it something we want to do? We shouldn't be originating for the sake of originating. And there's a lot of money coming to this market. You know, some sectors will be very attractive and some will be less so. And I think you want to be very much on top of this and say, I want to do this and I want to do less of this.
There's a concern, especially as CEOs say, it's more important to be throwing enough money at this rather than being underinvested. And then you have people like David Heinhorn of Greenlight coming out and saying the numbers that are being thrown around are so extreme that it's really, really hard to understand them. How difficult is it to invest in a market where people are throwing spaghetti at the wall to try to understand what's going to stick? And there is a feeling of excess that continues to bubble up around this.
So my friend Richard Thaler, who is an economic Nobel Prize and consult for us, has this say. He says, you know, when you make long-term prediction, the degree of humidity and the standard deviation around the estimate should be very, very big. So when I hear an estimate like $6.7 trillion, I don't know what to make of it. David may very well be right, but we'll take it one step at a time. I think 6 months horizon is about all we can do in terms of the demand. And then, the environment may change dramatically. There are business cycles. Sometimes things are cheap, sometimes they're expensive. If there's a recession, all of a sudden spreads will widen. Company may revisit what they're trying to do, and so on and so forth.
So this is the difficulty. How do you have a 6-month horizon when a lot of these investments are 10-year build-outs, when they're 10-year usage, when they are labor-intensive, and infrastructure projects by nature are a lot longer than 6 months?
So in terms of committing capital and in terms of finding the right opportunity with the right length of time, we're totally fine to have a very long-term horizon. What I'm saying is making long-term prediction in terms of how big the market will be, it's very hard. I think you have some visibility over the next 6 months in terms of what the demand is, what the real demand is, and whether that slows down or whether that accelerates. You just don't know. And I think you have to be very humble about these things and just say, look, we'll take it one step at a time and see what the market gives us. And by the way, there may be other opportunities which are more attractive. You look, for example, in our asset-backed finance business, aircraft leasing. Aircraft leasing is incredibly interesting, and then nothing happens for 5 years, and then it becomes very interesting again. And you gotta constantly say to yourself, are there better opportunities for me to deploy money? And what do I want to do? How do I think about the risk? How will I get out? What's the right risk-return profile?
You made a headline recently. Wanted to ask you about it. Private markets haven't been tested. Can you build that out a little bit more? What did you mean when you said that private markets haven't been tested?
Well, my partner, Dan Iverson, and our CIO of Core, Mohit Mittal, have the chart. And we checked the number about 20 times because we kind of didn't believe it. But it shows the return on weak single B, which is a reasonably good proxy for direct lending. And what you see is you make money because the yield is higher. And then there's a recession, and then you lose it all. And so I'm old enough to remember 1991. I saw that. There's a recession which came out of nowhere from, essentially SNL having too much high yield. 1997, the world is absolutely fine until there's an Asian crisis, and then you have LTCM, and then things become very cheap. And so you got to remember these things. And we have been in a period since 2009 of exceptionalism, where you have had very strong equity return and very strong high yield return. If you believe this is gonna continue for the next 15 years, then I think you should have the same position. But it may not be the case. And I think we bring that and say the data is at the data.
Do you see parallels between now and those periods?
Well, I think with the initial condition where we are right now are such that equity markets are expensive by any measure. They may go higher because momentum is strong, and credit market are tight in some part of the spectrum. And I think that's the reality. And look, we've been in a period where things are expensive for a long time. 2005, 2006 were such period where things remain expensive and became more expensive, and then something breaks, and then all of a sudden you have a lot of work to be done.
We're going to spend some time on that in just a moment. Manny Roman's going to stick with us, the PIMCO CEO, Manny Roman. Let's take the opportunity to get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Yahira for more. Hey, Yahira.
Hi, John. Lufthansa is planning to cut 4,000 administrative jobs by 2030 as the carrier seeks to improve profitability. The job reductions will occur through digitalization, automation, and process consolidation, with a majority of the reductions in Germany. Meanwhile, First Brands has filed for Chapter 11 bankruptcy. A group of creditors are set to provide the automotive parts company with $1.1 billion in debtor-in-possession financing to keep operations running. This comes after mounting scrutiny over First Brands' reliance on borrowing against future cash flows. And gold is pushing to a fresh record above $3,800 an ounce. The precious metal is getting a boost from investors concerned about a potential government shutdown and pulling back from the U.S. dollar. Other metals, including silver, palladium, and platinum, are also rallying. Gold is up over 45% this year. That's your Bloomberg Brief. John?
What a rally for 2025. Yahira, thank you. More from Yahira in about 30 minutes' time. Up next, excessively restrictive.
the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
That conversation will continue with the PIMCO CEO, Manny Roman, live from New York City this morning. You're watching Bloomberg TV.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Live from New York City this morning. Good morning to all. Equity futures on the S&P 500 firmer here by 0.4%. Likewise on the NASDAQ, higher by 0.5%. And the surveillance this morning, excessively restrictive.
My view is not one of enormous economic pessimism. You know, I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
Investors turning their attention to this week's Fed speak and the jobs data after Friday's soft inflation print. The PIMCO CEO, Manny Roman, is still with us and he's back for more. Manny, let's continue the conversation we were having. Equity markets very close to all-time highs, credit spreads near multi-decade tights on investment grade, high-yield spreads near the tights of the year. And yet we've got a Fed official saying that we're excessively restrictive. You're across a range of funds. You look across markets all the time and the economy with the team. Do you see any signs that we're excessively restrictive?
Well, I think rates are very high across the globe, right? And I think you know, part of the reason why I get up so early and happy to go to work is because, you know, the opportunity has never been better. And, you know, we talk here about the US, but look at the UK. The UK, where you're from, is, you know, 10-year rates are 4 3/4. Australia looks really, really attractive. So when we think about the opportunity in a way, yes, we do expect the Fed to cut. How much they're going to cut next year remains to be proven. No one knows what's going to happen to the labor market. But the reality is the opportunity in terms of global fixed income is very, very big. And the opportunity to add alpha is quite high. I'll tell you a funny story. We have a partner in Tokyo called Tomoya Masano. And, you know, for the longest time, there's not much happening in Tokyo. So you sort of call him and you have matcha with him and not much is happening. And then all of a sudden, the Japanese fixed income market becomes super exciting. And then there's a lot to do. And there's a whole generation of people who have disappeared because they don't do it anymore. And so you have a labor market which hasn't supplied fixed income investor because there was nothing to do for the longest time. And so what I think is interesting is the difference of view, the difference of opinion is also a source of incredible alpha. And, you know, if you want to think about why performance has been quite good, it's partially because the alpha that is being given by the market is quite good.
I think it's interesting that John was talking about the Fed and you talk about the international sphere. And I think that that's really telling about what people are looking to for that alpha, for that incremental extra yield. Are those Japanese investors staying in Japan right now and not coming to the U.S. for treasuries, even if the Fed cuts?
No, I think they're very big investors in U.S. assets. And remember, one of the opportunity everyone has is to buy foreign assets and swap them back into dollars or swap them back into yen and so on and so forth. And so you can actually buy synthetic credit, you can buy synthetic dollar exposure for U.S. investors buying, for example, JGB and selling forward the yen into dollar and having a different credit risk with JGB than you have with US dollar. And so there's a lot to do. Now, we do that a lot in short term and longer term in terms of adding alpha, but all the time you can do this sort of transaction and sort of mitigate your exposure or increase your exposure or have different risk profile.
That's a much smarter way of looking at it. I'm looking at this with sort of a blunt instrument, sort of dumb. Do you like international more than the United States?
No, but I mean,
and you
Japan,
come up with
Japan
this
has,
really wonderful, nuanced
Japan
view.
has an enormous amount of money to put to work and is a nation of savers. And so there's, you know, the thing that I always say is you need to put your money somewhere. And the reality is the US is the only place where you can actually put scale. And when you want to think, for example, of the Australian problem, there was a whole delegation last week from the UN from Australia. They need to move capital away from Australia because they are a nation of savers and the Australian market is not big enough for them. And so they need to pivot to...
For a long time, Japan had to do the same thing. They didn't have the yield. To your point, the story's changed. One thing we're trying to track is whether the Japanese bring the money home, whether we see this great repatriation where it could leave markets vulnerable, where typically they deploy that capital. I'm thinking of certain European markets, the US as well. Are you seeing any of that flow story start to turn?
No, not so far.
Would you expect it to change?
Honestly, not really. These things are very, very slow to move. And the reality is people keep on saving in Japan. And so it may just be that the marginal dollar goes into JGB, but the credit markets are very underdeveloped. And if you want to buy, for example, single A exposure, you're much better off going to the US.
The conversation we had back in April was maybe the decline of US exceptionalism. The money was going to leave, it was going to go elsewhere. I want to understand where you are now 6 months later. What did you see at the time in April? Did we start to see that decay click into US exceptionalism? And are we back to where we were at the start of the year just 6 months later?
So I think we were dollar underweighted. We literally just square off our position. We still very much like emerging market currency. We do like Australian dollars. There's plenty to do, but you know there was a short dollar position to be had, and you know it moved 10%, and I think we decided to square our position.
You're talking a lot about rates and the era of income. We've been talking a lot about that just based on the fact that yield has been higher. We're talking about private investments through infrastructure. You're not mentioning equities. And this is a time when people are talking about...
I'm a fixed income guy.
No, I know, and where you have sympathy with us. But I'm wondering how much a higher rate regime limits future equity returns. We used to talk about that. That was before 3 years consecutive 20+% returns. I mean, at what point will it constrain the equity side of the portfolio, even though some people are wondering what kind of buffer bonds really provide?
Well, the PIMCO view is that equity return in the US is going to be 6% for the next 3 years or something like this. I mean, we look at CAPE valuation, it's trading at 28 times earnings. It looks really, really high to us. We understand the excitement about the hyperscaler, but if you look outside of the hyperscaler, life in industrial America isn't great. I mean, top line is not growing, and one of the question that we don't know is the impact of tariff and what will happen in corporate America in terms of how they're going to deal with either passing on prices or diminishing margin and so on and so forth. And we don't know that. And so there's a whole leg of the equation that we haven't really seen.
Stock investors have been trying to outbull each other this morning, and Max Kettner was on earlier of HSBC, and he was saying, look, he thinks that the Fed is making a policy error by cutting more significantly, but they're along for the ride because it's just going to inflate the prices of assets significantly. They want to gain from that. Do you agree with that assessment?
Well, I haven't listened to him, so I would not be.
Good initial punt. I mean, do you think? Yeah.
I don't know. We have a lot of trust in the Fed in terms of them doing the right thing, and I think that the Fed usually doesn't know much more than we all do. They look at the same data, and so the decision is a very well thought out decision where they will decide what to do with the condition that they are being given. And if, for example, we were to see a very bad inflation print, it would be very difficult for them to cut. Now, they may argue that they have to look through inflation and so on and so forth, but the Fed is a very rational actor in the market, and I don't think anything's going to change. And the same goes for the central bank in the UK and the ECB and so on and so forth. And I think once you're in a job, your behavior changes also in terms of how you think about what the right thing to do is.
Are you alluding to the new Fed chair next year?
No,
when you say
I'm just saying it's like being a Supreme Court justice. You know, it's a very important job, and I think people take their job very seriously.
There could be a big change next year. There's going to be a new Fed chair. Do you expect to see any daylight between a Fed chair appointed by this White House and Chairman Jay Powell and his current leadership?
You know, I was reflecting on this, and we were talking about this. I mean, every single Fed chair has been, to some degree, a political appointee. And, you know, there's been a history of very good Fed chair since the Burns and the Nixon presidency. And I see no reason why that would change.
The list of candidates we've seen so far, we've said it repeatedly, very credible names on that list from this White House and the Treasury.
Yeah. And it is important to remember that it's in everyone's incentive to have a very credible Fed chair, because the market will not like a non-credible Fed chair.
You running?
I was going to say
you fancy
the
it?
same thing.
No, you're happy on the West Coast, right?
He didn't answer us. That means yes, he's confirmed.
I don't think Manny wants that job.
Manny, it's good to see you. Thank you, sir.
Good to see you. Thank you for having me.
We'll do this in Newport next time, okay?
Absolutely.
When the weather starts to warm up a little bit around spring.
When it's very cold in New York City.
Either,
right.
you know, winter time of the year works for me.
Vacation?
You know, January time.
Play golf.
Yeah, we'll try and make that happen. All right. Manny, thank you, sir. Appreciate it. Manny Roman there, the PIMCO CEO. Coming up, Jonathan Colliver of Seaport Global, Brent Thill of Jefferies, Lindsay Pieter of Stifel, and Jim Karen of Morgan Stanley. The third hour of Bloomberg Surveillance is up next.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We lost some of that underlying momentum in the equity markets.
We're heading towards a seasonally weaker October.
It is getting more challenging as the valuations are getting tapped out.
We are relying on such a small cohort of names to drive this kind of upside.
There's as much melt-up risk as there is meltdown.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures positive by 0.5% on the S&P 500. On the Nasdaq up by 0.6. In the bond market, a rally, yields down by 3 basis points on 10s ahead of a massive week for economic data.
Yeah, that's supposed to be capped off by non-farm payrolls that we probably won't get, although maybe there'll be some deals struck the next 24 hours after that October 1st deadline. Look, this is going to be a week where all the other data is going to take on that much importance. I feel like a broken record, but at the same time, the ISM manufacturing tomorrow, the JOLTS job openings data, the sentiment data, what we get from ADP, all of these other metrics are going to take on that much more importance, because if we don't get the non-farm payrolls on Friday, and we don't get CPI in the following week, the Fed has no new information before their next meeting.
We've got a deal to work through as well.
Yeah.
The team at Bloomberg leading the reporting on this, just confirmed by the company itself. Video game maker Electronic Arts going private at about $210 a share. This is a $50 billion plus deal. The agreement and the investors behind it, Silver Lake Management, Saudi Arabia's Public Investment Fund, and Jared Kushner's Affinity Partners.
And it comes with a 25% premium to Electronic Arts closing price on Friday. This is one of the largest leverage buyouts ever. I believe it would be one of the year's biggest deals, potentially the largest buyout on record. And it raises a question about where we are in the cycle. When you start to see massive leverage buyouts, it doesn't make you feel like you're at the beginning stages of some sort of rally or market cycle. So does this feed into this idea that we're reaching some sort of pinnacle or euphoric kind of feel, or is this just what makes sense, has been on hold for the past 3 years as people remained on the sidelines?
Idiosyncratic gets thrown around a lot, but I'd say this is another data point in a long list of data points that you've just gone through about where markets are right now. The door is wide open for deal making. And if anything, this Fed's about to juice things even further with rate reductions.
So it goes to this conundrum that Stephen Myron tried to parse out, the idea of financial conditions being conflated with Fed monetary policy. A lot of people could argue, myself included, depending on what hat I'm wearing, that if you do cut rates, that would be easing financial conditions at a time where the financial conditions already are incredibly easy. Other people might say, well, there are different sets of factors with those leveraged buyouts that might be reasonable and have nothing to do with Fed policy. Nonetheless, you can imagine if the Fed cuts rates, it will only encourage more of this.
Let's take the Max Kettler argument over at HSBC. Max is super bullish if you didn't know. Max is essentially saying that there are things that matter to the equity market and things that matter to the Federal Reserve. And the things that matter to the equity market are pretty good right now. Big tech's doing okay, printing money, earning loads, stocks are higher, fantastic. The things that matter to the Fed, not so great right now. Labour market's seen a real step down in payrolls growth. They're the kind of things that make the Fed nervous. They've got to respond to it. So as far as he's concerned, the market gets the best of both worlds. Gets the profit profile of the big tech players, or the S&P 500, also gets the rate cuts from the Federal Reserve as they respond to nervousness about the labour market. And in his view, you get the asset price inflation that he wants to be on top of. That's the train he wants to ride.
My issue with that, and I think that you're right, I think a lot of people would agree with that, which is the reason where you're seeing upgrades from Goldman Sachs, from BMO, from others. The only issue from that is if you have a hammer, everything is a nail. And for the Federal Reserve, they might be trying to solve a problem with the wrong tools. And that might be the asset price bubble. And he was saying he does think it's going to be a policy mistake. I'm talking about Max Kettler now. But it doesn't mean you shouldn't go along for the ride, which is what a lot of people are saying.
Guess what stocks are doing this morning? Up again, up by 0.5% on the S&P 500. Coming up this hour, Jonathan Gollum's back of Seaport Global as stocks trade near all-time highs. We'll catch up with Brent Thill of Jefferies on why he thinks the US TikTok deal is massively undervalued. And Lindsay Piegza of Stifel as investors await the latest payroll data later this week. We begin this hour with stocks edging higher as bullishness in tech stocks continues to grow. Jonathan Gollum of Seaport Global writing, consensus narrative holds that irrational exuberance towards AI is the driving force behind the success of tech. The data contradicts those assertions, pointing to superior earnings. Jonathan joins us now for more. Jonathan, good morning.
Good morning.
And congratulations, sir. You're an old friend, and it's great to see you in a new seat.
Yeah, I mean, I could not be more excited about the Seaport. It's just this really cool, small boutique research shop, and 30 fantastic senior analysts. It's really great to be part of it.
It's cool to get the opportunity to catch up with you first right here on Bloomberg. So let's talk about your recent views. You've heard the term irrational exuberance back in the 90s. It's on repeat. Here we are in 2025. You think it's misplaced? Let's start with why.
Well, I mean, you take a look at, let's say, the third quarter earnings outlook. The big tech companies just keep ratcheting, the expectations just keep ratcheting higher and higher. These are not stories where valuations are going up because investors are exuberant. The investor class keeps underestimating how good the earnings picture is. They crushed earnings during the last earnings season. The estimates on these names keeps getting pushed higher, and the stock prices are not higher in valuations on big tech. They're flat for the year. And the reason is because the earnings are driving the superior results.
Can you say the same thing about the rest of the S&P 500?
No, I mean, it's kind of a strange thing that if you actually say, well, what's expensive? The rest of the market is not being driven by earnings, and it's being driven by valuations. I would argue that investors around the world are getting sucked into the U.S. market because of great tech earnings. And then what are they, and then you buy this larger basket, and the valuations are going up on the non-tech part of the market. And the tech stuff seems incredibly healthy.
So it's the Magnificent Six. That's what you're arguing for, that should be what people invest in. Who gets kicked out of the Magnificent Seven?
Well, first of all, I don't consider Tesla a tech stock. So I don't include it, not because it's not a wonderful company, but it's just not part of it. But I don't think we should be looking at these companies and saying, they're doing really well, let's create an acronym and just kind of shove their name in and then we switch again.
This is what Wall Street does.
No, but it's silly. I mean, there are 6 huge tech companies that are growing at this unbelievable pace, at these very high profit margins. And here's the key. The stock prices are following the earnings growth of these companies. They're the biggest 6. It's not like we can listen. You and I can go and if we want to come up with an acronym, we can throw Oracle in there and say great returns, and let's throw Palantir in there, and we'll sit there with the Scrabble board. Yeah. That's not what it's about. It's like these are the big names, and they're big not because we fell in love with them. They're big because they're just out-earning everything.
So at a certain point, are you saying that you could see gains driven by the magnificent whatever, by big tech stocks, and at the same time, you end up with the rest of the index falling further behind, and that equal weight, which everyone has been trying to go to, actually underperforming yet again for another year?
Probably will. No, yeah, I mean, and if you take a look at, let's say, for example, the S&P X the Big Six, and then you look at global equities, they kind of look the same. You know, the non-U.S. basket and the U.S. basket X these 6 companies, they sort of feel alike. I mean, I've talked to global investors recently who are kind of doing a barbell. That, you know, in their global portfolio, they're buying these companies that you can only get in the U.S., and then the rest of the portfolio, they're putting their dollars in other sectors abroad, and that's how they're coming up with their balance.
Is that
and it makes sense.
Diversify the exchange rate diversification story, the exposure to the US dollar? What is that about? Is it just about getting exposure to the European bank rally? What's the diversification abroad about?
Well, first of all, if you look at the outperformance we've had year to date of non-U.S., it's nothing but a currency issue. So the underlying earnings are still better in the U.S. and the like. But if you're running a global equity fund, you feel compelled to have similar, weights to the benchmark. So if you want to grab all of this exposure in these big tech numbers in the U.S., so you buy a consumer staple company in Europe, because, well, a consumer staple company in Europe kind of feels like a U.S. consumer staple company.
Do you have questions about U.S. equity market exceptionalism? Do you have any questions about that at all?
I mean, not right now. I mean, there's a ton of reasons why, over the long run, the U.S. should do better. I mean, we have, if you look at the venture capital industry, which has embedded itself in our universities, and the fact that it's not a surprise that not only the top 6, but if you look at the suite of the top 20 tech companies, the vast majority of them are in the U.S. There's something about the operating environment that we have here that is, that creates.
John, I would also say the deep pool of risk-seeking capital. I remember Jeff Bezos came out and talked about the secret sauce of the American economy. It's the fact that you can raise $50 billion just like that, for something that may or may not succeed. And we've seen something else like that again this morning with another deal announced. These are the kind of deals that you would only see in America. You wouldn't see a deal like that elsewhere this morning.
Yeah, although some people might say that that's the folly potentially of the market cycle too, which is one thing that people will, potentially.
I just want to jump in on something you said. Please. The liquidity on U.S. companies is just much better. Part of it is there's more regular reporting in the U.S. with quarterly reporting. Rather, I don't mean to be a high point on that.
Hey, John, you've gone there. So let's talk about it. No, you touched it.
But there's a whole bunch of reasons why when non-U.S. companies re-domicile into the U.S., their stock prices go, and it's not just simply because people are chasing them. It's the U.S. market is deeper, it's more liquid, and
are we putting it at risk? Are we putting it at risk? You talked about quarterly reporting. You're alluding to changes we might see from the SEC. Are we putting some of that at risk?
Well, there's a really simple bottom line on this. Investors want transparency. If the government says you only need to report every 6 months, large companies are going to who go to semi-annual reporting, whether it's voluntarily or required. If they move to semi-annual, their stock prices are going to go down because they're providing less liquidity. They will voluntarily report quarterly because someone is going to tell the board, rightly, if you do not provide transparency, your stock price is going to sell at a lower price, and they are not going to do that.
We've had an entire conversation about U.S. equities without talking about the Fed. Is that just not even on your radar?
It's first. Let's look at what I think the biggest issue, because you talked about if they don't get this incremental information, are they go? What are they? What are they going to do? The bottom line is that the market expects another 4 cuts between now and the end of 26. And so we need to kind of extend the horizon. The Fed is going to be friendly to capital markets over the next, year plus. And whether or not we're talking about what the makeup of the Fed is or what they do in the next 2 meetings, it really doesn't matter. What really is driving the market from a credit point of view, the market is like 5 times more sensitive to high yield spreads. And you talked about, one of you talked about financial conditions. If you look at the Chicago Fed's measure of financial conditions, if you look at the St. Louis Fed's measure of financial conditions, you have an environment where liquidity is plentiful, the market is operating well, and I totally agree with your when you're talking about Max, I think it was before.
Sure.
And he was, the things that the Fed sees is they don't have a growth and inflation mandate. They have a jobs and inflation mandate. So the Fed is reading a weak jobs environment, and they need to do. And you talked about a second ago. They only have one tool, and it's a big hammer, but so they're gonna feel compelled. According to the Bloomberg survey, 50,000 jobs are going to be created this month, whether we get the report on that or not. More than 50,000 people enter the labor market. You could argue that this means the labor market's moving back. The Fed has to act in response to that, and yet you have financial conditions are great, GDP is strong, and the backdrop for stocks is really liquid.
The pain trade's higher? Is that what you're expecting?
What was that?
The pain trade just continues to be higher?
Yeah. And I think that folks who are fighting, it's not just fighting the tape and people adjusting their numbers because their targets are too far behind the market. That's not the story. The earnings are coming through. The market's expecting somewhere between like 11 and 14% earnings growth for each of the next 3 years. We're like super conservative, and we're expecting high single digits, and that's a big haircut compared to the consensus.
Jonathan, it's good to see you.
Good to be here.
Thank you, sir. It's nice to have you back in action. Jonathan Golub there of Seaport Global. Your equity market right now up by 0.5%. That is a major go-private deal announced about 10 minutes ago.
Yeah, Electronic Arts with a potential price tag that's 25% premium, raising questions about what that means for financial conditions, how loose they are, how loose they can get if the Federal Reserve cuts rates further.
That stock is higher so far this morning. That will start trading again going into the opening bell, I imagine. 210 is the per share agreement with a range of companies this morning. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. President Donald Trump said the government is likely to shut down unless Democrats back down from their demands. Senate Minority Leader Chuck Schumer says a stopgap has to include an extension of health care subsidies. The top 4 congressional leaders will meet with the president today at the White House, just a day before funding is set to run out. And as you all were just discussing, video game maker Electronic Arts is going private. The deal values the company at $55 billion. That's the largest leverage buyout on record. The consortium, which includes Silver Lake Management, Saudi Arabia's Public Investment Fund, and Jared Kushner's Affinity Partners, agreed to pay $210 per share in cash. And President Donald Trump has ordered his administration to declassify and release all government records related to Amelia Earhart, her final trip, and everything else about her. Earhart vanished during her groundbreaking flight around the world, one of aviation's greatest mysteries. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next, the Morning Calls Plus. We'll catch up with Ed Ludlow on the deal to keep TikTok in the United States.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Rates are very high across the globe, right? And I think part of the reason why I get up so early and happy to go to work is because the opportunity has never been better. The reality is the opportunity in terms of global fixed income is very, very big, and the opportunity to add alpha is quite high.
Triple espresso, PIMCO CEO, Manny Roman. That's how he wakes up at 3 a.m. on the West Coast.
Well, I should take that under consideration.
Yeah, ditto.
I try 4.
Is that what you do?
No, I can't. I'd be shaking. And you'd make fun of me, and I'd say
Probably,
things like
yeah.
Courtney,
That's-
comparing Courtney.
That's what you said a little bit earlier, yeah.
I mean, that's what happens to me.
In case you missed it. What are we now? Contrarian Courtney. Okay. Struggling to keep up with you this morning. A rare catch-up with Manny Roman. Great to hear from him, as always. Equity futures on the S&P 500, positive here by 0.5. On the Nasdaq, up by 0.6. That's the price action. Let's get you some morning calls. First up, Morgan Stanley downgrading Wells Fargo to equal weight, noting the key catalyst of asset cap removal has passed, limiting upside. That stock is down by a third. Your second call from Wells Fargo downgrading Western Alliance to underweight, saying it won't benefit from interest rate cuts until next year. That stock is down by 1.4%. And finally, Deutsche Bank raising its price target on Intel to 30, applauding steps taken to bolster its balance sheet. The stock is negative here by 1.5% after a major rally over the last few weeks. That's some of these single names, some of the morning calls. Let's stick with tech. President Donald Trump signing an executive order advancing a proposal that would allow TikTok to continue operating in the US, but the details still remain somewhat elusive. Bloomberg's Ed Ludlow joins us now for more. Ed, welcome back to the program, buddy. What's the latest for this deal?
Yeah, I think the latest is a scramble across Washington, D.C. and the investor base to understand if the structure of this deal, which a source phoned me Friday night to read me from the piece of paper, is compliant with the 2024 divestment law. You know, I defer to AMH on kind of the broader which trumps, pardon the pun it, a congressional mandated piece of legislation or an executive order. But basically, ByteDance having 19.9% in the US-only entity maintains the status quo that it still has some broader majority ownership of the global entity and operational or profit-sharing control. And it's hard, based on the conversations I'm having, for those participants to see how it does comply with last year's piece of rulemaking.
Ed Ludlow with the latest. Ed, looking forward to the show a little bit later this morning with Caroline Hyde, Bloomberg Technology, in about 3 hours' time. I want to extend this conversation with Brent Thill of Jefferies, calling the TikTok deal potentially massively undervalued. Brent, welcome back to the program. Can we put a number on these things? Just what are these companies paying for this asset, and how does that compare to valuations elsewhere?
Yeah, I mean, it's hard to see because the details at $14 billion, when you think about, half the profits going back, what are all the details underlying? We don't have the full list, but I think the initial figure was massively undervalued. Was that giving, the U.S. and the new owners an opportunity to have some great upside in terms of the equity value? But I think anyway you look at it, it looked undervalued. Again, we don't know the profit sharing agreement, but when you think about other companies in the social space, when you look at Meta, the rest of the complex, you look at other comparable tech names, it looks, even if they were doing a profit share, it still looks undervalued in our opinion.
Brent, what do you think the ramifications of that are? You think that it's to give a better deal to other people? What's the significance of this for understanding the competitive dynamics of this particular entity as a more U.S.-owned one?
Yeah, I think for the biggest competitor is obviously Meta. We think that no one's going to leave Instagram because now TikTok's up. You look at most of the younger audience, including my older friends, they're between Instagram and TikTok. And then Snap is really a messaging platform for the younger audience, and they're not influenced by any of the campaigns that they run. So there's really not been a lot of advertiser opportunity because the younger audience use it as a messaging tool so the parents can't see their messages, and that's about it. And so the real ramifications really just socially against Meta, and Meta's continued success has been so great in the lock-in and the technology advancements So we don't believe that advertisers are going to stampede away from Meta. We do think that ultimately, because the stability of the asset will create potentially more excitement for advertisers to potentially come back for those that may be left because there was some distraction going on through this process. So I don't expect, you know, a massive shift in spend. I don't expect a massive loss of advertisers from Instagram, but I think that calming the situation down does help advertisers come back. And then the question becomes, how innovative is the platform going to get now versus where it was at before? And so I think there's a ton of innovation, there's a ton of excitement, but ultimately I think all three platforms serve a different purpose, and most users are going to those three. I don't think consumers can take a fourth and a fifth. I think we've been working through this the last couple of years with how many can we consume, and right now we're seeing, I think, those three, you know, work with each other, and they work in different ways. Snap for comm, Instagram for more professional content, TikTok for more fun content, and you're seeing kind of a in between and hey, I'm getting bored with this platform. Let's go over here. I need to send a message to my buddy. Let's send it here. So I don't think there's going to be any massive changes from what we can see so far, unless there's some massive level of pickup and innovation. We just don't see that. We see Meta actually moving forward, and Zuck mentioning, you know, there's 3 billion people plus on the Instagram platform. I think it speaks to how good that platform is, how good the targeting is, and the advertisers. All the checks we do, they've been gaining market share against others. So even if, again, assume TikTok is successful in terms of some new innovation, I think it's going to come from other places. I don't think it's going to come from the Meta or Instagram budgets.
Brent, I've got 30 seconds left. Just quickly, just announced the largest leveraged buyout on record, Electronic Arts. I think a long, long time ago, you used to cover this name. What does this make you think? What's your response in 25, 30 seconds, if you can, about the amount of money just sloshing around?
Tech M&A is booming. Tech M&A is going to massively pick up. It has already. We've already seen, you know, companies like Atlassian, and you've seen Workday do, you know, multiple billion-dollar deals just in a month. So, you know, M&A is up in a massive way. You're going to see a lot more, and I think you're going to see bigger deals. We've heard, you know, even companies like IBM say that they can't do deals, you know, over 10 billion. They've taken that away. They've said we can do much bigger deals under this administration. So this is a taste of what I think you're going to continue to see.
Brent, appreciate it. Thank you, sir. Brent Thill of Jefferies on TikTok, and this deal for Electronic Arts, a mega deal this morning.
Yeah, and more to come, as he says. I just want to say, I hope that the next innovation, at least for the kids out there, is pick up a book, read a book. That's a new platform. I think they're good.
I hope that's a new innovation too, but I don't think that's happening. I think that stock's resumed trading. We're up in the pre-market by about 5%. Live from New York City. You're watching Bloomberg TV.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Equity futures still positive here by 0.5% on the S&P 500, up 0.6 on the Nasdaq. Got some Fed speak for you. The Cleveland Fed President Beth Hammer coming out on the hawkish side, as you'd expect. Need to maintain restrictive policy. Inflation expectations concern me most now. That is just the polar opposite of the other side of the spectrum, which is Governor Myron, who is more concerned about the labor market than he is inflation.
And more people seem to be coalescing around prioritizing the labor market. That said, the fact that the Beth Hammocks of the world, Raphael Bostic has come out in the same kind of place. Even Austin Goolsbee said he needs to really hold off for a bit. He isn't happy front-loading rate cuts. Raises a question about whether the bar is getting a little bit higher for the Fed to cut beyond maybe another 25 basis points or 50 this year.
Range of views is getting wider.
It's getting wider.
Not narrower, it's getting wider. Into a big week full of Fed speak and economic data. In the bond market, yields down across the board on 2s, on 10s. The 10-year down by 2 basis points to 4.15. 2s at 3.63, down about a basis point this morning. For now, though, we need to get you some single names because this morning a massive story. The largest leveraged buyout on record. With the details, here's Danny. Hey, Danny.
John, the price tag, $55 billion to take Electronic Arts private. It's going to be led by the Saudis, PIF, by Jared Kushner's firm, Affinity, as well as Silver Lake. The deal is also buying the shares out at $210 a share, so we're not even quite at those levels yet. 5.6% is the rally that we're seeing pre-market. By the way, the high watermark that this beats of the last big leveraged buyout was a company called TXU. It was a Texas utility company in 2007 that went on to declare bankruptcy and lost its buyers a whole lot of money. Make of that what you will. Some other deal news to work through this morning. This one coming from the FT, that Occidental Petroleum is looking at selling off OxyChem. It's their petrochemical unit. It would be for $10 billion. Should that deal go through, would help Occidental pay down some of its debt, which it has been doing through asset sales. Finally, this morning, we're also looking at the defense companies rallying. Lockheed Martin up 2.1%, RTX up 2.3%. This follows a Wall Street Journal story in the early hours of this morning saying that the Pentagon is asking the defense contractors to double or even quadruple in some cases their manufacturing of missiles. They say the stockpile is too low should there be a potential conflict with China. John?
Danny, thank you. Appreciate it. Thank you very much. 3 of the single names and more to look out for going into the opening bell in about an hour from now. 10 is the economy. We're waiting for payrolls on Friday and wondering if we'll even get the jobs report. Joining us now to discuss is Bloomberg's Enda Curran. Enda, welcome to the program, sir. I think we've got to address the elephant in the room. Before we talk about all this, what it means for the Federal Reserve, the data this week, will we even get the jobs report on Friday?
Well, that's the critical question now, the big unknown, Jonathan. If the government shuts down tomorrow night, in truth, most economists think it's unlikely that they would be reopened and a deal would be reached in time for Friday for the data to be released. So there is now a question mark over whether or not we do get the jobs data Friday due to the government shutdown negotiations. Bigger picture then, that doesn't just mean a delay for the September data, it feeds into the whole narrative and story around the quality of the jobs data and broader data anyway, when there are enough questions and doubts already circulating in the market about that. And then throw into the mix, of course, what does it mean for other highly sensitive data readings like inflation numbers, the gathering and collection and eventual release of all of that. So A lot will depend, of course, if the government does shut down, then how long the government does shut down for. But at the very least, big question mark now over whether we get the jobs data or not.
So, Enda, as Lisa identified a little bit earlier, we have to basically refer on some of the private indicators that we get. ADP, we'll be looking out for the ISMs as well later this week. Enda, what kind of a picture do you have for the economy at the moment? And just how divided is the Federal Reserve? We were talking about it just months ago. It just feels like at the moment, differences are getting wider, not narrower on the FOMC.
It doesn't seem to be a binary story on either the economy or the FOMC, Jonathan, right now, like you mentioned. I mean, on the one hand, of course, we've had this big shift in the jobs data, clearly labour market weaker than expected. The Fed, of course, putting all focus on that now. It's kind of a consistent thread there. But, you know, we also had much stronger than expected third quarter growth. Consumer spending in the retail side still holding up pretty well. We'll get consumer confidence this week. That's expected to show kind of a rebound in the month of September. So you have this kind of picture where the economy is still holding up even as the jobs market weakens. Now, of course, if we were to get that data at the end of the week, it's expected to show around 50,000 odd jobs created last month. But there would be a lot of scrutiny in terms of where those jobs being made and lost, and in particular the manufacturing sector, politically hot. Is that turning around? Any signs of a turnaround there? Are we seeing any signs of the federal job cuts starting to leak through to the jobs data yet? So, as I mentioned, headline growth, aggregate data on the economy okay, but the underlying jobs numbers are expected to continue softening for sure.
Enda, thank you, sir. Appreciate it. Enda, with the latest down in Washington, D.C., got a widespread of opinions on the FOMC right now. So that means someone could be very right and someone could be very, very wrong at the Federal Reserve. And someone on this committee, many, could be caught really offside into 26.
You know, the big question, I think, for markets is what Manny Roman was talking about of PIMCO, how much you have faith in the members to ultimately be swayed by the data that comes in because they don't know that much more than the market knows. And ultimately, if there is a hot print, what inflation print in particular, how much do they respond to that with either stopping some of the rate cuts or even possibly putting a rate hike on the table? That is the unknown, especially given what Stephen Myron was talking about, which is targeting a neutral rate that he sees as lower and expecting the data to follow suit.
That's the bear case. 22, you go into 22, and you're thinking inflation's transitory, and then you get absolutely hammered by rate hikes and a Federal Reserve that has to pivot. You go into 26, worried about downside risk to the labour market. You're talking about inflation as if it's transitory. Do you get hammered by a Fed that has to pivot again? That's the bearish case. How credible it is right now with other people, I don't know, but ultimately that's the story.
And will the Fed be willing to do that, right? I mean, ultimately, right now, this is not a market that believes that the independence of the Fed has been compromised. You can see that in the inflation break-evens. You can see that in a whole host of other metrics. If that gets to be the case, then all of a sudden you have a different story. And I think that that is the test. What happens and what is the reaction function when you do get an inflation print that comes in hot?
Let's talk to someone about it. Lindsay Piegza of Stifel joins us now for more. Lindsay, welcome to the programme. You've criticised the Fed in the past for stopping short of being sufficiently restrictive. You think they eased too early last year as well. What mistake are they making now?
I think they're doing another round of precautionary easing in anticipation of this weakness, this fear of weakness in the labor market, rather than focusing on the problem that's right in front of them, which is still too elevated inflation, as it has been for years now. So I am concerned that the focus is beginning to shift away from inflation just at a time when the risks to inflation remain to the upside. As we look towards the end of the year, we could see hotter price pressures amid a stronger growth profile, a more spendy consumer as we move into that key holiday spending season, or as we turn the corner into next year and corporations find they need to pass along more of these cost increases onto the consumer that were previously absorbed into the bottom line. So right now, I think the Fed would be well advised to take a very cautious, patient approach, watching the data as it evolves and respond to the data, as opposed to anticipatory, reactionary easing as they have been for fear of, again, that labor market weakness.
Neil Dutta over at RedMac has been throwing things at the computer screen, or however he watches this show, as he listens to this, and he says, ultimately, how much can you have a reacceleration without the participation of the housing market? You can look at all of these metrics and raise questions about it, but because housing is flat on its back and is actually contributing to disinflation, isn't that an argument to sort of squelch some of the inflation worriers?
I don't know if we can make that specific argument and isolate it to that degree. Right now, we're looking at the consumer data. Consumer is the backbone of the economy. So independent of housing, If the consumer is out in the marketplace spending on goods and services, because there still is a good amount of spending and borrowing power on part of the household balance sheet, I think we can continue to see at least these 2%-ish growth rates for quite some time, which will continue to perpetuate this still elevated inflation. So again, it goes back to the fact that the Fed did not do their job the first time around. They compounded that mistake, that policy mistake, by easing last year. Now it appears that they're willing to do a third-round error with that September rate cut, and still a number of Fed officials talking about additional easing by this time next year.
So, Lindsay, why do you think the yield curve is flattening?
Well, I think right now the market is buying into the notion that the Fed will provide easier policy, and the market seems to be focused on other issues than inflation. But that's not the only metric of what we're seeing in terms of investors' concerns. When we look at inflation expectations, we see that near-term inflation expectations are still up near 5%. Longer-term inflation expectations up near 4%. So even with the Fed continuing to reiterate a focus on reinstating price stability, the market isn't buying it. Now, the yield curve, yes, we have seen a lot of volatility, but a longer base trend should continue to provide a floor to longer-term rates, given those inflation expectations, not to mention the massive expansion of the balance sheet.
And yet, Lindsay, that's not constraining the Federal Reserve. In fact, they continue to signal interest rate reductions. Now, you and I have played this game a million times. We can complain about what the Fed should and shouldn't do. It's the will-won't that really matters to financial markets. What do you think they will do?
Well, I think right now, when you look at these varying opinions of the Federal Reserve officials, I think they are going to, at least in the near term, stay pat. They gave us that insurance rate cut in September earlier this month. But when we look out to the end of the year, unless we see a material decline, further decline in some of those jobs numbers justifying additional policy adjustments, I think the Fed is going to have to stay steady where we are. Now, that being said, the inflation hawks, they're looking for policy to maybe even move firmer unless we see a material uptick in inflation, not just a temporary few tenths of a percentage point, but a sustained upward trend in inflation. I think it's going to be difficult to justify a rate hike on the other side. So I think right now the Fed is more in a position to let's hold steady, watch the data, and both of the sides, the doves and the hawks, can fight it out over what we see the data evolve into.
Lindsay, appreciate it. Lindsay Piegza there of Stifel with the latest. I think those doves and those hawks will continue to fight it out next month.
Yeah, I wonder what that fight looks like. Very polite. I don't agree with you.
I'd say Governor Myron actually was pretty diplomatic when we asked him, wasn't he? About his experience going into the committee, the need to persuade people, how open they were to his views.
I think he was being honest. I don't think anyone gave him odd looks or refused to sit next to him. And I think people were actually welcoming contrarian views that they could push back on. It was clear that nobody was particularly convinced, but he is representing something that people on Wall Street are talking about. The big difference, and he talked about this in his conversation with us, is just the speed. How quickly do you need to get to the ultimate destination for the Federal Reserve? And that really is based on what you see in the economy and what you see evolving.
What you think neutral is.
Exactly.
That debate's ongoing because no one really knows what neutral is. Someone else joked about this, it's not my line, but they thought it was pretty curious that people were insulting Governor Myron about where he thinks neutral is, because neutral can't be observed, and they keep saying that things are okay as they are because we're close to neutral, but neutral can't be observed. It's a very circular argument where you find yourself in a tricky position when you criticize others.
Who's on first? Who's on first? I mean, this whole thing, it's a very difficult moment, especially when you're talking about these theoretical concepts that don't really exist.
You can't observe any of this. Apart from in real time, you can say, yeah, we're neither sort of, whatever. Bond yield to lower by 2 basis points, 4.15 on a 10-year this morning, with an update on stories elsewhere. With your Bloomberg Brief, here's Yahara. Hey, Yahara.
Hi, John. Video game maker Electronic Arts is going private. The deal values the company at $55 billion. That's the largest leveraged buyout on record. The consortium, which includes Silver Lake Management, Saudi Arabia's Public Investment Fund, and Jared Kushner's affinity partners, agreed to pay $210 per share in cash. Shares are higher, 5.3%. Meanwhile, President Trump is warning the government is likely to shut down unless Democrats ease their demands. Senate Minority Leader Chuck Schumer says a stopgap has to include an extension of health care subsidies. The president is set to meet with the top 4 congressional leaders at the White House today, just one day before federal funding runs out. And New York City Mayor Eric Adams has ended his re-election bid. The announcement follows reports that Adams was entertaining potential job offers from the Trump administration and the private sector. That's in exchange for bowing out of the race to allow former New York Governor Andrew Cuomo to challenge Democratic nominee Zohran Mamdani. Dutch Bloomberg Brief. John.
Yahara, thank you. Appreciate it. Thanks very much for this morning. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Jim Caron of Morgan Stanley. Looking forward to that conversation on why the money will have to stay easy for longer than you think and what it means for asset prices. Jim's up next.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power. This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The big tech companies are just keep ratcheting, the expectations just keep ratcheting higher and higher. These are not stories where valuations are going up because investors are exuberant. The investor class keeps underestimating how good the earnings picture is. Earnings are driving the superior results.
Good to catch up again with Jonathan Golub of Seaport Global, constructive on the earnings story in the equity market. Equity futures so far this morning up by 0.5% on the S&P, higher by 0.7% on the Nasdaq 100. As we count you down to the opening bell, a few things to look out for later on this afternoon and through the trading week. Today at 3 p.m. Eastern Time, the President meeting with congressional leaders. Look out for that because tomorrow, government funding runs out. Then on Wednesday, PMI and ADP data, the data points to look out for. ISM's in the mix too going through the week. On Thursday, another round of claims. And on Friday, maybe maybe the payrolls report. We'll see if we get that. The payrolls report is due on Friday. Let's turn to fixed income. Treasury yields ended the week at their highest levels in a month as investors shift focus to Friday's jobs report. Joining us now to discuss is Jim Caron of Morgan Stanley. Jim, good morning.
Good morning.
We just had the biggest leverage buyout deal in history announced earlier on this morning. And in your note, you said this: there is something deeper at work that may keep easy policy at work for longer. There's a lot of money sloshing around, and you think money can stay easy for longer. Why is that?
Yeah, thank you. Look, I think there are a couple of other things at work here, right? So let's talk about monetary policy and fiscal policy. Those are the two policies I'm looking at. On a monetary policy perspective, the one thing that's happening is that as the balance sheet is shrinking, that is effectively a tightening of policy that's creating some potential for liquidity issues in the markets. That's measured by overnight repo rates, which have been going up, which is a sign that bank reserves have been under a little bit of pressure. So the Fed may not just be cutting interest rates to have an insurance cut for the jobs market, but it could also be there to try to stave off any type of liquidity issues. The second point is on fiscal policy. Fiscal policy, I believe there's a geopolitical need or desire to have coercive policy between whether it's tariffs or a strong economy driven by tariff-related policy in order to fund fiscal and geopolitical, policies throughout the U.S. in terms of what their objectives are. So my bottom line here is that there are other things at work on the geopolitical side and on the balance sheet side that could keep the policymakers at it for longer, despite what the economic numbers are telling us.
Can you have your cake and eat it too? This idea that everything is easing, you're going to just have an extra boost to markets. It doesn't seem like people are worried about inflation. Where's the rub?
That's the rub. It's inflation. As long as you don't get inflation, then you can keep doing this for a bit longer. But eventually, obviously, these things come to an end. So what is happening right now, as far as some of this fiscal policy, this is tax policy, accelerated depreciation, this is all in the One Big Beautiful Bill Act and what have you. What that's likely to do is generate higher productivity, which means you can have higher growth with lower inflationary burdens. Your typical way of thinking about the economy is that you get stronger growth, and that leads to higher inflation. But what's happening is that the unemployment rate is staying relatively low, but there's fear that it may actually start to come up. We're seeing that in the numbers. The labor numbers, we're going to see some more on Friday and Wednesday, are actually showing some signs of weakness, which means that you're getting labor at a reasonable price. The labor force participation rate has been going up despite almost force. That's keeping labor costs relatively low. If you keep wage inflation down, then you keep consumer inflation down. That can increase profit margins, and that can be supportive for equities broadly.
Another way of putting this is the way that one person framed it to me is, do you need to run the economy incredibly hot in order to make it so that a lot of people don't lose their jobs to AI?
That is the underlying story. That is exactly right. And that will continue to happen until there's high wage inflation that ends up leading to high goods inflation, and then the Fed has to then act and start to tighten policy, which that's not the move that they're doing right now. They're likely to cut rates another 3 times. But that is exactly right. You have to run the economy hotter, and you can as long as you don't get the adverse inflationary impact. So for everybody investing in equity markets and what have you, this is actually a reasonably interesting time, and you can see that in today's futures prices.
Does that depend on who leads the Fed?
I think it does. It does to a degree, but the productivity boost and the boom and the CapEx cycle, a lot of this is really coming from the fiscal policy side. A lot of that's coming from the tax accelerated depreciation and a lot of the tax policies. It does depend on who's leading the Fed. But I don't think that I don't think we're overly reliant on that, because if the inflation numbers come low, their models are pretty hard-coded. They don't have to worry about it.
Even if inflation spikes, I'm just wondering, will we have a willing partner in the Federal Reserve just to let this rip?
Yeah, so if inflation spikes, I think no. I think that everybody will line up, because inflation, whether it's political or it's economical, inflation is something that nobody has any patience for whatsoever. And I think the Fed, even though people might say it's become more political, will pivot on that. Inflation is the one thing everybody feels all the time.
I'm just thinking about Richard Fisher's speech back from the Dallas Fed, where he was talking about beer goggles, where if you're at a party and you're a little bit, had a few, that everything looks good to you. I just wonder how much people are getting ahead of themselves with respect to long-term investments that project out growth of the next 10 years, and we have no clue. We have no clue about a lot of these industries and how they're going to evolve. We have no clue with video game creation and whether people are going to invest so much to play this particular game or that particular game. How do you price this out?
Okay, so I think the best way to do this is to go back in periods of time in history and think about, forward-looking elements to this. What we are going through today is a CapEx cycle. For the last 25 years, we've really had a housing-led economy. Housing is not the big driver of growth and investment right now. It's a very big part of the economy, don't get me wrong. But we are in a CapEx-led cycle. The last time we saw this was about 30 years ago. It was in the mid-1990s. That CapEx-led cycle brings manufacturing, brings higher quality jobs, you get higher productivity, you get more profitability, and what you end up getting is the big one, higher potential growth. That's what a big CapEx cycle it does, and I don't think that people fully appreciate that because, it was 25, 30 years ago.
I guess I'm just thinking about this EA deal, which I know you don't want to comment on, but the idea of, The Sims or Call of Duty, and that we can put a value around some of these things 10 years out when people aren't playing some of these more expensive games and they're actually on their phones. I mean, how do you understand how much money is going to be lost in this process?
So the way that I think that most people going into any type of an investment deal think about it is they always think about the discount rate. That's why interest rates matter so much. If you believe that interest rates are going to be lower than ordinary in this type of a relative to the amount of growth that we're potentially going to get, then that means you're buying things at a cheaper valuation because you're discounting those cash flows at a lower rate, which gives you a higher present value. So it really depends on your perspective. If you believe in this productivity cycle, this CapEx-led productivity cycle that gives you better growth with less inflation, or at least stable inflation, then you can actually value these companies and these opportunities at a higher valuation. And that gets back to what I was saying before, is that CapEx, higher productivity, supports higher valuations. So what may seem crazy maybe to us or to other people may not be, depending on how you're thinking about it.
Jim, smart. You always make me think, and it's good to catch up. It's good to see you. Thank you, sir.
Thank you. Good to see you.
Jim Curran of Morgan Stanley, thank you very much. And thanks to Lise for explaining what beer goggles are. Well, I felt like you were getting into dangerous territory there.
I think I did a really good job.
You did a fantastic job.
Thank you. Thank you.
We're reflecting on the biggest leverage buyout on record. Electronic Arts agreeing to sell to a group of private investors in a deal that values this company at $55 billion. Look, it has been deal after deal after deal.
This is fascinating from so many points of view. First of all, the idea, does this indicate that we really are at a place where some of these deals can get unlocked, and this idea of M&A in the tech sector, also just the easy financial conditions, but also how do you value something? I mean, is Call of Duty even going to be popular in 2 years, or is everyone going to go back to reading books?
I'm not a video game kind of guy.
I think that you are.
And neither are you. So you and I are the worst people to comment on this story. From that dimension, from that angle.
Yeah, but I can advocate books.
True, I can do the same thing. This was a fun start to the week. The fun continues tomorrow. Will we get a payrolls report? From New York, you're watching Bloomberg TV.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
In case you missed it, on the close. Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Looking to kick this week off in the green. 30 minutes until the start of trading. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Electronic Arts agrees to go private in a deal that values the company at $55 billion. It's the largest LBO on record.
Gold surges to a new record as a government shutdown looms. U.S. gold reserves surpass $1 trillion in value.
And they're marked right now at about $11 billion. A CEO contender, Citi's head of banking, Vis Raghavan, emerges as a potential successor to Jane Fraser. We'll talk about that.
A lot to talk about. I don't know what this means about where we're in this cycle. The fact we just had a $55 billion leverage buyout, a take private of Electronic Arts. Matt mentioned it, the biggest leverage buyout ever. So it puts it at $210 a share. We're not quite there yet. Up 5.3%, Matt. My favorite fact to this is the high water mark before was a Texas utility company leverage buyout in 2007. That eventually went on to go bankrupt.
Very, well, that's a bad sign, but very
right.
Different industry. We're also watching defense stocks. They're moving after a report that the Pentagon is asking missile suppliers to double production rates, a tall task for production of missiles that can take up to 2 years to assemble, Danny. You can see that we're looking at big defense movers throughout the space. And later on in the show, I'm going to ask venture capitalist Tim Draper what he thinks about investing in defense.
Stick around for that conversation happening in about an hour and 45 minutes time. Let's turn back to our top story this morning. The EA deal, the biggest leveraged buyout on record. Let's discuss it with Bloomberg Tech co-host Caroline Hyde. Caroline, it's punchy $55 billion for a video game maker.
And not even got Battlefield 6 out yet. This is what they're betting on, future success. Look, this is a company that is all about IP. This is certainly what the CEO is trying to tell its workforce already. He's sent out a note to employees. But this is about their strength not only in shooter games, such as Battlefield 6, that comes out October the 10th, but also the sports dynasty really that they're showing, the fact that they're really into soccer but also NHL and the like. This is able to withstand perhaps some of the macro headwinds, some of the offset that, you know, everyone's turned to free-to-play games. Everyone's on Roblox, everyone's using Fortnite. How have these studios been able to withstand that? This leverage buyout comes at an idea that Silver Lake, but closely focused on some of the PIF funds, the Saudi money. They are experienced when it comes to gaming. They understand what it's necessary. And basically, this is a company that wants to come out of the eye of the storm when it comes to quarterly reporting and just get down and start being a bit more creative, a little bit more innovative without having to report on a quarterly number. But the numbers are eye-popping. If you're thinking about this from versus EBITDA, this premium is huge in comparison to, say, what an Activision was bought for by Microsoft.
I never thought being a fan of first-person shooters would make me feel old, right? But I guess the kids aren't really into that anymore. All right, so what do we know about the details? Who's behind this LBO? Which banks are financing it? Danny already gave us a share price, I think $210 a piece, right?
Exactly, and maybe there could be others that would come into play. Maybe feeling if Battlefield 6 does end up being a roaring success, you could have some competing offers here, but clearly the board has recommended this particular offer, $210 per share. As we know, Silver Lake Management, which we keep talking about at the moment because they're obviously one of the players within TikTok, they're looking to be involved, as is Saudi Arabia's, as I mentioned, public investment fund. Interestingly, of course, Jared Kushner's Affinity Partners, which has also got money from the Middle East, he's looking to be a player. Of course, close relationship with the president, so maybe that eases some of any regulatory concerns that might be coming to play with foreign ownership. But then you've also got the idea that JP Morgan's going to be here helping with the facility in terms of the debt load here. And this is going to be an enormous amount of debt that they're going to be taking on, but this is one that people are desperate to get in on. You know, just think about Oracle's bond sale at the moment. People want to be able to buy in on these sorts of debt mounds. We're seeing about this LBO more broadly that this is a willingness to get in to yield more and different types of asset classes. So I think JP Morgan's the main bank behind this.
It speaks to just how much money is in the system right now.
Yes.
But Caroline, elsewhere, it's been a really good month for tech, despite some of the headwinds coming out. We had another one, some excellent reporting from the team that Huawei is going to double their chip output, obviously trying to have a direct threat to NVIDIA. Yeah. It's not a news story, but how is it evolving?
Well, the evolution here is really about getting the cadence at which they're going to be able to manufacture. They're trying to persuade the market. More broadly, they're trying to persuade Alibaba, Tencent, and those that have depended on at least 1 million GPUs, H20s, coming from NVIDIA in 2025. They're saying, look, we're going to ramp up, we're going to double in 2026. We've got you. All those bottlenecks that you're seeing, all the concerns that basically they can't really manufacture these sophisticated chips in China at the rapid scale that, say, an NVIDIA can or a TSMC can, because SMIC and the others that they depend on, it's really hard to manufacture these sorts of chips. They haven't got as powerful individual chips. I think Bernstein out there saying the next iteration of the Ascend is going to be only about 6% in terms of power versus the new GPU coming out from NVIDIA. So what they have to do is have very innovative way of basically casing it. And this is then coming to more broadly then how you manufacture that, what sort of hit rate you get, and basically you don't make as many good chips each time that you're iterating. And so they have to bake in the fact that a lot of them aren't going to work as they are meant to. But Ascend is meant to be coming on tap. We've got 1.6 million maybe being promised for the next year. So this is a big scale up coming from Huawei, and actually being far more public in their disclosures than we've ever seen before. So really trying to show Eddie Zhu that I've got you here, China. We can be there for the supply chain.
All right, it is a fascinating rivalry that's shaping up there. Caroline Hyde co-anchors Bloomberg Tech. That airs at 11 o'clock with Ed Ludlow, and they'll be covering all of these stories and more at that point. I want to get, though, to a very old and untech story. Gold is worth well over $3,800 a troy ounce, and that, by the way, values our United States of America gold reserves at over $1 trillion if we were to mark them to market. The interesting thing is that they're marked at like $42 an ounce, so only $11 billion in total. Let's talk about that with Bloomberg Managing Editor for Commodities, Simon Casey. I love a good gold bug and a conspiracy theory and like the idea that we could, like if we marked these reserves to market, Treasury could have another $990 billion.
Yeah, click of the fingers. Not as simple as that, unfortunately. It would require legislation through Congress. It's a rather controversial idea, to say the least, a bit of a fringe idea. It gained traction, if you remember, back in February, in the early days of Trump's inauguration, following the weeks that followed, and lots of ideas being put around how to fix the nation's finances. It's still a fringe idea. Scott Bessent triggered a lot of speculation back in February. I think he talked about looking at various ways to re-engineer the U.S. balance sheet.
He wanted to monetize the asset side.
That was the phrase, right? He walked back those comments a little bit in the face of a lot of speculation about from the gold bugs. The gold bugs are always there.
I'm so upset we haven't gone into Fort Knox and done an audit of the gold.
Yeah, is it even there?
That never happened. Is it even there? I'm into the conspiracy theories. We got to go in there, Simon.
Well, yeah, I'll be right there with you. I mean, this is something that Trump sort of fueled a few months ago as well. I think he put out a tweet saying we should go there and find out. I mean, I think it's there. It'd be a big story.
That would be a huge story if it wasn't there. Elsewhere, just in the gold sector and in gold miners, A lot of different C-suite moves between Newmont and Barrick. I'm guessing they're not related, but what's going on there?
Well, the Newmont thing seems very orderly. It's a retirement, an internal promotion, sort of succession planning going on. The really interesting one is Barrick. Mark Bristow, he's been there for 7 years. He's a rare case of a CEO who was acquired along with his company, and he rose to the top spot as a result of that merger. He's a very, very well-known character inside the mining industry, very vociferous. He's been on Bloomberg TV many times talking often very critically about the industry and how it doesn't always capture the value from gold. This is a bit of an abrupt announcement. His replacement is on an interim basis, an internal promotion, but the company's also saying they're running a full process with a recruitment firm, a headhunting firm. So who knows who the final full-time appointment will be? But that's a bit of a shock, that one. And coming on the same day, we have record gold prices, of course.
Yeah, I mean, up what, 80% over the last 12 months. I'm looking at a chart here, and if you look at Barrick, it's only up like 50% in over 5 years. Newmont also isn't doing great, but their competitors have doubled, tripled, even quadrupled.
Yeah. Some of these bigger companies have run into big operational problems, particularly with Barrick. They've got a very serious issue in Mali, where the junta there has tried to seize control of this massive mining complex. They've imprisoned some of their employees. So Barrick's been dealing with that. But mining is a difficult business, but as you point out, the last several years, the equities just have not kept pace with the metal. So it really calls into question the fundamental case of why would you want to buy these shares when you could just buy an ETF, buy the physical gold itself?
And people surely have. Simon, thank you so much for joining us. That's Bloomberg's Simon Casey. All right, we're 20 minutes from the cash equity open. Futures look to rebound after the first down week last week in about a month. By the way, this is the S&P 500's best September since 2013. And we started this month. How did we start it? Basically saying September is usually horrible.
Yeah, we showed the heat map, and we were like, oh, over the last 20 years, you know, it's been one of the worst months, if not the worst month. Yeah.
And everyone was like, summer's over. Everyone's back at their desk. There are so many risks between tariffs and the Fed. By the way, all those risks still exist, but we keep pushing things higher to new records.
And we're going to some really positive seasonality. Like October and November are traditionally good months. So, you know, take that for whatever it's worth. Coming up, Citi's investment banking head has emerged as a candidate to lead the bank after Jane Fraser has her turn. More on that next. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Let's get now to high interest. Look what's making headlines around the world. Chinese President Xi Jinping is pushing for the U.S. to change a decades-old phrase describing its stance on Taiwan independence. Sources tell Bloomberg China has asked the Trump administration to officially declare that it opposes Taiwanese independence. Stronger language than the previous statement that the U.S. officials do not support Taiwan's independence. It's a subtle but huge difference. Let's get to company news. AstraZeneca plans to list regular shares on the New York Stock Exchange to attract more investors. A direct listing of Astra's ordinary shares will replace the existing ADRs on the NASDAQ. AstraZeneca is the biggest drug maker in the UK, makes almost half of its revenue, though, here in the US. It does plan to keep its UK headquarters, but who wants to list in London? Citi investment banking head Viz Raghavan has emerged as a potential candidate to succeed the current CEO, Jane Fraser. Raghavan has energized the division since his arrival last year, with the bank scaling the M&A advisory ranking and displacing rivals on recent deals. And this is something I think that a lot of investors and also probably viewers who work at Citi are very interested in, Danny.
Definitely, assuming the ones on his floor are currently watching. Let's stay on that story and bring in Bloomberg's chief Wall Street correspondent, Sri Natarajan. Sri, it's also interesting that this is an individual who came from JP Morgan as well, somewhere that's had maybe some issue keeping top talent because of succession planning. What do we know about him and the likelihood that he would be a successor to Jane Fraser?
Well, let's start with the three most important factoids about him. Viz Raghavan is a cricket fanatic, which puts him high up in my list.
Of course, a necessary quality.
Has a fondness for Italian ties and has purchased a penthouse in New York that was previously rented by Bad Bunny. So let's get those three important facts out of the way. Now, Viz Raghavan has come to Citigroup at a very important moment. The bank has been struggling. End of 2023 was perhaps the low point of Citigroup. Shortly after that, CEO Jane Fraser had to come out and announce this massive restructuring that involved cutting 20,000 jobs. But about 2 years into this process, there are clear signs of turnaround. Citigroup is the best performing big US bank stock this year. That's important. Even on the investment banking side, the very particular mandate that Viz Raghavan has shown signs of improvement. It has already gone ahead of Bank of America for the full year numbers. If you were to look at financial advisory fee, analysts are estimating that Citigroup will finish number 4. But really, this is not about the number 4 and number 5 spot. For Viz Raghavan to be really successful, he has to be able to prove to Citi's management, to its board, to its CEO, that he can lift this bank into the top 3. And that's going to be a very difficult challenge because the Goldman Sachs, JP Morgan, and Morgan Stanley, that trio has a really solid advantage. So the task ahead is difficult, but there have been early signs that sound very promising for Citigroup.
What works to Citi's advantage? I mean, they must be one of the most international banks out there.
They are one of the most international banks. They're, of course, paring back some of what they believe are not core to them, operations that are not core to their mission, cutting back on some of their international banking operations per se, but focusing more on the commercial banking side, right? Focusing on this wealth management and commercial investment bank side and saying, if we can focus on this, lift our return on equities, which, you know, for this year perhaps is still in the single digits. They need to be much better than that, but they're slowly working towards that. And if Jane Fraser's turnaround continues on this track, analysts will be happy with where they are headed, not necessarily where they are right now.
Can I ask you just about like succession planning? One of the things I never fully understand is you have this person coming in who's done a great job for the bank and saying maybe a potential successor to Jane Fraser. I think they're literally the same exact age. So how would that work if you have two people who are, or a person who's a rising star, but she's not necessarily going to leave anytime soon?
I'll one-up you on that. Not just almost literally the same age. I think Viz Raghavan is about 6 months older than Jane Fraser. So most certainly the biological clock is not favoring him. Also, don't forget the fact that Jane Fraser is about 4 years into her tenure as the CEO. And while the average tenure on the S&P 500 tends to be about 6 to 7 to 8 years for CEOs, that's not necessarily the case in the banking world, especially when the CEOs had a good run. So if Jane Fraser can continue this Citigroup turnaround story, there is no reason she would have to leave in the next year or 2 or 3. And if that's the case, then yes, it becomes harder to see how a Viz Raghavan becomes the next CEO. The counterpoint to that is 60 is the new 50.
Right. Well, and she still is underperforming Jane Fraser. I mean, there's no bank on Wall Street that's done worse over the past 5 years other than Bank America.
And to that, she will say there's no bank on Wall Street that's done better than Citigroup in the last year, and that's important.
Well, 1 year, right? I'd take a longer term. As an investor, I would take a longer term view, probably as an employee as well.
So see where the story is headed, not where it is right now, is what Citigroup is going to tell you.
All right, Sri Natarajan, go where the puck is going. He is Bloomberg's chief Wall Street correspondent, covering this story for us. Let's get a quick check on futures ahead of the opening bell. We're looking at gains across the board, 0.5% on the S&P 500, and we're getting results in terms of earnings. And you know, you and I were in the green room earlier, Danny, for surveillance, and talking to a couple of strategists, talking with Max, talking with Jonathan, and they were saying it's really all about earnings, right? And we have great earnings news out from Carnival, raising their full year outlook.
Yeah, they're raising their full year outlook better than the guide that was in June by $235 million. Shares are up, you can see, nearly 4%. Cruise keeps surprising to the upside, though. This is one part of the consumer economy that still has been so strong, but how much of it is just about, okay, consumers are happy, they want to keep traveling, versus the cruise lines really trying to shift to luxury and capturing the upper income cohort that is making these results continue to be strong.
Is that what's happening? I mean, if you're a rich person, do you go on a Carnival cruise? I mean, I guess the results point to some of that at least happening, and we do see the shares up 4%. Next hour, we're going to hear from Norwegian Cruise Line CEO Harry Sommer. We'll ask him if that's the case.
They've been adding to their luxury offerings. They have. They have a new maiden voyage ship happening that is a luxury ship by all accounts.
He's going to ring the opening bell at the New York Stock Exchange as well, so investors will notice. We're also going to get RBC's Lori Calvasina on the high bar for earnings as Goldman strategists turn bullish on stocks globally. This is Bloomberg Open Interest.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Goldman Sachs strategists are telling clients to buy the dip through the end of the year. The team is overweight on stocks over a 3-month horizon, citing earnings growth and global fiscal policy easing. Earlier this month, Goldman raised its year-end S&P 500 price target to 6,800. Joining us now is RBC Head of U.S. Equity Strategy, Lori Calvasina. And Lori, I mean, you have maybe been more reserved, not bearish by any means, but more reserved in some of the stuff that you have been seeing. We're about to book the best September since 2013, after we came in saying that the seasonality was horrible. Can you keep buying dips, or is it just about staying where you are?
I think this is a really weird market. You know, I don't necessarily disagree with the buy the dip strategy. We actually put out a target of 7,100 for the second half of 2026, really just to kind of flag how our models are trending for next year. Some of our models are on a 12-month forward basis, so it's not quite a year-end target. But I do think that we've got a good earnings setup for next year. I think there's, you know, a little bit of an issue on valuation in the here and now. And what I talked about a lot last week in my meetings, I was in the UK, and frankly, a lot of people over there are a bit more reserved than what we're seeing in the US. What I've noticed is that when I look at my PE charts, and, you know, just the last month and a half or so, we're creeping up to these new highs on the S&P, but I'm not seeing any multiple expansion. And so it looks like whether you're looking at S&P top 10, S&P 500 market cap weighted, NASDAQ 100, pick your own adventure. You can do equal weighted or cap weighted there. They're not making new highs. They're up around levels that have marked the most recent post-tech bubble ceiling, and they're unable to break through. And so I think that's why when I see this market, it feels like it's creeping up to new highs, not exploding to new highs, even though everyone's getting excited about the price levels.
So we essentially need to have a continued earnings expansion in order to have price appreciation. I'm also interested in, I was listening to you with Nathan Hager this morning on Bloomberg Radio, and you've done some work on inflation, because we're starting to realize that 3% is really what the central bank is focused on, right? They talk a big game about 2%, but they never, ever, ever go down there. So do we see gold breaking out to new highs? Do we buy equities as well to counter inflation?
So, you know, the reason I sort of got focused on that, it was sort of like mid to late August. I'd been talking to Chris Looney, who's our gold strategist. You know, we're sort of comparing notes on kind of what's driving his market versus what's driving mine. And that was right when we were starting to see all the euphoria on small caps start to break out. And I thought back to my early small cap days where I remember people used to say small caps are inflationary. And so I did this.
Or an inflation hedge.
Yeah. And basically, you know, small caps were kind of born in the 70s. That was when it was a really hot asset class. And then that was really, you know, sort of inflation was obviously a major issue back then. So I dusted off a bunch of charts, built some new ones, just looking at things like equity allocation on the flow of funds data. They call it something now besides flow of funds, apparently, but looking at that data set and comparing it to inflation rates over time. And it's kind of broken down in recent years, but you could see that equity allocations would go up when inflation was moving up. And then I did some work on small cap. I think I looked at ISM prices paid, which my economists tell me is a good leading indicator for goods inflation. And you had seen some relationships there as well between small cap performance and just that particular inflation indicator. And there had been some we had used in the past. But again, a lot of these have broken down in recent years. So we wondered if part of what was going on in August was, you know, kind of people, frankly, looking, you know, for clues on what to do, trying to make sense of this inflation environment and kind of having some of that past history influence decision-making.
All right. Fascinating stuff. Lori, we're going to keep you with us. Lori Calvasina from RBC is going to stay with us through the market open as futures point higher. This is Bloomberg.
Asia's not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, well, you know, Trump's been, you know, sort of saying, well, you know, we shouldn't be focused on this, but yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Quick check on futures. We're higher across the board. It's not a new month yet, but October does look good seasonally. We're almost there. S&P futures up 1/3%, a little bit more than that. NASDAQ futures up 0.5%, and Russell futures gaining even more. We're excited, more excited than usual about the New York Stock Exchange bell ringing ceremony today because Harry Sommer is ringing the bell, CEO of Norwegian Cruise Lines, and he's going to be on with us in 1 hour's time. So definitely want to join for that. After Carnival Cruises had some great results, Norwegian hasn't done as well as Royal Caribbean or Carnival in terms of stock performance, but they have a new ship apparently coming in, and we're going to take a look at that and talk about the luxury aspect of the business. ArcBest ringing the bell down at the NASDAQ. That stock, those people are happy because it's more than doubled as well over the last 5 years. So they're making money. And Danny, it looks like defense companies also are doing well this morning. What are you watching?
Yeah, I'm watching basically all of the defense stocks this morning. They're all moving to the upside. There's a report from the Wall Street Journal that the Pentagon is asking all of its missile suppliers to double, even quadruple production rates in some cases. It's a really tall task considering that doing that takes a lot of time, up to 2 years to assemble, and a lot of money. It's not clear that these companies have the commitment from the Pentagon for that money, Matt, but on the assumption they will, we're up by as much as 2.5% for RTX.
All right, we're talking also today about the largest LBO in the history of the universe. Game maker Electronic Arts is going private in a leveraged buyout at $210 a share. That is, what, is it a $50 billion? The big 55. Number. $55 billion LBO, the biggest video game deal since Microsoft bought Activision, and as we've been talking about, the biggest LBO. We are back with RBC head of U.S. equity strategy, Lori Calvasina, and you know, there's so much going on that I don't think we need to talk to you about LBOs. I want to know about the government shutdown. We haven't really mentioned it much, but aren't we all assuming this is going to happen? I mean, nobody seems to care on either side of the aisle. So does that matter for stocks?
Look, I think that the unfortunate reality is, and I've been doing this in some form or another for over 25 years, and whenever this stuff comes up, you know, you go back and you look at the history and you realize that a lot of these shutdowns, while there have been a few that have been lengthy, most of these, like, and I actually updated my analysis this weekend, like redid some of my work on this.
This is what Lori Calvasina does on the weekend.
I'll be honest with you, I got very little sleep Saturday night. Part was jet lag and part I just decided I needed to rebuild all this stuff. But there's a lot of like 1 days and 3 days on the page, and so you realize a lot of these things are pretty fleeting. The other thing is, if you go and look at the performance of stocks on the days in which the government is actually shut, there's a lot of it's kind of mixed and mild. So back in the 70s, we tended to see declines. More recently, we've seen a lot of green on the chart, but the percentage gains are not very big. Now, you can go back, and I actually did this Saturday night and kind of break out. Oh my God, I sound like the biggest nerd, but like you go back and like you can sort of look at the different decades, and we plotted the different shutdowns, and you can see like in the 70s, these shutdowns would happen in the middle of these really nasty market declines. Fast forward to the 80s, you have to look really, really hard to find the market dips, and they're all like 1.5% to 4.5%. And then we didn't really have any in the 2000s. We had a couple in the 90s, and they look completely different. So as someone who's supposed to forecast markets and go out and tell people do X, Y, and Z because of this event, it's like every decade is completely different, kind of choose your own adventure. And this decade, frankly, just seems to be very, very different.
A wild Saturday night, Lori. Just an absolutely crazy Saturday night.
The idea is that gridlock is good, right?
But
and that's the ultimate gridlock if the government shut down.
Wait, but is this time different, though? Bob Elliott has been talking about this, because this time you have a president who's saying, we're going to lay off hundreds of federal workers if we shut down.
Essentially fire.
Fire everyone. So there could be a bigger economic impact this time, maybe impacts markets more?
Well, look, I think one of the things we learned from the spring, right, with sort of the whole Doge effort, was that this idea that, government jobs are going to be this tailwind to the labor market, like we've had plenty of time to digest the reality that that's just not in place anymore, right? So this could be episodic. But I do think, right, we're all sort of on tenterhooks looking at the labor market data anyway, right? So maybe, yes, maybe there's a little bit more relevance on that front, but I think this is an issue we're already quite focused on. I do think that, you always want to be careful of just taking the past and say it's going to automatically work this time around. But I will tell you, I'm worked up about, the possibility of a pullback at the end of this year, between now and year end. And even I have a hard time, sort of getting too nervous about this particular one.
I want to ask about something completely different, and that is Danny's been telling me for weeks about the lack of supply of stocks in public markets, and it takes so long for anything to get through this thick skull of mine. But I actually saw Shonali Bassick, now at ICAP, tweeting out the same thing over the weekend. How much does that dearth of supply drive up the price in general? Like, is 25 not a very high PE, considering the fact that we only have, what, half the stocks that we had in the 90s?
Since the late 90s, yeah.
Yeah, look, I kind of, from an S&P 500 perspective, I kind of fade this issue. I mean, the fact is multiples are hitting ceilings that have been important ceilings in the past, and even the recent high on valuation isn't that far below the tech bubble high, at least on the particular metrics that we use. And the S&P 500 has plenty of supply. Like, I don't think that, we're struggling to find companies, right? You can always pull some of the smaller or medium-sized stuff up. Where the lack of supply, I think, has been really relevant in my day-to-day is talking to my small-cap portfolio managers, because remember, I'm an old small-cap strategist, and we don't do this work anymore, but in the past, we used to do a lot of work on, sort of crowded positions in long-only small and mid-cap funds, and it was a really funny exercise, because I would take the list of the top 25 names and show them to the small-cap PMs, and they would be horrified, because you talk to a growth guy who owns 17 out of the 25 names, and he's like, but I'm a stock picker, and I like to differentiate. And the reality is that when you have a lack of supply in that part of the market, it causes crowding. So I think that it could be, a contributing factor to sort of those crowding dynamics, certain stocks getting more elevated, people having to tolerate valuations they don't want to in the small cap space. I don't really see that being a problem in the big cap space.
Well, we did have a huge big cap take private. Matt was talking about it and didn't want to ask you about LBOs, but I do, because it is the largest leveraged buyout, $55 billion. JP Morgan supplying $20 billion in debt for this. There's so much appetite for debt financing for these big type of deals. What does it say about where we are at the cycle? At the same time that we're having a discussion about the Fed cutting, there's so much liquidity for this type of public market deal.
Well, I think what's interesting to me is everyone was going bonkers about the idea that like M&A and all this deal activity was going to pick up this year, and we haven't really seen it for one reason or another. So, when we do sort of see transactions coming in, I kind of think about it from that perspective. Are certain things not getting done, so markets are sort of shifting to other things?
Okay, Lori, this has been so excellent. Thank you for joining us. You have to join us again after one of your crazy Saturday nights to tell us what you come up with next.
Crunching data.
RBC's Lori Calvasina. Let's get your check on equity markets about 8 minutes into your trading day. And we are moving higher this morning by about 1/3%. That follows the first down week for this market in about a month, but we are set for the best September since 2013. NVIDIA leading us higher, despite the fact we had a story early this morning from the tech team at Bloomberg saying Huawei is looking looking at doubling its output of AI chips. That's seemingly not threatening NVIDIA. It's NVIDIA, Broadcom, Tesla, Meta, Alphabet. Goes this whole story of should we have a different Mag 7 that includes something like Broadcom. To the downside, what's leading us down is Apple down about 0.75%, Intel down a punchy 4.4%, but that comes after a huge run last week. Exxon, a lot of the energy players down with oil prices down this morning. You'll also see that on our sector board. The fact oil is down more than 1%. OPEC looking at pushing up their output. So there you go, energy at the bottom of the pile, down 1.3%. What's at the highest? I showed you NVIDIA, so of course Infotech, that is at the highest at 0.8%, followed by industrials and consumer discretionary, Matt.
All right, coming up, sluggish growth is forcing video game studios to consolidate or go private. We've been talking about the EALBO. We'll discuss that with gamer and Bloomberg Tech co-host Ed Ludlow next. This is Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Let's look at some top calls this morning. Some of the analyst upgrades and downgrades. First up, Morgan Stanley downgrades Novo Nordisk to underweight. They see slower weight loss, prescription growth in the U.S., and competitive pressures driving downside risk. Shares down 2.5%. Wells Fargo, they're downgrading Western Alliance to underweight. They say that the bank won't benefit from interest rate cuts until next year. Shares down almost 1%. Finally, Jefferies, they raised their price target on Alibaba to $230 that point to optimism over the company's cloud and AI business. And shares of Alibaba up 5% after already doubling this year, Matt.
All right. Fascinating group of movers and shakers there. Let's get to Electronic Arts. It's going private in the largest leverage buyout on record. A group of investors are paying $210 a share in cash, valuing the company at $55 billion. Bloomberg Tech co-host Ed Ludlow is not in San Francisco. He visits us here at the desk in New York, and we're so glad to have you here, Ed, because not only do you have a wealth of knowledge on this sector, but you also are personally, you have your own heartfelt stake in EA.
Yeah, like, you know, this speaks to why we've got the biggest leverage buyout of all time. Like, when I was a kid, I had this deal with my parents that if I gave up 4 weeks of allowance, pocket money for British people, on a Friday night we would go to Game or Woolworths, Laurie Smith, and buy a disc. That business model just doesn't exist anymore. You know, gamers around the world want something that's largely free to play with in-game mods, right, that you buy. And EA has all this intellectual property that it just doesn't have a footprint in those other worlds, e-sport, franchising into movie, TV, and film, like some of the other big names out there do. And it's a continuation of something that Saudi Arabia has been doing for years. You guys mentioned about JP Morgan and the debt, and the details are important, but everyone's overlooking that the PIF or PIF already had 10% of this company anyway. You know, they're sticking with gaming.
And we should point out who's going to take. We're talking about the PIF. We're talking about Silver Lake.
Yes.
Who else is? Who are the buyers? Because when you tell me LBO, I think about management, but that's not what this is.
Yeah, and also, you know, when you think about LBO, you think about an environment or a company that is seeing some kind of financial pressure, like slowing growth, which is absolutely true of EA and the video games industry at large. I would focus very much on the public investment fund side of this story. In this letter that Andrew Wilson, the CEO of EA, sent to staff, and he's continuing as CEO, by the way, he uses the words sports and entertainment a lot. And I think that they basically see the public investment fund and what Saudi Arabia is trying to do more broadly as access to markets that they want to be in, but they are not currently in.
Last time we had a deal that even rivaled the size of an LBO, I was talking to Matt about this, was 2007, a completely different company, a Texas utility company that went on to go bankrupt.
Right.
Maybe it's a sign of the times, but what does it say that there is so much demand for debt financing when we are talking about concerns about consumers, whether they're still spending money? And again, it's a video game company. It's not necessarily like one of these flashy AI newfangled companies that this is happening for.
Yeah, I mean, the parallel I draw, though it's tenuous link, is like what Musk is doing with XAI and some of the debt financing of GPUs and infrastructure. No one seems worried about that. In fact, like every time we have like these market strategists on Bloomberg Tech, I ask them like, do you guys check out the debt paragraph and like read about it? How worried are you about it? And I don't cover the Fed or this macro stuff, but everyone seems pretty sanguine right now that this is the liquidity for all of these companies is not an issue. Whether they roll some of this debt over to EA, which is currently free cash flow positive, like it's worth checking out in the terminal. Like it's not a terrible business. I find that interesting for sure.
I want to ask you about, just in general, we seem for a few years to only care about 7 stocks.
Yeah.
Right? And now that sort of Mag 7 moniker is kind of going out of fashion because you've got so many other big stocks that you and Caroline cover on Bloomberg Tech, you know, Broadcom, Palantir, that are, you know, at least growing at the same pace, if not quicker. So
I don't have the column in front of me, but shout out Ryan Vlastelica on the equities team. That guy's awesome. But what did he call it? The 10 AI of Gen AI and some of these other ones.
There are some that he maybe made up.
But you know, the point is, right, is that a lot of the Mag 7 names were tied to the first phase of what we saw, massive infrastructure investment, largely related to training of AI. The revenue generation is on software, like people using that work to make more attractive software products, and that's why Palantir is in there. But Broadcom is also muscling in a little bit on NVIDIA's territory, offering custom chips to anyone that will buy them, and that anyone is OpenAI.
It's grade 8, golden dozen, 10 AI of Gen AI, and the takeaway is obviously if it doesn't sound catchy, it could never be a moniker for this market.
But you know, also like, you know, investors are more discerning. Like we've learned this hard lesson over 2 years. Micron is a great example of that. 2 years ago, Matt, we talked about high bandwidth memory, and actually the stock's performance since, like Wall Street was paying attention for sure. And I don't know that Micron's mentioned in any of those groups.
We talk about being discerning, yet Oracle has been on this massive run and getting all this financing for production facilities that it doesn't yet have, and taking out massive amounts of debt. Manny Roman of Pinnacle was on Surveillance earlier, basically saying we don't know what the future is going to look like, and you have to be humble about the errors that you might get going forward. Maybe the closest you can kind of bet on is 6 months ahead. Is this not an investor base that's betting on years and years of spending to come that we don't know if will actually come to fruition?
So when a data center gets built, let's understand who's building it, who's financing it, and who's going to use it. And the only question that we as Bloomberg Television anchors, in my opinion, right, should use from this point is who is writing checks that they cannot cash? Is it OpenAI who leases the capacity? Is it the energy industry or the utilities because they don't have the ability to support this? Keep asking that question, because you know, in the marketplace, people are starting to ask that, even if they're not worried about the debt portion.
Right, and as we play this sort of stock market shell game, is Huawei catching up to...
Right, Nvidia's up like something % this morning, right? Anyway, in spite of that.
Yeah, in spite of that Huawei story, right now we're looking at Nvidia shares that are gaining 2% and almost 3%. We should say Oracle is up today as well, but it's still trading at like 285, so it hasn't been this low since the beginning of September. It had a rough week. Ed, great having you here. Sure. We could talk for hours, but you're going to do that, at least for 1 hour at 11 o'clock with Caroline Hyde.
They let me.
We look forward to Bloomberg Tech, and we're going to talk when we come back about something that's decidedly non-tech.
Decidedly non-tech.
Unrelated to AI.
Yeah, literally quite physical, because it's big boats. Consumers are taking cruises. Carnival says nearly half of 2026 is already booked. We're going to have more on their strong earnings. But why is the stock falling 2 1/3%? That's coming up next on Bloomberg Open Interest.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bercecci in Vienna, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on stocks. Just about 20 minutes into the trading session, the S&P 500 trading up 0.4% at 666.9, 66.70 now. The Nasdaq right now up about 0.9%, 24,713. So you can see tech stocks doing considerably better than the rest of the S&P. That as evidenced by Nvidia, up 2.7%. That's the big mover, and that's a big lift on the tech-heavy indexes. Oracle was up, but now has turned down. It's only 0.3%, but that means if we close in the red, it'll be the 5th session in a row that Oracle trades down. EA, obviously the biggest leveraged buyout ever, shares at 210 in the buyout, so we have a ways to go to get there. That's lifting Take-Two as well. And then the cruise lines are both down. We're going to talk to the CEO of Norwegian Cruise Lines. Harry Sommer's going to join us in just about 30 minutes' time. But Carnival came out and lifted its full-year guidance, and yet, Danny, shares are off 2%.
Shares are off 2%, but it's probably worth emphasizing that they're up 22% year to date. Let's get more on Carnival. We're joined now by Bloomberg Breaking News editor Guillermo Molero. Guillermo, is this just a case of the bar being incredibly high for Carnival?
That bar is definitely very high. I mean, the shares have been ripping all year, like you've been saying, especially since April. But, you know, the company has just raised its guidance for yields, raised its guidance for adjusted net income. They're looking at a really strong finish to the year, especially after a really strong summer season.
They've underperformed, you know, over a longer period of time, Royal Caribbean, and so has Norwegian. What's the play in this cruise industry? Danny was mentioning that higher-end consumers may be looking to get in on the action. So are they buying new boats? Are they upfitting their existing fleet? How are they attracting luxury buyers?
Well, one of the big things that Carnival has done this quarter, at least started offering this quarter, is their new Celebration Key, which is one of those private island offerings. You know, other cruise lines have started to offer these sorts of products that can really differentiate themselves, and I think that's what Carnival's trying to do, is really bring in consumers that are expecting a little bit more, especially from a carrier that might have that broad-based appeal. I think they will also want to try and bring in customers that can spend a little bit more, and they look to, you know, be doing a little bit of that just now.
These undertakings, I'm assuming, are incredibly expensive to have an island, have new boats, fit them out, make them a luxury offering. What does it look like the return on some of these investments that Carnival and others have doing? Has it been paying off to have this shift into creating this ecosystem where everyone is forced to just spend money at Carnival and not go ashore somewhere and spend money at an actual restaurant?
Yeah, definitely. And I think, like you were saying there, it's about keeping the money in the ecosystem, and I think that eventually will have a really big return for them. The capital expenditures, I think, just for the next quarter look to be about $1 billion, so it's definitely an expensive undertaking, and they're doing a lot of balance sheet reworking to try to make sure that they can, you know, keep the company's balances afloat while they're doing that. But in the long term, I think the goal is to keep all of the money inside so that every aspect of the vacation, the room, the amenities on board, the private island that they'll sail to, and the money that they'll spend there, everything is going to stay in that Carnival bubble, and eventually, hopefully, that'll drive up returns even more.
All right, Guillermo, great to have you on. Thanks so much for joining us with this story. Carnival Cruise Lines raising its guidance, but the shares falling 2%. We're going to have more on the cruise industry in the next hour. As I've been telling you, Norwegian Cruise Lines CEO Harry Sommer is going to join us. He just rang the bell at the New York Stock Exchange. They've got a new boat coming in that we're going to talk about. Apparently, some of these cruise lines have racetracks on board. On Norwegian Bliss, cruise passengers can drive go-karts on a 2-story racetrack. That might be enough to sell me, actually.
I would be terrified. I don't want to drive a race car on top of, like, in the middle of the ocean.
I mean, the more danger, the better, right?
I have a lead foot. What if I just, you know, fully...
But it's water. You'll be okay.
I don't think that's how it
still
works,
could be
but
pretty, could be pretty dangerous. Still, check on stocks. We'll talk to Harry about this because I'm sure they're not endangering any customers' lives. Quick check on stocks right now. We are up across the board. Well, no, the Russell 2000 is now in the red. Coming up next hour, other than that, we're going to talk the world of private credit with New Mountain Capital's Laura Holson. My old buddy Tim Draper is going to join us to talk about AI and reality TV. This is Bloomberg Open Interest.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talagi ko ahmata chuara pango ahmalepa manjang le ay ko mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. New details on yesterday's shooting and fire at a Latter-day Saints church in Grand Blanc, Michigan. At least 4 people died. The suspect, a local Marine veteran, was shot and killed by police. CBS's Natalie Brand.
Investigators believe that he used a gasoline type of substance to set that blaze, essentially destroyed the church. There were other improvised explosive devices, not that powerful, but he had put these devices together, investigators believe, and set them at the church.
Officials are still trying to pin down a motive. President Trump will meet with congressional leaders today as a government shutdown looms Wednesday morning. Chief Washington analyst Robert Costa.
When I spoke with President Trump yesterday, it's evident that he's not really that nervous about a government shutdown. Now, usually when you talk to a president of the United States and a shutdown's on the horizon, they are worried. But the president believes he has the power, I'm told, to use executive power to get rid of federal jobs, to cut some federal salaries should there be a shutdown.
Federal troops are headed to Tennessee. WRAG TV's Quamitra Wilborn checked out the mayor's website.
This week, the Memphis Safe Task Force will be in full effect as directed by Governor Bill Lee and President Donald Trump. Agents from 13 federal agencies, plus the Tennessee National Guard, and 300 additional state troopers will arrive in Memphis to help local law enforcement fight crime.
The state of Oregon is suing the Trump administration after the president ordered 200 guard troops to Portland. The 22-year-old suspect in Charlie Kirk's murder is due in court for a hearing in Provo, Utah today. A judge will decide if there's enough evidence against Tyler Robinson to go forward with a trial. Utah Governor Spencer Cox, a Republican, has been pushing for bipartisan conversations. He tells 60 Minutes.
I've been studying political violence. And so I'm keenly aware when these things happen. And I'm seeing people get murdered, get attacked, who are Democrats and Republicans.
Today's hearing is open to the public. It's a big deal in the gaming business. A
Electronic Arts, which makes games like Madden NFL and The Sims, is being acquired for an astounding $55 billion. Under the deal, EA will no longer be a publicly traded company. Saudi Arabia's public investment fund, Silver Lake, and Affinity Partners will share ownership amongst themselves and pay EA stockholders $210 per share. It's the most expensive sale of a public company to be taken private ever. Stacey Lynn, CBS News.
The Dow is down 52 points. This is CBS News. Country music star is backing out of more shows.
Dolly Parton says she's postponing her residency in Las Vegas over her health. On social media, the 79-year-old writes, "I am not going to be able to rehearse and put together the show that I want you to see and the show that you deserve to see." She says she has to undergo a few procedures and that December dates will be pushed back until fall next year. She missed an event at her Dollywood theme park this month due to kidney stones. She also writes, "Don't worry about me quitting the business because God hasn't said anything about stopping yet." Matt Piper, CBS News.
An original Mary Poppins star appears to be the picture of health. 99-year-old Dick Van Dyke bumped into Rick Springfield at a gym in L.A. The Jesse's Girl singer, 76 now, posted a photo of the two men showing off their muscles. Springfield says the actor got up from the chest press machine and did a little dance before he left. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well. Scarlett Fu, Paul Sweeney, this is the Bloomberg Intelligence program. Coming up, we're going to check in with Ed Ludlow, B-Tech anchor. He's here in New York City. We're going to get him in studio. We'll talk to him about some tech stuff going on out there. Nathan Naidu, a Bloomberg Intelligence tech research analyst. He's going to talk to us about this EA deal. Going private, $50 billion large. I mean, it's the biggest LBO like ever.
Well, yeah, it displaced the TXU buyout in 2007, so shades of bubble behavior?
I don't know. I mean, I got JP Morgan writing a $20 billion check. That's pretty good. Phil Orlando, Chief Equity Market Strategist at Federated Hermes, who'll give us his thoughts on what's going on with these markets. Dan Ives, we're going to talk tech to him, but we're going to lead with Penn State football. They lost yet again to a top 10 team. So it's tough times for Dan. He was out there in State College, I know, for the weekend for that game. So we'll check in. We'll get the latest on all things tech. So I got a lot coming up over the next 2 hours on this Bloomberg Intelligence program. Let's kick it all off with John Tucker and a Bloomberg Business Flash.
All right, guys. Happy Monday. This Bloomberg Business Flash brought to you by Van Eck. Van Eck marks its 70th anniversary this year with a legacy defined by forward-thinking strategies, resilience through market cycles, and an enduring commitment to clients. Visit VanEck.com. Well, after Friday's advance, the major stock averages kind of mixed right now. Netflix, let's start there. That's recovering this morning after a post by President Trump with 100% tariffs on films made outside the U.S. Shares of Netflix right now, they're up 0.6%. 6 of the 11 major industry groups in the S&P 500 higher. Information technology, that's in the lead right now, and that is home to the semiconductor stocks. Western Digital, best performing stock in the S&P 500 after an analyst upgrading their targets for hardware and storage company. And President Trump again posting on Truth Social, imposing a 100% tariff on any and all movies made outside of the United States. Meantime, with a government shutdown possibly looming, Lori Calvasina at RBC Capital Markets says if there is a shutdown, it may not matter much to investors.
If you look over time, there have been a number of sizable government shutdowns, but a lot of them just tend to, last like 1 to 3 days. They tend to be pretty short. And when you try to go back and sort of see what the stocks actually did during the periods when the government shut down, I would say, kind of very mixed and very mild is what you tend to see.
And right now, the S&P 500, 30 points higher. That's up just about 0.5%, 66.73 on the index. The Dow Jones Industrial Average, 16 points lower. The Nasdaq 100 up 214 points. That is a rise of 0.9%. Deutsche Lufthansa planning to cut 4,000 jobs by 2030. This will be the steepest reductions at Europe's largest airline group since the pandemic ravaged the airline industry. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
I remember the Deutsche Lufthansa CEO made some comment during the revenge travel of 2022 about how much fun they were having on an analyst call.
Okay.
Just, raking in the money because everyone was traveling and buying up airplane tickets.
Yeah, exactly. I guess we're now normalized now. We're back to a more normalized
clearly.
environment. All right, let's take a look at some of the stocks on the move. Today, I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Norma Linden. Norma, what are you looking at today?
Well, let's kick things off with a stock that's making history today. So Electronic Arts is ticker EA. We have this stock in focus today, up as much as 5.4%. This, of course, is after the historic leverage buyout deal that we're seeing happening here. So Electronic Arts has agreed to sell to a group of private investors. The deal should be about $55 billion. This is the largest leverage buyout that we've seen on record here. So the consortium that they're selling it toward are Silver Lake Management, a Saudi Arabia public investment fund. They agreed to pay $210 per share in cash for the company. So this does represent a 25% premium to where its shares traded before talks did leak here. So this is really what's been in focus over the past couple of days. If you look at the stock right now, up for its highest level on record. Shares are up about 39% so far year to date.
Yeah, pretty incredible move. And of course, we'll be talking about it more in depth a little bit later on with our own BI analysts. You're also looking at defense stocks.
Yes,
Laura.
You have to keep an eye on defense. I mean, that's an area that I covered super closely on the equities team before taking on this new role. So always going back toward U.S. defense contractors. We're seeing shares of the industry really rising today. If you look at Lockheed Martin, L3 Harris, RTX, these are all pushing higher along with Boeing here. And this is after a report from the Wall Street Journal that the U.S. Department of Defense is pushing missile suppliers to quickly double or even quadruple production rates here. So pretty bullish call here, of course, and you are seeing a broad-based rally here. If you look at S15 Aero, AERO, that's an index that I tend to track when you're looking at aerospace and defense contractors here. And that index is up right now, also hitting its highest level ever. Lots of green across the screen today.
Yeah, my number one offspring works at Lockheed Martin. Not allowed to talk to me about his job.
He's tight-lipped.
Staying mom.
Yeah, that's what they do over there. So, anyway, so what else we got?
Lastly, I want to take a look at Occidental Petroleum. That's ticker OXY here. Also in talks to sell its OxyChem petrochemical unit. The deal is worth at least $10 billion. That's according to a report from the Financial Times this past Sunday. So you are seeing shares of Occidental Petroleum hitting their highest level since April. It's clearly lots of optimism today in the market. But the divestment would be the U.S. company's biggest yet and would create one of the world's largest standalone petrochemical companies.
All right, good stuff, Nora Melinda. Really appreciate it. Nora Melinda with our market drivers today. And of course, for more conversations like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. A lot of news in tech land today, Paul.
Yeah, absolutely. I'm going to start with EA. I mean, I think our next guest is probably a closet gamer. I'm just guessing. Ed Ludlow, Bloomberg Tech co-host, joins us here in our Bloomberg Interactive Broker Studio. Ed, that's a big deal in the world of gaming. $55 billion. Wow.
Yeah, biggest leverage buyout in history. You know, that's going to catch all the headlines and all the participants. JP Morgan with the 20 B of debt. There's something that we didn't talk about earlier in earlier programming. Remember that this is not new for Saudi Arabia. 3 years ago, they committed tens of billions of dollars to push really hard into entertainment and video games specifically, and already held 10% of this
And they're big
company.
on esports, too.
And big on esports. So, I've been telling this story all morning, but if you allow me to, when I was a kid, I would give up 4 or 5 weeks of allowance pocket money, and I would save it up, and on that 5th Friday or 4th Friday, my parents would take me to a store, and I'd buy a disc for my PlayStation.
Yep.
That's not how the industry works anymore, right? People largely stream, and they play free games where the money's to be made in-game purchases. And EA has all this intellectual property, sports, Madden, EAFC, previously known as FIFA, but it's struggled to get outside of the domain of the video game. This was Andrew Wilson, the CEO, and he'll continue to be CEO's thesis that, he who controls, or they who controls the IP will win. And you see that with all these other, like Minecraft movie, right?
Yeah.
It makes total sense. So there's a continuation of a lot of themes here. I don't cover the Fed. I don't cover broadly credit markets. I don't cover macro. But, is it that shocking that a leverage buyout at this scale is achievable? Probably not.
Does that suggest maybe the gaming business in general, the big growth years may be behind it now? It is something that we're a private equity firm can leverage cash.
And it's not just me not buying discs anymore, right? For nostalgia sake. Between the 2010s through to present day, growth has slowed. The video games industry is big on an annualized basis, almost double what Hollywood is in the box office.
That's such an important step.
Right, and say it time and time again, but things are changing. And the way that all these CEOs think about it, including Andrew Wilson, by the way, is who is he competing with for eyeballs? Yeah, TikTok. Are you spending your time in front of a console or on your phone or against spending it on TikTok? So the investors are interesting. Silver Lake, I don't really know what to make of that other than, TikTok, what's going on and their name being around a lot at the moment.
But also Jared Kushner's Affinity Partners, which is backed by some foreign investors in the Middle East, is playing a big part in this too.
And the LPs there might be really interesting. But again, the Saudi Public Investment Fund is really significant here. If we remember, they already held 10% anyway. And in this memo that the EA CEO sent to staff, he used the word sports and used the words entertainment. And this is, having spent a bit of time with him over the summer, I think this is very much okay, we know the domains we need to push into. Saudi's already going in that direction. This makes sense. The counter argument is this EA executives looking at the writing on the wall that this industry has a pretty slippery future?
Interesting. But it sounds like if they want to get into these, take their intellectual property and take it to different areas, different platforms, different usages, somebody like the Walt Disney Company has always said that they look at their content as IP, intellectual property.
That's the model.
Yep, that's the model. I mean, it's better to do it as a private company, presumably, than one where we have to report quarterly or maybe semi-annual.
I mean, again, I'm a journalist. I don't have skin in this game, but, the sentiment on all the deals I've covered in the last 5 years since I moved to Silicon Valley, so to speak, it's you can do a lot more quickly when you're private.
Away from the headlines, the prying eyes of the media.
Yeah.
All right, let's talk about the chip business.
Sure.
Huawei, the double output of its top AI chip. Is this to compete against NVIDIA?
Well, remember, doubling from very little is still very little. So the story for Huawei in the 910 CSN, which is their flagship accelerator, they do very low volumes. But, the political environment makes it such that they can serve Chinese technology customers who are under pressure from that government to not buy NVIDIA's now permitted chips on the US side. And so, NVIDIA and Jensen Huang in interviews on Bloomberg television for this whole year has been saying Huawei are a lot further ahead on AI chips than we've given them credit for. Their chips perform as well as some of our best chips.
Interesting.
And so this data, citing sources, of course, in the reporting is really important as it gives some very clear numbers for 2 years of what they plan to ramp up to.
Right, and the Ascend product line overall in 2026 will get up to 1.6 million dies. Is that also a drop in the bucket, or is that a meaningful number?
It's relatively still a drop in the bucket, and the thing that in our reporting is so key is there's an acknowledgement from sources that the Huawei chip is still not as good as NVIDIA's best chip. But if you package it in a system and you offer it as cloud computing capacity, which is the whole Huawei strategy, it's an attractive proposition for inference. In other words, running the AI models, not necessarily training them.
Ed, thanks so much for joining us. Appreciate it. Ed Ludlow, Bloomberg Tech co-host. He's based in San Francisco, but we got him here in New York this week, the Bloomberg Interactive Broker Studio. So we grab him here in studio to get the latest on all things technology. Coming up, we're going to check in with Nathan Nadeau, Bloomberg Intelligence technology research analyst. We'll get his thoughts on this EA deal and what it might mean for the gaming space going forward. Phil Orlando, Chief Equity Market Strategist and co-head of Client Portfolio Management, Federated Hermes. He's going to join us as well, get the latest call on the markets here. As we kind of get into the 10 o'clock hour, the S&P's up 26 points. The Dow's minus 50. The NASDAQ's up 200. The market has no idea where it's going today. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, the major stock averages, they are mixed. The S&P 500 up 27 points. 66.71 on the index. The Dow Jones Industrial Average is down 27 points. The NASDAQ 100, 214 points higher right now. Gold hitting a record, and so this lifted the U.S. Treasury's holdings of gold to above $8 trillion in value. I'm thinking Fort Knox. Pending home sales among the data for August, jumping the highest level in 5 months. And then this week, all eyes are going to be on the non-farm payrolls report for further details on how the labor market in the U.S. is holding up. And tomorrow, we're going to get the JOLTS survey. Also, we're keeping an eye on D.C., whether or not the government stays open. There are leveraged buyouts, and then there are leveraged buyouts. This one's a whopper. Electronic Arts, you've been talking about them agreeing to sell a group of private investors, agreeing to pay $210 per share in cash. Most active stock today includes shares of Tilray. This comes after President Trump posted a video that touts medical benefits of hemp-derived CBD for seniors. Tilray brand shares up right now close to 39%.
It's all about the gum.
For seniors.
Just saying.
They need to sleep.
Sure.
They need to get to sleep, and sometimes they can't, and the gummies help.
Yep. So you're promoting this
I'm
on
just
air.
saying this is the purpose for it.
Okay. We check the markets and other stuff for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. You know, driving home, coming in the morning, very early in the morning, you have certain drivers who are all over the road for one reason. Going home, all I smell is pot from other cars. It's just like, it's a serious problem.
Yeah,
so we're gonna make it
just
worse?
walking around the streets of New York City, all you smell is pot.
Anyway, that's my
All day
commentary
long.
for today.
Right. All right, John Tucker, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Again, the big story on the M&A front, Electronic Arts going public via an LBO. How about that, kids? $55 billion. JP Morgan advising Goldman Sachs on the other side of the deal. JP Morgan writing a $20 billion check to get this deal done. What's it mean for the gaming business? Nathan Naidu joins us here, technology research analyst for Bloomberg Intelligence. He's based in London. Nathan, how's this price tag look for you? How's the valuation here?
The valuation is at a 20 to 30% premium versus the last three-quarter market cap before this deal was announced, and it seems like it is a premium deal. But actually, EA has a lot going for it. It is actually launching a new Battlefield game, and there's a strong prospect for this game. And actually, the game is now in pre-release, and even then, it has already smashed all prior records set by the biggest game in that genre. And that genre is first-person shooter, and that game that has dominated that genre is Call of Duty from Microsoft. So Battlefield 6 is looking to be a successful launch. And next year, we have FIFA. And obviously, we know that EA has the biggest soccer game in the industry, and that's FIFA. What was called FIFA, but now it's called EA Sports FC. And next year, FIFA World Cup will be a special one because it will be hosted across 3 cities, including the U.S. And if people don't know, U.S. is actually the biggest market in terms of revenue for all kinds of sports games. So that's the second thing going for EA that I think is going to lead to at least 2 rounds of consensus bids on EPS, earnings per share. So I think for EA, this is actually a good deal, and we can talk about the common struggles faced by game publishers and how these deals would make sense for EA as well as the investors in this context.
So yeah, let's do that, because you mentioned a bunch of the titles, and these are very valuable franchises. This is top quality IP, whether it's EA Sports FC, Madden NFL, The Sims, Battlefield. What does ownership by private equity, by private investors, allow EA to do that it can't do as a publicly traded company?
I think it's all down to funds. So game publishers in general have been facing two struggles. First one is gamers' attention span and playtime are increasingly getting limited. The reason is people are sticking to brands or franchises that they have played for a long time. And in fact, Newzoo published a data saying that 80% of playtime tend to go back to the 60 or so titles, leaving only 8% of playtime for brand new IP. And this is actually in favor of EA because we mentioned those valuable IP. In fact, if we look at global unit sales, EA has has 4 of those top 20 selling IP globally. It has 4 out of the 20. So that is actually a pretty enticing thing for companies like private equity because, profit generation is key. And what this means is that EA has franchises that can bring in recurring revenue. We talked about EA Sports FC, we talked about Madden MFL, and they actually revived a new franchise, college football. And, it was one of the best-selling titles in the US last year. So recurring revenue is key here. And the second struggle that I was going to go into is development cost is really high, especially in the US. So that means that Western publishers actually have a cost disadvantage when compared to Eastern developers. For example, salaries for game engineers in China is more than half the level in California. And personnel cost, game engineers is a huge part of developing a game. So, Tencent actually launched a new game in the same genre as Battlefield 6, and that's Delta Force. It's doing really well. And what that cost disadvantage is stopping EA from is continuously to push out a strong cadence of content to essentially extending the shelf life of any game. And Eastern developers can do that better because of that cost edge.
All right, Nathan, thank you so much for giving us the instant analysis here on this EA deal, largest leverage buyout on record, largest M&A deal this year as well, $55 billion. Nathan Naidu, technology research analyst at Bloomberg Intelligence. Let's talk about what this means for the broader market overall. And for that, I want to bring in Phil Orlando. Phil is chief equity market strategist, also head of client portfolio management at Federated Hermes. Phil, we talk about this being the biggest LBO on record, displacing the $45 billion take private of TXU in 2007. That was right before the financial crisis. Does a deal this size remind you of, that maybe we're in kind of toppy areas that, the market's on the cusp of turning?
Froth is the word I think you're grappling for here.
I didn't want to say it. I'll let you say it.
Look, the reality is the S&P 500 has rallied 38% from the Liberation Day bottom in mid-April to, record highs that we've seen here over the course of the last week or so. We haven't had more than a couple of a percentage point pullback here or there. So certainly you've had a tremendous run. Is the longer term trend higher? We believe it is, but that doesn't mean that market's not susceptible to a catalyst that could give it a little indigestion, 5 or 10% at some point. Frankly, we would welcome that, given the fact that you've basically gone straight up for 38%. So I guess both things are right. Longer term, stocks up and to the right. Short term, we could be susceptible to a pullback, particularly if, for example, the government shuts down. It's longer than the market expects. We get some disappointing labor market data, disappointing news out of the Fed. Any number of things could happen. So that's sort of the environment as we see it.
The environment right now, though, Phil, as you noted, the economy's pretty strong. We had a nice GDP print came in real strong. We had retail sales come in pretty strong. It seems like the economy's doing okay out there.
The economy's cranking. I can't remember the last time we saw a third revision on the GDP that was up 0.5 tenths of 1%. Going to 3.8% in the second quarter off of a negative 0.5 in the first quarter is phenomenal. What drove that? Back to school spending, this is the piece that I wrote last week, was up 4.2% versus 2.3% last year. Now, so the consumer is still up there. It's still, doing well. The pushback, the argument is, well, there's this bifurcation. The low end's not doing well. It's the top end that's driving the whole economy. Well, that's been the case for the last 3 years. And the reality is that the top 10% of America drives half of consumer spending, and consumer spending is 70% of GDP. So as long as this wealth effect remains alive and well, largely driven by the fact that stock prices are doing well and the housing market, housing prices are still just off of record highs. The top 10% is going to still feel pretty flush, and that's going to continue to drive consumer spending.
Right. The top 10% is doing very well. The lower income part of the stratum is not doing as well. And we see that with Tricolor and First Brands and their big blowups over the past week. First Brands, of course, filing for bankruptcy protection. How worrisome is this that this could potentially widen out? I don't want to say contagion, but become a bigger problem for borrowers, a bigger something feeding into a weakening economy?
Well, again, this bifurcation is an important theme. And in order for the middle class or the lower class to participate more fully, I think we need to see a rebound in the labor market. And the reality is that the labor market has been in a decline over the last couple of years, and that decline has been accelerating the last 4 or 5 months. We need to see that trough, and we need to see a turn. We're not there yet. So unless and until that happens, you've got to be concerned about the fact that, you know, the savings rate, for example, has more than doubled over the last couple of years, and that's the lower echelons, if you will, I think, tightening their belts, recognizing that they're struggling relative to the top 10%, which right now is doing fine.
So, Phil, you mentioned your strong back to school. Does that bode well for Christmas, the holiday season?
Well, the short answer is yes. Over the last 30 years, there's about a 73% correlation between the strength of back to school, the strength of what we refer to as Marpril, the mashup of March and April for Easter and Passover.
That's a new one.
And Christmas. So Marpril was up 5% this year versus 3% last year. Back to school this year is up 4.2% compared to 2.3% last year. We're thinking that Christmas is going to be pretty solid.
So real quick, earnings, are they going to be solid as well? Because, boy, this market, you really need strong earnings.
Earnings, I just took a look at the fact set, look ahead to the third quarter.
Fact set?
First two.
It's like riding with training wheels.
The first 2 quarters of this year were very good. Second quarter, revenues up 6%, earnings up 12%. The preliminary thinking is that revenues will be up around 6% again for the third quarter. Earnings, the consensus is up 8%. You know, I suspect when the dust settles, that number is going to be double digits. So I think it's going to be the third solid quarter in a row.
It feels like everyone's forgotten about tariffs. I mean, we get headlines daily on potential new tariffs, but investors have kind of moved on.
Well, you know, we studied the tariff impact on the economy, and in the first 3 months of this year, it had a deleterious impact. The drag from tariffs has been declining since April.
Yep.
So while there's a lot of you know, hand-wringing about that negative potential, it hasn't shown up.
Phil Orlando, Chief Equity Market Strategist, Head of Client Portfolio Management of Federated Hermes on these markets. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We're looking at S&P 500 up by 0.5%. Keep it here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages mixed right now. Actually, they just turned higher, making a liar out of me. Dow Jones Industrial Average up 6 points. S&P 500 is 30 points higher right now, 66.73 on the index. The NASDAQ 100 up 214 points. That's a rise of about 0.9%. You have shares of NVIDIA. This is in terms of the percentage or the index points for the S&P 500. That is the leader right now. They are up 2.8%, and Apple is proving to be the laggard in the index. It is down just over 0.5% right now. The deal of the day, of course, video game maker Electronic Arts. Those shares up close to 5%, agreeing to sell to a group of private investors. So this deal values Electronic Arts, the video game maker, at about $55 billion, the biggest of all leveraged buyouts. Nathan Sheets at Citigroup, meantime, says we have yet to see the full impact of tariffs on the U.S. economy.
If I had to use a word to describe where we've been so far, it's resilience. However, part of that resilience we've seen is front-loading. The U.S. consumers, U.S. businesses have seen these tariffs coming.
And then this news this morning, the Eisler Capital Multi-Strategy Fund, it is winding down and returning capital to investors with clients unable to withdraw their money while the firm liquidates all its trades. Ed Eisler closing the investment firm, citing weak returns, shrinking assets, and ballooning staffing costs. Let's conclude with shares of Beyond Meat. Right now, down close to 26%, plunging to the lowest on record. The company made an offer to debt holders that's going to raise more than $800 million of debt. Now we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, fantastic. Thank you so much, John Tucker. Big week here for equity investors. We've got, of course, got the jobs report on Friday, and we've got a number of big headlines for those who are bullish on tech to respond to, whether it's Electronic Arts agreeing to this record leveraged buyout, whether it's looking at the latest developments in the chip sector with Huawei doubling the output of top AI chip as NVIDIA seems to struggle in China. Let's get the perspective from the one and only Dan Ives. Dan, of course, is Global Head of Tech Research at Wedbush Securities, and he joins us now from Newark, New Jersey. Dan, great to speak with you. What would you focus on first here? I know that you are super bullish on tech. You see this as 10:30 p.m. in a party that goes on until 4 a.m. What are you focused on here in terms of the headline that kind of backs that thesis up?
Look, I mean, to me, it's really all about demand. I mean, everything we're seeing in terms of supply, they're just continuing to increase because demand right now and supply for NVIDIA chips still 12-1. So what we're really looking for is like, what are the derivative effects? Second, third, fourth software chips. And look, just like Electronic Arts, you're going to have a lot of deal making across the board, but I believe more of that's going to ultimately be on the chip and software sector.
Dan, so we had the NVIDIA deal earlier, we're making $100 billion into OpenAI. What's the conversation you're having with your clients about that part of the business?
Yeah, I mean, Paul, I think on there, like, obviously there were a lot of questions. Like, you know, is this a good thing? Is it a bad thing in terms of, you know, call it partners or suppliers almost getting together? Look, I view it as like for every dollar they spend OpenAI, they're going to get back $12 to $15. And I think this is just more of a build out that we're going to see across tech. It's not going to be the only one, but it speaks to our view. I mean, more money is going to be spent in the next 2 years than the last 10 years combined when it comes to AI and tech build out. And this is just the beginning.
It's just the beginning, and I'm curious, you know, we actually wanted to get you on because we had a story that our Isabel Lee wrote recently about your ETF and how you've got this social media megaphone that allows you to really proselytize to your followers on social media and talk about your big calls. And it's hard to, you know, get attention for your ETF. I mean, there's so many funds out there, yet you've managed to do that and kind of build a name for yourself. And I'm curious in terms of how quickly that could change too if the market goes the other way. I mean, you've got a loyal social media following, but they could easily get on you if you make the wrong call and not bring you down, but draw attention to it.
Of course. Yeah, and that was a great article by Isabel and Alexandra. Look, I mean, to me, everyone knows our philosophy with AI winners. And this was really at the core to have a research and an ETF that enables, no matter where people are in the world, retail or institutional, to ultimately bet on who we view as the 30 winners, the odds AI 30. Look, if that turns, of course, then you see the negative part about it. But the whole reason we did this and launched in June is, my view, we're in year 3 of a 10-year build-out. And at the end of the day, if we don't pick the winners and ultimately it underperforms, then everything else plays itself out. And I think people that have followed us over the decades recognize, like, 3 million air miles, right, last 25 years. It's to try to find the winners before others do.
Dan, one of those has been Tesla. I know you recently upped your price target there. It's been several months now since Elon has left Doge and left the government. Where's he spending his time?
Yeah, I mean, look, Paul, me and you and obviously the team have talked about it a lot over the last, basically 6-9 months. He's wartime CEO now. He's focused on building the physical AI powerhouse. And that, look, the reason we raised prices on Tesla, because I continue to view in physical AI, the 2 best players are NVIDIA and Tesla, especially in terms of autonomous and robotics. And that's going to be a key part of the value in Tesla. And I don't think that's being recognized today. But as that plays out, that's sort of the golden goose for Musk and Tesla.
So you have some American national champions like NVIDIA, like Tesla, you can argue. I'm also curious how you see chip makers from other countries, TSMC, for instance. According to Howard Lutnick, the Commerce Secretary, Taiwan must help the U.S. to make half of its chips. We're basically telling TSMC to own 50% of our market share. Does that make TSMC a must-own?
Oh yeah, I mean, we have viewed it, as one of a must-own, along with our view of AMD, Broadcom, in terms of, look, everything that we see with Intel, whether it's the U.S. government, obviously NVIDIA, this is an AI arms race playing out between the U.S. and China. And I think that, for investors, that's a positive. It's very bullish because of the spending that we're going to see. TSMC clear being one of the winners. And I think,
but does that create an over-dependence on TSMC?
Look, I think there's definitely a dependence on it, but ultimately, others are going to have to innovate to try to get that market share. And guess what? That's a great thing. That's what you want to see. It's all competition. And I think but right now, they are playing in a massive position of strength in terms of TSMC.
Dan, over the weekend, I know you spent some time in State College, Pennsylvania, Happy Valley. What happened?
Still thinking about it. I mean, look, it was almost a comeback for the ages. Obviously, it was a heartbreaker the way that ended. But again, seasons aren't done in September. I think we'll see Oregon again, and I think it will be a different outcome. But look, it's part of college football, right? It's the heartbreakers, but I still think Penn State's there in January.
Is this what you do all weekend? Every weekend in the fall?
He's a huge Penn State guy. Huge Penn State guy. Now, and the challenge is Coach Franklin can't win the big one, and this past weekend didn't do him any help, did it?
Look, I mean, obviously, that's something he has to, you have to now win the big games, and that's obviously something he's taking ownership for. But look, it was a massive comeback. The team showed fight. And again, Big Ten continues to be a battle. We'll be out in UCLA next week. I think, Paul, this is just the beginning. Just wait for Ohio State.
To watch
the game? I'll be in UCLA on Saturday.
Yeah, he goes to every game. He's amazing. He's one of those people. He's not just a bad dresser. He's also a crazy Penn State fan, which we love. Dan Ives, Global Head of Technology Research at Wedbush Securities, giving us his thoughts on big tech. Yeah, he's a big Penn State guy. So, and it was a big game against Oregon.
Where they go, he goes.
Yeah, where they go, he goes. Perfect. And they're going to be out in UCLA, which is perfect. It's a game they need right now. S&P up 30 points. The Dow unched. NASDAQ up 200 points. That's 0.9%. More coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I guess midnight tomorrow, potentially the government could shut down. Is that correct?
Yeah, but we've been here before.
We've been here before.
Many times.
All right, but no matter what happens, I'm blaming our next guest on whatever happens here. Nathan Dean, he's the senior policy analyst, the only reasonable person I know in Washington, D.C. For Bloomberg Intelligence. Nathan, where are we on this whole shutdown thing?
Yeah, so, right now both sides are digging in. Both sides are talking about their points of why the other party should be responsible for a shutdown. Next up is 3 o'clock-ish this afternoon. There's going to be a meeting over at the White House between President Trump, Senator Thune, Senator Schumer, and the House leadership over what to do next. Now, I don't think you're going to see much in the way of positive news coming out of that meeting. I think that meeting is just going to essentially allow both parties to blame each other. But what I'm looking for is tomorrow morning to see what are the statements between Senator Schumer and Senator Thune about the possibility of a shutdown. Now, I was at 40% chance of a shutdown on Friday. I still think a deal is possible, most likely a 1-week CR, but I also wouldn't be surprised come Wednesday morning if we come up and do another hit that I was wrong and the government is shut down.
So a 1-week CR doesn't buy them a whole lot of time. Is it, the beginning of another 2-week CR after that 1-week CR? Because the issues that they need to discuss are pretty fundamental. The Democrats want to show the White House that they're fighting, want to show their voters, their constituents, that they're fighting the White House on healthcare issues. And these are things like permanently extending the Obamacare tax credit. That's not going to get resolved in 1 week, is it?
No. And I think right now both sides are just trying to figure out who is going to get blamed for the shutdown and the ability to protect themselves politically going into November. Because if you remember, the Republicans offered a 7-week continuing resolution. And generally speaking, the party that offers the clean CR is the one that has the high ground and ultimately doesn't get the blame in this situation. But as you point out, the Democrats need to be seen fighting President Trump here. So I think in the Democratic camp, a 1-week CR allows them to better strategize about what their message is. And potentially there's like an unofficial handshake, if you will, agreement that they'll have a vote on ACA subsidies, these healthcare subsidies that you're talking about. Potentially that's enough to show that the Democrats are fighting. But if you do get a government shutdown, I think it's going to be short-lived, because if we go into this weekend, the Democrats can say that, yes, we did fight President Trump, but then enter the Office of Management and Budget and Director Russ Vought, who has said that he's going to begin operations to lay off wide-scale, wide-scale government workers, and a lot of them are here in Virginia and Maryland. And so I would think that the Virginia and Maryland senators in particularly are going to be interested to make sure that doesn't happen.
All right, so the Republicans control the White House, they control the House, they control Senate. How do they avoid taking the blame if there is a shutdown?
Well, it's because the House has already passed a 7-week continuing resolution. In the eyes of voters, independent voters, and those of you that aren't affiliated with parties, a 7-week continuing resolution essentially just says we're going to keep the government open until November, and then we'll try and figure out a way to finalize these appropriation bills. As you remember, there's 12 appropriation bills that need to be done every fiscal year. Today's the end of the fiscal year, so obviously that's not going to happen. But the party that offers the continuing resolution is the one that says, look, we are here, we're going to keep the government open while we can continue to negotiate. But there are Republicans who are not happy with this strategy. There are some Republicans out there saying, look, we're voting for President Biden's spending levels. We're not doing anything in terms of cutting the government or trying to do in terms of other priorities. So there are Republicans out there that aren't happy with this strategy. I would also note that the House did this to pass it up until November, and what's right after November 20th? Thanksgiving. So then you're going to get into a situation where it's going to be extremely difficult for parties to potentially cause a shutdown right before the Thanksgiving holiday.
So the Republicans have threatened mass firings of federal workers, as you noted, if there is any kind of government shutdown. One of the Democrats' talking points is that the Republicans would do that regardless, that is their agenda with or without a shutdown.
Yeah, absolutely. I mean, that's something that the Democrats have also said is like, look, that's just a threat. Let's see it. Let's see if they actually do it. But Russ Vought has also deemed the individuals that are going to be the ones laying off workers to be essential. He's already put that out in guidance. And a lot of this is going to go to the courts no matter what. So from the Democratic perspective, their approval ratings aren't all that great. It's 30% or give or take. And there is plenty of time to come back before the November 2026 midterms in order to improve your message. This is very similar to how the Tea Party played out in 2012 when there was a shutdown threat. And they had plenty of time to come back and fix their parties, But again, this is all about momentum. And because we have a Virginia governor race in November, there's also a governor race in New Jersey. Those races are somewhat tight. I'm not sure the Democrats want to actually try and tie those two issues together.
30 seconds, Nathan. We got some congressional leaders coming to the White House today. Any reason for optimism there?
I don't think so. I think this is mostly just political messaging. And I think the big thing to keep an eye on is if President Trump signals openness to extending these ACA subsidies. That's not something that many people in his party want, but would offer the Democrats an off-ramp to get to an agreement.
All right, Nathan, thank you so much. Appreciate that. As always, the only reasonable person I know in Washington, D.C. is Nathan Dean. He understands all this stuff going on down there. He makes it easy for us to understand. Nathan Dean, senior policy analyst at Bloomberg Intelligent, worth his weight in gold, that's for sure. Particularly during times. He makes it make sense. I don't know why.
And it's so reasonable. It's kind of like, guys, figure it out.
Why doesn't he go to that meeting today at the White House?
Well, he's far too reasonable
and just work something out. He could say, guys, just come on, let's get together here. How hard can this be? For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence radio program starts in just moments. With the S&P up 25 points, the Dow minus 28, the NASDAQ leading the way up 170 points. That's about 0.8%. Tom from the Upper East Side writes in for a Bitcoin quote. We're up 3%, $114,000 on your favorite crypto. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All righty, we got coming up hour 2 of the Bloomberg Intelligence program. Scarlett Fu, Paul Sweeney live with you here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Ethan Braun, our Bloomberg Israel Bureau Chief, is going to join us here, give us the latest on what's happening in the Middle East. Elliot Stein, Bloomberg Intelligence litigation analyst, can talk to us about the Lisa Cook situation. This thing's going to the courts. We'll have to see how that's going to play out.
Was
here.
there ever any doubt, Paul?
No. And if I'm the Supreme Court, I'm like, guys, I have a day job. Stop keep sending me every little inconvenience you guys have. We've got stuff to do here. Miami Mike McGlone, he is in New York this week. We're going to get his thoughts on gold. Because guess what? It's up another $70 today, $3,830. Go figure. But he's been a bullish on gold since the first day I met him, like 10 years ago. Basically, his call was buy gold, sell everything else in the commodity complex. And he's been pretty much right here. So we'll get all that coming up. But right now, let's kick this thing off with John Tucker and a Bloomberg Business Flash.
All right, after the gains that we saw on Friday, the major market averages, they're mixed right now. 8 of the 11 major industry groups in the S&P 500, they are higher. Information technology, best performer. And as you mentioned, Paul, oil prices declining. So the worst performing industry group belongs to energy at this point. NVIDIA is the leader in terms of the index points, contributing right now to the S&P 500. That stock is up right now 2.8%. They get some data today. Pending sales of U.S. existing homes, used homes, rising in August to the highest level in 5 months, and you can credit falling mortgage rates for that. And also with news of the biggest ever leveraged buyout, you have shares of electronic arts, that is, up right now close to 5%, 4.8% higher. Meantime, Tony DeSpirito at BlackRock says he sees pockets of irrational exuberance in these markets.
The nature of the participants has changed. Fewer fundamental investors, more high-frequency traders, more retail investors. I think that helps fuel maybe some of those pockets.
Right now, the S&P 500, 26 points higher. That's up 0.4%, 6670 on the index. The Dow Jones Industrial Average is down 26 points right now, and the NASDAQ 100 is up 205 points. A couple of stocks I want to finish making some big moves here. Moon Lake Therapeutics, MLTX is the ticker, down 89%. They had some disappointing late-stage clinical trial data. The company's experimental drug to treat a debilitating skin disease. And Bally's Corporation climbing 6.6% after the gamer proposed to build a $4 billion casino in the Bronx.
Sure. And
it looks like that is gaining a lot of traction with some of the local politicians and the community board in the Bronx.
Sure, let's go to the Bronx.
A $4 billion casino in the Bronx.
Well, Steve Cohen, Mets ownership, trying to build one in Queens, so why
in
not?
the parking lot of Citi Field. Or around
It's a lot
there.
of casinos in a short amount of time.
Yes.
That's
Can
just
we
my
handle
takeaway.
it? Well, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right. On that note, let's take a look at some other stocks that are on the move today, not necessarily in the biotech space. Scarlett Fu here with Paul Sweeney, and of course, Nora Melinda, Bloomberg Television's market correspondent. And Nora, I know you're beginning with Carnival, which should be positive given that it boosted its profit forecast, but the stock is down.
Wall Street investors being really nitpicky here. I mean, as you mentioned, they did report results that you would expect, people would be positive about, as they did beat expectations here. If you look at adjusted EPS, that beat expectations. They also lifted their guidance for the full year in terms of their adjusted net income here. But Stifel is really coming out saying that investors could be, quote unquote, nitpicking the company's lower than expected fourth quarter net yields guidance. So they're really getting into the details, all the dirty details here, trying to figure out something that they feel as though isn't really meeting the high bar that they had going into the report. So you are seeing this as one of the worst performing stocks in the S&P 500 today, ticker CCL. But I mean, if you look at what the street is thinking more broadly, Wall Street has no sell ratings on the stock right now. About 74% of analysts are advising that people buy.
Cruisers. There's nothing you can do to keep those people on the sidelines.
You can't knock them off.
To cruise. Good for them. All right, what else you got?
Also looking at shares of CSX, this one, though, in the green, up as much as 4.1%. This one also has no sell ratings here, up for its biggest intraday gain since July in this year. And this is after the company named Steve Angel as its new CEO. This, of course, comes after the abrupt departure that we saw from Joe Hinrichs. This really overhauled the railroad's leadership, especially as it's thinking about the pressures that we have from peers, Norfolk Southern and Union Pacific. If you think back, just a couple months ago, they actually came for a deal here that would create the first transcontinental railroad in the U.S. Bloomberg did report back in July that CSX is working with Goldman Sachs to explore options for a deal of its own.
So I emailed Lee Klaskow, our analyst, railroad analyst for Bloomberg Intelligence, and I said, hey, was this a surprise, this change in leadership? His response, yes.
Yeah.
Thanks, Lee, for the expansive research there. Now I understand that he's on vacation this week, so that explains it.
That's why he's like, yes, don't bother me anymore,
yes,
Paul.
Exactly.
All right, Nora, we're going to bother you for one more mover. That is DoorDash.
Food here, okay? Ticker Dash, D-A-S-H here. We're seeing shares of DoorDash rising. Of course, this is after it's expanding its relationship with the grocery store chain operator Kroger. So we are seeing Kroger just up a touch here. But essentially, we're looking at Instacart, of course, in focus. That is a competitor here to DoorDash, but I mean, Kroger should be launching almost 2,700 of its stores on the DoorDash platform starting October 1st, so just around the corner here, and you are seeing shares popping off of this news.
All right, very good. Norma Linda, thank you so much. We appreciate that. For more conversations like this, you can subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Bloomberg News out with some reporting by the one Ethan Bronner. He's our bureau chief over there in Israel. Ethan reports that Israel Prime Minister Benjamin Netanyahu is set to hold a crucial White House meeting with U.S. President Donald Trump on Monday amid assertions from Washington that an ambitious plan to end the war in Gaza is nearly complete. Hopefully that is the case, but who knows? Ethan Bronner does join us here. Ethan, what do we know about this meeting between Mr. Netanyahu and Mr. Trump?
Well, as you say, we know it's very, very significant. Probably, certainly the most significant of the four meetings the two will have held after today. The president met with Arab leaders the side of the UN last week and presented a 21-point plan, which includes ending the war, and includes bringing in all kinds of aid into Gaza and ending Hamas's role in Gaza. So I think, and of course, the release of the 48 hostages, the 20 living and the 38 who are dead. So that's the broad plan. Hamas says it hasn't seen it and it can't react to it till it's seen it, and we don't know because they were redoing the details even last night in New York. But it looks like the fact that they've announced a press conference afterwards suggests that the Prime Minister and the President have enough confidence that they're planning to say something quite positive about what the President is suggesting.
Or are they moving forward with announcing something that is not completely checked off by all the stakeholders?
Well, that's for sure. I think it's clearly going to be a very vague set of principles. And for example, this idea of Israeli withdrawal, a military withdrawal from Gaza, it will not, as I understand it, have any time frame on it. And, you know, the question of where Israel will station its troops, what kind of border there'll be, what does it mean to disarm Hamas, all of those things are going to be, I think, presented in broad terms of principles. And therefore, it'll be possible for everyone to say yes, and then we're going to see how difficult it's going to be to implement it. But I mean, I will say that, you know, Israel has been pounding the hell out of Gaza City over the last few days, and a lot of what the Israeli military thinks it can get done by destroying the military infrastructure in Gaza City will help Israel say that we think we can declare victory and move on. We'll see.
Ethan, President Netanyahu, he has really not given much deference to the Trump administration or the Biden administration, for that matter. Seems to be kind of, to a certain extent, ignoring the wishes of the U.S. government. Is there any reason to believe that President Trump may have some influence during this meeting?
Look, I mean, I think that it's very important to Prime Minister Netanyahu to be in the good graces of this administration. I mean, you're right in what you say. There are plenty of red lines from the Israeli perspective about what they're willing to be told and so forth from the Americans. But I think at this stage in particular, after we see all of these countries recognizing a state of Palestine and Israel being threatened to be thrown out of the Football Association, out of the Eurovision, there is a growing sense, and it's also been now 2 years of warfare, so that we may be getting to a place where Israel is looking at wrapping this thing up and looking at a diplomatic solution for the region. I can't promise that, and I do think that the Prime Minister faces a lot of pressure from the right of his coalition. The government could conceivably fall apart. All kinds of things could happen. But yes, I do think that Trump and his son-in-law and Tony Blair and Steve Witkoff do have influence over this government, and we'll see what's happening.
All right, Ethan, thank you so much. Ethan Bronner is Bloomberg News' Israel Bureau Chief. And of course, just to recap, the President Trump and the Prime Minister of Israel, Benjamin Netanyahu, will be meeting at 11:35 a.m. Washington time and hold a press conference at 1:15 p.m. All right, let's move on here and talk a little bit about the Federal Reserve. Elliot Stein, Bloomberg Intelligence litigation analyst, is here with us now. What is the latest with Lisa Cook, the Federal Reserve Governor, who is currently still able to serve, but of course the Supreme Court could come out with a ruling at any moment now?
Yeah, that's exactly right, Scarlett. The case is pending before the Supreme Court right now on an emergency application from the Trump administration because the lower courts ruled in Lisa Cook's favor, allowing her to continue to serve, as you said, while her case plays out. The government has asked the Supreme Court to undo that and to remove her while the litigation plays out. So we expect the ruling could come at any time in the next days or weeks.
Doesn't the Supreme Court have a day job? Like, don't they have a docket that they've decided which cases they're going to look at? Yet, it's seemingly on a weekly basis, something from the Trump administration bubbles up to the Supreme Court. Don't they have the ability to say, hey, guys, we're busy, take care of your own business?
Well, I mean, what you're referring to is what's called the shadow docket, which is these emergency applications that come to the Supreme Court. And I think it underscores sort of the just how quickly the Trump administration has been moving on a lot of things, issuing so many executive orders, more than any other administration. And as a result, a lot of those get challenged. And because things have to get unwound on an emergency basis, you know, according to the challengers, that's why so many of these cases get placed on the shadow docket, because they are of an emergency nature.
Right. Well, there is an urgency here when it comes to Lisa Cook and her status on the Federal Reserve. Her attorneys have urged the Supreme Court to let her stay on the job, warning that even a temporary removal risks chaos and disruption in financial markets. Is that something that's going to factor into the Supreme Court justices' ruling or thinking about this?
Well, it's interesting because I put out a note last week saying that I think Lisa Cook already won round one, because Justice Roberts could have issued an emergency stay, meaning he could have put the lower court's rulings on hold immediately, as he has done with other cases where commissioners of other agencies have been terminated and challenged their terminations. He didn't do that here, which in my mind suggests he thinks, maybe this can wait a little, because he referred it to the other justices. And it's also notable that the Trump administration didn't rush to the Supreme Court as soon as the D.C. Circuit ruled in Lisa Cook's favor. They could have gone to the Supreme Court the night before the September 16th Federal Reserve FOMC meeting. They didn't do that, and Lisa Cook has pointed to that as well in support of her argument that this doesn't have to be rushed.
How is the Supreme Court ruling these days? Are they ruling along party lines? Is there evidence that they are in fact neutral, indifferent? Do we have any? What's the evidence suggest?
Yeah, I think it depends on the issue. In a lot of the cases where these agency commissioners have been terminated, you do see the rulings really falling along ideological lines, with Democrats supporting independent agencies and saying that the president can't just fire these commissioners at will, and that the for-cause removal has to mean something. The Supreme Court, for the most part, has ruled against that argument and said that the for-cause removal restriction is unconstitutional because these agencies fall under the executive branch. With the Federal Reserve, we sort of see that not exactly happening, and we saw that in the May 2025 Supreme Court ruling, which sort of distinguished the Fed from these other agencies. So I think with this Federal Reserve ruling that we expect from the Supreme Court, it's not going to fall exactly along ideological lines.
So whose commentary would you be listening for, would you be watching for when the Supreme Court does rule on Lisa Cook?
So it's interesting because you're not going to get oral argument in this case. Part of the problem, critics would say, with the shadow docket is, you don't get the fulsome written arguments, you don't get an oral argument, you don't really get to expand on all the issues in the case. So we're not going to have the luxury of an oral argument like we usually do, where you can maybe see where some of the justices are leaning. When they issued the opinion, you may not even know which justices subscribe to which parts of the opinion. So it's a little, that's the criticism of this.
Everything's abbreviated.
Exactly, and that's the problem, critics would say, with the shadow docket.
So, critics, just looking at this case, would say this is purely political. This is a president going after someone who he does not favor over a nitpick type thing from years and years ago. Can't the Supreme Court see that as well and say, hey guys, this isn't a business we're in, playing your political games?
Well, they will stick, I think, to the legal arguments. Those political arguments do come up in some of the friend of the court amicus briefs that get filed with the Supreme Court, arguing one way or the other. And that can give the Supreme Court some context as to why some of the issues are important, although they already know that, I'm sure. But for the most part, they'll stick to the legal arguments.
Yeah, I believe the former Federal Reserve chiefs, as well as former Treasury secretaries, all those who are still living, except Steve Mnuchin, signed a Friends of the Amicus brief to the Supreme Court, urging for an independent Fed. Will that have any sway? The Supreme Court doesn't need to act on that at all, right?
Right. They'll read those, and those will inform the justice's opinion. And sometimes they'll cite to those amicus briefs. But for the most part, again, they'll stick to the legal arguments. But those amicus briefs from, former Federal Reserve governors and Treasury secretaries on both sides of the aisle really underscores why the Federal Reserve is different from these other agencies, which I think the Supreme Court has already recognized.
All right, Elliot, your Stanford Cardinal actually won a football game last week, beating San Jose State University 30-29. Second win for the Cardinals. They tried to turn that thing around. Elliot Stein, Bloomberg Intelligence litigation analyst. He he veered. He should have gone to business school. He went to law school, and here you go. So
well, we're better for it.
I guess we're better for it. But anyway, Elliot, we appreciate getting a few minutes of your time here. Got the S&P up 16 points, down minus 80, and the Nasdaq up 123 points. That's a 0.5%. The VIX sitting right at 16. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Right now, the technology shares, they're in the lead as the S&P 500 and the NASDAQ Composite Index get a lift. Shares of NVIDIA right now up 2.7%. That actually has the biggest weighting in the S&P 500, probably not surprisingly. Microsoft shares up 0.6% with the second biggest weighting in the index. If Home Depot, Boeing, and Chevron all down, and that's what's keeping a lid on the Dow Jones Industrial Average. The deal of the day, Electronic Arts agreeing to sell to a group of private investors. This is a deal that values the company at about $55 billion. Electronic Arts shares of 4.8%, the largest leverage buyout on record. And right now, the S&P 500, 20 points higher at 6663. The Dow Jones Industrial Average, 65 points lower at 46,180 on the index. And the NASDAQ 100 right now, 150 points higher. That is up 0.6%. We're talking about small companies during the break.
Yes.
Small companies unable to pay back pandemic-era emergency loans issued by the federal government are steadily going under or filing for bankruptcy. In a lot of cases, the small business owners of these companies are also individually filing for bankruptcy.
Ooh.
A $380 billion loan program included in the 2020 CARES Act to help small businesses stay afloat is now a source of financial pain. A lot of them list in bankruptcy court as their creditor the Small Business Administration, even though it was at 375, a fixed rate loan. So it gives you an indication of the health of a lot of these small businesses. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
So the still waters might be masking some problems underneath.
Yeah, absolutely.
All right, Ruben Hovhanessian is with us, and he's a generalist portfolio manager at TCW's Fixed Income Group. And Ruben, I want to pick up on where John just left off, that you do have signs of stress in the market, in the economy with these small businesses. You also have Tricolor and First Brands, which of course are standalone stories with their own specific problems, blowing up, both of them filing for bankruptcy. How worrisome is this for someone who looks at fixed income and looks at the credit market with those tight spreads?
Well, good morning. Thanks for having me on. I'd say that obviously still developing stories, so we have some information, but not all information, so I'll be very cautious in commenting on those. But the question is whether these are signs or symptoms of more systematic stress that's building up, or those are more idiosyncratic stories with many unique characteristics. And I think largely when we look at the situations, we lean towards, to being in the second camp of these are, stories where, a lot of leverage, poor governance, poor accounting for the most part, also some alleged, fraudulent activity that's developing story. We don't know yet. But so we don't necessarily think that this is symptomatic of so these are the canaries in the coal mine, proverbially speaking. Now, the other question is that whether or not this will lead to banks and lenders in general to be more cautious and pulling pulling financing for companies, and I think that depends on how it's being perceived. And I think as of now, the perception is that these are idiosyncratic, isolated cases with unique characteristics, and we don't necessarily see this becoming a systemic issue in financial markets. I mean, look no further than the largest LBO deal being announced today, and with $20 billion of financing being lined up for it. So, I mean, again, we'll see. But as of now, this seems to be isolated, idiosyncratic situations.
Hey, Mike, I can sit in a two-year. Ruben, I can sit in a two-year Treasury, 3.62%. That's not a bad way to make a living. Do I need to take some credit risk on top of that?
Well, it depends on who you are. I mean, there are a lot of, insurance companies, pension companies that have yield targets, and they have yield bodies that they have to reach. So, locking in a IG credit yield at 4.5%, 5%, is not unattractive for these kind of players, for these kind of yield buyers. That being said, if you are a more flexible investor with more flexibility, and you can look across the board, then we think that there is better relative value to be found in some of the securitized markets, both agency MBS and non-agency securitized credit. Credit spreads are very tight. I mean, we're sitting at or near multi-decade tights, both in IG and high yield. That being said, there are still some opportunities within IG and high yield that we're finding. But again, looking across the board, there is a relative value to be found in securitized markets compared to corporates.
When you look at the market overall and investor sentiment, it very much feels like it's risk on right now. Stock market near record highs, yields continue falling. Where do you see things landing at the end of this year? I mean, I know that the market is pricing in 2 more rate cuts for this year, possibly 2 next year, but you and your firm are a little bit more cautious, aren't you?
we are more cautious. I mean, we do acknowledge that, the sort of the catalyst for reacceleration in 2026. We have the fiscal thrust of OBBBA. We have the tax incentives and the accelerated depreciation, which in theory should be stimulative for the economy. And we're also seeing some, some increased uptake, significant uptake in M&A activity, which historically has correlated with more, business, investments in general. That being said, I mean, the question is that whether or not all of those tailwinds that are in store for 2026 will be sufficient to forestall the deceleration that we're seeing now. I mean, we're very focused on labor markets, for example, and you look at the labor markets, there's a healthy debate whether or not the deceleration that we're seeing is mainly due to declining supply or in demand. But, when you look under the hood, you look at different dynamics within the labor market. I think we largely come to the conclusion that at least as of now, it's mainly driven by declining demand. So declining demand has been, much more significant than demand.
All right, Ruben, thank you so much. Appreciate that. Ruben Hovnanian, generalist portfolio manager, TCW's fixed income group out there in Los Angeles. He's a double Bruin, UCLA undergrad and business schools. How about that? All right, so stocks, bonds, how about commodities? Some dude told me years ago about the commodity space, just buy gold and, sell everything else in the commodity space. Boy, was he right.
Did you listen?
Of course not. Here I am still schlubbing it for a living. Gold up $68 again today, $3,828. Mike McGlone, he's our commodity strategist for Bloomberg Intelligence. I don't know, just more buyers and sellers, Mike. What do you see going on out there?
Well, it's very kind of you, Paul, to remember the few things I get right, because I get a lot wrong, but particularly as a strategist, you got to make the call. And I'm sticking with that for gold, particularly right now we're heading to a unique period. Now, it's heading towards $4,000 an ounce. That's really good resistance. It's stretched by all measures. And if you don't see the stock market starting to go down and create those kind of deflationary forces, I think gold's really pricing for, it's going to meet a wall resistance there. And the key thing I think that we remember about gold, who's really buying gold? Central banks. Now, they have a good reason. There's geopolitical issues going on. We have this potential shutdown coming, and so it's getting a little stretched because of that. We'll get resolved from that. But the bottom line, I think about gold as we enter fourth quarter is looking at the stock market. 60-day volatility in the S&P 500 is just below 9%. That's the lowest in 5 years. Now, that makes sense at the end of fourth quarter, but not at the end of third quarter. So I think gold might be front-running a little bit of pickup in normalization, a little modest pickup, and maybe say the VIX goes to 20. Remember, 20 used to be normal, right? What are we now? We're 15 handle, right?
So I'm so glad you bring up the correlation with equities. There's another story that's been percolating that hasn't been resolved, and it's this idea that the U.S. Treasury holds a ton of gold reserves, and the value, if you were to market, is more than $1 trillion. Of course, that's not what it has on the balance sheet, right? It's at about, what is it? The official value is based on gold being at $42.22 an ounce when it's currently more than $3,800. And there's been some talk that Treasury Secretary Scott Bessent might mark the U.S. Treasury's gold to market. Is there any credibility to that?
A lot. First of all, it's a good Bloomberg story, and I really enjoy it. It brings out the narrative. I'm an ex-accountant. I don't really understand why it's necessary to have a valuation from before we really went off the gold standard. It's kind of silly. You might as well just
set back in 1973.
Yeah, but what does it mean? Sure, it shows that our fiscal balance sheet is pretty good. Maybe it can be monetized to some extent. But the bottom line is we hold that gold. And I'm not worried about that. People say it's not in Fort Knox or anything. But the key thing is central banks are adding to their holdings. Now, you hear that lately central bank holdings of gold have expanded, surpassed treasuries. And that's because the price is going up, too. But it's the paradigm shift of what happened with the war and the invasion, potential seizure of Russian assets and things. And so I think that's going to continue. World Gold Council has good data on it. What's really shifted this year, though, is ETF inflows. We have 4 years of outflows, major inflows this year. And you've never really see that when the stock market's on tear and volatility is low. Usually you see the inflows in the opposite. So maybe gold's figuring out something. But right now, getting to $4,000 an ounce, I'm getting really concerned what it means, particularly in an environment with crude oil going down. That's a global economic deflationary cycle. Crude oil is supposed to go up in inflation.
Spot Gold up 45% year to date. Spot silver up 62%. What's going on with silver?
Just catching up.
Catching up? Okay.
Yeah, there's 4 precious metals. And I like to point out there's only 4. They're all catching up to gold. And guess what? There's 20 million.
Like gold, silver, platinum, and palladium.
The best performing this year is platinum. And in May, platinum, the gold to platinum ratio platinum reached its lowest versus gold ever. So they're catching up. And they're out jewelry, and they also have major practical industrial purposes like catalysts. Silver, when I think electrification, start with silver. The best conductor of electricity is silver. So it's catching up. I think it's going to make a new high, get above 50. But let's remember what's really driving all the precious metals. Beta in space is gold.
If there wasn't crypto, you think gold would be even higher?
Oh, sure. Well, there's a lot of competition. You ask your average 30-year-old, and my kids are listeners, they don't care about gold. And it's digital gold, but I think what's the difference is gold is a risk-off ancient store value, and cryptos, there's unlimited supply of them, and they're major risk-on assets. So when we get that normalization of stock market volatility, maybe a pickup, maybe a drop in the stock market, we're going to find out cryptos, who's wearing clothes, a lot of them are going to go down, I think a lot, and gold should do fine.
I don't get the rise of Solana. I mean, I know that.
Look at me.
I mean, there's Bitcoin, there's Ether, which is the second biggest, and then Solana has just come up, and it's got all this tailwind. I'm not sure I understand the use case behind it, if there is one.
So I like to stick with the macro in this space, and that is, Scarlett, you nail it. There was one in 2009, one crypto. Now there's 21 million based on CoinMarketCap. That's just unlimited supply of things like Solana and cryptos and Ethereum, and I've never seen this before. And we're at this stage. It makes sense when you can get U.S. stock market cap at 2.3 times GDP, the most in 100 years. But when that normalizes, you're going to hit first this speculative excesses. And I just see unlimited supply, and as a commodity guy, say, yeah, good luck. They were cheap a few years ago. Now you're supposed to be selling when they're yelling. There's a lot of yelling in that space.
Selling them when they're yelling them. All right, Mike McGlone. Next time we'll talk pork bellies when we get you back in here. Mike McGlone, head of the commodities research strategy.
You call it Miami Mike.
Oh, yeah. I mean,
Does
before anybody else fled and got smart and went down to Palm Beach, he was the first.
You're the first Wall Street South guy.
This is what we did. We're sitting around, we're saying, where the hell's Mike? And we're looking around, he's badged into Miami. What's he doing down in Miami? And everyone, we looked at each other, and I'm like, did you approve? No, I don't know. He's down in Miami. Beat everybody else down there.
I got lucky, and Bloomberg Intelligence allowed me to do it. So thank you very much, Bloomberg Intelligence.
No, he just was like, wherever he wants to go is fine with him. Just keep cranking it out. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Van Eck. Founded in 1955, Van Eck has been guided by conviction, not convention, spotting change early and turning it into opportunity from the very start. Right now, the major stock averages mixed, pairing some of the earlier gains in the S&P 500. Right now, up about 0.2%. So it is extending this month's rally. The Nasdaq 100 rising right now just about 0.5%. And it's being propelled by gains in shares of NVIDIA, Apple Incorporation, and also Microsoft. And as Mike was here earlier mentioning, gold hitting a record that also has lifted the U.S. Treasury's holdings of gold past the $1 trillion mark. The big story of the day, Electronic Arts agreeing to sell to a group of private investors. This is a deal that values the company right now at $55 billion. And the buyers, this consortium, includes Silver Lake Management, Saudi Arabia's Public Investment Fund, and Jared Kushner's Affinity Partners. They're going to pay $210 per share for Electronic Arts. And meantime, Drew Mattis at Mountain Life says don't expect a clear path ahead on Fed rate cuts.
If we got one this year, we get another one this year. You know, if we get two, it doesn't really make a big difference. But it's not going to be some rapid pace of rate cuts, in part because they're really unsure as to what the direction of travel is on the inflation story.
Again, the S&P 500, 14 points higher, 66.58 on the index. The Dow Jones Industrial Average is 78 points lower. The Nasdaq 100 up 124 points. That is, again, up 0.5%. And then the big economic data of the week that comes out on Friday with the September jobs report. Maybe the Bureau of Labor Statistics says they're going to delay the release of the jobs report and suspend all operations in the event of a government shutdown. This according to their contingency plan published by the Department of Labor. So who knows? We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I've been doing the stock market thing for 39 years. I have no idea how it works. Case in point today, Carnival Cruise Line raised its full-year earnings forecast for the third straight quarter, citing a record pace for forward bookings and improving net yield. So what's the stock do? It trades off 3.5%. Go figure. Maybe our next guest can help us out here. Brian Egger, he covers his gaming stuff, the lodging stuff, the cruise stuff, all the fun industries out there. He's been doing it on Wall Street for a very long time, one of the top folks in the street in his industry. He's Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. Brian, Carnival, it seems like, pretty good quarter for them. What'd you hear?
Yeah, very strong third quarter, you know, the 50% book for next year. So on the surface, these results are really good. And it was initially a bit of a head scratcher to see the sell-off. I think there are two ways in which maybe they're being perceived as conservative. The one is that their yield growth guidance for the fourth quarter, while it's certainly very solid in there in the mid-fours, you know, it's a little bit below consensus. Maybe the street got a little bit ahead of itself. The second thing is, for all their optimism about bookings and direction of yields, they are very conservative in how they're deploying capital. They've only got about 1% annual yield growth for this year, the next 2 years. So they're growing very effectively, but they are also very measured in how they deploy capacity. So all this is really good, but they do mention that, you know, they can really be judicious on expense growth because they're only growing capacity at a very modest pace.
Is that a bad thing to be conservative? How does Carnival compare with Norwegian or Royal Caribbean?
Yeah, so if you look at Norwegian, Royal Caribbean, they're anticipating or actually scheduling about a mid-single digit, call it 5%-ish level of annual capacity growth for 2026, 27, 28. You know, it's closer to 1% for Carnival, maybe 2% in 2028. So they're just taking a more conservative tack. And I think they're equally long-term optimistic about their ability to penetrate the vacation market, but they're going about it in a much more measured way. And in that sense, it could strike people as conservative.
Talk to us about capacity. I mean, if they added a couple of ships, would they sell them out?
Yeah, I mean, certainly their occupancy is back to pre-pandemic levels. Their yield growth against that capacity increase is positive. And we've seen steadily increasing yield expectations throughout 2025. And they've got the free cash flow, but I think they just want to build this out slowly, and maybe strike some people as being too slowly.
Hey, not for nothing. This CEO got paid a lot of money here. Josh Weinstein, $14 million in cash compensation for calendar year 24, $14 million in stock, $28 million to drive a cruise ship around. That's not too bad.
Nice job if you can get it, right?
Not bad.
So here's my question to you, Brian. How do Royal Caribbean, Norwegian Cruise, and Carnival, how do they grow their market? Are they stealing from each other, or is there still a big base from which to grow?
There's definitely a penetration opportunity. Let me just back up for a second. On Carnival, their goal is to become investment grade. So part of the conservatism I think you're seeing, which may be a head scratcher,
Thank
is
you.
they
That
want to
makes
get to
sense.
investment grade. And I think that's probably priority one, shifting some of the enterprise value from bondholders to equity holders. That being said, yes, they see opportunity to grow a relatively under-penetrated overall vacation market, but they're going about it with kind of balance sheet being front and center, if that helps at all. Yeah.
The only thing I know about the cruise business is what I learned from Disney, who got into the business 15, 20 years ago, and it's been a great business for them. How do you stratify the cruise market? Now, I'm going to be at the very, very top, mind you, but how does the cruise industry kind of stratify itself?
Yeah, I mean, I think they convincingly argue that they're a relatively affordable form of vacation. It's a package product.
Yep.
The value is very good for the consumer, but it runs across different tiers from luxury side, Seabourn, Windstar, Oceania, Regent Seven Seas, to the more mass market like Carnival Cruise Line, right? So they run the gamut, but the overall spectrum tends to be generally, relatively affordable, and part of that package vacation product, people buying cruises beforehand, buying stuff on the cruise with a good share of wallet left over, that works to their favor.
How brand loyal are cruising fans? I mean, if you are a Carnival person, are you a Carnival person for life?
Yeah, there's certainly some brand loyalty. And remember, they've got kind of, as an industry, companies have two goals. One is to drive bookings for their particular brand, and they do that through new hardware with all the bells and whistles. The other is to drive the overall awareness of the value of cruising relative to other forms of vacationing. And so, they've kind of got that dual mandate.
So you're sitting on the Jersey Shore, Sunday afternoon, around 5, 6
So if you're
p.m.
Paul Sweeney sitting on
Yes.
the Jersey, okay, go ahead.
All this, every Sunday during the summer, you'd see this massive cruise ship coming out of New York Harbor. I think it's the Star of the Seas.
Yeah, that's a new one, yeah.
I mean, thing's massive, dude. And they filled that thing up.
No, just remember that's a Royal Caribbean ship. But I will point out that one of the things Carnival's pointing to is they reached a 13% return on invested capital this year. So they're kind of getting to that double-digit return pace that they targeted. So their argument would be that they fill it up, they get good pricing, and relative to their investment, they're getting solid low teens returns on incremental invested capital with an opportunity to take that higher. So as long as they can get that return, I think they can convincingly say we're getting there. But obviously in the case of Carnival, through relatively conservative capital deployment.
I mean, Star of the Sea, Icon of the Seas, they have a massive passenger capacity with the ability to hold over 7,600 passengers and a large crew. And for somebody who doesn't like people like me, that would be that's a tough sell.
It's not the misanthrope's favorite vacation activity, but they do get good economies by absorbing those fuel costs. And
how big those things are.
Well, I'm always talking with my friend who suggests that instead of retiring to a nursing home or a retirement community, just go on a cruise ship.
Yep, I've heard that too. Who's a big cruiser is Charlie Pellet. And he doesn't like cruise the Caribbean. He always cruises like
adventurous places.
Yeah, like I'm cruising to Turkey and I don't know, Antarctica.
The exotic itineraries. Yeah.
Yes, that's what Charlie.
People pay a premium for those.
Yeah.
Oh, so he's that kind of cruiser.
Yeah, well, I'm just saying, on average, the customer pays a premium for
We talk about going investment grade. Again, day one or day two of the pandemic, who were the first companies going to the bond market? The cruise industry. Because those companies knew, oh boy, this is not going to be good for us.
Well, it's back from that brink and therefore trying to run the business in a measured way.
All right.
Makes sense.
Good stuff, Brian. All right, Brian Egger, he does all that gaming stuff. He does the lodging. He does the cruise ships, all the fun industries out there.
The vice industries?
Yeah, I don't know.
You should cover cigarettes, too.
Yeah, but I mean, these are good industries and great. I love the economic models for these cruise ships. I think it's just an amazing. And if you can get double-digit returns on your capital, that's pretty darn good. Looking at the markets here, S&P is up 14, the Dow's down 75, and the Nasdaq up 115 points. That's a 0.5%. WTI crude oil calling out for Alex Steele, down 3.7%, about $63 a barrel. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Live Radio, and that's where you'll find our programming. AI, and we're talking technology, you're talking AI, and, people are trying to figure out how do you get exposure to it beyond, the chip manufacturers like at NVIDIA, maybe beyond some of the software players like Microsoft. Well, how about computer hardware and storage? Go figure. We got somebody here who can help us out on this stuff. Woo Jin Ho, Bloomberg Intelligence Senior Technology Analyst. Woo, let's talk about some of this hardware and storage companies that you cover. Supermicro is one of those companies that stock has done really, really well this year. Talk to us about that company. How do you approach this company, Supermicro Computer?
Yeah, hey, Paul. So Supermicro has actually been a very controversial name throughout the year. But at the end of the day, they're highly exposed to the $312 billion AI market. The fact of the matter is, even though they've had choppy execution, they are one of the market leaders there. And as these deals come through, I expect Supermicro to continue to be involved in those deals and possibly win their fair share.
I'm just looking at your research, which you can do, folks, going BIGO on the Bloomberg terminal, and that's where you access all the Bloomberg Intelligence investment research. You write, Supermicro's AI rack system expertise and its short delivery times position the company to boost sales 74% to $31 billion in 2026. That is extraordinary.
Yeah. So, look, if you think about some of these hyperscale cloud providers, as well as those neoclouds, and neoclouds I define as these newer AI infrastructure as a service vendors like a CoreWeave or a Lambda. Time to market means a lot, right? And if you can't deliver the equipment to their specs in a timely manner, you're not going to win those deals. There are actually two companies that have done that. Supermicro is one, and Dell. So if you can ship the AI servers, get the GPUs as quickly as possible, the likelihood is you're going to win the deals. Now, keep in mind, these guys were only generating roughly $3 billion in revenue about 5 years back, and now we're talking about revenues closer to $40 billion in fiscal 27 and $33 billion in fiscal 26.
It's extraordinary. And just Supermicro, the stock is up 50%, 52% year to date, so it's just extraordinary. All right, when I think hard disk drive, I think of the little thing in my PC under my desk, but when we're talking about the cloud, we're talking about something totally different. Talk to us about kind of the hard drive that a company like Western Digital provides the stack.
I will tell you, we've been very bullish on the hard disk drive market for a couple of years now, and it's really starting to materialize. Not only Western Digital, but also Seagate. If you think about the hard disk drive market, we're talking about a $40 billion in revenues, split in roughly 40% of it going to Western Digital, 40% of it going to Seagate. And at the end of the day, a lot of the data that's generated by AI needs to be stored somewhere, right? And it's going into the Western Digital drives as well as the Seagate drives. And if you see the last month, the AI story has really started to materialize. Western Digital stock is up about 40% over the past month. And because of the strong demand by the hyperscale cloud providers, these guys have lead times of over 8 weeks, visibility going into 6 quarters, and this is leading to price hikes. This is a commodity market that tends to have 5% annual pricing declines. Pricing will stay stable, not only stay stable, it's probably going to rise over the next 6 weeks.
I mean, you've been bullish on Western Digital for a couple of years. I missed that. Too bad for me. Year to date, Western Digital stock is up 155%. And this isn't a penny stock, folks. This is a company with a market cap of $40 billion. So, Wooch, from your perspective on the hardware networking side of the business, kind of where are we in this AI play? What are your companies kind of telling you?
Yeah, a lot of my companies are telling me it's still in the early days, right? But it's also going through a lot of disruptions as well. And some of the, I guess, legacy companies like Cisco, like an HPE, it still considers a smaller fraction of the business to really make any impact, but they're going to be involved in some way or another. Now, in terms of the hyperscale cloud providers, they are a small subsegment outside of the GPUs that are going to benefit. The optical names in particular, because there is this need for speed to traverse the data, to have the data traverse through the networks. My colleague Jake Silverman, he covers those optical names. Companies like Coherent, companies like Lumentum, they've actually benefited quite a bit. From a hardware perspective, Arista Networks, they have strong exposure to companies like Meta, and they have they've actually seen their stock double over the past year or so. And also another small company called Celestica, based out of Canada, they've been beneficiaries from this AI spend.
Yeah, you mentioned Seagate. Again, a $48 billion market cap company. Its stock's up 164% year to date, 52-week high. So these computer hardware and stocks have just been really ripping it this year on the back of the AI tailwinds. Woo Jin Ho, thanks so much for joining us. Woo Jin Ho, he's a senior technology analyst, Bloomberg Intelligence. He's based down there in Princeton, really covering some of these stocks on the hardware and storage side, which are reaping the benefits of this whole AI trade in general. You wanted other ways to play it? Well, there's another way to play it, I guess. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up in just a moment. S&P up 13 points, the Dow negative 65 points, the NASDAQ up 112 points. 10-year Treasury yields come in a little bit here. We now have the 10-year 4.13%. Coming up, Balance of Power right now.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Cammie McCormick. Israeli Prime Minister Benjamin Netanyahu is at the White House for talks on Gaza.
President Trump, are you confident, sir, there'll be peace in Gaza anytime soon?
Trump has said a deal could be close, and there is a plan, according to Press Secretary Caroline Leavitt.
The president knows and believes that this is as good of a plan as these sides are going to see. And that's why it's 21 points. It's very detailed. It's comprehensive.
The death toll could grow from an attack on a church in Michigan over the weekend. 4 people died when a gunman opened fire and later set the church ablaze. Paul Kirby was inside with his family and encountered the gunman.
I open up the door and start running, trying to find my family, and that was the scariest moment of my life. Is not knowing my family was okay.
Police are still searching the rubble for more possible victims. The suspect, a former Marine who served in Iraq, lived nearby. He was shot and killed by police. Authorities in Oregon plan to file suit to stop the deployment of National Guard troops to Portland. The governor says it's unwarranted. CBS's Sam Vinograd.
It is true that there has been certain levels of violence against an ICE facility in Portland dating back to 2018 and dating back to President Trump's policy of separating migrant children from their families when they crossed illegally. And so while there have been varying levels of violence, we're not really seeing that right now.
The 22-year-old charged in the killing of Charlie Kirk has a court hearing today. Prosecutors have charged Tyler Robinson with aggravated murder and plan to seek the death penalty. Tropical storm Imelda is churning near the Bahamas and heading north. CBS meteorologist Rob Marciano is in Jupiter, Florida.
We're not going to take a direct hit from that. That's the good news. The bad news is we've been getting hit with these outer bands, and it is strengthening. We've got rip currents, we've got heavy surf, and from this point all the way up to Daytona Beach, there are wind alerts up for this entire day through the overnight period, so we could see some power outages as well.
Georgia and the Carolinas could see heavy rains from the system. A new survey finds many Americans who dreamed of owning their home have given up. 1 in 6 say they've stopped trying in the past 5 years. Stephen Cates of Bankrate, which conducted the survey.
They are tired and they are frustrated, and they just feel like there isn't a lot to look forward to. Prices are very high. Mortgage rates, although they've come down a little, are still very high.
On Wall Street at this hour, stocks are mixed. The Dow Jones Industrials are down by 74 points. The NASDAQ Composite Index is up by 109. This is CBS News. A California county will be the first in the nation to ban the sale of filtered cigarettes.
The ban will take effect in Santa Cruz County in 2027. Tara Leonard with the county's Health Services Agency says volunteers recently collected 25,000 cigarette butts in just 2 months. Those plastic filters break down into microplastics that pollute water systems.
Local taxpayers are paying to clean up corporate toxic waste.
She says government studies have shown
Cigarette filters have no benefit in preventing the adverse health effects of smoking.
Worldwide, 4.5 trillion cigarette butts are tossed in the ground each year, making them the #1 form of litter on Earth. Michael Wallace, CBS News.
Electronic Arts, the maker of video games like Madden, NFL, and The Sim, is being acquired for a staggering $55 billion. It would be the largest all-cash private equity buyout in history. Among the investors, Jared Kushner. I'm Cammie McCormick, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Bibi is in the building. Welcome to the Monday edition as Israeli Prime Minister Benjamin Netanyahu arrives at the White House for his 4th visit of this term with a possible ceasefire agreement at hand. We're going to learn more about this later in a live news conference from the White House, and first when we speak with Dennis Ross at the Washington Institute for Near East Policy. They've got less than 48 hours to avoid a government shutdown, an important meeting today with congressional leaders and the president. We'll talk about odds for a shutdown coming up with Nathan Dean at Bloomberg Intelligence, and we'll have analysis from our panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour as the New York mayoral race takes another turn. Yes, Eric Adams has dropped out. Let's get the latest on Wall Street first. Alexis Christoforous has the markets for us at World Headquarters in New York. Alexis, how's it look?
Thanks very much, Joe. Stocks are mixed right now as the clock ticks down to that possible government shutdown. We've got the Dow Jones Industrial Average off by 72 points, but the broader market is higher with the S&P up about 13. The NASDAQ climbing 108 points. We've got yields lower with the 10-year yield at 4.13%, the 2-year at 3.62%. And as the dollar pulls back a little bit, we've got gold climbing to another record high at $3,829 an ounce here intraday. Now, if the government does shut down, it could delay the release of key data, including this week's monthly jobs report. Jim Caron is Chief Investment Officer for Cross Asset Solutions at Morgan Stanley Investment.
The labor numbers, we're going to see some more on Friday and Wednesday, are actually showing some signs of weakness, which means that you're getting labor at a reasonable price. There's enough. The labor force participation rate has been going up despite almost zero immigration. So people are entering into the workforce. That's keeping labor costs relatively low. If you keep wage inflation down, then you keep consumer inflation down. That can increase profit margins, and that can be supportive for equities broadly.
Morgan Stanley's Jim Caron interviewed this morning on Bloomberg Surveillance. In stock news, Electronic Arts rallying nearly 5% after the video game maker agreed to the largest leveraged buyout of all time, selling to a group of private investors led by Silver Lake and Saudi Arabia's public investment fund. We've got shares of Carnival down 5.5%, despite the cruise line posting its 10th consecutive quarter of record revenues in what CEO Josh Weinstein called a phenomenal quarter. Carnival also raising its outlook for the year, citing strong travel demand and higher spending. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Joe and Balance of Power.
All right. Alexis, great to see you. Happy Monday. Thanks for being with us. Alexis will have more on the markets coming up about 15 minutes from now as we keep tabs on the Monday trade here. Investors may at some point begin to care about the situation on Capitol Hill, but it doesn't seem to be a major cause for concern yet. And Nathan Dean, a little bit later on this hour, will tell us why. Once the government shuts down, it takes a long time before actual economic ramifications to take hold. When it reopens, people tend to be paid what they were due. And so we'll see if this becomes an economic story as opposed to a politics and policy one, because at midnight tomorrow, well, I guess I should say midnight Wednesday, at 12:01 a.m. Wednesday, that's when the lights go out, unless they can figure out a way to get around this. And as we've mentioned, congressional leaders are going to be at the White House later on. This will be, by the way, I was surprised to read this, Hakeem Jeffries' first time sitting down in the Oval with President Trump. We'll see if it amounts to anything, because the president's busy today. Benjamin Netanyahu is already there. He arrived a little more than 1 hour ago, with, of course, a lot on the table here. And they've got a bilateral meeting, a working lunch, and a couple of hours in which they're going to spend time together. 1:15 Eastern is when they will emerge for a bilateral news conference, knowing, of course, that we're talking about here a potential ceasefire, and more specifically, a 21-point peace proposal that we heard about from Press Secretary Caroline Leavitt. Let's listen.
The president knows and believes that this is as good of a plan as these sides are going to see. And that's why it's 21 points. It's very detailed. It's comprehensive. The president has been working tirelessly on this. He speaks to, Prime Minister Netanyahu all of the time, of course. He's in constant correspondence. But he's also taken a lot of time to speak with our Arab partners and allies in the Middle East. He met with them at UNGA in New York City last week to hear them out. We've obviously had direct and indirect conversations with Hamas as well. And ultimately, the president knows when you get to a good deal, both sides are going to leave a little bit unhappy.
Okay, so what's in that 21-point peace proposal? Little reminder here based on reporting from Bloomberg. An immediate end to military operations, right? An actual ceasefire. A gradual withdrawal of Israeli forces from Gaza. The release of all the hostages. The president's been clear about that. And no Israeli annexation of the West Bank. Is it possible? Will Benjamin Netanyahu sign on? We'll remind you that not only this president, but the last one came forth with ceasefire proposals that were said to be as good as done, a deal in hand. And of course, we're still having the conversation. That's why we are lucky to be joined by Dennis Ross. William Davidson, Distinguished Fellow at the Washington Institute for Near East Policy. He served as Director of Policy Planning in the State Department under President George H.W. Bush and was Special Middle East Coordinator under President Bill Clinton. Mr. Ambassador, it's great to have you with us here on Bloomberg. Does the 21-point peace proposal get signed off today by Benjamin Netanyahu?
I doubt it will be signed off today. My guess, however, is that he will say yes, but. There are elements in it that he is not going to like. Number one, there is a provision that talks about if there's reform of the Palestinian Authority, it could help to create the conditions for a Palestinian state. That's obviously highly qualified, but Prime Minister Netanyahu has been very clear, no Palestinian state. There is a role for the Palestinian Authority, not the one they want in Gaza. They want to be running Gaza. They will not be, but they will be participants in what would be a regional and international interim international administration. That's not something that he wants. Those are the things that stand out, in addition to Prime Minister Netanyahu has clearly wanted an outcome where Hamas is seen as effectively surrendering. Now, this 21 points, there'd be plenty in it that Hamas doesn't like, because the truth is, at the end of the day, they won't be running Gaza even indirectly. And if it works the way it should work, they will also not be in a position where they can reconstitute themselves. But Bibi won't have his figurative, if not literal, surrender of Hamas. He has wanted that as a way to show he has an unmistakable victory, what he called total victory. So there's a reality that this will not be simple for him, but I don't think he can say no to President Trump for two reasons. One,
well, that's important.
I think it's critical. I just don't think he can say no. In a way, it was possible for him to say no to President Biden. President Trump, just from a political standpoint, the Republicans will not stand up and support him against President Trump. With President Biden, the Republicans were guaranteed to stand up with him against President Biden. So he doesn't have a political alternative here, number one. Number two, the reality is President Trump did what other presidents have not done. He acted militarily directly against the Iran nuclear program, taking out, really destroying the three most important elements of the Iran nuclear infrastructure in Fordo, in the continent of Isfahan. Now, for Bibi, the issue of Iran has always been the most important issue. But for him to be able to say no to Trump in the aftermath of that, I think, isn't in the cards. So he will not say no, but not saying no is not quite the same as saying yes.
Okay. White House envoy Steve Witkoff and Jared Kushner apparently met with Benjamin Netanyahu for hours yesterday. They met in New York to try to grease the skids on something happening today. What could have been hammered out in that meeting?
I think what they would have been addressing are the major concerns that Bibi has, which include some of the things I've mentioned. They might say, look, we have buy-in from the Arabs, so there's we can't change these to the point where we would lose the Arabs, but let's talk about ways we could address your concerns. Knowing Prime Minister Netanyahu as I do, at a minimum, aside from wanting to not close this without having further negotiations to be more precise on what each of these provisions means, I can also see him ask for side letters of assurance. So that oftentimes in a negotiation, we used to do this all the time with him and with the Israelis even before him. If we couldn't reach an agreement on something, but we agreed that he or his predecessor had a legitimate concern, we would provide a letter of assurance. I'll give you an example of one that you could see here. That Israel would have the right to respond militarily if Hamas was reconstituting itself, or if, for example, smuggling wasn't being cut off. I could see a commitment to the Israelis put in writing that would allow them to act if this interim international administration for Gaza was not acting in the way that it needed to. That would certainly be something I could anticipate. And I would imagine yesterday was mostly about going through each of the areas where he had a problem, their ways of trying to discuss ameliorating that, and if not, being able to fully address his concerns, talking about the kind of assurances that the administration would give him.
Yeah. Ambassador, I've only got a couple of minutes, so I want to warn you so I don't have to cut you off here. But we've got a news conference, a bilateral newser that's supposed to follow hours of meetings here, at least a couple of hours. There was some thought that they may not take questions from the press. What should we expect when these two walk before reporters today? And what would you ask President Trump about this today?
Yeah, I would say, if this is, have you been able today to remove all of the questions that Prime Minister Netanyahu has raised, and is it possible to address those questions without losing the Arabs? That's what I would ask. And by the way, that suggests to me that what you've heard about them possibly not taking questions seems to me to be quite plausible, because there may not be really good answers to some of the questions, or you may just choose not to respond to the questions. So I could see them each making statements, putting the best light on this. Bibi is going to want to look like he's working things out with the president, that they have this superb relationship, and Israel is able to count on President Trump. I think there'll be a bunch of superlatives that he offers when talking about President Trump. And President Trump, I think, his natural inclination is to take credit that we now have an agreement. By the way, that actually could be a smart thing to do. I'll say this by just wrapping it up. It makes it harder for Bibi then to resist if Trump is saying we have a deal, as opposed to him saying leaving it open in some fashion.
Well, we're going to find out about an hour from now, Ambassador. Thank you for your insights. Dennis Ross, Washington Institute for Near East Policy, with us to get the ball rolling here on the Monday edition of Balance of Power. We'll take a look again at the president's schedule and count down to a possible shutdown next with Nathan Dean at Bloomberg Intelligence.
It's 12:21 on Wall Street. I'm Alexis Christoforous. Stocks are mixed as Wall Street braces for a possible U.S. government shutdown. The White House doubling down on warnings that thousands of federal government jobs could be on the line if the government shuts down at midnight Tuesday. Right now, we've got the Dow Industrials down 43 points. The broader market is higher, with the S&P up nearly 16 and the NASDAQ rallying 118 points. Yields are slightly lower, with the 10-year at 4.13%, the yield on the 2-year at 3.62%, and gold at another record high, now trading at $38.30 an ounce. Cannabis stocks are lighting up on Wall Street after President Trump posted a video on his social media site endorsing the use of cannabinoids for seniors. Aurora Cannabis leading the advance, up 23% right now. Peloton preparing to roll out refreshed hardware and a software overhaul for its bikes and treadmills that include artificial intelligence for personalization. Wall Street not that impressed, though. Shares of Peloton down 4%. And President Trump threatening a 100% tariff on movies made outside the U.S. Checking Netflix, it's about flat right now. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, Alexis, thank you so much, and welcome to the Monday edition of Balance of Power. Live from Washington, I'm Joe Matthew. Thanks for being here as we count down, yes, to a possible shutdown. We'll drag out the countdown clocks a little bit later because nothing came from another weekend in which lawmakers could have been negotiating here. Lines have been drawn. One thing, though, we can add, a new wrinkle. 3 p.m. today. I told you I was going to mention the president's schedule. It's not just Benjamin Netanyahu. And I will remind you, about an hour from now, we expect a bilateral news conference from these two leaders on yet another visit to the White House with a potential ceasefire in Gaza at hand. But at 3 p.m. Eastern Time, shortly after Netanyahu leaves the building, it's going to be the top 4 congressional leaders in the Oval Office with the president. This is the meeting that was on and then off last week. Schumer, Jeffries, Thune, Johnson in the Oval. Interesting, it'll be the first time that President Trump has ever sat down with Hakeem Jeffries, who likes to call President Trump a con man, and spoke to reporters about the stakes earlier today. Let's listen.
We've made clear that we are willing to find a bipartisan path forward on a spending bill negotiated by Democrats and Republicans, but it has to meet the needs of the American people. We're not going to simply go along to get along with a Republican bill that continues to gut the health care of everyday Americans. Our line in the sand is the bill has to help everyday Americans, not hurt everyday Americans.
This is on the eve of the shutdown, which is why everyone seems to think that, well, some sort of shutdown is inevitable, even if it's a couple of days. Maybe it'll be a couple of months. This is the whole narrative from last week, right? Russ Vought is drooling over this idea to get the keys to the kingdom and decide what is essential and what is not. You know who's still as cool as can be? America's dad. Checked in with him first thing when I walked in this morning, and maybe you've even heard him on the air today. 40% the odds, run by our good friend Nathan Dean, senior policy analyst at Bloomberg Intelligence. And yes, we pulled him back into the studio because it's Monday. That means his podcast is dropping on this RSS feed today. Nathan Dean, it's good to see you. It's like, Christmas Eve around here or something, right? Except nothing's going to happen is what you've been guessing. Is this meeting today a game changer?
So I don't think the meeting today is all that important unless President Trump comes out and signals some support for these extension of health care subsidies. That's about it. I think the Republicans don't want President Trump to talk about it. I think President Trump is somewhat open to the idea. But if they can keep him on message and say, let's not talk about it, then I think we go into tomorrow with the headline saying a shutdown's coming. Now, the reason why I was at 40%, and the joke was I'm 40% but probably wrong, is because I do think there's a chance here for another 1 or 2 week CR to keep the negotiations going. Because these shutdowns, if you will, they don't happen until the moments before the deadline when parties come back and say, look, Are we going to shut the government down? Are we going to accept the blame? And are we willing to have this work out politically advantageous to us? And I don't see that happening just yet. Now, I hate to say this for our production team, but when it comes to Representative Jeffries or Speaker Johnson, they don't matter in this fight.
Why?
You know, the House has already passed a clean CR. It's not like the House is going to come back. You know, Representative Jeffries, it's not like the Democrats in the House are ever going to be supporting you. Tomorrow morning, when folks wake up, just have to pay attention to Senator Thune and Senator Schumer.
If they make a change, though,
if they make a
then
change,
these guys do matter. Are you suggesting that clean CR gets another run, another vote, and they find a way to pass it?
Well, the Republicans were talking about that just now in the conference. I was watching some of the tweets coming in from our Bloomberg News reporters, and they were saying that the Republicans were looking for potentially to bring them back to town because the House Democrats are actually taking up a lot of the airwaves of the moment. The Republicans aren't here in the House. Bring them back to town and see what they can do, maybe potentially put them up for another vote just to see where they stand right before the shutdown. Now, I think the way, if it were to happen, is the Senate would then agree to a 1-week CR. They vote on it. The House would have to go to unanimous consent. But if there is a shutdown, and if we do this on Wednesday, and I'm saying I'm sorry, you know, what I think happens is you have a shutdown that goes into this week. And most importantly, for the market participants that are listening to this call at the moment, the BLS has already said that they're not going to come out with their jobs data and they're going to delay it while the shutdown continues.
Got it.
I had a client come in this morning and just say, well, does this mean the Federal Reserve's not going to get it? Because the Federal Reserve sorta needs this.
Yeah.
The answer is most likely not.
Wow.
And so the data aspect of this is the one that I think the market participants need to be looking at the most because markets don't really react to it. And then if we get into a shutdown that is in, let's say, 2 weeks, 3 weeks, and just remember, 750,000 to 1 million government workers paid every other week, there's an economic aspect to this as well. So if we get into a shutdown that's lasting a month or so, then the economic story comes in, and then the markets potentially could come back after that.
See, I told you he was going to say that. Now, our crack production team is standing by in the Senate. I'm the guy who called for Jeffries because it was today. Both Senate leaders were on Sunday morning TV, drawing their lines. Let's listen to Thune and Schumer from Meet the Press.
Totally up to the Democrats. The ball is in their court. There is a bill sitting at the desk in the Senate right now. We could pick it up today and pass it.
We've been resolute that we need a meeting, that we need a real negotiation, that you don't do this by one party putting together a completely partisan bill and saying take it or leave it.
Take it or leave it. Does it feel different when it's the day of, is your point, right? You get the conference in a room. Are we really doing this, guys? There's a vote in an hour. What are we going to do? That changes the psychology. Is that meeting today then just for show? They come out to the sticks, the president goes on Truth Social, and nothing's changed?
Yeah, I think today's meeting is just for show because it is at the White House. The meeting that I want to see happen is over at Capitol Hill. And if Senator Thune and Senator Schumer get into a room and say, look, are we going to do this or not?
Yes.
Call this probably around tomorrow, 10 a.m. to 12 p.m. That's when I'm going to start thinking like, hey, this may actually happen. So if we get into a situation where the Democrats in the Senate, again, the House Democrats I don't think really matter here, but if we get into a situation where the Democrats in the Senate on their internal calls, and I'm going to be looking for the Bloomberg News reporters to start telling us what they're saying behind the scenes, if they continue to say, let's go forward with the shutdown, then I'm going to say we're going to most likely do this. The one thing I would throw out there is just more of like my black sheep scenario where I think is coming out is the Virginia, Maryland senators.
Yes.
Because if Russ Vought gets his way.
I think you've been dead on here.
Yeah, if Russ Vought gets his way and they start laying off a lot of folks, it's going to be the folks in Northern Virginia and in Prince County that ultimately are going to be bearing the brunt of this. And if I'm one of those 4 Democratic senators, I'm not sure I want to put my constituencies at risk.
And if you've got a gubernatorial race rolling in Virginia, Tom Emmer said it himself on the air. Democrats let the government shut down, and that's his angle on this. They're going to lose the gubernatorial race in Virginia. Now, I don't know if that's a real possibility here. Abigail Spanberger is way ahead, the Democrat, in this race. But that's got to be present in their thoughts and deliberations.
Absolutely. I mean, because, look, I can't tell you that if the government were to lay off workers, would that be good for the Democrats or bad for the Republicans? I just can't tell you because DOGE occurred and it didn't seem to really change the approval levels all that much. The Democratic approval rating right now is in around 30%. That's not great. President Trump is higher than that. So from the Democratic perspective, they'll say, look, let's have a shutdown now. Let's figure it out, and then let's get our party back on track before November 2026. Because if you remember, the Tea Party did this back in 2013, and it didn't really hurt them, came to the midterms in 2014. So when it comes to the Virginia and New Jersey races, I'm sure the folks down in Trenton and Richmond are like, hey, we don't want to play here, get this resolved.
Absolutely.
But there could be some national politics at play as well.
And then, that's why that November 21 CR was kind of an interesting timeline when you consider the gubernatorial contests here as well. Look, locally, you live around here, obviously. This is a big economic story locally, realizing that the market's not concerned specifically about the DMV region. But all those who are on paid leave from the Doge stop getting checks, as well as the purported mass layoffs that the White House is putting forth. All of a sudden, Washington is not recession-proof. In fact, it might have its own recession.
Well, I can tell you that the number 2 topic at the flag football fields over in McLean on Saturday.
The number 2 topic?
The number 1 was flag football.
I'm glad to hear that.
And the ref in particular. Okay. But the number 2 one was, is Congress going to come back and retroactively pay these government workers?
There you
because, remember, government workers, Congress has always said they're going to get a retroactive.
Right.
I'm not exactly sure that I can honestly say 100% that that's going to occur this time.
That's the problem.
And if this shutdown goes a month, that could be a month without pay. If you're also a government contractor, a buddy of mine owns his own contracting firm. He's like, how long is this shutdown going to last? Because I only have so much cash flow that can keep me going where I'm paying my workers at 100%. So I would say is that there is very much a local issue here, and this is why we should definitely be paying attention to it. But I also go back to my thought is that if we do have a shutdown, I think it gets resolved by this weekend because I don't think the Democrats want to give Roosevelt enough time to get a plan going into fruition.
That's a really big part of the story here, obviously. Congressional staffers lose their pay in a shutdown, right?
Yep.
So the boss sees this firsthand in the office.
I think the Capitol Hill gym stays open, though. I think that's one of the things that's deemed essential. But look, shutdowns are not good for those of us in the D.C. region. Whether you're a mother who wants to take your child to the National Zoo or you're just trying to go to a museum or something like that, we all feel it. But at the end of the day, the folks over on Capitol Hill are looking at this from a national perspective, and that's why I keep going back to this idea that the Virginia, Maryland senators are the ones that I think will eventually step in here and say, maybe this is something we got to deal with. But ultimately, the Democrats also want to see want to be seen fighting President Trump. And if Senator Schumer caves and makes a deal like he made in March, then I think Senator Schumer's in a big trouble with the rest of his party.
Wow.
All right, I can't have Nathan in here without asking you about the cannabis, because the president brought it up again. You see, this Sunday shared a video online promoting the health benefits of cannabis. Quote, the most important senior health initiative of the century, it said. MJ, the ETF up 15% today. It's just the latest dose of hot sauce. Is it real?
Yeah. So
what's he doing on Truth Social?
I think that there's 2 scenarios that will play out for reschedulization. If you're one of the retail investors, you want scenario 1, which is President Trump essentially waves the magic wand and says rescheduling done today. That's what I think a lot of the retail investors want. Now, I'm a little bit on a naysayer on scenario 1 because I think scenario 2 plays out where you're going to see a positive statement from President Trump saying, look, we're going to do reschedulization, but he's also going to kick the can and put it back into the process of the FDA.
Okay. Wow.
So I think it's going to take time.
Fascinating. More calls today on BLS or weed?
BLS.
BLS. All right. You never know. I have to ask. Nathan Dean, ladies and gentlemen, Bloomberg Intelligence. There's your briefing. If you want more, subscribe to the podcast for Balance of Power. You'll get Nathan's Monday briefing as well from Bloomberg Intelligence. Thank you, sir. 40%, but he could be wrong. What are we going to do? This is Bloomberg.
It's 12:40 on Wall Street. I'm Alexis Christoforous. A prospective government shutdown is looming over markets at the start of the week. President Trump set to meet with congressional leaders today for last-minute talks. We have the Dow in negative territory, off about 50 points. The S&P 500, though, is up 16. We've got the NASDAQ composite climbing 131. As for bonds, we've got the yield on the 10-year at 4.13% and the 2-year at 3.62%. Another all-time high for gold, at least intraday here, now at $38.30 an ounce. Lori Calavicina, head of U.S. equity strategy at RBC Capital Markets, had this to say about the market outlook.
We're creeping up to these new highs on the S&P, but I'm not seeing any multiple expansion. And so it looks like whether you're looking at S&P top 10, S&P 500 market cap weighted, NASDAQ 100, pick your own adventure. You can do equal weighted or cap weighted there. They're not making new highs. They're up around levels that have marked the most recent post-tech bubble ceiling, and they're unable to break through.
Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets on Bloomberg this morning. Meantime, Bloomberg reports that China's Huawei is planning to double output of its top AI chips in a bid to win customers as NVIDIA deals with geopolitical headwinds. Meanwhile, shares of NVIDIA bouncing back after last week's drubbing, up now about 2.25%. We've got Oracle, though, down just about 0.1% after last week's sell-off. And another blowout quarter for Carnival, the cruise company posting record revenue for the 10th consecutive quarter, but shares of Carnival down about 4% after its fourth quarter guidance underwhelmed investors. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
Alexis, thank you as ever. We'll have more on the markets from Alexis Christoforous coming up at 1 p.m., top of the hour, East Coast time, as we talk politics here in Washington. Although we've got our eyes on New York. This was another big breaker from the weekend. It's a busy weekend. Were you out barbecuing? Because we've got a lot of stuff to unpack here. Yeah, we've got a government shutdown that could potentially take hold tomorrow evening. Benjamin Netanyahu's in town. We could be talking about Middle East peace less than an hour from now when they hold a bilateral news conference. National Guard troops are being deployed to the streets of Portland. And how about this? Eric Adams is out of the race in New York. Quit his re-election campaign. With poll numbers that we've talked about here in the single digits, and a president of the United States who was urging him to drop out of the race, even dangling the idea of a fancy new job, maybe run housing and urban development, maybe be an ambassador to Saudi Arabia. That was a couple of weeks ago when Eric Adams said he was going nowhere. Of course, that was not his tune yesterday. Let's listen to the mayor of New York.
Major change is welcome and necessary, but beware of those who claim the answer to destroy the very system we built together over generations. That is not change, that is chaos. Instead, I urge New Yorkers to choose leaders not by what they promised, but by what they have delivered.
Well, now, wait a minute. Who was he talking about there? And what do we think about sitting in the stairwell for that video? If you were with us on YouTube, you'd see what I'm talking about. Knowing where the polls were, Eric Adams was at the bottom. Even in the most recent Suffolk University poll, he's trailing Curtis Sliwa. So will it make a difference? We assembled our political panel because they've had their eyes on this too. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are back together on this Monday. Jeannie is Democracy Visiting Fellow at Harvard's Kennedy School Ash Center. Rick is partner at Stonecourt Capital and our Republican strategist. Jeannie, you know polls as well as anybody. Will this actually make a dent? If Eric Adams was at 8% here and Mr. Mamdani was at 45%, what just happened?
Joe, I thought you were going to bring us in on Old Blue Eyes, a little Frank Sinatra, because that's what Eric Adams played in his video. So when you said tune, I got all excited for some I Did It My Way. But there was just him at the bottom of the stairway, which was telling. It's where he is in the polls. You know, of course, the main beneficiary of this is Andrew Cuomo. That said, Eric Adams was 8 or 9% in the polls, depending on which polls you look at. And so even if he gets all of those supporters, it's not enough to help him. You know, there is a scenario in which Cuomo could make a go of this, particularly if Curtis Sliwa, the Republican, got out. and it was a two-man race, but Curtis is saying he's staying in, and that makes it really, really tough for Cuomo. So I think the polls are still pretty clear. Mamdani, double-digit lead, and he's held that ever since they began polling on this race after the primary election.
President Trump weighs in, Rick, says that Mamdani's victory would be, quote, one of the best things to ever happen to our great Republican Party, unquote. He's threatening as well to withhold federal funds from New York City if Mr. Mamdani is the next mayor. Is he right about one of the best things to happen to the Republican Party? Because this could be quite the foil for Donald Trump the next couple of years.
Yeah, there's no question that Republicans will make good use of it, especially in the midterms. I mean, Mamdani is going to become probably the most famous Democrat in the United States by the time you're done with the 2026 advertising campaign. I mean, he will appear in legislative districts all over the country, you know, saying that this is the new Democratic Party, socialist. So prepare for that. And I think, as Jeannie said, this goose is pretty well cooked. Nothing else of any real substance is going to happen in this election. It's going to change the outcome. And fire the advance man. I mean, I've never seen a worse announcement from the bottom of the stairs. I mean, like so many symbols that are bad.
How true. Rick, you work at Stone Court Capital. You're in the private equity business. What is Wall Street? What does business in New York think of this prospect? Are they with Donald Trump? Do they see a communist coming down the road?
You know, there's a lot of spinning going on in the business news channels in New York right now. And I think there's a determination now that we've got to find common cause with this guy before he wrecks the conditions of which exist, you know, that makes a lot of money in New York. And so, yeah, I think the business community is very, very frightened at this point. They never saw this one coming. Everybody had this sort of arrogance that no way would the great city of New York, greatest commercial city in the world, elect a socialist to be the mayor of the city. So I think both on a business level and on a personal level, people are worried about the neighborhoods and the safety and the cleanliness. You know, New York is first and foremost a neighborhood. Many of them, but it's how people live in the city and prosper in the businesses that surround them.
Jeannie, I'm curious to hear what's on your mind, if this in fact is a done deal and what might come from Mamdani's proposals in New York, of course, not all of which he will be able to enact, but also the fact that we talked about this before President Trump began asking people to drop out of this race. Everybody's name's still on the ballot. How much confusion will there be?
That's right. You know, we've got all of these people. It's too late to remove their names, even though he's suspending his campaign. You New Yorkers, I think, are wise enough to know that they'll get the message that he's no longer running. But, it does create a wrinkle in the system. But, I do think there is a small chance that Cuomo could resurrect his campaign. So you're looking at things like, do the police unions that were supporting Adams, do they endorse Cuomo? That said, look at something else. Hakeem Jeffries, obviously the leading Democrat in the House, he has yet to endorse Mamdani. Similarly, Chuck Schumer. And Hakeem Jeffries got a lot of criticism over the weekend from Democrats because he thanked Adams for his service. And still, neither one of them has endorsed Mamdani. So I think you are, to Rick's point, really talking about a huge challenge for moderate, middle-of-the-road Democrats who are very, very worried about what Mamdani has said he is going to try to do. And of course, he does have the endorsement of the governor, which gives him a leg up because she's facing a tough re-election. In that 6 months, if he's elected, he's going to need her. She's going to need him more. And he may get more from Albany than we would think he would if she wasn't facing such a tough re-election bid. So a lot of politics for Democrats at play here that are going to give Mamdani potentially a leg up if he's elected.
Well, we're standing by, as I've mentioned a couple of times here, for a news conference at the White House. In fact, we just got our first view of the state dining room where President Trump and Benjamin Netanyahu are going to be holding forth with reporters. There you see it on YouTube right now. They're just getting the room together and getting things prepped, the flags, podiums in place, Rick, one of the concerns that some conservatives and even some progressives have in New York is over Zohran Mamdani's perceived relationship with the Jewish community based on his remarks in the past. He's tried to get around that, but I wonder to what extent that will play out in the voting results here.
Yeah, I think that he's got a really troubled relationship with the Jewish community in New York. I've heard references made to him that would be included in listings of anti-Semitic remarks. I don't know offhand, but like that is a appearance that exists there. There's no question about it. And what is interesting to me is, having watched the campaign more intensely in the last couple months, is he doesn't seem to be really working that hard to fix that problem. No high-profile endorsements from Jewish community leaders, and so I do think that adds some of the tension to certainly that community that lives, inside the city. So, I think too, it plays into the Trump narrative, is to sort of how out of the mainstream, this individual is, Mamdani. And as you know, Donald Trump has made a cause fighting anti-Semitic behavior on college campuses and elsewhere. And regardless of the motivations, he now owns that and certainly will make good use of it in a Mamdani administration.
With all of this said, Jeannie, and considering what Rick is suggesting about the business community's view of the Mamdani candidacy here, do you believe turnout in New York will reflect what we're seeing in the polls?
It might. I think one thing to keep in mind is the primary, we use ranked choice voting, and we do not use that in the general election. I don't think that's going to change what we're seeing in the polls dramatically, but it is something to keep in mind. And of course, in a primary, you're talking very low turnout. It will be bigger and it will be more energized in the general, but still not as robust as it should be. So that can always have an impact. And, I mentioned before Chuck Schumer, there's a lot of speculation that his reluctance so far to endorse Mamdani is tied to this issue of anti-Semitism. But Mamdani, if you just look at the split, consider Joe Biden, how much he was hugging Israel, Netanyahu, the Israeli lobby, versus somebody like Mamdani, almost perfectly captures this deep division in the Democratic Party right now. And we are seeing it particularly amongst young people. So this is a generational battle as well. Remember, Mamdani just a few weeks ago told the New York Times editorial board, if Netanyahu came to New York and he was mayor, he would have him arrested.
Well, look, that's why I ask, and I don't know your thoughts, Rick, on this split in the Democratic Party. Are all of those young people going to turn out to vote, or will it be more complicated than that?
Well, they certainly did during the primary. I mean, in the neighborhoods that were younger, we saw polling data that said he was 14 points above any other Democrat in the race in the youth vote, and not offset by a substantial vote in older neighborhoods. Jeannie referenced it, but New York City voters are not very good at turning out. I mean, the average turnout these days is, below 25%. I mean, it's probably one of the nation's lowest voter turnouts in one of the greatest cities in the world. And so you really have to scratch your head and say, if there's a strategy here, it's to turn out people who don't normally vote. Now, it's a hard thing to do. I've been posed with having to try that myself when the electorate is normally turning out as opposed to you. But that has got to be Cuomo's strategy, is to go out there and say, there are 75% of the people registered and eligible to vote on Election Day who don't turn out. I need my share of those guys. I'm going to go get them.
Wow. Fascinating conversation. What a great deep dive with our signature panel on the mayoral race in New York. Rick Davis and Jeannie Shanzano. I guess, Jeannie, I should only apologize to my mother because I didn't bring her picture with me. But with apologies to Eric Adams, we'll leave you with a little bit of Frank here in hour one of Balance of Power. Many thanks to our panel, Rick Davis and Jeannie Shanzano. Yes, we did it our way. We'll welcome our global television audience to the conversation coming up here next. And Tyler Kendall will join us as well here in Washington with much more to follow. Counting down to a shutdown here, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Will the meeting make a difference? Welcome to the Monday edition as President Trump meets with congressional leaders at the White House just a day until a possible government shutdown. We've got a lot on the plate for us today. I'm Joe Matthew alongside Tyler Kendall in Washington. Thanks for being with us on Balance of Power. Tyler, that meeting is going to come after the president's meetings today with Benjamin Netanyahu, and of course the news conference that will follow could begin in just about 15 minutes time, assuming it takes place on schedule.
Right, exactly. A jam-packed day on multiple fronts here, Joe. We could potentially get some sort of movement when it comes to funding the government, and we're still waiting to see if there's going to be an agreement here towards ending the war between Israel and Hamas.
That's right. They've got a ceasefire and a 21-point plan on the table here, knowing that this has been a bit difficult, at least certain parts of it, difficult for Netanyahu to accept. The fact that they're facing reporters might give us a sense, though, of at least their hope to have a productive day here, Tyler. They've been behind closed doors now for about 2 hours.
Right, and we saw when President Trump greeted the Israeli Prime Minister today in front of the West Wing, he was asked about how these talks were going, and he said he was, quote, very confident that there would be a peace deal.
In the Oval a bit later on today, not only the two Republican leaders, Thune and Johnson, but also Chuck Schumer and Hakeem Jeffries, the first time President Trump has in fact met with him, knowing that Wednesday, 12:01, tomorrow night, if you will, the government set to shut down if they don't get a deal together here. There are some rumblings about an even shorter term CR to buy a couple of days, Tyler. We'll see if that emerges.
I was going to say, are we just going to go over this again? Because maybe there'll be an even shorter term CR, but right now the Senate is looking at potentially kicking down the can down the road for 7 weeks until November 21st. So are we just going to be having this conversation?
It's CR heaven. We do a lot of kicking of the can around here. I want to let you know, Dusty Johnson, the congressman from South Dakota, is going to be talking with us in just a moment after we check Wall Street. Investors are looking at all of this as well. And Alexis Christoforous has the markets for us live from New York. Alexis, how's it look?
You bet. Thanks, Joe. Mixed market right now, but tech stocks stealing the show once again on Wall Street as we move closer to that possible government shutdown. The Dow Industrials down 56 points. Broader market higher with the S&P up about 11. NASDAQ gaining 101 points. The yield on the 10-year, 4.13%. The 2-year sitting at 3.62%. And we have got gold back at a record high, now trading at $38.32 an ounce. West Texas Intermediate oil down nearly 4% at $63.27 a barrel. Electronic Arts up nearly 5%. The maker of Madden, NFL, Apex Legends, and other video games agreeing to go private in a $55 billion leveraged buyout, the largest on record. The buyers here, Saudi Arabia's public investment fund, Silver Lake Partners, and President Trump's son-in-law, Jared Kushner's Affinity Partners. Shares of Carnival reversing an earlier gain, down now nearly 5% after the cruise operator posted better than expected quarterly results and raised its full-year outlook. Shares, by the way, were up 23% this year. Heading into today's earnings report, we've got shares of Norwegian and Royal Caribbean down in sympathy. Peloton preparing to roll out refreshed hardware and a software overhaul for its bikes and treadmills that include AI for personalization. Not impressing Wall Street, though. Shares of Peloton down more than 3%. And China's Huawei is planning to double output of its top AI chips in a bid to win customers as NVIDIA deals with those geopolitical headwinds. We've got shares of NVIDIA up, though, nearly 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Balance of Power now with Joe Matthew and Tyler Kendall.
All right, Alexis, thank you so much. Live from New York, Alexis Christoforous will have more on the markets, assuming our news conference doesn't begin before then. Just about 15 minutes from now, we'll check back on the Monday trade. I'm Joe Matthew, indeed, alongside Tyler Kendall for the balance of this week here on Balance of Power. And Tyler, it's great to have you standing with us here as we cover some pretty heady stuff today. We're 2 days out, less than actually a day and change from a potential government shutdown. We're going to be talking about that in just a second with Dusty Johnson. We've also got our eyes on geopolitics as President Trump meets with Benjamin Netanyahu. They are going to emerge at some point here this hour in a live news conference that will bring you live here on Bloomberg.
Right, a lot of different angles that we're watching for here, and particularly when it comes to the shutdown and the clock that is ticking tomorrow. We know that Republicans ultimately need at least 7 Democrats to get on board. Republicans, 53 votes, they need to get over to 60 in order to reach any sort of deal. So the question becomes, are they able to get that many to come over? Can they strike this deal before we ultimately careen into a shutdown?
Let's ask that question of someone who knows more than we do about this current moment in time. Dusty Johnson, the Republican from South Dakota, is with us now live on Bloomberg TV and radio. And Congressman, it's great to have you back. Our viewers and listeners should know that you were pivotal in the background in getting the president's big, beautiful bill across the finish line. You've been through a lot of these shutdown scenarios before, and I'm wondering what your gut tells you now. Does this meeting lead to something today? Is there an 11th hour save, or should we prepare for the lights to go out?
It would be wonderful if the big boys and the big girls in Washington, if we could get our act together and avoid the shutdown, but it really doesn't look like that's going to happen. It feels to me like we've got an 85% chance of going into shutdown. we just, we have passed a bipartisan short-term funding deal out of the House on a bipartisan basis. Chuck Schumer does not seem interested in accepting that deal, and I think he seems pretty committed to a shutdown. I think that's where we're headed.
Congressman, do you see any sort of compromise that could emerge, in particular when it comes to extending the Obamacare premium subsidies that are set to expire? It seems like there might be some wiggle room on that provision, at least, whether that happens now or down the road if this short-term stopgap measure gets through.
Part of, what has sometimes been said is that nothing is as eternal as a government program. This is a little bit of proof of that. Here we've got some special assistance on health care, some subsidies that were put into place during the pandemic. And here we are having a hard time getting rid of them. Listen, let's say that reasonable people can disagree about whether or not working class Americans should have these additional enhanced tax credits. Most of the benefits go to insurance companies. But let's just set that aside and say reasonable people can disagree about that. What we shouldn't be debating is whether or not we're going to spend $1.5 trillion of new spending as a part of a 6-week short-term stopgap funding deal. This is really unprecedented that the Democrats are saying that, no, rather than negotiate on the healthcare stuff while the government is open, we prefer to negotiate while the government is shuttered. It seems like they're taking the American people hostage, and I just don't see how Republicans can go along with that.
Would you vote yes on a CR that had an extension of the Obamacare subsidies, or is that a deal breaker for you, Congressman? Because I know that you also have a piece of legislation that would deal with this on a much shorter term level and, in fact, prevent the government, if I read it right, from ever shutting down.
Yeah, shutdowns are stupid. We should not shut down. My bill with Senator Ron Johnson in the Senate, the Eliminate Shutdowns Act, would say anytime the clowns in D.C., we can't get our act together, rather than take the American economy hostage, we're just going to have a short-term 14-day CR to allow the politicians to get to yes. And that is, in essence, exactly what the Republican offer is today. Not for 2 weeks, but for 6 or 7 weeks until the Friday before Thanksgiving. It is unprecedented that a party would say, no, we don't want to negotiate for 6 weeks. Instead of negotiating, we're going to shut the whole thing down because we can't secure $1.5 trillion in new health care subsidies. I just think Chuck Schumer is asking for heaven and earth and spending and health care for illegal aliens and health care subsidies for rich Americans. There is no way on God's green earth that Republicans are going to give all of that up in return for just a 6-week stopgap.
Well, Congressman, what's also raised the stakes of these negotiations, perhaps, is that we know that there's been this OMB memo threatening permanent layoffs if the government does shut down. Do you think that's the right strategy here by Republicans to potentially use a shutdown period to slash the federal workforce?
In general, the party that loses the shutdown loses it because they don't seem reasonable. So right now, today, it's pretty clear to me that the Republican ask is very basic. It's not a Republican win or a Democrat win. It's just, hey, let's keep the government open for 6 weeks while we negotiate. That is eminently reasonable, which means that I think that the current environment means that Democrats probably are going to be in some trouble. Now, I understand what the administration's trying to do, and Lord knows there is plenty waste, fraud, and abuse to cut. So if they use that scalpel in a way that seems targeted and appropriate, I think it can help the messaging. If they go in and they do things that are a little bit more nuclear, I think that could make Republicans seem not quite so reasonable. That could shift the political landscape. So I would just say I expect the administration to do the right thing in cutting government during the shutdown. I don't think it's just a threat. I think Russ' vote is absolutely serious. I think he and President Trump are going to cut the places they think are appropriate to cut if we're in shutdown.
Well, you speak of the Eliminate Shutdowns Act. As a matter of fact, we're going to have Senator Ron Johnson on with us on the late edition of Balance of Power at 5 o'clock. So we've got both chambers covered here, Congressman. Isn't this the very reason why you're out? You're going to run for governor instead of put up with more of this?
No, I'm really not running away from Washington, D.C. I mean, it's been an honor of a lifetime. I do feel like I'm relevant. I get to be in a lot of rooms where we're trying to make America better. And And frankly, the Republican House has done a much better job in the last 9 months than I think most people expected. So, no, I'm not running away from D.C. I'm really running toward my state that I love, and I think we've got some important things to do, and I think I'm the leader to help get them done.
And Congressman, I do want to pivot to another topic just quickly in our final minutes with you, and that has to do with tariffs, because we've seen a flurry of new announcements from President Trump in the past few days, and your fellow South Dakota colleague, Senate Majority Leader John Thune, did say, or suggested rather, in an interview over the weekend that there are discussions about a potential bailout for U.S. farmers. You, of course, represent a top agriculture producing state. I'm wondering if you've had any discussions about what those potential solutions would look like.
Yeah, the last time we got into a trade dispute with China, American farmers were again the tip of the spear. A lot of the harm of that trade dispute fell on farmers. So Secretary of Agriculture Sonny Perdue did put together a pretty good plan in 2 different tranches to help American producers. We're probably in a better position today to be able to finance that than we were back then. We've got hundreds of billions of dollars of tariff revenue coming in. I think most members of Congress, whether they're urban or rural, understand that spending some of that tariff revenue to try to shave down some of the most jagged edges of what the American farmer is going through probably would be helpful. China's doing everything they can to hurt the American soybean farmer. We probably need to, we absolutely should help the American soybean farmer get through this rough patch.
Congressman, it's great to have you back. Congressman Dusty Johnson of South Dakota, former chair of the Republican Main Street Association, now on his way in a campaign for governor. It's great to have you with us. We appreciate the insights. Of course, 12:01 a.m. Wednesday is when the government funding would lapse. 3 p.m. today, the president's meeting with congressional leaders. Only moments from now, we are expecting to hear from President Trump alongside Benjamin Netanyahu, who is in the White House right now. They've been meeting for a couple of hours, and a bilateral news conference has been scheduled. If you're with us on Bloomberg TV, there's a live shot of the state dining room, which is adorned for this occasion. Folks are working their way in now, and we understand that the press pool is assembling, so this could begin shortly. It's great to have Dan Williams with us at this moment. We're about to hear details on a 21-point peace plan and hopes for a ceasefire, depending on what was discussed and what is being discussed behind closed doors with these 2 leaders. Dan is Bloomberg News reporter in Jerusalem and staying up a bit late for us this evening. Dan, it's great to have you. I'm just curious what the local coverage and local knowledge of the 21-point plan is and how much hope there is there for a breakthrough today.
Local coverage is wall to wall, going back, I'd say, as far back as the weekend when there were first leaked reports of this emerging plan. Israel, the Palestinians, the wider region seem to be gripped by what appears to be a rare optimism in this almost 2-year-old war. And I think it's no accident that the word peace is being used around this deal rather than ceasefire, which was previously used. Peace is far more affirmative a term. It's far more sweeping, certainly far more conclusive. And it does presuppose the exclusion, the toppling, the removal in one form or another of Hamas, which is sworn to basically open-ended ideological war against Israel. It also suggests that the U.S. president, perhaps even the Israeli prime minister, see ending the war in Gaza as a doorway to wider accommodation in the region, a long-awaited expansion of the Abraham Accords, which really was a centerpiece of Trump's foreign policy in his first term.
Dan, I also want to talk a little bit about the backdrop that these talks are coming on today. You have this great story out on the Bloomberg terminal entitled, quote, "Can Israel end the war with new push into Gaza City?" I'm wondering what your reporting has shown us about the answer to that question.
Well, not to make light of war making, but, you know, with every carrot, there is a stick. And to hear the Israelis tell it, the stick that might have brought Hamas into accepting this deal, a deal that Israel sees as being acceptable only if it disarms Hamas, if it sees an end to Hamas governance, and it recovers immediately the 48 hostages still in Hamas captivity. Israel says that basically Hamas was forced to this due to that military pressure, including most recently a military push, a very deep military push into Gaza City. That's the de facto capital of the Gaza Strip, of Hamas. Israeli forces have been there previously during this war, but this time it's a different method, different tactics, They're quite literally churning up the ground and below ground for any remnant of Hamas infrastructure, bunkers, weapon arsenals. Of course, there's been engagements with Hamas members. A number of soldiers have been killed. A number of Hamas fighters have been killed, Palestinian civilians as well. But most of the civilians of the Gaza city have actually fled under Israeli orders to displaced persons camps. And to hear the Israelis tell it, this is effectively the last push, the push which would either have seen Hamas destroyed militarily or destroyed diplomatically, if you like, by forcing it to surrender, lay down its arms, and cede power finally in the Gaza Strip. So yes, those things have been running in parallel. The Israeli argument is that as long as there's no ceasefire, fire will continue. And as long as there's no peace deal, certainly that firing will continue. However, we may see changes very, very soon, if indeed an hour from now, more or less, the US president, the Israeli prime minister announce that Hamas is on board for what would effectively be a deal ending this war and perhaps opening the situation up to a wider accommodation.
Would you take their word on that, Dan? And I ask you that because we've seen now 2 American presidents roll out multi-point peace plans that they said were accepted by both sides, and we learned after the fact that that was not the case. In fact, even Benjamin Netanyahu has wavered before Trump and Joe Biden on this matter.
I think yes. I think all around there is exhaustion, there is great pain. There is great trepidation about what the future holds for Palestinians. It's clearly existential. Much of the Gaza Strip has been ruined, really laid waste by this war. For Hamas, it's existential, more on an institutional level. Obviously, if you're a Hamas member now in battle, you face almost certain killing or capture. But it would appear that this deal would offer amnesty, immunity to Hamas members who surrender, perhaps even safe passage out of the Gaza Strip. And that sounds like a pretty good deal if it's a choice between life and death or life and an open-ended prison term in Israel. Now, for the Israelis, there is the resources have been strained, the national resources, on a level really not seen in decades by this war. Israel's international standing has plunged. And I think it's worth remembering the United States under this president is really the last big power backing Israel. Other powers have turned against it, including Security Council powers, which have actually recognized the Palestinian state unilaterally. And I would really reckon that if the US president is running out of patience, I think he clearly is, and is laying this down as the deal that must work, I think Israel, and perhaps not just Israel, will do everything in their power to make it work.
Well, Dan, you're laying out the stakes here in great detail for us. If Israel's going to do everything in their power to make it work, is there a route here? What happens if diplomacy does collapse? Is there any sort of mechanism in place that will ensure that the negotiations and the talks will keep going?
I don't think anyone is in this for continued open-ended talks. I think, as I referenced at the beginning of this interview, the nomenclature has changed. It's no longer talk of a ceasefire. A ceasefire is by definition temporary, cold-eyed, self-interested, and works on the assumption that firing will resume at the end of that ceasefire. Trump is talking about peace. He wants an end of this war, and he wants good news. And you know what? We're a few days away from the first week of October. That's traditionally when the Nobel Prize Committee announces it's the winner of the Peace Prize, the Nobel Peace Prize. I wouldn't be at all surprised if the reason there is a sense of a rush around this is that the US president and his supporters are hoping that he will be named in the coming days for that Peace Prize, the Nobel. Indeed, the Israeli prime minister has already nominated him for that prize. So I think for various reasons, good, perhaps less good, immediate, less immediate, really there's a great sense of urgency here. It's also the second year mark, the second anniversary, if you like, of the war beginning, just over a week away. I think everyone would like to end the war before it becomes a 2-year war. It's already Israel's longest war. So really, there are so many vectors pointing now to a willingness to make this diplomacy work. It will not be open-ended diplomacy. I think what Trump will tell everyone involved is, I'm washing my hands of you if this doesn't work, and we'll just let the forces of war sort it out, which basically means Israel continues in the Gaza Strip, crushes Hamas militarily, potentially loses those hostages still surviving, loses more soldiers, more Palestinian civilians suffering, and then effectively a bloody, unquestionable end when there's simply no one left standing.
Boy, Dan Williams doing a wonderful job reporting for Bloomberg in Jerusalem. Dan, thank you so much for helping to set the table ahead of this news conference. which will be taking place today in the state dining room as opposed to the East Room where you normally see the gold drapery behind the president and other world leaders. Today, we've got American and Israeli flags set up in the state dining room and a large room full of reporters and others who are looking to hear from these two men as soon as they start speaking. Of course, we will join them live here on Bloomberg TV and radio. It was scheduled to begin 5 minutes ago, and things tend to slide on days like these. They've been behind closed doors since a little after 11 o'clock this morning, talking about the very issues that we just discussed with Dan. And we want to add the voice of Natasha Hall as we wait to hear from Trump and Netanyahu, non-resident senior associate at the Center for Strategic and International Studies, CSIS. Natasha has been with us for several of the throes in this conflict and back today on an important meeting with these two world leaders. Natasha, it's great to have you. The last time Benjamin Netanyahu was in front of a large public gathering here in America was when he stood before an empty room in the UN General Assembly, knowing, of course, that many Muslim and African nations and even some European nations got up and walked out on him. What was that experience like in informing the Israeli Prime Minister of what he might be stepping into today?
Thank you for having me, Joe. I mean, I think that picture of Netanyahu in an empty room, which is supposed to include all of the world members, pretty much says it all. Israel is completely isolated in the world aside from President Trump in the United States. And so a lot comes down to this meeting with President Trump today, because what Netanyahu needs to show to Israelis is that they still have the backing of the United States. And if that wanes, then Israelis are in real trouble here. We are seeing more recognition of a Palestinian state, increasing support to the flotillas that are trying to get to Gaza, and really just this incredible support that's been thrown towards Palestinians and this rage about the ongoing war in Gaza. And so, I mean, I think that should have been a wake-up call. Maybe it should have been a wake-up call a long time ago for Netanyahu, but hopefully that portends something positive for these discussions this morning.
Well, Natasha, how is this pressure contributing to the talks today? We know at the center is this 21-point plan floated by the U.S. We've gleaned some details, including that it would include the release of all remaining hostages. 20 out of the remaining 48 are believed to still be alive. It would also include Israel gradually withdrawing troops from Gaza. From what you've seen, the reports about this plan, what is realistic for getting a deal done?
I mean, I think that's the ultimate question. And you mentioned pressure at the beginning of this. And I think the big issue to date, and I've said this multiple times on this program, is that we haven't seen tangible pressure from the United States at all in the past 2 years. And that has essentially been the reason that the war has gone on. And President Macron of France has recently said as much, that it is the United States that is capable of ending this war. And so unless we see real pressure on any of these points, these 21 points that Trump and Witkoff and others have laid out, I think we're not going to see much progress. We might see progress on those first few points, namely the release of the hostages. And what is interesting with this plan is it lays out the release of all 48 hostages, alive and dead, within the first 48 hours. Now, if that happens, then Netanyahu basically gets a pass from the biggest opposition to the continuation of this war, which is the hostage families. And so, you know, there's a lot of things that can happen with the details of the rest of the points. And Netanyahu, as he has done in the past, could potentially continue the war if any of those points are not carried through.
I'm really compelled by this meeting yesterday in New York, Natasha. Steve Witkoff, Jared Kushner, and Benjamin Netanyahu. They met for several hours, reportedly, to try to get ahead of some of the stickier points today. Is Jared Kushner going to be the one who solves this if it gets done?
There's a lot of cooks in the kitchen, including former UK politician Tony Blair in this. And I think that the big issue is going to be Netanyahu agreeing to some of these points regarding amnesty for Hamas fighters that agree to peace, but namely and ultimately Palestinian statehood and a Palestinian governing authority in Gaza and the West Bank. because Netanyahu quite defiantly in that UN General Assembly speech reiterated the fact that he is not in favor of a Palestinian state. And that is ultimately the core problem with this conflict, the lack of Palestinian self-determination. So the hope, I think, for a lot of people is that we can at least get to the point where we have aid flooding into an area stricken with famine, that we can have, at least a cessation of hostilities to save lives on the ground right now. But I think the details as they roll out are going to be very, very difficult. And, I would just point out that Israeli activists have recently put down a picture in front of the U.S. Embassy in Israel of Netanyahu with a Pinocchio nose sticking it into Trump's eyes, saying, "Don't be fooled again." And I think that pretty much says it all. I mean, Netanyahu is really a political animal. He's a survivor. And so he might agree to many, many points, but then say, but. And I think everything has to do with that but. So we could very well see a continuation of this war, but along other lines.
Well, another important meeting that happened last week in New York, we know that President Trump met with leaders of Arab nations, including Egypt, Qatar, Turkey, Saudi Arabia, and Pakistan on the sidelines of the United Nations General Assembly. Natasha, how should we be looking at those countries in the region and what sort of role they play here when it comes to the future of the conflict and getting any sort of deal done?
I mean, they have tried to play a larger role in setting forth some kind of peace process or plan or redevelopment plan. And I think that the recent Israeli strike on Doha was really a red line for especially the GCC countries, the oil-rich Gulf countries in the region that are U.S. partners, because they saw this strike ultimately as a threat to their own security. And a threat to their relationship with the United States. And we saw this with this unprecedented security pact between Pakistan and Saudi Arabia recently, which was really, I think, ultimately not a warning necessarily, but showing the United States that there are other players in the world that they will have to seek alliances with if the U.S. cannot be counted on.
Interesting to see reporting last week, not to diverge too far from the path that is being discussed in this meeting, Natasha, but reporting by the Washington Post that Iran, for some years now, has been digging and tunneling into a much deeper facility than we even saw at Fordo, near the area that we bombed at Natanz. The idea that Iran could, in fact, be continuing to develop a nuclear weapons program is something that President Trump said he would act on if told about it, that there could be further strikes in Iran. How would that play into what we're talking about today?
Yeah, I mean, I wouldn't doubt that Iran continues to have a desire to have some kind of nuclear program here, and that the destruction that we saw earlier this year is not the end of this issue. But what's interesting, if you connect it to what's happening right now with this 21-point plan that Trump is proposing, is when I was talking to diplomats earlier about what Netanyahu might do. What we've seen in the past when there's been ceasefire deals or potential peace agreements on display, he distracts through another strike somewhere in the region. So I think that's what we could potentially see again. With Netanyahu talking to Trump about the need to deal with this threat that you just mentioned about Iran digging tunnels even further in.
And sticking with sort of the regional picture here, Axios had reported earlier that Netanyahu called Qatari officials to discuss the strike that we saw earlier this month in Doha against senior Hamas leadership. I'm wondering what you make of that dynamic, since we know that the Qataris have been a big force here when it comes to mediating in the peace talks.
I mean, it's hard to understate how unprecedented this strike was. Qatar has been used for many, many years now as a neutral place for mediation with the Iranians, with Hamas, etc. And so I think that the fact that, the Israelis hit Doha, actually killed a Qatari as well in the process, was really enraging for the Qataris. And so this phone call had to take place. One of those points in that 21-point plan is actually an agreement that Israel will not strike Qatar ever again. Very, very specific there, very intentional. And I think that the reason for that is the U.S. needs to show that it will ultimately protect its GCC partners and, of course, mediation and discussions that continue to happen in Qatar.
Spending time with Natasha Hall from CSIS on Bloomberg TV and radio as we wait for the news conference, the bilateral news conference, to get underway at the White House with President Trump and Benjamin Netanyahu. To what extent do you expect the indulgence of questions here from the media, Natasha? President Trump most recently held a summit with Vladimir Putin. Not one question was taken in what was billed as a news conference. Will it depend on the outcome of their talks?
I mean, I think it could depend on the outcome of their talks, but we've seen, as you well know and pointed out, that President Trump continues to call on more right-leaning, favorable news outlets during these press conferences. And no doubt that will happen again, since this will be probably one of the more contentious press conferences, depending on how things went during these discussions. But again, I think that, President Trump is excellent at optics. Prime Minister Netanyahu, like I said, is a political animal. And so I think that they will be able to circumvent a lot of the more thorny questions. But we will see, because, again, Prime Minister Netanyahu was extremely defiant about not ending the war just last week. So it is going to be very difficult for him to speak both to Israelis, to hostage families, to the U.S. domestic audience, but also his far-right coalition, who not only don't want an end to this war, they want annexation of the West Bank and of Gaza. So it is going to be a very, very interesting press conference to watch. We all have to hope for an end to this war, but it'll be very interesting to see how they handle the optics of this.
Well, Natasha, Joe asked if this press conference is going to be influenced by what happens behind closed doors. I'm wondering, what happens if diplomacy collapses today? Is that on the table here? What sort of mechanism is there to prevent that? What should we be looking forward as we look ahead to what is going to happen after those closed doors open?
Right. I mean, I think too often we look at the situation as a zero-sum game, that either there's going to be an agreement overall to a peace plan, or there's going to be nothing at all. I think what we've seen instead is this war kind of just dragging along. There being intermittent ceasefires, there being intermittent agreements. We keep hearing about how the plan is in the offing at any point in time, and then nothing seems to bear fruit over the course of days or weeks. And again, I think that both of these politicians are excellent at talking about, positively about some kind of agreement. But again, the devil is in the details in the days to follow. And there is very little patience on the part of President Trump to sort of deal with those details. And I think not just Prime Minister Netanyahu, but other world leaders recognize that, which is why you've seen so many deals, but then everything falls apart in the implementation, from Gaza to tariff deals. And so I think that, this press conference will be interesting to see how it plays out in terms of full agreement to this plan. But again, I think what we'll really would be watching in the days and weeks ahead is how things are actually implemented and what actually happens on the ground.
We'll be very curious to see what this meeting in New York led to. Natasha, thank you so much for being with us. Natasha Hall, CSIS, an expert in her field and a recurring voice on this program to our benefit, non-resident senior associate at the Center for Strategic and International Studies. I'm Joe Matthew alongside Tyler Kendall here in Washington, where the news conference could get underway at any moment, though we understand from our reporters in the State Dining Room that things have apparently been delayed a bit, which would suggest that this conversation, Tyler, taking place behind closed doors, is not close to being finished.
Right, absolutely. Crucial talks happening right now at the White House. Will be interesting to see who ends up in the room for this press conference. Which of President Trump's advisors, as we know that Special Envoy Steve Witkoff, his son-in-law Jared Kushner, have really been leading these talks. And we're reminded that yesterday marks 1 week until October 7th, and 2 years since that horrific day and the start of the war.
Very remarkable to think about. We've got our panel with us as well. Rick Davis and Jeannie Shanzena will weigh in as we walk up to the news conference at the White House. We'll bring that to you live and unfiltered here on Bloomberg, as you would expect, as soon as it begins. Alongside Tyler Kendall, I'm Joe Matthew. This is Bloomberg.
It's 1:40 on Wall Street. I'm Alexis Christoforous, and stocks are mixed as Wall Street braces for a possible U.S. government shutdown. The White House is doubling down on warnings that thousands of federal government jobs could be on the line if the government shuts down at midnight Tuesday. The Dow Jones Industrial Average giving back 58 points. The S&P 500 up about 8. We've got the NASDAQ Composite now rallying about 100 points. Gold, another record day there at $38.27 an ounce. And West Texas Intermediate crude down 4% now at $63.09 a barrel. AI chip darling NVIDIA higher by 2% after skepticism around the AI trade put some pressure on the broader market last week. Oracle is attempting a bounce back. It's down, though, 0.2%. Speaking of down, shares of Carnival off 4.6% despite the cruise line posting its 10th consecutive quarter of record revenues in what CEO Josh Weinstein called a phenomenal quarter. Carnival also raising its outlook for the year, citing strong travel demand and higher spending. And Peloton is preparing to roll out refreshed hardware and a software overhaul for its bikes and treadmills that includes artificial intelligence for personalization. Wall Street, though, not too impressed. We've got shares of Peloton down about 3.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash.
Alexis, thanks for being with us, as always, on Balance of Power. I'm Joe Matthew alongside Tyler Kendall in Washington, D.C., where we're standing by for a news conference that was scheduled to begin just about a half hour ago, and it has been delayed as President Trump and Prime Minister Benjamin Netanyahu meet behind closed doors on a possible ceasefire. And, of course, it's one that has not come easily, which is why this news conference is not starting on time. We've got a couple of empty rows in the front of the state dining room here where administration officials would tend to be sitting, though the room is set with, and full of reporters, I should note, with two podiums, the American and Israeli flags put together here. As soon as it begins, we'll bring it to you live here on Bloomberg TV and radio. There's a live view of the room as reporters do their thing, waiting for this to begin when we don't know. But we do have our panel together and curious to hear the thoughts of Rick Davis and Jeannie Shanzano on what is about to happen here and what is being discussed behind closed doors. Both Bloomberg Politics contributors. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Rick is partner at Stone Court Capital. Rick, we'll start with you this time and what you expect to hear from these two. Will this be an announcement of a ceasefire or something more nuanced?
You know, I'd say at a minimum, announcement of a process to get to a ceasefire. This kind of, showed up post-UN speech by Donald Trump and is an initiative to, try and take another crack at what was a really bad week for Prime Minister Netanyahu in New York. And so whether or not this turns into something that could actually become a ceasefire is too soon to tell, but I would be shocked that it is a full-on endorsement of a ceasefire by the Prime Minister. The Prime Minister has been particularly good, not just with this president, but past presidents, of getting right up to the edge in these announcements, milking the moment in the Oval Office for his own gain, and then going home and finding ways to undermine the agreements that may or may not have actually been made. My guess is everyone's wise to that in the Trump administration and are working very diligently throughout the weekend and today to try and get some kind of an ironclad agreement. Whether they're able to accomplish that or not is yet to be seen. Maybe we'll hear about it this afternoon. But I would say, reminder, 3 o'clock, bicameral, bipartisan meeting in the Oval Office. The clock's ticking. These things can't all happen at the same time.
Right. It does seem like those congressional lawmakers might be a little bit delayed when it comes to their meeting at the White House later today. But, Jeannie, I want to ask you about the political dynamic between President Trump and Israeli Prime Minister Benjamin Netanyahu. This is the fourth meeting between the two leaders since President Trump took office back in January. What is that calculus that they are making as they head into that press conference later today?
Yeah, I think, the reality is that Benjamin Netanyahu, to Rick's point, had a very bad week last week talking to an almost empty room at the UN. He has expressed an awful lot of concern about U.S. domestic politics even to the point where some in the White House have wondered why he is so concerned. He had a meeting last week talking to conservative online folks, and he has had a falling out with Tucker Carlson, all of which seems to be weighing on him very heavily. And Donald Trump remains really one of his only allies in the world at this point. So Donald Trump has leverage here. The question's going to be, is he going to use it? And the reality is this 21-point plan, I think Netanyahu's going to signal interest, to Rick's point, maybe talk about moving forward, but I can't imagine he signs on to this thing the way it is written, because it leaves opening for things that Netanyahu said he would never agree to, like a potential opening for a Palestinian state or a potential for Hamas not to openly surrender. All of these things are things he has said before, even last week, are non-starters. So I think he's going to try to thread the needle here. I think the bigger question is, does Donald Trump, does Steve Witkoff, does Jared Kushner get so frustrated with these negotiations that they just express that frustration? And I think Donald Trump has done that in the past. I don't think he'd do it in a press conference with the Israeli prime minister, but you never know with Donald Trump.
You never know, which is why we're going to be watching and listening very closely. The president did say to reporters over the weekend that there would be no Israeli annexation of the West Bank, which is one of the 21 points in this plan. Let's listen to the press secretary. She was just talking about this, Caroline Levitt, about what is inside this proposal. Listen.
The president knows and believes that this is as good of a plan as these sides are going to see. And that's why it's 21 points. It's very detailed. It's comprehensive. The president has been working tirelessly on this. He speaks to, Prime Minister Netanyahu all of the time, of course. He's in constant correspondence. But he's also taken a lot of time to speak with our Arab partners and allies in the Middle East. He met with them at UNGA in New York City last week to hear them out. We've obviously had direct and indirect conversations with Hamas as well. And ultimately, the president knows when you get to a good deal, both sides are going to leave a little bit unhappy.
Okay, Rick, it doesn't sound like they're lowering expectations, though, ahead of this exercise. How much pressure is there on Benjamin Netanyahu to take what he is being served?
Well, I think there's enormous pressure on the prime minister right now, not only from the Gulf countries that the press secretary mentioned were meeting with the president during the UN General Assembly, who have had it with this conflict, whether it's Qatar, who's tired of having its sovereignty violated for what reason? By hosting negotiations for a ceasefire and a cessation of hostilities, and the others, many of whom have Abraham Accords in place with Israel, are unhappy with the backfire that they're getting at home for having those relationships. And I would say, too, in speaking to my colleagues in Israel, they talk about the fact that many of these young IDF soldiers are basically the equivalent of our National Guard. They've been called up and are serving for over 300 days in uniform in combat situations. That is extraordinarily painful for the families of those individuals serving. And so I know that there's an enormous amount of internal pressure, both from those families and the hostage families, for Bibi Netanyahu to cut a deal. And maybe it's time he's going to hear those voices and actually try and come to the table earnestly.
Well, as Rick is mentioning, the Gulf countries in his earlier answer there, we are getting some breaking news on the terminal. The White House releasing a readout of a call between President Trump, the Israeli Prime Minister Benjamin Netanyahu, and also Qatari officials. I pulled this line for us here. It says that the leaders accepted the president's proposal to establish a trilateral mechanism to enhance coordination between these three countries. Jeannie, I'd just love your thoughts about the analysis here when it comes to how you're thinking about these other regional countries in the region, how they're playing into this broader picture as we try to push towards peace.
Yeah, I mean, they are a critical component of this. And there's a lot of reporting, and you yourself have done it, that, President Trump was either surprised surprised or told very late about the hit in Qatar, and that frustrated him enormously. And so these countries have a role to play. I think one of the questions to be asked about this, when we're talking about President Trump drawing a red line as it pertains to the West Bank, if Israel agrees and then they go into the West Bank, what is the United States prepared to do about that? Number one, that has been an overarching question amongst many of these regional partners. Would the U.S. actually ever confront Israel in a concerted way if they were to violate these agreements? And so that remains an open question. And you look at this 21-point plan, and it's talking about things like an immediate release of these 48 hostages, dead or alive. And of course, we all hope that happens. It should have happened a long time ago. But these negotiations are between the United States and Israel. They don't involve Hamas at this point at all. And there seems to be this assumption, even with these regional states, that Hamas will swallow this. And it's not clear when you talk to people over there if that is the case. So I think there is a long way to go, and I think Trump is right to talk to these partners. He is right to have these phone calls that involve this large grouping. But the reality is that the president has to express that he is willing to stand up to Israel should they balk at any of these points. And we haven't seen that in U.S. history to date. And so that's going to be a big question.
Progressives, of course, in Congress see it a little bit differently, Jeannie. The Congressional Progressive Caucus, that's what, about 100 members, has actually voted to endorse the legislation, the Block the Bombs Act. And I wonder today, if there's no resolution, if we're maybe even further away from a ceasefire by the time this ends, will the calls to block weapon shipments to Israel grow louder here in Washington?
I think they could. So far, historically, they haven't been strong enough to get close. But, as we are looking at 66,000 people in the Gaza Strip dead in the last 2 years, and of course, people in Israel who were victimized by October 7th, those calls may grow indeed bigger. And I think we saw world public opinion shift on this. And it was very, very clear when Benjamin Netanyahu spoke to that almost empty UN galley late last week. So public opinion has shifted here in the U.S. like it has abroad.
And Rick, you had mentioned this earlier. President Trump has another high-stakes meeting scheduled later today with congressional leaders. I'm wondering if we should expect what happens in the room today with the Israeli Prime Minister Benjamin Netanyahu to influence what we see later when he meets with those congressional leaders on the future of funding the government.
I don't know how many of them are connected, although it's certainly going to affect his mood. And we've seen Donald Trump's mood when he's in a good mood with leaders and jovial and charming. And when he's in a bad mood, he can be downright devastating. And so I think if he can come out with something that puts him in a good mood, and I don't mean this to be, too soft and fuzzy. It's not my style. But the reality is it's going to matter today. 1 hour from now, we're going to know how he's feeling about the congressional delegation. And of course, his primary whipping boy, Chuck Schumer, sitting just a few feet from him, could either have a really good outcome today or, be exposed to some really tough stuff like one of his colleagues, Nancy Pelosi, used to get in the Oval Office.
Well, it's an interesting prospect, Jeannie. Donald Trump has never met with Hakeem Jeffries. And Chuck Schumer, who Rick just mentioned, the president now openly refers to as a Palestinian. We've only got about a minute left. Is Tyler onto something here?
Oh, I think she absolutely is. And I keep privately saying if one of them shows up with a burnt orange coat today and sunglasses, I think you remember that was Nancy Pelosi's outfit for that 2018 meeting. And she put it on and she donned the sunglasses and it was quite the meeting. So, I think on the heels of this with Netanyahu, they're going to have to hope he's in a good mood. But to your earlier conversation with Representative, there's not a lot of optimism about it. But yeah, watch for the burnt orange coat. Somebody's got to be wearing it.
Boy, we're reading tea leaves now. But this is what happens when a news conference doesn't start for an hour. When it does begin, you'll hear it and see it on Bloomberg TV and radio. We're going to hand things over in a moment to Bloomberg Business Week Daily, but big thanks to our great panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. They'll meet us on the late edition of Balance of Power as well. We're going to know a lot more by then. In fact, Tyler, the congressional leaders could be at the sticks, as they say, at the stakeout location in the driveway. They'll let us know what happened.
Right, exactly. Might happen around 5 p.m. Eastern when you and I are back on air. Because, of course, Washington loves nothing more than a deadline.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Streaming across Bloomberg platforms, live on TV and radio, and of course on YouTube. This is Bloomberg Business Week for a very, very busy Monday. We are getting ready to wrap up the third quarter. Just one more trading day. We've got our eyes, though, big time on the nation's capital today, Tim.
Yeah, we're waiting a press conference set to start imminently from the White House. Prime Minister Benjamin Netanyahu, along with President Trump. That was actually set for a little less than an hour ago, but about an hour ago. So we are awaiting these two. We will bring you that press conference live, Carol, as it begins.
Some say it's a sign of these difficult talks of trying to figure out how to put an end to the war between Israel and Hamas. All right, having said that, we've got a lot going on this week when it comes to the U.S. economy, on the future of Gaza, and on a possible government shutdown. So all of that ahead this hour, including we're going to take a look at President Trump, a key figure in his administration, in a possible government budget impasse and what it may mean for the power of the federal purse.
Also, the race for space telecom with the president of AST Space Mobile. That's coming up a little later in our program.
All right, we've got stocks hovering near their lows of this session. Bit of a mixed market here on this Monday. A lot coming at investors throughout the week. Let's get a check on it. In for Charlie Pellet is Alexis Christoforous. She joins us now. Hey, Alexis.
Hey, Carol, thanks very much. Yeah, the market keeping its eye on this possible government shutdown. As you said, stocks are mixed right now. Tech stocks, though, continue to be the stars. So let's break it down. The Dow Industrials down about 23 points. We've got the S&P 500 up 11, but the NASDAQ Composite rallying 105. Yields coming under a little pressure. The 10-year yield 4.13%, 2-year at 3.62%. Another record day for gold. It is now trading at around $38.30 an ounce. In stock news, Electronic Arts rallying more than 4.5% after the video game maker agreed to the largest leveraged buyout of all time, selling to a group of private investors led by Silver Lake and Saudi Arabia's Public Investment Fund. Also want to shine a spotlight on NVIDIA. We know it had a tough go of it last week. The stock bouncing back, though, today. It is up now better than 2% as the AI trade seems to be back on. And Lufthansa planning to cut 4,000 jobs by 2030 to improve profitability. This is the largest round of job cuts at the company, at Europe's largest airline since the pandemic. Lufthansa says the majority of those cuts will be occurring in Germany. Checking ADRs traded here in the U.S. of Lufthansa, they are just about flat. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Carol and Tim.
All right, Alexis, thank you so much. Well, as we mentioned, a lot coming at investors this week. We're going to keep a watch on the White House as we do expect President Trump and Prime Minister Benjamin Netanyahu to make some comments. So as soon as they begin speaking, we'll take you there live. In the meantime, it's a big week for the U.S. economy, folks, because we've got the monthly jobs report on the docket. Or is it? Because maybe not, Tim.
As a shutdown of the U.S. government could stop economic releases and make for a foggy U.S. economy, and perhaps one that's even foggier, which may just make all of our jobs trickier. Fortunately, we've got Stuart Paul with us. He's Bloomberg Economist, U.S. and Canada economist. He joins us here in the studio. They will suspend all operations, that's a quote, the U.S. Bureau of Labor Statistics, and cease all active data collection activity should the federal government shut down. What does that mean for you? What does that mean for us?
Well, it makes for a lighter work schedule for me, less data to react to and less data to forecast. What's interesting is that in the absence of this federal data, all eyes are going to be on the data sets that we're not getting from the BLS. So the ADP data, for example, carries all the more importance because we're not getting it from the federal government, we're getting it from ADP. If that's the insight that we have into the labor market, if that's the data that's available to the Fed to make their decisions, we're going to need to rely on those alternative data sets. But what does it mean for me from an economic perspective? What do we know about government shutdowns more broadly? Well, for each week that the government is shut down, that typically shaves off about a 0.25 percentage point from the annualized pace of GDP growth during the quarter. So if we're shut down for 4 weeks, that shaves off a full percentage point from fourth quarter growth. There's a rebound effect in the subsequent quarter, typically. What's a little bit tricky is that this is happening right at the beginning of the fourth quarter. So if we were to have a 3-week shutdown, which is about the longest shutdown we've ever seen, we would still have plenty of time in the fourth quarter to make up those losses. and it could just end up being a wash when we finally do get data releases when everybody returns to work.
All right, so if it's a short shutdown, if it's 3 weeks, well, we're going to kind of be okay. We're just going to kind of figure our way through.
That's right. Yeah, I think that everything's going to be okay. I think that folks who are furloughed are going to go to the all-day happy hours around DuPont Circle. I think that it's going to be tense negotiations, but I do want to keep in mind that a 3-week shutdown is a pretty long shutdown. In the context of the quarter, though, it's not that big of a deal. What is a little bit tricky is that the Fed would be, in a sense, driving blind because it doesn't have the official statistics that it really prefers to use and the data that it likes to refer to for communications policy, right? It's always referring to its preferred inflation gauge, the core PCE measure. It's always referring to the unemployment rate to talk about the balance of labor supply and labor demand. If we don't have those statistics, official communications becomes difficult. But in terms of actual economic activity, in terms of actually knowing where we are within the business cycle, for example, even a 3-week shutdown is relatively brief.
Is the Bureau of Labor Statistics, the Labor Department, or Commerce, I'm thinking about the data that goes into all of the monthly jobs reports, are they at risk of losing employees, though, in a government shutdown? There is some concern that if there is a shutdown, it kind of emboldens the executive branch to maybe make more cuts, mass firings. There's certainly been some warnings along that line.
Yeah, so it's definitely possible. The Department of Labor has about 13,000 employees on its payrolls. In the event of a shutdown, that ends up getting pared back to about 3,000 employees, only one of whom, according to the Department of Labor's contingency plan, only one of those employees would remain at work in the Bureau of Labor Statistics.
Wow.
So in terms of data collection, it's going to be a major problem. We could end up seeing some pretty choppy labor surveys, especially for October if the shutdown continues through the reference week, the week containing the 12th of the month. Could be very choppy. And if we were to see, as Carol said, en masse firings, as President Trump has threatened, that would materially result in a reduction in the number of folks on government payrolls and perhaps an increase in the unemployment rate up to 4.5%.
But what about, can I just, to follow, but if we lose people at the Labor Department, I mean, in terms of the data collection, like that's at risk too?
Absolutely. So it's really going to be a matter of what data collection looks like through the reference week and as many issues as we've had with data quality and estimating nationwide aggregates from the surveys that are sent out every month. It's going to be problematic, and we're likely going to end up seeing, again, revisions that have been so frustrating.
You know, it's funny. Sometimes the ADP report is similar to what we get from the BLS. Sometimes it's not. Sometimes people say, don't pay attention to it. Sometimes they say, do pay attention to it. Why is that? I mean, there's no clear indication that this source of alternative data is one we should read into.
Well, so ADP, of course, reads from actual payrolls for the firms that are using ADP for payroll processing. The Bureau of Labor Statistics asks companies how many people are on their payrolls. So there are different methodologies for collecting the data. You also have a selection problem. Which are the firms that are going to be using ADP? They might be larger firms that have the budget to do back office instead of having just one person who's responding to surveys, for example. So we have different methodology and collection issues there. But one thing that I would point out is that if you look at private non-farm payrolls as measured by the Bureau of Labor Statistics after adjusting for all the revisions, it looks much more similar to ADP than it did before the revisions going back several months. So we are getting more of a coherent narrative across the two data sets. And the bottom line is, look, if we don't have the Bureau of Labor Statistics data at our fingertips, we're going to look at what we have, which would be ADP.
What about if we have Lisa Cook ultimately gets fired from her job? And that's another thing we're keeping an eye on this week. That's a bigger deal.
That would be a bigger deal because, again, it's just the politicization of monetary policy. Matters less for the collection of data, knowing where we are in the business cycle, even though it would be one fewer person on government payrolls. But that's a different sort of firing than we're thinking about when we talk about government furloughs. Yeah.
Is there a chance that if we don't get numbers this week for September, payrolls report is what I'm talking about, and the government is shut down for a month, we never see those September numbers? Or is it a bigger chance that we never see October numbers because the data collection for October, the numbers that we'll get in November, that data collection could occur when the government is closed?
We would get the data when furloughed workers come back to the office. So data that are put on hold or data that are data releases that are just not released during the furlough window, during the lapse, as it's called in the contingency plan, would end up being released at a later date. The data collection issues, it's very difficult to make those up. You move out of the survey window, you move on with your life and start collecting the November data. So just the data quality for the October release would be more problematic.
All right, we're talking with StartupPal, U.S. and Canada economist for Bloomberg Economics here in our Bloomberg studio at Bloomberg headquarters. In the meantime, both Tim and I, with one eye on what's going on in the nation's capital, we are expecting President Trump and Israel's Prime Minister, Benjamin Netanyahu, to step up to the podiums. There are two already set, as you who are watching on TV and YouTube, those on radio. There are two podiums. No one has stepped up yet, but we do see reporters and other officials mulling around, sitting down as they await those leaders to enter. The two have been meeting, holding bilateral talks. We also have on the Bloomberg a story that crossed just before we came on air that President Trump, Israel's Prime Minister Netanyahu, and Qatar's Prime Minister discussing a proposal for ending the war in Gaza in a trilateral phone call. That's according to a statement posted by the White House.
I'm looking at a press release, too, coming from the White House. The White House has put out its 20-point plan. It was called a comprehensive plan to end the Gaza conflict. I'm not going to read the whole thing, but the proposal says that within 72 hours of Israel publicly accepting this agreement, all hostages, alive and deceased, will be returned. Once all hostages are released, Israel will release 250 life sentence prisoners plus 1,700 Gazans who were detained after October 7th, 2023, including all women and children detained in that context. Carol, the first point on this is Gaza will be a de-radicalized, terror-free zone that does not pose a threat to its neighbors, and it will be redeveloped for the benefit of the people of Gaza who have suffered more than enough. Once again, just a few of the 20 points that the White House has released for its comprehensive plan. That's what it calls it, to end the Gaza conflict.
As we wait to go to D.C., our thanks to StartupPal, as we said, of our Bloomberg Economics team. Right now, we want to go to another member of the Bloomberg News team, Bloomberg News Middle East Geoeconomics lead, Dina Esfandiari. She is joining us from Switzerland. Dina, we're starting to get some details on this 20-point plan. What's your read on the news flow as we get it? And we were waiting, of course, these leaders to speak.
Of course. Look, I think if the plan gets accepted, it's a good first start. But really, it's an uphill battle from there because you would need Hamas to buy into it. Remember that this was only President Trump's effort to sell it to Prime Minister Netanyahu. Then they're going to have to sell it to Hamas and get them on board, although they've got some echoes that might work from the Arab states who saw the plan last week at UNGA, at the UN General Assembly. And then, of course, you'd have to implement it. And the implementation at the beginning is going to go very quickly with the release of those hostages in, I think, 72 hours is what you mentioned earlier. And of course, you're going to have a drawdown of the Israeli presence in Gaza. And I think that's going to be a real sticking point down the line.
What does it mean that Gaza will be redeveloped for the benefit of the people of Gaza who have suffered more than enough? This is the second point in that 20-point plan that was released by the White House.
Well, that's a good question. It's very vague. It's very unclear. For now, we have some brief commitments on the part of some Arab states and the Europeans to provide some funding for the rebuilding of Gaza. But the main issue that you're going to have there is that you're not going to want to rebuild Gaza just for it to get destroyed 2 months, 6 months, 1 year down the line. So you're going to have to make sure that the ceasefire really sticks before people start pouring money into rebuilding the Strip.
What makes it stick, and what's the U.S.'s role in making it stick?
Well, again, that's a very good question. I think the Americans are the only one that have enough influence to pull the levers to ensure that Israel sticks to its end of the bargain. And a couple of the Arab states are going to be the ones to make sure that Hamas sticks to its end of the bargain. But for Hamas, once you have this promise of Israeli drawdown from the Strip and a semblance of Palestinian governance set up for the Strip, then they will have an incentive to stick to it. They may release the hostages, and you may start to get the beginnings of a ceasefire that actually sticks. But like I said, there are so many hurdles down the line that I'm not very optimistic.
Well, but there are different things, and I'm not sure if it's a hurdle. Do you call this a hurdle that Israel's Prime Minister Netanyahu called Qatar's Prime Minister to apologize for that missile strike that targeted Hamas figures in Doha? We saw that Israeli jet strike on a residential compound in the Qatari capital, killing 5 Hamas officials and a security guard, and that did set back talks to end the war in Gaza. That apology, is that a significant hurdle?
Well, that's definitely a hurdle that was overcome, and that's definitely good news. It shows that President Trump was willing to use a little bit of muscle in order to ensure that Netanyahu apologized. Now, of course, that doesn't erase what happened. There were several red lines that were crossed on that day, but it definitely goes some way towards reassuring the Gulf Arab states, reassuring Qatar that this kind of thing won't happen again.
Dina, I'm looking through this 20-point plan that was released as we're speaking, because we're just getting some details now. The 9th point is that Gaza will be governed under the temporary transitional governance of a technocratic, apolitical Palestinian committee responsible for delivering the day-to-day running of public services and municipalities for the people in Gaza. It will be made up of qualified Palestinian and international experts, and there will be a board of peace which will be headed and chaired by President Donald J. Trump, with other members and heads of state to be announced, including Prime Minister Tony Blair. In your view, in your analysis, what are the chances that they would agree to this?
It's possible that Hamas will agree to it. What becomes more difficult again is the very implementation of that cause. I think there's a lot of goodwill that goes into putting these things down on paper. I think the Trump administration does want to resolve this crisis. The Arab states do want to put in place a framework for resolving this crisis and at least maintaining the ceasefire once it's been agreed to. But the problem is the Palestinian political space has been one that's just fraught with problems, fraught with corruption, with the ineffectiveness of the Palestinian Authority. And so all of these things, again, are going to be impediments to the implementation of this. Yes, we have former Prime Minister Tony Blair, who's indicated that he's willing to help chair this committee, to bring everybody together to do it. But goodwill in the actual implementation is not the same.
So what's interesting too is, and I'm not sure, I'm reading through this kind of quickly, I don't see anything, and Tim, correct me if you've seen this, about the creation of a Palestinian state, which we have seen, something like 140 global leaders in support of. I also am reading number 12 of this 20-point plan, no one will be forced to leave Gaza. Does that mean that there will continue to be Israeli settlements in Gaza?
So the main issue that you're going to have is that President Trump has said that they want to stop Israeli annexation and settlement activity and in Gaza, in the West Bank especially, but just generally. That's going to be a problem for the Israeli Prime Minister, given some of the backing of the hardline ministers that he has domestically. And I'm not sure they've managed to square that circle. What comes next? So he agrees to that, but his ministers are not on board because they've made it very clear that actually in the West Bank, settlements in Gaza, is exactly what's going to follow. They believe in Israeli governance in a place like Gaza. And of course, that's a problem for the Palestinians.
Dina, who are the leaders that the U.S. and Israel need to negotiate with on behalf of Hamas, given that Israel said it has wanted to take out the leaders of Hamas? Who are the people left that will negotiate this?
Well, you've had that close and small circle of Hamas negotiators increasingly shrink. Each of their political leadership has been targeted in the past. Now, in the attacks on Doha, they weren't able to get anybody high level, just some lower level Hamas officials. So the current negotiating team remains intact, as it were. And it will be down to the Qataris and the Egyptians to pass on those messages once Prime Minister Netanyahu has agreed to the deal to Hamas, to pass the deal to Hamas and coax them into joining onto it.
So specifically, who speaks for Palestine? Is it Mahmoud Abbas, president of the Palestinian National Authority? And just curious too, Dina, with which body will this deal be presented in which Hamas has no future as an organization?
So again, you raise a major issue there. They are negotiating with Hamas. Hamas would have to concede that it would put down its weapons. It would have to concede that it wouldn't have a role in the future of the Palestinian state. And who are we left with? You mentioned the Palestinian Authority, Mahmoud Abbas. Yes, he would be one person, but he's not well liked. Again, his government and those that are around him are known for being ineffective, for being corrupt. And so you would have to look for new leaders within the Palestinian political system. There are several that you can turn to, but for those that are the most popular, they're either in Israeli jails or not ready to run at the moment. So you find yourself at a really difficult point where you don't really have political leaders that you can turn to.
And I should point out number 16 of this 20-point plan that has been put out, and this is, again, I believe, coming from the White House, President Trump's comprehensive plan to end the Gaza conflict. This as we await President Trump and Prime Minister Netanyahu expected to make some comments from the White House. We're monitoring that. But there is a note that I just lost it. Israel will not occupy or annex Gaza. So it does look like that they will be pulling out completely. But again, we're going to get some more color and commentary and specifics as soon as we hear from these leaders.
But Dina, can you imagine a world, to Carol's point, in which the Israeli Defense Forces, in which the IDF does not occupy or annex Gaza, and the Israeli government would be comfortable with that after what happened 2 years ago?
Can I imagine a world? Yes, but I think that would be a world in which the Trump administration or whatever U.S. administration is in place would really have to use a significant amount of muscle, would have to leverage their influence over the Israelis to secure that Israeli buy-in for something like that. At the moment, I don't see that playing out, and we'll see what happens at the press conference shortly. Maybe Trump did, but up until now, he certainly hasn't displayed the will to use enough muscle to get Israel to the table in a manner that would, ensure that a ceasefire like this stuck.
So what is that leverage that the U.S. has over Israel? What power does the U.S. have to say, okay, well, this is what we're pushing for. We need you, Israel, to follow these rules. What would the U.S. do?
Well, the two countries, Israel is a major ally of the U.S.'s. It depends on American funding. It depends on American weapons. Even fighting this war in Gaza is highly dependent on U.S. weapons and military assistance. Its ability to defend itself against Hamas, importantly against Hamas supporters like Iran, for example, that's also dependent on the United States. So the U.S. would be able to leverage things like funding, things like military assistance, in order to really ensure that the Israelis buy into such a project. But that would create a lot of problems domestically for Netanyahu and for some of the hardline elements of his government.
I do want to point out, and Sebastian Escobar, thank you so much, one of our producers here, pointing out number 19 of the 20-point plan that has come down from the White House. And President Trump says specifically, while Gaza redevelopment advances and when the PA reform program is faithfully carried out, the conditions may finally be in place for a credible pathway to Palestinian self-determination and statehood, which we recognize as the aspiration of the Palestinian people. One thing I want to ask you, Dina, both leaders, President Trump, Prime Minister Netanyahu, understand the optics of what they say and do here. Just different constituents, if you will, in all of this globally. One of the things I was listening to our Balance of Power team, Joe Matthew and Tyler Kendall, is one of their observers saying that it's a few weeks away from the Nobel Peace Prize being announced. Is that a factor? We know that President Trump would certainly like to be nominated and actually get a Nobel Peace Prize.
Of course, that's a factor. What's also another one is that President Trump has campaigned on the promise to end forever wars. And this has been a war that's been raging on for many decades now, obviously intensified in the last 2 years. It doesn't help American reputation and of course, by extension, Israel's reputation in the region. It's just draining his administration's bandwidth and time and resources. And it's difficult for him to turn around and say he's a president of peace while this war rages on. So it's absolutely critical for the Trump administration to resolve this crisis.
All right, we're going to leave it there. Dina, thank you so much. Always appreciate your insight. Dina Esfandiari, she is, of course, Bloomberg News Middle East Geoeconomics lead, joining us from Geneva, Switzerland, where it's a little bit later in the evening over there. You're listening and watching Bloomberg Business Week Daily. Carol Master along with Tim Stanovic live here at Bloomberg headquarters in New York City. We are awaiting comments from President Trump and Israeli Prime Minister Benjamin Netanyahu expected from the White House. For those who are watching on YouTube and Bloomberg Originals and Bloomberg TV, you can see certainly two empty podiums, but a pretty busy and stacked room. Folks, reporters and various administration officials there in the room awaiting comments. This after a bilateral meeting and lunch between the two officials. And as a result, we have gotten from the White House and the President, Tim, a comprehensive plan is what it's being called to end the Gaza conflict with 20 points.
Yeah, the White House releasing this 20-point plan just in the last half hour designed to end the war between Israel and Hamas in Gaza following that meeting between President Trump and Israeli Prime Minister Benjamin Netanyahu today. The plan stipulates that the conflict would end immediately if accepted by both Israel and Hamas, and that all hostages and the remains of those who died would be returned within 72 hours. The agreement would also see Israel release close to 2,000 prisoners and stipulates that Israel would not occupy or annex Gaza. The proposal, Carol, also encourages Gaza residents to remain in place, pledges the immediate resumption of aid, and says a, quote, panel of experts would be convened to rebuild and energize the war-torn area with economic development.
So it's really interesting to get the specificity, and it'll be interesting in terms of who has signed on from Hamas. This is crucial. Ceasefire officially, if indeed we get this, and it seems to be laying out all of the specific points, but we are waiting to hear from these two leaders to see whether or not this is finally an end to this war that is just getting ready to enter its third year. So it would be certainly a big deal. And as we heard from our Bloomberg colleague, Dina Esfandiari, that this was certainly a key part of President Trump's campaign, planning to end this war and bring peace certainly between Israel and Hamas. So this would certainly be a key accomplishment if indeed that is what we get when we hear those two leaders step up to the podium.
Certainly a plan is one thing, but it's unclear if Hamas will also sign on to these terms, even as the war nears its 2-year mark. The militant group sparked the war with the October 7th, 2023 attack on Israel, and they said ahead of the Trump-Netanyahu meeting that it has yet to see the plan and would need to study the proposal. I do think it's notable, Carol, that it is Prime Minister Netanyahu and President Trump, but there are other parties who are required to sign on to this that are not present at today's press conference.
No Palestinian leader or someone speaking for the Palestinian people. So we do want to head to the White House, President Trump and Israeli Prime Minister Benjamin Netanyahu.
One of the great days ever in civilization. Things that have been going on for hundreds of years and thousands of years. We're going to, at least we're at a minimum very, very close, and I think we're beyond very close. And I want to thank Bibi for really getting in there and doing a job. We've worked well together, as we have with many other countries, both of us, with many other countries, which is the only way this whole situation gets solved. And I'm not just talking about Gaza. Gaza is one thing, but we're talking about much beyond Gaza. The whole deal, everything getting solved. It's called peace in the Middle East. So today is a historic day for peace, and Prime Minister Netanyahu and I have just concluded an important meeting on many vital issues, including Iran, trade, the expansion of the Abraham Accords, and most importantly, we discussed how to end the war in Gaza, but it's just a part of the bigger picture, which is peace in the Middle East. And let's call it eternal peace in the Middle East. So this is far more than anybody expected, but the level of support that I've had from the nations in the Middle East and surrounding Israel and neighbors of Israel has been incredible. Incredible. Every single one of them. This afternoon, after extensive consultation with our friends and partners throughout the region, I'm formally releasing our principles for peace, which people have really liked, I must say. And these are done, not just routinely done, these are done with in total consideration and working with the nations that we're talking about. All of these nations have made contributions to those suggestions. I want to thank the leaders of many Arab and Muslim nations for their tremendous support in developing the proposal, along with many of our allies in Europe. Europe has been very much involved, and as I was called by many of the European leaders, most of them saying, is this true? Are you really doing peace in the Middle East? This is the most incredible thing we've heard. Some think it's the biggest thing they've ever heard. They called just to find out, was it just a rumor or is it actually done? And then he said, have you spoken to the Arab leaders? Have you spoken to all of the other leaders that we have to get? A lot of people involved in this one. I also want to thank Prime Minister Netanyahu for agreeing to the plan and for trusting that if we work together, we can bring an end to the death and destruction that we've seen for so many years, decades, even centuries, and begin a new chapter of security, peace, and prosperity for the entire region. And I want to just say that my meetings and dialogue that we had with so many countries, Saudi Arabia as an example, the king is a phenomenal person. The Emir of Qatar, he's incredible people. UAE, and that's MBZ and ABZ. We're totally involved. These are the people that we've been dealing with and who've been actually very much involved in this negotiation, giving us ideas, things they can live with, things they can't live with. Pretty complex. I mean, after 2,000, 3,000 years, whatever it is, I guess it's got to be a little complex, or it would have been done a long time ago. The King of Jordan was with us, as you know, in the United Nations. The President of Turkey, President Erdogan, is a friend of mine, a strong man, but a good man. President of Indonesia, somebody who's an amazing leader, Prabowo. He is an amazing leader and respected by everybody. He was in the room with us. We were together with most of these people that I'm mentioning. Others were by phone or the next day. The Prime Minister and the Field Marshal of Pakistan, they were with us right from the beginning. Incredible. In fact, they just put out a statement that they fully believe in this pact. It just came out just as I was walking around. They said, sir, you have a big notice from the Prime Minister of Pakistan and from the Field Marshal that they back this 100%. President El-Sisi of Egypt, who's terrific. And these are people I've gotten to know over the years. I mean, I would say it started around 2015 and then went into 2016 when the presidency officially began. But I've known him actually for a long time, and there are many cases really great men. I can't say in all cases, but I will tell you in many cases they're great men and some great women too. They tend to be mostly men, however, I will say that. But if accepted by Hamas, this proposal calls for the release of all remaining hostages immediately, but in no case more than 72 hours. So the hostages are coming back, and I hate even saying this from the standpoint, doesn't sound right, but it is so important to the parents. The bodies of the young men, I believe in almost all cases, the young men are coming back immediately. I met with parents. The parents felt as strongly about getting the body of their dead boy back as they did as though the boy were alive and well. It's so important to them. And it means the immediate end to the war itself, not just Gaza. It's the war itself. Under the plan, Arab and Muslim countries have committed, and in writing in many cases, but I actually would take their word for it. The people I mentioned, I'd take their word for it, to demilitarize Gaza, and that's quickly. Decommission the military capabilities of Hamas and all other terror organizations. Do that immediately. And we're relying on the countries that I named and others to deal with Hamas. And I'm hearing that Hamas wants to get this done too, and that's a good thing. And destroy all terror infrastructure, including the tunnels, weapons of production facilities. They have a lot of production facilities that we're destroying. They'll also help train local police forces in the areas that we're discussing right now, in particular in and around Gaza, working with the new transitional authority in Gaza. All parties will agree on a timeline for Israeli forces to withdraw in phases. They'll be withdrawing in phases. No more shooting, hopefully, as progress is made toward achieving these goals. Arab and Muslim nations need to be allowed the chance to fulfill the importance of dealing with Hamas. They have to deal with them because they were the one group that we have not dealt with. I haven't dealt with them. But the Arab countries are going to, and Muslim countries are going to be dealing with Hamas, and I believe they've already been there. I think they probably have an understanding, and they haven't maybe mentioned that, but I would imagine they do, otherwise they wouldn't have gone as far as they've gone. If they're unable to do so, then Israel would have the absolute right and actually our full backing, the U.S. full backing. Marco's here, and a lot of our leaders are here, our great Vice President, Susie Wiles, Steve Witkoff, Jared Kushner. They've been so involved in this process. I don't think anybody else could have done it or even come close, but it's we're right there. We're right there. First time in thousands of years, I think you can probably say, if you really look into it, if you study back, if you're a scholar, you would say thousands of years. Israel would have my full backing to finish the job of destroying the threat of Hamas. But I hope that we're going to have a deal for peace. And if Hamas rejects the deal, which is always possible, they're the only one left. Everyone else has accepted it. But I have a feeling that we're going to have a positive answer. But if not, as you know, Bibi, you'd have our full backing to do what you would have to do. Everyone understands that the ultimate result must be the elimination of any danger posed in the region, and that danger is caused by Hamas. The tyranny of terror has to end, and this is, again, something that we're looking for. This is eternity. This is for forever. To ensure the success of this effort, my plan calls for the creation of a new international oversight body, the Board of Peace, we call it, the Board of Peace, sort of a beautiful name, the Board of Peace, which will be headed, not at my request, believe me, I'm very busy, but we have to make sure this works. The leaders of the Arab world and Israel and everybody involved asked me to do this, so it would be headed by a gentleman known as President Donald J. Trump of the United States. That's what I want, is some extra work to do, but it's so important that I'm willing to do it, and we'll do it right, and we're going to put leaders from other countries on, and leaders that are very distinguished leaders, and we'll have a board, and one of the people that wants to be on the board is the UK former Prime Minister, Tony Blair, good man, very good man, and some others, and they'll be named over the next few days, and it'll be quite the board. Working, everybody wants to be on it now. I don't know if that had anything to do. They named me and everybody else wanted to be on it. I guess they figure, well, he's a soft touch. He'll be easy to deal with. Working with the World Bank and others, it will be responsible for recruiting and training a new government that will be made up of Palestinians along with highly qualified experts from all around the world. Hamas and other terrorist factions will play no role in the board, but they'll play no role in the governance of Gaza at all, directly or indirectly. As you know, thousands of Hamas leaders have been killed and soldiers have been killed. And we can never forget October 7th, but thousands of paid the price for that. And now it's time to get our hostages back and get back to trying to build something that's really great and very important. In our meeting today, Prime Minister Netanyahu was very clear about his opposition to a Palestinian state. And he continuously mentions October 7th, and I understand that. Most people do. And I understand and respect his position on many things, but what he's doing today is so good for Israel. I noticed that they have large crowds gathering in Israel all the time, and they have my name up. They like me for whatever reason, Bibi, I don't know, but they do like me. But they say two things. Please get the hostages back and please end the war. They've had it. It's had it. So I think it's a very popular thing you do because he's a warrior. He doesn't know about getting back to a normal way of life, but he is a warrior, and Israel's lucky to have him. But now the people want to get back to peace. They want to get back to normalization in a true sense. Several countries have foolishly recognized the Palestinian state. As you know, some of our European friends, allies, good people, but they're really, I think, doing that because they're very tired of what's going on for so many decades. They've been presidents and prime ministers for years, and during this time, having to do with the Middle East, all they're doing is talking about the same thing over and over. They want to see it get back. And nobody wants that more than me, or I believe Bibi too. But the people of Israel want it. They really want it. They want the hostages back. That includes the probably 32 bodies that we're talking about, 20 people that are living, 32 or so people that are dead, and they want to have peace. So let us not forget how we got here. Hamas was elected by the Palestinian people. Israel withdrew from Gaza thinking they would live in peace. Remember that a long time ago, they withdrew. They said, you take it. This is our contribution to peace. But that didn't work out. That didn't work out. It was the opposite of peace. They pulled away. They let them have it. And I never forgot that because I said, that doesn't sound like a good deal to me. As a real estate person, I mean, they gave up the ocean, right? Ron, they gave up the ocean. They said, who would do this deal? And it still didn't work out. They were very generous, actually. And they gave up the most magnificent piece of land in many ways in the Middle East. And they said, all we want to do now is have peace. And that request was not honored. Instead of building a better life for the Palestinians, Hamas diverted resources to build over 400 miles of tunnels and terror infrastructure, rocket production facilities, and hid their military command posts and launch sites in hospitals, schools, and mosques. So if you went after them, you'd be after them, and you wouldn't even realize you ended up knocking out a hospital or school or a mosque. That terrible thing, terrible way to have to fight. No fight is good, but that's a real bad one. So there are many Palestinians who wish to live in peace. Many. I've seen so many of them. And they have support. And I challenge the Palestinians to take responsibility for their destiny, because that's what we're giving them. We're giving them responsibility for their destiny, fully condemn and prohibit terrorism and earn their way to a brighter future. They don't want the life that they've had. They've had a rough life with Hamas. If the Palestinian Authority does not complete the reforms that I laid out in my vision for peace in 2020, they'll have only themselves to blame. We're giving them an amazing footprint, and they have amazing support from the leaders of the Arab world and the Muslim world, the great leaders. These are great leaders. These are unbelievable leaders that have built great countries and very wealthy countries. What the future holds for the Palestinians, no one really knows, but the plan that we put forward today is focused on ending the war immediately, getting all of our hostages back, getting everything back. Hard to believe when you even say it, and creating conditions for durable Israeli security and Palestinian success. Israeli security is going to be involved. We're going to help you. We'll be there with you in terms of helping with security. We want to make sure it works. We just want to make sure it works. There shouldn't be a shot fired. Now, there will be, I guess, because that's the way it seems to be, but there shouldn't have to be within a few days. There shouldn't have to be a shot fired. and maybe for eternity. Wouldn't that be nice? I hope it's true. I can tell you the leadership of that region feels that there's a good chance of it being true. So this will lead to this agreement that we're talking about will lead to a sustainable long-term peace. No president in history has been a greater friend of the state of Israel than I have, in addition to negotiating the Abraham Accords. I like to say it that way because the real people, that's what they call Abraham. I would say Abraham, but it's so much nicer when you say Abraham. So much more elegant. But the Abraham Accords, they're amazing. Jared, you did that along with your group of geniuses, and nobody thought that could be done. We have 4 countries, and Sleepy Joe Biden didn't do a thing. He didn't even know what the hell they were. He should have had them fold up. But I think this will also lead to packing them. And who knows, maybe even Iran can get in there. I hope, we hope we're going to be able to get along with Iran. I think they're going to be open to it. I really believe that. But they could be a member. I long ago said, I'll bet you at some point Iran will be a member of the Accords. And little did I realize it was going to take this turn. That was some turn we did with the B-2s. But I think they might very well be there because it's a great thing for them economically. I recognize the eternal capital of Israel. I opened the American embassy in Jerusalem. That was something that everyone said would never be done, could never be done. Virtually every president for many, many years, for decades, would campaign on making Jerusalem the capital of Israel. They campaigned on it over and over. Is that right, Steve? Is that right? Everyone, and when they got to it, and I understand why now, because it was so. When I got to office, I campaigned on it too. I said, we're going to make it. And then I'd get calls from the leaders of various countries saying, please don't do it. Please don't do it. It'll end the whole world. Please don't do it. And finally, I just didn't say anything, and I did it. People were calling me before I did it because they heard I was going to do it. And leaders of countries were calling me. And I think it was on a Thursday that I did it. And they'd call me Monday, Tuesday, Wednesday, 3-4 times a day, and I said, tell them I'll call them back on Friday. And I announced it on Thursday, and I called them back, the biggest people in the world, and they said, you've done it. I said, done what? You've made the capital of Israel, Jerusalem, and we wanted to talk yet. I wish you called me a little sooner. Maybe I could have done something about it. So that was a lot easier than getting into an argument, because I knew what they were calling about. And you know what? It turned out to be amazing. Everybody thought it was going to lead to the end of the world, right? The end of the world, Ron, that's what they said. It didn't lead to anything. It just led to something that I promised, and something that was very, very popular for Jewish people and a lot of other people, too. I recognize Israeli sovereignty over the Golan Heights, and I cut taxpayer funding to the corrupt United Nations Relief and Works Agency. And United Nations was interesting because, as you know, a few days ago, they introduced me. Ladies and gentlemen, the President of the United States. I'm looking at my teleprompter, and the thing was dead, stone cold, dead. The thing's up here. I have a long, beautiful speech to make. I'm back 30 feet back, and I'm saying, they're introducing me. There's nothing on my teleprompter. So, but I made a speech. I actually got good marks. You think Biden could have done that? I don't think so. I don't think he could have done that. I don't think too many people could have done it. But actually, it was actually more of a speech from my heart, if you want to know the truth. I think it was maybe better in certain ways because it was from the heart. It has to be from the heart. Otherwise, you're in big trouble. But I cut taxpayer funding for that very corrupt United Nations Relief and Works Agency, and nobody thought that would be done, and withdrew from the horrible Iran nuclear deal that was imposed upon Israel by Barack Hussein Obama and Biden. And I don't think Biden knew anything about it, though. I don't think he knows anything about it now, actually, if you ask him. He'd say, what is that? and we obliterated Iran's nuclear enrichment capacity, making it impossible for them to have a nuclear weapon, which they would have had probably in about 2 months from then. But I've never asked Israel to compromise its security, but we had big, strong talk. Nobody's been better to Israel. No president's been better to Israel than Donald Trump. But we had a long, strong talk, Bibi and I, and he understands it's time. It's time. History has shown, and the people of Israel want it. And the people of the Middle East want it. The people of enemies of Israel want it, but they don't have really too many enemies right now. And you know what? Many countries have gained great respect for Israel, for the way they fight, for the job they do, including me. I had respect anyway, but they gained respect. History has shown us that those who have relations with Israel have thrived, while those who have devoted resources and attention toward the destruction and even annihilation of Israel have languished. They haven't done well. Israel is not going anywhere. They're going to coexist with other people and countries in the region, from Syria to Lebanon to Saudi Arabia. The promise of a new Middle East is so clearly within our reach. This is the closest we've ever come to real peace, not fake peace, not political fool's peace. If we can get this difficult problem solved, the opportunities for all within that vast region of this world, it's a vast region, it's unlimited. The Abraham Accords show that all countries are better off when they communicate and work together and embrace new. I hope Jared and Steve and Susie and Marco and JD, we have great people. I hope you guys are going to work very hard to get these other countries in, because now they have no excuse. There's no longer an excuse. They were somewhere hesitant. And I tell you, the 4 countries that went in, I give them tremendous credit, and it's worked out incredibly well for them. In the same spirit, I'm pleased to report that earlier today, we took another important step toward greater understanding in the region. A short time ago, we had a historic phone call in the Oval Office with Prime Minister Tani, who's really a great, great person. So we had a great talk, and I was on the phone, and Bibi was talking. Prime Minister Al Thani was of Qatar. They really had a heart-to-heart conversation. It was a great conversation, I thought. It was productive. It was everything that you need to have something turn out to be successful. And I want to thank Bibi, and I want to thank the Prime Minister. It was fantastic. We agreed to launch a formal trilateral mechanism between Israel, Qatar, and the United States to begin a dialogue to enhance mutual security, correct misperceptions, and avoid future misgivings. And I want to thank Qatar, its leadership, and the Emir. He's a fantastic person. I think, you know, I'm going to be his public relations man, because I know him differently than a lot of people know him. But he wants peace. He wants to see peace. And his people, and they really acknowledge the critical role that they've played as mediator. And again, we're not quite finished. We have to get Hamas, but I think they're going to be able to do that. So now it's time for Hamas to accept the terms of the plan that we've put forward today. And again, this is a different Hamas than we were dealing with, because